people. So with all, what is that? I'll try to go as deep as possible. We'll try to cover every possible topic. So if you guys have any doubts in between, feel free to ask which topics I can go in detail. Let's go in detail. Agenda for the day, let's try to aim at 9 to 10 chapters because we have all the big chapters in the first part. It's okay even if we are doing 9 chapters. For the next day, let's keep the remaining parts because anyways we have small ones only. Yes, and I hope for the people who are watching this on recorded, please don't ask for the soft copy of the material that is being used here because of intellectual property rights. We cannot share the soft copies because we have seen a lot of places they directly take the material and they start teaching from this, which I feel ethically is not right. So because of that, we have stopped sharing soft copy of the summary charts. If you still want it on the ArivuPro website, you guys will be able to place a order for the hard copy. So again, I'm telling you, we'll be going in detail. I think you can expect first question. If is marathon a supplement for your regular classes? The answer is no. But even if you have studied something, marathons will definitely make sense for you. So keeping that in mind, make sure first you guys revise, first you guys learn something and then watch. But yes, you can definitely expect 50-55 marks easily from watching marathons. That is more than sufficient. You will definitely get it because I'll also be going through every topic. And one more thing, I'll also be uploading the supplements, that is the amendments separately. And inside the class, wherever there is an amendment, that part I'll be taking up inside the class itself. And I would want to tell one thing for those people who are using in the new syllabus only. If you guys have been using the old book in the sense, now there are two materials, they have updated a new version of the book. In the new syllabus only, I'm telling, there is a lot of changes that has been happened inside the book, which is not forming part of your supplements. So if I just do a supplement, that is if I just do an amendment video, that does not cover every change that has taken place inside the book. So to make sure that is there, I'm trying to cover as many amendments also possible inside the class only. If there is something which I have left it, I'll let you know that as well. But yes, probably another in 1 or 2 days, you can expect a complete supplement video also to be uploaded on capital markets. Yes. So this is one heads up I want to give you before I start. And one more thing, always make sure it's a good habit before you go for your exam. At least watch 2 attempts come amendments. So you'll be watching an amendment for June 2025. Also make it a habit to see the amendments of December 2024 as well, which is already uploaded on ArivuPro Company Secretary channel. So keep these things in mind because if they're asking you, it will be helpful and that's always a right practice to do. So saying all of that, let's start it, people. Capital markets marathon. If I'm a little low, excuse me, I'm down with fever. So ange adjust ಮಾಡ್ಕೊಂಬಿಡಿ. So people, first chapter, sir, I hope you guys know the classification of marks. Again, I'm telling you, whatever are the important chapters to concentrate on, never miss to concentrate on these chapters. They play a very important role in your exam point of view. Basics of capital market, very important from exam point of view. Secondary market, very important. From these two, you can definitely expect around 3 to 4 questions altogether, but those 2 chapters form a very big chunk of your paper. So never forget to miss that. It's very, very important. And coming to SEBI part, this is also very important. As I told you, I can classify that into 3 parts. We have seen in class also. The last 2 parts you can expect a question, that is SEBI informal guidance schemes and scores. That will play a little major role, that is important. So exam point of view, remember. And security market intermediaries, 1 or 2 question, a comment based question or a note based question will be there. From your exam point of view, of course, it's a little students, it's not a non-student, it's basically a non-student friendly chapter. Most of the people will leave and go. I would say no. We have seen in the class also, you have a reading order. So try to keep that in mind. You can definitely focus on security market intermediaries. 3 to 4 marks question definitely will be there. 100%. Next one, I suspect that this particular attempt will have more questions on IFSC. I might be wrong. I'm just giving you my view on it, because whatever are the listing procedures that were there, that has been changed. Almost like all the 4 listing procedures have been changed. In the amendments, I'll be covering the entire thing. So if you guys are watching it, that will be sufficient. I'll be explaining in detail like I explained it the first time. Next one, all of us know for a fact that ICDR, this is like your the main heart of your chapter, plays a very important role in your marks. You can definitely expect around 2 questions to come, more important from an exam point of view. LODR, definitely an important point. And issue and listing of non-convertible securities, important because there are amendments. For the people who are watching it, I'll be doing it here also as a part of marathon. I've also uploaded this entire part on YouTube also. If you guys want, you can watch it. There are some amendments in issue and listing of non-convertible securities. There are amendments. Sorry, not issued. Delisting of equity shares. There are amendments. I've uploaded that chapter on YouTube as well as a different video. Full chapter is there. If possible, watch it. Important from your exam point of view. And SAST, yes, here and there, it's an important topic. And coming to the last one, buyback and mutual funds, people, important from your exam point of view. Mutual fund, you will have one practical question. There will be one question to solve NAV, or to find out redemption price, issue price, or holding period return, yield. There will be one practical question, pakka, so go prepared. And if you look at buyback of securities, there has been out of the last 5 attempts, at least 3 attempts they have asked a practical based question. So again, I told you, you will get a practical problem from these 4 topics. You will have it. The first one is buyback. You may mutual fund. You will options. You will call and put option. You will have a question on that particular thing. And next one is futures. They may ask you a question. Apart from that, yes, we have seen reverse book building process and all. That is also a little important only. So pay attention on these topics. Very important from your exam point of view. Clear? Yes. So I'm not saying leave everything else, but this will be your first priority. Yes. Okay. Online, I hope everything is going good. You guys are still there, able to see here. Hello? All good? Okay. The first part, people, let's start with part A. Chapter 1, basics of capital market. Very, very important. You will have a question here. They may ask you any of the instrument. You will have a question. They will ask you any of the instrument. For example, FCCB, FCEBs, depository receipts, IDRs. One question, that entire part will become very, very important. So I'm telling you exactly where the questions will be picked. Instruments, one question may be expected. Second one, people, is your participants. You can expect one question. So one is financial market participants and next one is financial market instruments. You can expect a question from these 2 particular places. Yes. So focus more on those topics. Don't leave even one instrument or even one participant. Okay, so financial system in India, I can classify this into 3 things. One is called financial market instruments, financial market participants. The financial market per se can be classified into 2. One is called money market. Second one is called capital market. Now, what is the basic difference? When the attempt is very easy, they can ask you, what is the difference between money market and capital market? What is the difference between money market and capital market? Money market is basically regulated both by RBI and SEBI, whereas your capital market comes more under SEBI. What is basically, why do we have money market in place? The reason for money market being there is, people, whenever sovereign, that is government, whenever a government wants to borrow money from various people, the place they take the money from people is called as money market. Just like our capital market, companies come and borrow. In money market, the major borrower, will be government. The government will always borrow money through RBI. And what are the instruments we see in money market? What are the instruments? We see treasury bills, commercial papers, certificate of deposits, and so on. So these are the instruments RBI issues to people, and people will give money, and through RBI, government is raising money in money markets. Is it always like that, sir? Need not be always, but majority will be always by government. And what else is the difference between money market and capital market? Money market is generally a short-term instruments. It will not exceed 1 year. Most of the instruments in money market will be up to 1 year of maturity. Beyond it will go under capital market. Agreed? So this market is regulated by RBI and SEBI. It performs crucial role to manage short-term liquidity deficits. This deficits we have seen in the class. Government always comes up with a deficit budget. Now, whenever we do not have money, so that we have to take care of the government. How do we take care? We raise money from here. Now, once in a while, we have to launch Operation Sindoor and all. So, you will need some missiles, kerosene, petrol and all. You put no. Correct? No. Munde 5 atom bombs, so you have to send no. That's what they're telling you people. So, for all of this, you need money. So, government can borrow it in the form of funds. It can be in the form of bonds, as the case may be. Through this market, RBI raises money on behalf of government by issuing treasury bills, commercial papers, certificate of deposits. Maturity of instrument range from 1 day to 1 year, usually short term. On the other hand, so there is something called as capital markets. Capital markets can be further classified into two. One is called securities market and other form of lending and borrowing. Other form of lending and borrowing will not be seeing much. We have these two markets in our syllabus. One is called as primary market, one is called as secondary market. Now, what do you mean by primary market? Primary market is always termed as a new issue market. What do you mean by that? A company is raising the money from the public for the first time. So, we generally call it as an IPO market. So, whenever a company, unlisted public company, gets listed on a stock exchange for the first time, we call such market as a primary market. So, it's also called as a new issue market. It's also called as an IPO market. And what else is the difference? Again, when an attempt is easy, they will ask you a difference between what is the difference between primary and secondary market. Correct? Next one, sir. Chart books on website shows out of stock. Too much demand. No, probably in simply said. Wait for 2 days. I think they will. I think it will be back. Yeah, probably. I would say 11th or 12th. The books will be up and running by March 11th or 12th. Okay, so primary market and secondary market. As I told, primary market is always called as a new issue market. In a new issue market, what do we generally have? We generally do a unlisted public company coming to the for listing on stock exchange for the first time. So, what is the difference, sir? In a IPO market, people, the company raises money. So, who gets the money? Company gets the money. Who gives the money? It will be the public or the institutions or whoever is investing it. What about secondary market? In secondary market, it is like a buy and sale that happens between investors. Who will get money? It is the investors who get money. Who will give money? It is the investors who give money. So that is always called as a secondary market. We also call it as an after issue market. Correct? And what is the need of we doing it here? We do it in the form of what is that? Correct. Who are the major intermediaries? Underwriters come here. Why does underwriters come? Because to meet minimum subscription, 90%. Sir, who come here? Brokers come here. Upstock, Zerodha, all your Coinu, whatever you guys are using, they all come here, right? Okay. Next one, price. Price has given in the offer document. That is what? Red herring prospectus. Here, people, it keeps fluctuating. Agreed? Utilization of fund gained from the primary market becomes a capital of the company. Here, people, it becomes an income for the investors. Nothing but we also call it as a capital appreciation. Okay, done. Next one, sir. That is what we saw, capital market. Okay, next one, financial market instruments. What are the different instruments we have it in financial markets? One is your normal equity shares. We have here also what are the rights of equity shares, which is as per Companies Act, as per SEBI LODR. Companies Act, people, you have a right to receive notice, you have a right to receive a dividend, you have a right to vote, You have all those rights as per Companies Act. As per LODR, you have a right to participate in decision involving fundamental corporate changes. Remember, the chance of this being asked is less. The chances of this being asked is more whenever there is rights. And remember, whatever we are seeing is based upon patterns. I'm saying these you can expect. At the last moment, these things you can expect. Next one, right to participate and vote in general meeting. Right to be informed of rules, including voting procedures of the meeting. Ask questions to the board of directors. You can come, you can participate in the meeting, you can ask the questions to them. Participation in key corporate decisions. Example, election of directors, mergers and acquisitions. That is, you have a right to vote. Next one, addressing shareholder grievances. That's your right, right? If you see, by the end of the day, you would have seen this topic at least 5-6 times coming. Grievance redressal, 100 places it comes. Protection of minority shareholders from abusive actions. In a company, there will always be that minority, 10% or even lesser people. So we make sure that their interests are always protected. Okay, next one, sir. That is your normal share. Next one is called as differential voting rights, also called as DVR shares. What do you mean by a DVR share? DVR share means, people, a share which has a differential voting rights. What do you mean by differential voting rights? Generally, a normal equity share will have one share is equal to one vote. But it's a differential voting rights means, people, one share may have less than one vote. Or if it's 5 shares, you may have one vote. But it will be compensated by paying more dividend when compared to a normal share. Okay, so to give that, what is the procedure? First one, it should be authorized by articles of association. Maximum DVR issue, it shall not exceed 74% of the total voting power at any given point of time. That is, in a company, whenever you have total votes, DVR part should not be more than 74%. So at least 26% should be normal equity shares at any given point of time. The company needs to pass ordinary resolution to issue DVR shares. Special Allah ordinary. No default in. You should have not had default in filing annual returns or financial statements in the last 3 years. Repayment of mature deposits or declared dividends. Repayment of term loans. Statutory dues of employees. So all this, there has to be no default that the company has made in. However, sir, if at all there is a default, people, the DVRs can be issued provided 5 years cool off period is there. From when, sir? From the day you make good the default. So if I have not paid statutory, employees dues. Now, once I make good, that is after I pay the statutory dues. Imagine provident fund. From the end of the year in which I made the default good. Imagine in 2016, we did not pay statutory dues of employees, meaning provident fund we didn't pay. We paid it in the year 2018. In 2018 November we paid. So what you need to take? Complete year 2019. That is 31st March 2020. That is 1920 financial year. So from 1st April 2020, 5 years will be there. That's a cool off period. So up to that 5 years, you cannot issue DVRs. Clear? Hello? Okay, next one, sir. Not penalized by court or tribunal in the last 3 years under various acts or by various bodies. RBI, SEBI, Security Contract Regulation Act, FEMA. In these things, you should have not been penalized. No penalty order should be issued. If you satisfy those people, you can go for DVR share. Next one, preference share. I hope we all know a share which has a priority in repayment of capital as well as dividends when compared to the equity shareholder. It's called as a preference share. Next one is called as, people, debentures. A debenture is nothing but a debt on the company, of course, they can never carry a voting right. A simple one. Next one is called as, people, foreign currency convertible bonds. What is a foreign currency convertible bond, people? For example, how does a foreign currency convertible bond works? There will be a company in India. They want to raise money from foreign countries. I'm just taking it as a dollar. You can raise it in euro. You can raise it in any currency you want. So an Indian company issues a bond. That bond is called as, people, FCCB to a foreign country. Let us take an example of US. We issue a bond there. We are going to raise money from that market. From them we will raise the money. In what currency we will raise money? We will raise the money in the form of dollars. Remember, sir, their repayment also should be made in dollars only. Their interest payment should also be made in dollars only. Sir, FCCB is with the conversion time. Imagine 3 years. Imagine 2 years. After that 3 years or after that 2 years, people, the bond holder, that is whoever is a person who has invested, this person will have an option whether to redeem it into equity or to convert into equity or ask for the money back. So if there will be 3 years time period, after 3 years I can convert my shares, my bonds into equity of this company, or people I can ask for a redemption at the option of the bond holder. And sir, it gets converted to the same company's equity share whichever issued FCCB. That's the difference between FCCB and FCEB. What is the difference? In FCEB also same thing. A company will be there. The company will issue a bond outside India. The bond will be called as FCEB. Same thing. You're again going to raise money in dollars. Again I need to pay in dollars. Again I need to pay interest also in dollars only. Then what is the difference? If at all the person wants to convert this into equity and he does not want a redemption, he does not want money back, he has an option to either take the money or convert it into equity. But he will not get the equity of the company that raised money. You will get the equity of a company which belongs to the same group. Same group. That's why we call them as group companies. And what are these companies called as? One is called as Indian company that raises money. The next company is called as offered company. What do you mean by offered company? The company whose equity shares you can exchange with your bonds. You have raised FCEB. You can exchange that FCEB with the equity shares of another company. But these two companies belong to the same group. For example, Tata, Reliance, they all come under one group. So one company is raising money, the other company is converting the shares into that company's equity. That's why we call it as an exchange. Remember that word as a keyword. Convertible is your own. Exchange is with some other company's equity. Clear? Chances they ask, crazy times I have asked, 2-3 times I have asked you, what is FCCB, what is FCEB? Is clear? Hello? Okay, in that there is one more point also. FCCB carry a fixed rate of interest. Option to convert interest and redemption price is always paid in foreign currency. FCCB issue proceeds need to conform to ECB end use requirements. What does ECB means? External commercial borrowing. End use means people, what can I use this money I've raised? What can I use it for? So for that there are some guidelines. I have to follow those guidelines. In addition, 25% of FCCB proceeds can be used for general corporate restructuring. General corporate means people, something which I can use it for my internal reconstructions, which is I need not disclose it. Up to 25% I can use it generally. I need not disclose it upfront. Okay. Worth noting, the investor will have an option and it is at his discretion. Correct? Next one is FCEB, whatever we saw. Next one, sir, IDR, Indian Depository Receipts. What is Indian Depository Receipts, sir? There will be a foreign company who would want to raise money from Indian market. So what will they do? The foreign company people will come and they will give their securities, they will give their equity shares to one person outside India. A foreign company. Let us imagine, people, there is a company called as Standard Chartered. The Standard Chartered Bank wanted to raise money from Indian market. What did they do? They went, it is all happening globally only. So they went to US. They asked one of a person called as custodian, like our bank locker, custodian. What did the Standard Chartered Bank do? They went and they gave their equity shares to the custodian outside India, that is US. Now that custodian will call a person in India. We call that person as a depository, NSDL, CDSL. Why are we calling it as a foreign custodian domestic depository? Because this person is in US, this person is in India. Now the foreign Standard Chartered Bank, they went and they gave their equity shares to a custodian. The custodian will call a depository in India and say, I have received the securities, you can create the instrument now. Based on that word, our depository will create some new instruments. The new instruments will be called as people IDRs. We call them as Indian Depository Receipts. If we do opposite, meaning Indians doing abroad, we generally call it as ADR, GDR. Same thing opposite. Correct? Huh? Yes, sir. Okay. Next one is called as people municipal bonds. Initially, it was a little important. Now it's okay only. But yes, see, what is municipal bonds? Basically, it's what is that? A municipality or a local statutory bodies who raise money from the public for development purpose. Now that is called as what people municipal bonds. Bangalore Metropolitan Corporation, that is Bangalore Municipal Corporation, BMC was the first municipality board to raise money in the form of Munni bonds. We call the municipality bonds as Munni bonds. Of course, it was a failure. We could not implement it properly, post which SEBI came up with the proper guidelines. If you want to do municipality bonds, then there are some things you need to satisfy. Just like a company going for IPO, track record and all we check. Same way we check it in the case of municipality bonds also. That is also called as Munni bonds. Okay, we refer to as people Munni bonds. Urban local government and agencies issues these bonds for development of roads, infrastructure, airports, etc. BMC was the first local body to issue municipal bonds in India. SEBI came up with guidelines for issue of municipal bonds in 2015, according to which municipality should meet the following eligibility criteria. What is that? Municipality must not have negative net worth in the 3 previous years. Basically, your body should be in a positive numbers. No default in repayment of debt securities and loans taken from banks and NBFCs in the last 1 year. If you have borrowed any money, there should not be any default on it. The third one, municipality, promoter, director should not be a willful defaulters. Willful defaulters means what people? Those people, in spite of having money, wantedly miss repaying the interests or principal back to the source, whoever they have borrowed money from. We call such people as willful defaulters. Generally, the willful defaulter list is always announced by RBI. Getting the point? It's not like somewhere we get it in some newspaper. RBI announces the list of willful defaulters. We consider them as willful defaulters. Only then they will be disqualified. Clear? Municipality should have no record of default in paying interest and principal. Okay, done. Next one is called as people real estate investment trusts. We have seen what is real estate investment trust. What is real estate investment trust? It generally functions in the same way as a mutual fund function. If I have to tell you in short, they collect money from lakhs and lakhs and lakhs of people, and that money will be considered in the form of trust. The trust raises money just like a mutual fund. Where will a mutual fund invest money? Mutual fund invest money in a listed company. Where will this type of trust invest money? If it's called as a REIT, real estate investment trust, they invest into land, they invest into building, they invest into renting, leasing. So the whatever is the buy and sell when they do, they have that income that will be the return for the unit holders. Such type of things are called as people real estate investment trust. So when the money pooled, it's also a pooled investment vehicle only. So if the money, always remember, trust is common. This particular route will happen in 4 places. The route is same. What is a route? There will be a trust. We are going to raise money from thousands, lakhs of people. That money we take, we invest it in some place and you are going to get return. All 4 bodies work like this only. What are the 4 bodies? One is mutual fund. They invest it into securities of listed companies. Next one is called as people REITs, real estate investment trust. They pool money, they invest into real estate. The third one is called as InvIT, infrastructure investment trust. They invest into infrastructure projects like highways, like metros, or it can be airports. So they invest into that.
The fourth one is people collective investment scheme. Same thing only, we raise money for return. We saw it does not include some things. So all these are not included. Anything apart from that will be considered as collective investment scheme. But the way they all operate is same. There is a trust, they raise money, but where they invest is a difference. Based upon where they invest, we call them as either REITs or InvITs or as the case may be. Clear? Okay, next one is called as people infrastructure investment trust. What is it? It is a pooled fund which invests the funds further into infrastructure projects. So see, this is the word you guys have to use when you are writing the answer for these things. Remember, what is that? REIT, InvIT, mutual funds, collective investments, AIF, alternate investment fund. What is the difference between this and alternate investment funds? Alternate investment funds is a privately pooled fund. These are all publicly pooled funds. Meaning me and you, we can invest in these funds. Privately pooled means it will be given only to a selected group of people. That's the huge difference. Correct? Yes, sir. Okay. Next one, people. It comprises of 4 elements. The first one is called as trustee. The trustee is always like board of directors in a company. Those registered as debenture trustee can only be appointed as a trustee. They need to invest minimum 80% into infrastructure assets that generate steady revenue. That's the minimum criteria you need to satisfy. Body corporate or LLP or company, it includes a inducted sponsor. What do you mean by inducted sponsor? Inducted sponsor means people. Who is a sponsor? The one who starts this particular scheme or a trust, or this entire thing is built by one person. We call such person as a sponsor. What do you mean by inducted sponsor? Meaning the one who acquired. See, the person who started it can be me. After 4 years, I left it. Now Yashas joined it. Now Yashas will be considered as an inducted sponsor. The third one, investment manager, supervises operational activities, where to invest, what to invest. And next one is project manager, authority for executing projects. So for example, real estate, right? There will be so many things that related to that. So it will be taken care by project manager. The next one is called as people options. What do you mean by an option contract? Option contract is, what is an option contract? Seller and buyer enters into a contract. They enter into a contract today to settle anything. It can be commodities, it can be shares, it can be anything. If it is commodities, we call it as a commodity market. If it is shares, we generally call it as futures or options. What is an option, sir? Option is generally where a buyer and seller enter into a contract to buy a predetermined quantity of shares on a predetermined price at a predetermined date is called as what, people? An option contract. Example, there is a buyer, there is a seller. A buyer purchases an option. What is that? He says, hey, I don't know what is going to happen after 1 month, especially today, after that Sindoor attack, the market is down, completely dip. Now I don't know how the market is going to react. So what will a trader do? The trader wants to be safe. What will a trader do? The trader will enter into a contract on the stock exchange. That contract is called as options contract. Now what is options contract? In an option contract, people, this buyer will say, after 1 month, I will buy, let us imagine, example, Reliance shares at 2500 rupees. How many shares? I will buy 1000 shares. And we are agreeing all of this today to buy it after 1 month. So I am saying, the buyer is saying, after 1 month, I want to buy Reliance shares at 2500 rupees. Quantity is 1000 rupees. Everything is agreed today. Now this type of contract is called as option contract. Now my question, who purchased this particular contract? Who has an option? Is it buyer or a seller? If a buyer has an option to buy, we call it as a call option. If a seller has an option to sell, same thing, we call it as a put option. So always remember, for giving this option to you. Now after 1 month, let us imagine Reliance share price has come down to 2200. Now in the market, now because of all these global issues, Reliance share price has come to 2200. But as per the contract, I have agreed to buy it for 2500. You tell me, will I buy it in the contract or will I buy it outside the contract? I will buy it outside because I'm getting the contract at a much cheaper price. So I will let this contract lapse. So always remember, because you have so much of flexibility, the person whoever has given you this choice charges something called as premium. The premium is non-recoverable. It's always a loss to you. It's gone. So if a buyer is buying a call option, he will be charged some premium called 10 rupees, 15 rupees that you need to multiply it by number of units. So 15 rupees is per unit. You have totally 1000 units. So 15 into 1000 will be your minimum cost. That is 15,000 will be your minimum cost. Is clear? Such type of contracts are called as what, people? Option contracts. So option contract just gives you a right and not an obligation to buy. Clear? Cut, copy, paste, people. Future. Future does not give you an option. It is an obligation. Once you enter into a future contract, same thing. But it does not give you a right. It's an obligation. You have to buy. Clear? Answer. In option contract, there are two types of options. One is called as European option. One is called as American option. What do you mean by European option, sir? European option means, people, the contract can be exercised on the date of maturity. India follows European option. American option means, people, the contract can be exercised on any day before maturity. Meaning what, people? European option means, I told you that predetermined date. It will be always, people, the predetermined date will always be, say for example, a month end. And you can exercise it only on that day. But if it is an American option, you can exercise it any day, even before the maturity also. That's the beauty. Clear? Yes, sir. That is an option contract. That is a future contract. Next one is, people, derivatives. What do you mean by derivative? Derivative means, people, it's a instrument that is created whose value, people, is decided upon an underlying asset. Is called as what, people? A derivative contract. The example of derivative contracts are nothing but your bullion exchange. I told you, right? Commodities. For example, gold gets traded on the stock exchange. Bullions, I say metals, crude oil, onion, all this gets traded. Now, do they have a value of their own? There is instruments that is being traded. They keep fluctuating. How do they fluctuate? They based upon the demand and supply for the product. Now, for example, if there is a gold bond, if gold bond price is going up, why will a gold bond price go up? If the gold prices go up, gold bond price also will go up. So, the gold bond does not have a value of its own. It is getting derived from one of the underlying asset, and such things are called as, people, derivative contracts. Yes, sir. We have something called commodity derivative and currency derivative. We had seen an example also for commodity derivative. The example is that gold things. Currency derivatives, nothing but you would have seen in ECIPL. It's called as hedging. Correct? Today you enter into a contract to buy some currency in the future date. We generally call it as what? Currency futures. Agreed? Okay. Next one, people, capital market participants. Have we covered every instrument? Any other instrument you guys have doubt? What do you mean by warrant? Warrant is nothing but, people, a company gives you a choice to buy the share or let the option go. It works exactly like, people, your options only. But options is being traded between two people. Warrant is nothing but an option given to you by the company directly. They give you an option, people, that whether, so imagine if the share price of the company is 600 rupees. Now you do not know whether to buy this share or not, because after, say, some 5 months, the share price can go up or it can fall down. So what will a company do? Company only will give you a choice. What will they do? They will say, sir, do one thing, do not buy directly our share, buy our warrant. Now what is the beauty of the warrant? Warrant gives you a choice. What is the choice? If you want, people, you can buy the share. If you do not want, people, there is some minimum application money you would have paid. That application money will lapse. Sir, the minimum application money that you need to pay people is 25%. That is the minimum application money you need to pay. Meaning what? Let us imagine if the price of the share is 600. I would have paid 25% of it. How much? 150, yeah. I would have paid 150 rupees. Now imagine after 5 months, people, if 600 has become 900, it's an option. It is beneficial for me. I will pay the rest of the amount also. Sir, after some 5 months, people, this 600 will come down to, say, for example, 400. Now, it doesn't make sense for me to buy. By repaying the rest of the 350 rupees, I will let this option lapse. Now, this is called as what people? Warrant. What is the difference between options and warrant? Warrant is always traded between two people. Now, for example, if it is between me and Likith, Likith is giving me a choice. Here, people, Infosys is giving me a choice. That's the difference between warrants and options. And conversion shall not exceed more than 18 months. The minimum application money you need to collect as people 25% upfront. Correct? Hello? REIT we saw. Infrastructure investment trust. Securitized debt instruments is nothing but asset reconstruction companies, the banking instruments. You would have seen this as what is that? Non-performing assets. If at all any borrower does not repay the money to the bank, what will a bank do? The bank will sell away all those loans to a third-party company. They will recover the money. So they will raise it from some people and they will give the money to the bank. So there is a borrower who would have borrowed money from a bank and he does not repay the money to the bank. What will bank do? Bank will transfer this complete loan to some companies called as asset reconstruction companies. They will transfer this. It's like gundas. They recover the money. I'm saying in this short, they're not actual gundas. Now people, asset reconstruction company immediately will pay the money to the bank. Bank is happy. Now how will they get the money? They issue something called as securitized debt instruments. They give it to QIBs, they give it to a lot of people, and then that money they raise, that they settle it to the bank. Agreed? Yes, sir. Of course, they will sell the properties, whatever, they will get the income, they will get the return, that will be given back to the QIBs. They have raised the money from. Clear? Okay. Next one, people, exchange traded funds. We'll be seeing it in mutual funds only. What is exchange traded fund? Exchange traded fund is nothing but it's a close-ended scheme like a mutual fund which gets traded over a stock exchange. The best example I can give you is Nifty Bs, Bank Bs, ITBs. What is that? Exchange traded fund. Now, if you look at something called as ITBs, what is ITBs? It has top 50 IT stocks. Now they have combined everything, they have made it like a one fund. So if these 50 stocks are going up, this fund also will go up. Now what is the advantage? You cannot now say, for example, I have just 1000 rupees. I can maximum invest in 2-3 companies. If you invest in ETF, it gets diversified. So Infosys, Reliance, TCS, everyone's stock will be in this ITBs. For example, there is something called as Bank Nifty. Or you have something called Bank Bs. So you invest in that. That is like investing in some 30 banks, 50 banks, as the case may be. Clear up? Derivatives we saw, futures we saw, options we saw. That's all. Okay. And we have capital market participants. Who are the participants? The first one is called as QIBs. Who are basically QIBs people? They are a very big, fat financial institutions that come and invest in the markets. Generally, the examples of QIBs will be these people who are its popular ones. Once people in the history, once they have asked a definition of QIB, once they have asked to write the entire definition. Yes, sir. So in such cases, what you need to do? First thing I always tell you, remember, see, your task is to remember everything. When everything is not possible, something should be possible. Something is always something which repeats more often, which you can easily remember. Mutual fund, venture capital funds, easy to remember. Foreign portfolio investors, public financial institutions, insurance companies, provident fund, pension fund with a minimum corpus of 25 crore. Where is that? Scheduled commercial banks. Now these at least, this we can easily remember. Multilateral and bilateral development financial institutions like World Bank, International Monetary Fund, IMFs, Yeah, this you can, so this try to remember first. If you're able to remember this, then go to other things also. So again, what is a QIB people? QIB is nothing but we call them as qualified institutional buyers. The name itself says it is an institutional buyer. In a capital market, there are always two types of people. One is individual buyer, one is institutional buyer. These are all companies. Now, why do we call them as a qualified institutional buyer? Because they are coming up with a huge money, large money. That much of money they come up with. Now, people, how do they get money, sir? Remember, they are also getting money from public or people or various companies. Example, commercial banks. You guys are doing FDs, RDs, savings bank. That money they're getting, no. Pension fund. Every month you're contributing. Provident fund. Every month you're contributing. That is the money they are getting. Insurance companies. You guys are buying policies. Now, all of these people are giving you return. Where are they giving return from? They invest in these particular capital markets. They make some money. That is what will be given to you as a return. Correct? Huh? What do you mean by an anchor investor? Who is an anchor investor? Anchor investor. Angel Allah. Who is an anchor investor? I only tell, wait, don't search. Is anchor investor also a QIB or they both are different? But are they both? Is anchor investor also a QIB?
Yes, sir. It's a QA business.
Anchor investor.
Pakka, sir. Pakka.
So remember people, anchor investor is also a QIB who is investing at least 10 crores in the IPO. So not every QIB will become an anchor investor. But if at all imagine if an insurance company is investing in 10 crore, minimum 10 crore in an IPO, in a main board, not SME, no main board. If I'm investing at least 10 crore, I call myself as people what? I'll call myself as an anchor investor. That is what will come later also. Next one people, they can ask you, 3 times I've asked you, high net worth individuals. What do you mean by HNI people? HNI means, they online now. What is HNI? High net worth individuals. What do you mean by that? A person people, there is no definition as such, but based upon their rich people, that's all. They're rich people. Based upon the surplus they have total money people. They have a investable surplus people of more than 2 crore rupees. They have more than 2 crore to invest. We call such people as high net worth individual. But if at all you are participating in an IPO, the person who is investing more than 2 lakhs in an IPO, we call such people also as an HNI. This is on a normal day. In IPO, it is more than 2 lakh. On a normal day, an investable surplus of 2 crore. Now, Likit says, sir, I don't have 2 crore. I have 1.8 crore. What will you call me as? We will call you as an emerging HNI. What do you mean by an emerging HNI? A person who has an investable surplus of more than 25 lakh but up to 2 crore rupees. We call such people as emerging HNIs. Done? Okay. Next one people. Alternate investment fund. First of all, lot of people will have a doubt of what is AIF, what is QIB. First understand the difference only. What is the difference? Something which is not regulated by any authority, we will call such things as an AIF. Next thing, sir, whenever people, there is a, what do you say? The QIB is always a publicly pooled fund. Whereas on AIF people, it's a privately pooled fund. They take money from a lot of private people. So for example, there can be 4 or 5 companies. They come and give money to them. They will invest on their behalf. We call such entities as alternate investment funds. Agreed? Hello? Yes, any doubts here? Hello? So in the class also we had seen one thing. I had given you one chart. Remember, this is for our understanding. The top person is always called as a QIB. The person under him, alternate investment fund, is also a QIB only. If you look at the definition, we will see QIF, alternate investment fund will be here also. Correct? So AIF is also a QIB only. So he comes under the category. Under AIF, you guys will see private equity. Under private equity, you guys will see who? You will say venture capital funds. Under venture capital funds, you guys will say angel funds. So remember, from exam point of view, this chain will be very important. Clear? Okay, next one, sir. So AIF, According to SEBI regulations, it means any fund established in India in the form of company, trust or LLP or any other body corporate, which is a very important privately pooled investment vehicle, which collects funds from investors, see who, HNI, large institutions, corporations, whether it is Indian or foreign, for investing in according to the investing policy. They will further invest. Okay, next one. It is not covered under SEBI mutual funds or collective investment schemes. See, pooled, no. So they are clearly telling you we are not mutual funds, neither are we collective investment scheme. Sir, following will not be considered as AIF. What and all is not considered? First one is a family trust set up for the benefit of the relatives. ESOP trust, because all of this we have a chapter only. Employee welfare trust, gratuity trust, holding company, funds managed by securitization. Basically, securitized debt instruments, nothing but ARC, SRC, other special purpose vehicle not established by fund managers, meaning any other thing, but which is not led by a fund manager. What is the difference, sir? Fund manager means people, there should be like a portfolio manager. There should be a person to take investment decisions. If that is not there, then you will not call it as an AIF. Next one, sir, any such pool of funds regulated by other regulators in India, TRI or IRDA. If someone is regulating, I will not call it as an AIF. Categories of AIF people, I can classify the categories into three. One is called as category 1, 2, 3. Category 1, which invests in startup, which is early stage people. Basically, they take a lot of risk. It's early stage. It is not yet proven. So there's a lot of risk. Infrastructure sectors, social ventures. What is social ventures? Who are trying to make some impact to the society. We call such people as social ventures. They are making it for money, but they are having some impact on society. So if they are investing in such things, people, we call them as category 1 AIF. Now category 1 AIF includes, see, venture capital funds. We wrote no, China. SME funds, infrastructure funds. Category 2, which is simple one. This is the best thing for the student, which is neither category 1 neither category 3. It's called as category 2, the best. It includes private equity, debt funds. We wrote a private equity there also. Hello. AIF which employ complex trading strategies like leveraging and all. It's called as category 3. What is category 3 AIF? For example, privately pooled fund was just 50 crore. That is not sufficient for us to make investment. What will we do? We will borrow 50 crore more from a bank. We will add the 50 crore we have raised plus 50 crore we have borrowed, and that we will invest. So they are taking a lot of risk. And I showed you in class also, and fund also. They employ in complex strategies like algorithm trading, not a normal trading. They do algorithm, system-based tradings. So such things will be called as category 3 AIF. Done. Okay, next one is called as venture capital funds. What does venture capital funds do, people? Venture capital funds invest in startups, early stage entities, and they wait for some time. They exit for some returns. It's called as venture capital funds. It is an AIF which invests primarily in unlisted securities of startups. It is a financing in which promoter gives up some level of ownership and control for the business in exchange between 3 to 5 years. So this is nothing but your Shark Tank, whatever you guys see. All of them are the best example for venture capital funds, unlisted startups only. 3 to 5 years. Once they find good rhythm, they will sell it, they will make their money, they will come out. It consists of group of investors who pool investment with certain parameters. They are high risk because the company may work crazily or it may fall down. The participants in venture capital are institutional investors generally. Who give money to the venture capital funds? Institutional investors give the money to them. They will further invest. The next one is called as people private equity. Private equity is a type of asset class who take securities in an operating company that are not publicly traded on a stock exchange. Sir, this also same only, no sir. Then what is the difference between private equity and venture capital fund? The difference is, people, these funds usually invest in a company by purchasing them, gain access to assets and revenue sources, which leads to high return. Revenue sources means what, people? These are established companies. These are early stage companies, meaning revenue is not yet there. They are not earning even 1 rupee. Private equity comes much later in point of time. These investments are for long term. They are for 3 to 5 years. We saw that, right? They are for long term, meaning it can go for 7 years, it can go for 8 years. What is their general motive? The general motive, people, imagine if a company is going for IPO, imagine if a company is going for mergers and amalgamations. They will wait until that day. On the day of mergers amalgamation, they will sell it, they'll make their money, they'll come out. That's called as private equity. Clear? Hello? Types of private equity people. Leveraged buyout. What is leveraged buyout? I told you. By borrowing, we take loans, we invest that. Venture capital, which we already seen. Next one is growth capital. These type of venture capitals give money for the growth purpose, expansion, opening up a new branch, etc. Okay. Next one people is called as angel investor. What is an angel investor? Subcategory of venture capital. They do not forget that chain. Whatever we wrote. Very, very important. What is the difference between angel, venture and all? Angel is people nothing but they are the seed people. The first person to come and touch you in life. When you're starting to set up your company is always called as angel investors. Angel investors are nothing but people. In some cases, they will be your friends, your relatives. Or the best angel I can give you example of is Kunal Shah. Ratan Tata was himself an angel investor. Dhoni is an angel investor. Yeah. For example, I don't know, he is promoting one cycle company. Nowadays, he is promoting one shoe company also. Everywhere that is only going around. Yes. So they invest in something. That is called as what? They will come under angel investors. Yes. Okay.
They even promote it.
If you have name, why not? They are the earliest equity investment made in a startup. Correct? That's the first one. If I have to tell you, it comes like this, people. The first fund that comes in your company is called as angel fund. The next fund that comes in you is called as venture capital fund. The next fund that comes in your company is called as private equity. Because see, earliest. This is coming for the initial stage. 3 to 5 years, they will exit. It is still growing. It is not yet grown. Next one is people private equity. What is private equity? It comes in a revenue source, meaning the company is already established. They are making money there. They invest in such companies. Correct? No? Yes or no? That's the chain. Remember. The next one, people, anchor investor. Important people. What is an anchor investor? They are QIBs only. But they invest a minimum of 10 crore rupees. If it's a main board is NSE, BSA. SME exchange people, a company coming on SME board, they invest a minimum of 2 crore rupees. Correct? Hello? Okay. Sir, how now they are investing so much. How much should we give them? Now imagine they are telling they are applying for minimum 10 crores. What if they are applying totally for 1000 crore, 2000 crore? Can we give only allotment to them? We have others also to give. So people, what should be the minimum allotment we need to make to the anchor investors? That they are telling you, it is the discretion of the company. You can give how much ever you want, provided you need to keep this in mind. What is that? If at all you are going on a IPO on a main board and you are thinking of giving up to 10 crores to QIB, then they are telling you the maximum number of investors to whom you can give it to is 2 investors. Sir, if at all I want to allocate more than 10 crore up to 250 crore to the QIB, then they are telling you the minimum I should give it to is 2 QIBs. Maximum I can give it to is people 15 QIB, subject to minimum allotment of rupees 5 crore to each investor. Meaning maximum 15 they are telling. Each person should get at least 5 crore. So that will be my minimum investment. Correct? Yes, sir. Okay. Next one, people. If at all I am going about 250 crore people, then what are they telling you? For the first 250 crore, minimum 5, maximum 10. But for every additional 250 crores that you bring in, imagine if I am coming up with 500 crore, then what are they telling me? For the first 250 crore, it will be minimum 5, maximum 15. That I don't have a doubt. For every additional 250 crore, I can add another 10 people. Clear? Subject to a minimum of rupees 5 crore to each investor. That's the minimum amount I need to allot. Same thing, cut, copy, paste here also. The numbers will change. It is 2, about 2 up to 25, about 25 crore in the case of SME board. And remember, for anchor investors, there are some rules. The bidding for anchor investors shall open 1 day before issue opening date. For us, if it is opening tomorrow, for anchor investors, it will open today. the allocation to anchor investors to be completed on the day of bidding only. Whenever they apply, that day only they need to get the allocation. Such allotted shares shall be locked in for a period of 30 days. They cannot sell it. Up to 60% of QIB portion shall be available for anchor investor for allotment. What is this, sir? If you remember in ICDR, you will be seeing regulation 6. You would have seen there. What is the minimum allotment? You have two routes, 6-1, 6-2, alternate route. What is the 6-2 route? Through QIB, 75% has to be given to QIB. They're telling whatever you want to give it to QIB, in that 60% of QIB portion shall be available to anchor investor. So this 75%, let us imagine, is coming to 1000 crore. In this 1000 crore, 60% should be allocated to anchor investors. That is people, 600 crore I have to give it to anchor investors only. In that also, 1/3 of anchor investors shall be reserved for domestic. 600 only 1/3. And how much will that be? 200 crores shall be reserved for domestic mutual funds. Is this clear? I hope it is clear. Online, I hope you guys are understanding this. Clear all of you? Okay. The next one is called as people foreign portfolio investors. What are foreign portfolio investors? People coming from outside, and we are calling them as portfolio investors. They get registered with SEBI and they come in and they invest in the Indian stock exchanges. Okay. So they have category 1 and category 2. In category 1, who and all are coming? Government and government related, like sovereign banks. What is sovereign bank? Central banks and all. Central bank is nothing but, for us it is RBI. If outside, if they have any such institutions, they can come and invest. Sovereign wealth funds, like your sovereign is nothing but government only, government funds. International or multilateral organization, World Bank, IMFs, entities owned or controlled by government. So any other company in which 75% control is with the government, they can also come and invest. They all will come under foreign portfolio investors. Important from exam point of view, they can ask you. Next one is pension and university funds. They also have money, right? University funds, they have money. Oxford, Harvard's, they have money, They can also come here. Appropriately regulated entities like banks, insurance companies. Entities from FATF member countries. What is FATF? Financial Action Task Force. What is the FATF? Nothing but you should be from a country who is having a good, like Pakistan, who is having a very good laws for terrorism, meaning they are all stopping terrorism in their best possible way. Yes or no? And money laundering. They stop money laundering. So a country where these two laws are very strong, then you can be a member of FATF compliant. Pakistan is one of such example, who is a really good country with regards to having very strong laws with regards to terrorism. No.
Pakistan has in that FATF
They keep moving. It's like a lift game for them. They come in grey list, they go to black list, and their ministers only will come and say that we are only the country who is fighting terrorism. All that happens.
currently they are in black.
Appropriately regulated funds, unregulated funds, but investment manager is regulated. University related endowments in existence for more than 5 years. What is the endowments? Endowments is nothing but people generally you guys would have received donations, right? University funds is the fees they collect. Donations are like you would have received from so many people, alumni, right? Now once you guys pass out, you guys will give to your college, some 1 crore check and all you guys will give. That and all will come under endowments. An entity which is at least 75% owned by another eligible under BCD. What is that, sir? B, C, D. We have so many companies. If they have invested at least 75% in another company, say company X, now they are also eligible is what they are telling, provided they come from FATF member compliant. The last one is called category 2. Investors not eligible under category 1 shall be considered as category 2, such as charitable organizations. What is charitable? Milap, Gates Foundation, have money, no. Family offices, Ratan Tatas, Tata Trusts, Tata Sons, Reliance, Adanis, individuals will come here. Endowment and foundations. Next one, unregulated funds in form of limited partnership and trust. Unregulated people will come here. Clear? Hello? Okay. Next one is called pension fund. What is a pension fund, people? It's again a pooled investment vehicle where an employer and employee contribute some percentage towards the retirement. Now that corpus will be further invested. It will come under pension fund. A simple one. Okay. Anything you want me to cover here, or that's good to go? I hope I have gone in detail. Remember, there are some chapters I will be going letter by letter only. Like this chapter, chapter 2, chapter 8, will be seeing everything. Clear? Okay. Let us start with secondary markets in India, chapter 2. So, secondary markets in India. Now, what are the secondary markets, sir? In this, what are you going to see? The first one spoke more about who and all are the participants. Here you are going to see more about what are secondary markets in India. So you will be seeing more about trading. Yes, what type of securities or everything, who and all are there, platforms, NSE, BSE, and all of that. Okay. For people who are watching it, remember people, in this you have an not a supplement amendment, so you do not, your supplements does not cover it, but it has been updated in our study materials. So BSE platform has undergone changes, so that will be covering it here. Now for you, listen. Secondary markets in India. So first one is dematerialization, people. First of all, should we have all our securities dematerialized? We have a rule also. We have seen Rule 9 of Prospectus and Allotment of Securities of Companies Act. Yes, there we have seen Rule 9. Any listed company going forward, if at all you are doing an IPO, it has to be mandatorily in demat form. And all your existing securities should also be converted to demat form. Same thing, we have a rule called Rule 9A. Unlisted public company coming up with a public offer going forward should be in demat form. Rule 9B, all private companies coming up with any new issue should be in demat form except small companies. So Rule 9, 9A, 9B, read with Section 29 of Companies Act. Correct? Hello. Okay. But remember, if a person does not want to trade, if he just keeps it, he does not want to transfer or sell. In such case, that person has an option to hold such shares in physical form. How? This is what you connect with rematerialization, RRF, rematerialization request form. If you remember. Hello? Okay, types of securities. First one is listed securities. What do you mean by listed security? Whenever a company enters into a contract with a stock exchange, the particular security gets listed. Always remember, it's the security that gets listed, not a company. So each security can be listed. Now imagine initially I came up with 10 lakh shares. A company later came up with a bonus share. Even for that also you need to file an application. Correct? It's not like once a particular security is listed, then all the issues under that will be listed. It's not like that. Next one, permitted securities. What do you mean permitted securities? If at all there is any security which is actively traded at other stock exchanges but are not listed on exchange, relevant norms of stock exchanges follow. What is this, sir? What do you mean by permitted security? Imagine a company is listed on NSE. Now a company is because listed on NSE, we are following all the regulations of NSE. Calcutta Stock Exchange can say, it's okay, come, I will let you trade your securities on my stock exchanges also. If one stock exchange allows another company's security to get traded over their stock exchange, even though they have not filed a listing application there, we call such securities as permitted securities. Brokers, custodians, clearing corporations. What is clearing corporations? Nothing but they take care of settlement. Basically, clearing corporation is always a wholly owned subsidiary of stock exchanges only. BSE, NSE have their own clearing corporations. What is their job? End of the day, buyer has purchased shares. So money should get debited from his account. Correct? And shares should get credited to his demat account. Opposite for the seller, whose job is to do all of this. It is a job of clearing corporation. Hello? Merchant banker, we've seen intermediaries. Trading platforms in India. There are so many trading platforms. One is called as main board. Main board means NSE, BSE, and they are nothing but the stock exchanges which are having nationwide trading terminals. We call them as main board. The next one we don't have is called as regional stock exchanges. Those stock exchanges which does not have a nationwide trading terminal, we call them as regional stock exchanges. The third type of stock exchange, we call it as SME stock exchanges. We have two. One is called as SME, BSE SME. Next one is NSE Emerge. That is their stock exchange. So our BSE SME, people amendment alert. See here, concentrate, full undivided attention should be here. Now what is BSE SME platform? It is there since 2012 itself. If a company wants to get listed on BSE SME, what are the requirements? This is where amendment has happened. The requirements of listing at BSE SME are, you have to be a company, LLP, trusts and all not allowed. Next one, financials. The post issue paid up capital, maximum 25 crore. Remember people, if at all you exceed 25 crore, you have to migrate to main board. Hello? Correct? So post issue paid up capital maximum is 25 crore. You have to be within that. So this 25 crore, is it market price or face value? Aduda surprise. Understood? Allah, face value. How can I define market price? Today it can be 20. It can become 1000. Company did not get that 1000 rupees. Company got face value only. Correct? Later it is getting appreciated. So remember, it is always face value. Net worth of minimum rupees 1 crore for 2 preceding full financial years. What do you mean by that? In my last 2 years, even one day, the net worth should have not gone less than 1 crore. Net worth in a simple definition, assets minus liabilities, on a simple for our layman terminology. The third one, net tangible assets of minimum 1.5 crore. Meaning exclude your goodwill, patent, copyright, everything, and I need to have at least 1.5 crore. Okay. Next one, track record, company or a partnership or a proprietorship or LLP. They said only company, Noda. Then why come LLP and all are coming? Remember, you might have first been a LLP. Now you are converted yourself. Now, how do I satisfy these requirements? They are telling you the firm converted into company should have a track record of minimum 3 years. I'm okay even if you're an LLP, but you should have a track record of minimum 3 years. Only that much, Allah. Applicant company should have audited financial results and track record of operations for at least one full financial year. Now, what is that? You can be a proprietor, you can be a LLP, you can be a partnership. Now, you are audited. See, for you, accounts getting audited and all is not mandatory, but in a company, it is mandatory. That's why they're telling you, you get your accounts also audited for the last 3 years. Then I don't have an issue. Okay. Next ones are, if not completed 3 years, then project for which IPO is proposed should have been funded by NABARD, SIDBI, financial institutions, central government, state government. What do you mean by that? Sir, what if, sir, I was not, have not completed 3 years? You said minimum existence of 3 years. I have not completed 3 years. Okay, now my question, what is your project? Sir, I am building something into agriculture based, agro product. Sir, okay, they're telling you, okay, then let us do one thing. You are raising money here. We don't have a problem. Apart from you raising money from here, their project should be funded by any of these institutions. They are trusting you means I will trust you. NABARD, your agricultural board, your SIDBI, Small Industries Development Bank of India. So if they have funded, then I will also believe you. Yes or no? Okay, next one. EBITD, what is that? Earning before interest, tax, depreciation. You should have a earning before interest, tax, or depreciation. Company should have operating profit from operations in any 2 out of the last 3 years. Take 3 years data. In that at least 2 years you should have operating profits. And in this also there's a twist. What? The out of 3, 2 should be profitable. Meaning operating revenue should be there. Previous year should mandatorily have operating revenue. So out of this two, 1 year should be the third year only, the last year. See, plus company should have operating profit for one full financial year preceding the financial year. Meaning today I am going for IPO. In the last year I should have operating profit for the entire year. Correct? Note, if project funded by institutions as mentioned above, it shall have positive operating profit for one full preceding financial year. Here they are telling two, no. Sir, what if it is funded by NABARD, SIDBI and all? Then they are telling 2 years won't come people, 1 year will come. Yes, Sam? Hello? Okay. Next one, sir. Leverage ratio not exceeding 3:1. What is the leverage, people? Nothing but like a debt equity only. Yes, so it should not be more than 3:1. Next one, people, disciplinary action, no suspension on promoters or companies promoted by promoters on stock exchange having nationwide trading terminal. You should not be suspended, basically. The last one, sir, other requirements. Just 1 second, people. Hello. One ನಿಮಿಷ. ಮೆಸೇಜ್ ಬಂದಿಲ್ಲ ಸರ್. 2427. Okay. Someone should feel some national emergency came. They'll call 5 times. You'll not even know who comes what. I thought some call from border. No. Huh? ಏನಕ್ಕೆ ಅಂತ ನೀನ್ ಫ್ರೀ ಇದೆಯೇನೋ? ಫ್ರೀ ಇದ್ರೆ ಉರಿ ಮೂವಿ ಎಲ್ಲ ನೋಡಿ ಒಂದು ಸ್ವಲ್ಪ ಪ್ರಾಕ್ಟೀಸ್ ಮಾಡೋ ಡ್ರಿಲ್ ಎಲ್ಲ. ಅವೆಲ್ಲ ನೋಡೋ ಹಿಂಗೆಲ್ಲ ಹೋಗಿ ಬೆಂಚ್ ಕೆಳಗೆಲ್ಲ ಅಡ್ಕೊಂಡು ಪಬ್ಜಿ ಆಡ್ತೀಯ. Okay, other requirements, people, mandatory, the company should have website. I think if a question is there, this can be a question. The company should mandatorily have a website, mandatory to have a demat and agreement with depository, no change of promoter in the last 1 year from the date of filing listing application. So whoever are there, they should have been continued from at least for the last 1 year. The composition of board should be as per the Companies Act. Whatever is given in Companies Act, minimum directors, minimum independent directors, women director, all that has to be satisfied. Company not referred to NCLT under IBC, insolvency bankruptcy code, liquidation, fighting of debt issues should not be there. No winding up petition against the company. If all of this is satisfied, people, you can go and list yourself on a BSc SME platform. Important amongst the two. And so that second condition we had still, we didn't do, sorry. Now disciplinary action, no suspension. Promoter or directors shall not be promoter or directors other than independent of compulsory delisted companies by exchange or companies that are suspended from trading on account of non-compliance. Meaning what, sir? I should have not been a part of any company that is suspended also. Now imagine there is Vijay Mallya. Kingfisher is suspended. Now Vijay Mallya is a director of another company. Let us imagine XYZ. That telling when XYZ is filing an application for IPO, I have a promoter, that is Vijay Mallya. You should have not been part of any company which has been suspended. So Kingfisher is suspended, then even XYZ also cannot go for an SME IPO, is what they are trying to tell. So, okay, next one. Director should not be disqualified or debarred by any of the regulatory authority. Default, no pending defaults in repayment of interest or principal to debenture, bonds, FD, promote holders of the company, promoters of promoting companies or subsidiary companies. You should have not made any defaults with regards to repayment of principal or interest to the people. Name change, in case of name change within the last 1 year, minimum 50% of the revenue calculated on a restated and a consolidated basis for the preceding one full financial year has been earned by it from the activity indicated by its new name. What do you mean by that? We were called as, let us imagine people, Arivu Educational Private Limited. Now, if at all Arivu wants to call itself as Arivu Finance Private Limited, of course, we are private. I'm just giving you an example. What are they telling you? In the last 1 year, if at all I've changed my name from education, I'm coming to finance. Why? It can be to take advantage of the word finance in the society. If anyone just says AI, artificial intelligence, people will just buy off. Semiconductor, people are just buying it off. So if someone who's trying to cheat people by using the words in the name, they're telling you, if you want to use such words, if you have changed the name of the company in the last 1 year, then at least 50% of the revenue in the last 1 year you should have earned from your new activity. Sir, imagine, sir, we have education, we have finance also. Finance has earned 20%. Education has earned 80%. You cannot go for an SME IPO this year. Not possible. Clear? Hello? Pakka? Okay. The third one, people, is called as Innovator Growth Platform. What is an Innovator Growth Platform? Name itself says, people, Innovator. Meaning, people, this person is an extensive user of technology, nanotechnology, biotechnology. They are into all this information technology, micro technology. Now, what are they into? They are basically startups. Now, they want to raise money. They have created one platform for them to raise money. That platform is called as, people, IGP, Innovator Growth Platform. Sir, can anyone go and list on IGP? Yes, anyone can go and list. And for that, there are some criteria you need to satisfy. What is that? An issuer is an intensive user of technology, IT, intellectual property, biotechnology, nanotechnology, as the case may be. And the 25% of the pre-issue capital of issuer for a period of 1 year should be held by. Try to break and read what they are telling you. They are telling people, what is that they are telling you? 25% of the pre-issue capital. The capital can be classified into three things. One is called as pre, meaning before going for an IPO, we call it as pre. Plus, if at all I'm going for an IPO, I call it as a new issue. Pre plus new, we call it as post issue capital. They're telling, before I come for an IPO, whatever is the capital, in that, people, 25% should be held by some people at least for a period of 1 year. And who are that? They're telling you, it can be qualified institutional buyers or IGP investors for the purpose of IGP. Who are these IGP investors? In our syllabus, we don't have. But generally, having a good money, around 50 crore rupees investable surplus, we call them as IGP investors. We used to call them as accredited investors also. The topic is deleted for us, it's not there. Next one is called as FPI, foreign portfolio investors. So I'm telling, if at all I have to come in my company, at least in the last 1 year, people, my particular capital should be held by these people. 25% should be held by these people. Next one, sir, entity meeting all the following criteria. What is that? First one, pooled investment fund with assets under management of $150 million. Next one, registered with financial sector regulators, SEBI, RBI, IRDA, PFRDAs, etc. Third one, resident of country whose security market regulator is a member of IOSCO, International Organization of Securities Commission. So generally what happens, all the countries' security market regulators, they all come together to curb money launderings, to curb illegal activities. All your country's security market regulators, they are all members to this particular treaty. So they're telling, if you are coming from outside India, you should be coming from such country where your security market regulator is a member of IOSCO. If not, you don't come. Next one, you should not be not a resident of a country which is a FATF non-compliant. FATF non-compliant? Any country apart from Pakistan. Pakistan is FATF compliant, no? Huh? No? Okay. Next one, sir. Note investor allocation of minimum application people is rupees 2 lakh. That is, if anyone wants to participate here, people, the minimum application money you need to make is 2 lakh. Now the question is, can you and me participate here? Are we allowed? If I have money, am I allowed? Huh? So remember, because it is 2 lakh people, we are always coming under the bracket of less than 2 lakh. Our demat accounts are issued in such a way that we get something called as people, retail individual investor category we are generally called as. So we cannot invest more than 2 lakh rupees. Our accounts only will not allow if it is an IPO. So because of that, we cannot participate. That is the reason. But if you can upgrade your account and things like that, yes, you can participate. Clear? Hello. The last concept is called as people social stock exchanges. What is social stock exchange? Social stock exchange is the new concept where not for profit or even a for profit, even a not for profit, even a for profit, they can come and they can prove their social intent. What do you mean by proving social intent? You need to say that you are into social activities like spending money on slum development, eradication of hunger, employment generation, education, malnutrition, fighting poverty, all this. You do any of these things. If you do all of this, then we prove that yes, you are proving your social intent. If that is the case, people, you can come and register yourself on the social stock exchange, and some companies are allowed to raise money also from social stock exchange using some bonds called as zero coupon, zero principal bonds. These are generally issued by non-profit organizations. That is, whoever is a not-for-profit, only they are allowed to do it. Clear? See, not for profit, and even you can list securities issued by what is that? For profit. Where is it? Applicability. Not for profit organizations seeking only to get registered. You can only get registered. NFPO seeking to get registered and raise funds. They can do both. Third one, for profit social enterprises seeking to be identified as social enterprises. I'm not raising money. I'm just getting identified as a social enterprise. Now, how is that eligibility? One is non-for-profit or for-profit shall establish primacy of its social intent. In the PDF, you have a big list. You need to satisfy that. Target underserved or less privileged population. Now, this is very important. I had given you one class test also on this one only. So, this was a question I was aiming for. One or more. In exam, we will forget that. Agreed? And this also will forget. Minimum. So 67% should be spent or earned, as the case may be. Okay, see. So when will we consider you as a social enterprise? Minimum 67% of 3 immediately preceding years. Average of revenue comes from eligible activities. So I'm saying employment generation. I'm saying old age homes. Whatever is the money you guys are earning. Imagine if you have earned 100 crore, 67% of it, 67 crore as an average, you should have earned through these social enterprises. The rest of the 33%, I'm okay if you're earning in a different way also. Next one is earning, one is spending. You should have spent on social enterprise. The third one is people, 67% of 3 immediate preceding years, average of total beneficiaries or customer base of target population. Meaning, sir, if at all I have given my benefits to 100 people, 67% of the people should be the target audience. Who will the target audience be? These people will be the target audience. Underserved or below poverty line, less privileged people will be my target audience. Agreed? However, sir, remember a corporate foundation, meaning like a Section 8 company or something like that, political or a religious organization, imagine BJP, Congress and all, professional or trade associations, that is your unions, trade unions, auto unions, employee unions, bank unions, infrastructure and housing companies, LIC housing companies and all of this, they L&T housing companies. Now these cannot be considered as what people shall not be eligible to be identified as social enterprises. You cannot be called. Political organizations, of course you cannot be called. Yes, you will be biased, that's all.
For example, the 67% that include the net profit of that organization.
Revenue.
Money raised from
Any revenue, that's why we are saying revenue is what you have earned. Profit Allah. Profit is if you are making profits. Revenue is whatever you have earned. So income. So for example, I might be running a old age home for a very reasonable price, 500 rupees. It might be a loss also for me, but 500 is coming inside. I have to call it as revenue. It might be a loss also.
So, in the on what they will do, that blind people sometimes used to have some back scene. They will fill on that. So,
Correct. So it's like that. Okay, clearing corporations we've seen. Okay, the last one is called as people market surveillance. For the people who have been using again the old one, there is a change here also. There is something called as people market surveillance. Important. Now see here. They have changed something in market surveillance. And before you had a big list here. Again, I'm covering the market surveillance part for you guys. Again, you can expect a question here. Market surveillance becomes an important question. Remember and go. Okay. Market surveillance people, we had earlier big thing people. Now the market surveillance is a little changed. Now market surveillance, before you had preventive and post. Now they have been segregated into online surveillance and offline surveillance. But majorly they are speaking same only. Or online is people like preventive. Offline is people. First of all, what do you mean by surveillance people? Surveillance means you generally say, right, CCTV surveillance, meaning someone is monitoring you. So we are trying to avoid fraud or any such illegal activities happening over a stock exchange. Now this can be done in two ways. One, I can stop you from doing it. Second one, it is done. You say Operation Sindoor. So one, I'll stop. One, you have done it. Now I will take my revenge. Investigations. So people, one is called online. Online is a real-time basis. We try to stop any illicit, illegal activities from happening on a stock exchange in real time. So it's a preventive measure. Offline people is a post-mortem. It has happened. You will just try, identify, investigate, and penalty, all that will come. But it has happened. So there are two. One is called online, one is called as offline. Both are important. Online is to stop, offline is to punish. Yes, sir. Okay, that is what is given here. See, market surveillance plays a vital role in ensuring market integrity, which is a core object of the regulators, SEBI or anyone. It is conducted by people, achieved through combinations of surveillance, inspection, investigation. See, one is online as well as offline. You have one surveillance online. Inspection, investigation, when will it happen? After everything is done is when you will investigate. And enforcement of relevant laws and rules. In order to enhance market integrity and safeguard interest of investors, have been introducing various preemptive measures such as reduction in price band, all of that. What is it? We'll see. Globally, market surveillance is either conducted by the regulators or exchanges or both. So, who will conduct the surveillance? It can be SEBI also, it can be NSE BSE also, or both. Now, the surveillance are classified into two categories. One is called as online, one is called as offline. Sir, online people, we have one measure by which we control the price movements. So we make sure that imagine if some stock is being, something is happening to a particular stock, we try to stop it from very drastic movements. Let us imagine, I told you in the class also, there is a company called as Polycab. They got a notice from income tax authorities. Now, good or bad, we don't know. People will start doing a panic sell or a panic buy. We do not want that to happen. We have to cut it. We have to give a breathing space to the people. So what do? We have something called as a trading halt. Meaning that shares you will not be able to buy or sell when that limit hits. We generally call that limit as a upper circuit or a lower circuit. Sir, what do you mean upper circuit or a lower circuit? In a day, people, SEBI has allowed, basically stock exchanges has allowed a particular percentage of movement of a particular share price, either upwards or downwards. 1% you can move. Beyond that, you cannot move. The trading halt will happen. Clear? Meaning, say for example, if I take, there are two things, people. One is called as, so you can take it like this. In market surveillance, we have something called as online, offline. Now we are seeing online. In online, there is one measure we have that is called as price band, reduction of price band. Under reduction of price band, we have two. One is called as people dynamic price band. Next one is called fixed price band. What do you mean by a dynamic price band, people? this dynamic price band is used for those securities which do not have a, what are the securities on which derivative products are available have a dynamic price band. What is that, sir? Derivative product means what, people? Imagine there are some securities who are present in futures as well as options. So for such securities, people, the price band is 10% or as decided by the stock exchanges, as the case may be. Now, what do you mean by 10%? Let us imagine a company share price is 600. Are you present on options and futures? Is your company stock present on options and futures? If the answer is yes, then in a day, the maximum share price movement of your stock will be restricted to 10% either ways. It can go up to maximum 660, it can fall down to maximum 540, not above or not below that. Now, after it hits 540 or 660, accordingly, we call it as upper circuit or lower circuit. Now, the trading halt will happen, meaning you cannot trade unless and until now the market regulators will check the news. What has happened? Why did it hit LC or UC? Why? If it's a genuine news, there is nothing to panic. People, they will lift this particular UC or LC. Now, again, it will start trading. But we will halt it and we will check it. That's why we call it as a real-time surveillance. Hello? Okay. Next one, people, is called as fixed price band. When will we have a fixed price band? This is for those securities which are not present on derivative segment. So companies who are not present on futures, options, they will come under this particular category. Hello? Okay. For this people, the band movement is people 20%. However, if stock exchanges want, SEBI has said 20, meaning if it is 600, I can revise it 120 upwards, 120 downwards. But however, if stock exchanges want, they can revise this 20% to 10 and 5 if there is a need be. Meaning they can do a trading halt at 10% also, at 5% also. Is clear? Pakana? Okay, this is under online surveillance. The next one is called as people offline surveillance. What is an offline surveillance, people? It's more like a preempt, mean it's done. It's a post-mortem. So, sir, under offline, sir, we have basically people three things. What is that? One is investigation. So, something has happened. I'm going and investigating. Second one, people, is called as a regulatory compliance. I'm trying to follow the rules. The third thing, people, is called as surveillance framework. What is surveillance framework, people? Is nothing but in surveillance framework, it's nothing but surveillance again is checking. I will check the stock under offline in two categories. One is called as GSM, one is called as ASM. Now under surveillance, we'll have two. One is called as GSM, one is called as ASM. What do you mean by GSM? GSM stands for graded surveillance measure. What do you mean by that? GSM is a surveillance measure on securities whose prices is not commensurate with financial health and fundamentals. What do you mean by that, sir? Now imagine, people, if there is a stock whose share price is 7,000, 8,000, 9,000, but its financial results or the book value does not show that the company is worth 7,000, 8,000. That means someone has manipulated it. We categorize such a stock as graded surveillance measure, meaning your price and your financial health is not commensurate. Commensurate means, people, equal. It is not traveling as per your growth. It is going somewhere else. So next one is called as, people, additional surveillance measure. What do you mean by additional surveillance measure, sir? Now based upon a particular stock being purchased and sold more than a deserved quantity. Every day, generally, people, some 50 lakh shares gets traded, but one day it has been traded 5 crore shares. Why? So depending upon the price, depending upon the volume, depending upon the concentration. So we take all of this into account, people, and that is what is called as, people, ASM. Hello? Clear? Huh? ASM, they consider a lot of categories. For example, imagine how many pans are doing this trade, meaning, people, only some 3-4 pans are repeatedly buying this stock, meaning only 3-4 people are repeatedly buying this stock. Again, something is problematic. Volume variation, meaning what, people? There is a lot of Generally, some 50 lakh shares were getting traded. Now, all of a sudden, people, the number of shares getting traded is going to 2 crore, 3 crore. There is some reason. So, we consider all of these reasons, people, and we categorize a stock under ASM. So, GSM, people, based upon what is that? The financial health. The price is not nowhere reflecting to your financial health. I will consider you under GSM. If at all it is based upon your ASM people, it considers how many pans are getting traded, meaning how many people are trading it, volume, price, all of that is getting considered in ASM. Is clear? Hello? Pakka? Apart from this, people, we had seen some other thing, one important thing also, which I didn't think we did. Okay, block deal and bulk deal important. What is a block deal, people? Block deal is nothing but, people, in our normal stock exchange only, there is a separate trading window which will be open for 30 minutes in a day. One is in the morning, one is in the afternoon. Morning session is called as 8:45 to 9 o'clock. The evening session, that is afternoon session, will be between 2:05 to 2:20. Overall 30 minutes. Here, people, a block sale and buy of shares will happen. So big people, if they want to exchange shares without the market getting affected, they come and trade here through brokers. It's called as what, people? Block deal. The block deal, people, minimum order size shall be at least 10 crore. And remember, the price movement also should be within plus or minus 1%. Meaning, in the stock exchange, the shares are getting traded at, say, for example, 600. Then the block deal should happen between plus or minus 1% of 600. Meaning, it can happen at 594 or 606. It should be between this. Now, that is called as what, people? Block deal. And always remember, sir, who will report the block deal, sir? The block deal will be reported, people, on the stock exchange. Who will report it? Stock exchange gives the information on the block deal, such as the name of the script, who did it. If you remember, we had seen in the class also. Quantity of shares brought and sold, traded price, etc. to the general public on the same day after the market hours. Who is doing it? Stock exchange is doing it. On the other hand, what will be a bulk deal? There is no separate window and all. This can happen in your normal trading window throughout your trading hours. 9:15 to 3:30. It can happen during that time only. There is no separate window, no separate timing and all. Sir, what do we call as a bulk deal? Sir, bulk deal is a trade where total quantity brought or sold, buy or sell, is more than 0.5% of number of equity shares of a listed company. Take the total shares. If at all buy or sell is happening for more than 0.5%, we call such deal as a bulk deal. Okay, the bulk deal can be transacted by the normal trading window provided by brokers throughout the trading hours. That's the difference, correct? Sir, now who will disclose? That will be disclosed by a stock exchange. Here, who will disclose? It will be disclosed by the broker shall disclose to the stock exchange. Sir, what if you are saying 0.5%? It did not happen within one deal. I did 2-3 deals. So how do we report it? You are saying immediately. If at all, people, bulk orders are visible to everyone. If the bulk deal happens through a single trade, it should be notified to the exchange immediately. Upon the order, if it happens through multiple trades, it should be notified to the exchange within 1 hour from the closure of the trading. Whenever the trading closes, within 1 hour, people, you need to intimate that I have done multiple trades and it is more than 0.5%. Correct? Yes, sir. Okay. Bulk deal. What is Nifty and Sensex? Nifty is nothing but a basket of top 50 companies. Nifty is Nifty 50. BSE Sensex is 30 companies. So Nifty is nothing but a basket of top 50 companies which is selected by National Stock Exchange, and top 30 companies selected by Bombay Stock Exchange is called as Sensex. This is nothing but a barometer of the economy. Indices are always a barometer of economy. Based upon the performance of Nifty and Sensex, you can say whether the stock market is doing good today or bad. For example, even if today, if you want to randomly check, now say Nifty today.
How frequently they change the
it will be changed. It's not dynamic. It keeps fluctuating also. So, sir, did it fall today? Did it raise today? There has been a significant movement. It has been changing today. Shares have fallen. Yes, the shares have fallen. If you can just try to relate how price sensitive it will be. There's some geopolitical, some political, some border issues. There will be a direct impact on the market. The first impact, see, as soon as the market opened, the first impact was on that. The trading started seeing red lines.
So this basically happened due to panic selling.
Yes, yes. Panic selling, and overall it's a bad news, right? So when the market sentiment is bad, the market will fall. People will think that the market is going to fall and the people will start selling it. That's how it happens. Yes, Cleara? Hello? And
So the trading
margin.
people will lesser price and buy the stocks again in.
Correct. They would want to take the advantage of that particular movement. Okay, there is something called as margin trade. What is a margin trade, people? Margin is nothing but, people, broker gives you what the bomb are you? Okay. So what is a margin trade, people? Margin trade means, people, a broker gives you a loan like an advance. So in addition to your regular trade, whatever is the amount, you can add some more money, people, given by the broker. That money given by the broker to you is called as, people, margin. In margin, people, there are some terminologies you need to remember. One is called as initial margin. What is the initial margin? The minimum amount of money that the client has to bring in to do a particular trade is called as an initial margin. Next one, people, is called as maintenance margin. What is maintenance margin? At any given point of time, a client has to keep a particular amount with the broker. It should not go below that. That is called as what, people? Maintenance margin. The third thing is called as, people, call margin. What do you mean by call margin? Whenever the money is going less than whatever is to be minimum maintained, the broker will give you a call, meaning they will ask you to raise the funds that is maintained by you with the broker. Now that call is called as call margin. There is basically three: initial margin, minimum amount you need to bring it to do a trade. For again, I'm telling you in a simple way, what is a margin trade? Imagine I have 1 lakh rupees. My broker tells, why do you want to do a trade for just 1 lakh? Why don't you do it for 3 lakh? I'll say I don't have. Your broker will say, your Upstock Zerodha will say, do one thing, you bring in 1 lakh, I will give you 2 lakh. You do a trade for 3 lakh. So my broker is telling me, you bring in 1 lakh, I'll bring 2 lakh. The minimum the broker told me to bring in, that 1 lakh, is called as initial margin. And my broker says, at any given point of time, make sure the money does not go below 1 lakh 50. That minimum I need to maintain is called as 1 lakh 50. That is called as maintenance margin. If it is going below that, he will give me a call. The number is falling, add some amount. That is called as what? Call margin. So remember these three terminologies, important. Clear? Yes, sir. Next we had towards the end, what is that? We had all this. Hello? Right entitlement. What is the right entitlement? Right entitlement is nothing but whenever you have been issued a rights issue. Now, if I do not want to write, what is a right entitlement, people? Now, whenever there is a rights issue happening, as a part of a rights issue, I'm an existing shareholder. I have a right to buy more shares of the company. So they give me an offer to buy more shares of the company. If I do not want to buy this, I can further trade it over the stock exchange, and that is called as what, people? A right entitlement. Right entitlement is nothing but a company has given me an option to buy the shares of the company because I'm an existing shareholder, and we call it as a rights issue. If I do not want to buy it for myself, I can give it to someone else to buy. Now that is only called as right entitlement. Today you can trade that over a stock exchange. We call it as a right entitlement. Clear? impact of various policies on stock markets. We have seen this Fed policy. What is Fed policy? If at all federal bank, meaning US policy, federal bank like RBI, central bank, if they are changing any percentages, we are also forced to change. That is having a direct impact on the Indian stock market. Why? Let us imagine if they are increasing the rate of interest of FDs and RDs. Foreign portfolio investors will take all the money from India, they go back and they will invest there because it is more safe. And now it is RBI's discretion. Now RBI should increase the rate of interest here also. If not, people will go back. So it is directly having a impact on our stock market. That is what they're telling you, Fed policy. Next one is people. What is that? Credit policy of RBI. How does credit policy of RBI have an impact on stock market? Imagine if FDs and RDs are giving you 12%, 15%, 18% return. Why would someone come for stock market? So if repo rate, reverse repo rate and all is less and more, accordingly people's decision whether to invest in stock market or not will keep changing. Imagine if at all the bank is giving you 15%. Why would someone want to invest in mutual fund which will just give you 12%? That too which is coming up with risk. So whether RBI policies, is it having an impact on people investing money on stock exchanges? The answer is yes. Yes or no? Yes sir. Next one. What is that? Various quantitative instruments of credit policy. We have seen this also. What is the repo rate? Repo rate is nothing but the rate at which the commercial banks borrow money from RBI. And RBI controls inflation and all through this, which I told you. CRR, the minimum money that the banks has to park it with RBI. That is called cash reserve ratio. SLR, the minimum money that the banks has to maintain it with them in the form of liquid form like gold, money market instruments, cash, etc. It's called SLR. Reverse repo, the interest that is charged by banks for giving loan to RBI is called as reverse repo. Standing deposit facility, what is it? SDF? Standing deposit facility, what is this? We had seen this, no? Margin standing facility, liquid adjustment facility, LF corridor. What was this?
Deposit money for the short period and pay on interest.
Correct. So people remember this standing deposit facility is nothing but people the rate at which Reserve Bank accepts uncollateralized deposits on an overnight basis. There's nothing but people RBI gives an option for you to park your funds on a temporary basis for a very good rate of interest. When will RBI do it? Whenever it feels that in the economy there is so much of money, I will increase the rate of interest. Imagine I'll tell a bank, if you give a loan to someone, he will repay, he will not repay, I don't know. You're giving it at an interest of 8%. You give it to me, I will definitely give you 6%. The banks feel more comfortable and confident to give the loan to RBI than to give this people. So that is only called as what people standing deposit facility. And they are telling you the rate at which RBI borrows. SDF rate is placed at 25 basic points below the repo rate. What is repo rate? The rate at which RBI gives loan. So if at all imagine RBI is charging 6% loan for a bank to borrow money, they're telling you this deposit facility, I will pay you 5.75% as FD, RD if a bank does it with RBI. That is the meaning of 25 basic points. Points is nothing but percentage. 25 basic point is nothing but 0.25%. Is this clear? Huh? Hello?
Borrow money for government.
Borrow though, it is like a parking of money. But yes, the reason will be that. The difference is in reverse repo, we are using the word called borrowing. In this one, standing deposit facility, it's like an FD given by the RBI to the banks. One is borrowing, one is like a deposit. Yes, sir. Next one, people, marginal standing facility. What is MSF? Imagine a bank wants to borrow money. You have borrowed repo rate. You have already borrowed some money from RBI. Even in addition to that, you still need more money. So RBI will still give you money, people, but the rate that is charged will not be same like repo rate. It will be more than repo rate. We call it as, people, marginal standing facility. That's why we call this rate of interest as penal rate. It will always be more than repo rate. If repo is 6%, this will be generally 6.25%. We will charge more. Hello? Okay. Liquid adjustment facility is nothing but, people, using this tool only. RBI controls inflation, deflation, money in circulation, etc. LAF corridor means, people, nothing but the percentage difference between your standing deposit facility and margin standing facility. So this we said it is around 5.75%, and this we say 6.25%. This only is called as corridor. That is only called as LAF corridor. Is clear? Yes, sir. The last thing is called as, people, inflation index. What do you mean by inflation index, people? We generally try to measure what is the rate of inflation that is going on in the economy. Meaning, in the, say, if you go 10 years back, what was the price of milk? Now what is the price? So we try to measure that in two places. That place is called as, people, first, a manufacturer gives the goods to the wholesaler. Wholesaler gives it to the retailer. Retailer gives it to the customer. Now, people, if at all an inflation is measured in this stage, we call it as, people, wholesale price index. If at all the inflation is measured at this stage, we call it as, people, consumer price index. What is more realistic, people? We used to follow up till 2012 to 2014. We used to follow WPI only as our base. Now we got to know this is not the price at which you are buying it. Even this margin is also getting added. That profit is also getting added. The cost is still going up. The ultimate price at which we are buying is a more realistic price. So today we follow CPI as our base index to measure inflation. Clear? And why is CPI even more relevant? It is even more relevant because, people, the categories of people will be different. Meaning, we can have urban, we can have village, we can have labor. So there are different categories of consumers that buy your products. And what else is the difference, people? In WPI, it does not cover services. In CPI, it covers services also. Like education is covered here, entertainment is covered here. What was your education fees 10 years back versus today? That is measured by CPI, not WPI. Hello? Getting it? Sir, for that we had a table. Who publishes it also? WPPI is published by Office of Economic Advisor, that Ministry of Commerce and Industry. CPI is published by Central Statistic Office, the Ministry of Statistic and Program Implementation. That's more important. Clear? Hello? So remember that and go. That is your chapter 2. Any doubts? Hello? Okay. More important chapters. The rest and all we can easily finish it off. What time you guys want break? 12:30? No, lunch I'm asking you. Now it's 12:15. 1? We'll finish 2 chapters and then take a break then.
Okay.
Okay. Next one, people, chapter 3. Securities Contract Regulation Act. What does Security Contract Regulation Act generally govern, people? It governs whenever, if there is a new stock exchange that has to be created, it will come under new stock exchange only wants to get created. It will come here, and whenever a company wants to go for an IPO, simple procedure comes here, complete detailed procedure comes under ICDR, and securities contracts, meaning, sir, buying and selling of the shares amongst the people. It is a contract end of the day. That is also regulated by this particular act. So 3 things: stock exchange, second one is IPO, third one is security trading is getting regulated by this particular chapter. Okay, see here, scope of SCRA, procedure for recognition of stock exchange from SEBI or central government, procedure for Recognition of stock exchange. Can we have another nationwide trading terminal today? That is what is the procedure. Listing of securities, detailed is ICDR, basic is here. Next one is contract and securities, buying and selling, trading. That is the scope of this particular chapter. Non-applicability of the act, it does not apply to government, RBI, local authority, municipality, BDA as the case may be, corporations set up by special laws, basically statutory companies like LIC, IDFC as the case may be. IC, ICSI and yes. Next one, convertible bonds, share warrants or any option or right insofar as it entitles the person in whose favor the above has been issued, whether by conversion or otherwise, on basis of price agreed upon when the same was issued. What is that, sir? If at all it is a predetermined price, if it is a convertible security, then they are telling you this chapter will not apply. The third thing, sir, any other contract exempted by CG, for them this particular chapter will not apply. Next one, sir, recognition of stock exchange. Outright, I'm telling you, they will not ask you, but just know and go. I'm saying because we are coming to the fag end, towards the end, on the last day, if you guys wish to skip some topics, it can be this. It can be okay. So I'll tell you in various places which are that, it's okay. I'm not telling be laid back from day one. Always remember, for a confident attempt, the more you know, the more better it is. But when you come to that bubble where I'm not able to read it, you give this a secondary preference. Because you never know, you can never predict the patterns as such. But yes, somewhere we have to take the choice. Next one we will, company form of stock exchange. So today people, it has to be a company form. LLP, trust and all is not possible. So BSc, NSE today is a company form of stock exchange. I hope you guys know NSE is in the process of coming for an IPO also. They have filed their prospectus probably within a year or two. NSE itself is getting listed. Yes, remember it is going to be one of the biggest IPOs also, one of the most successful IPOs. Not monopoly. BSE is also listed. Yes, sir. Okay. Company form of stock exchange. Section 3. You will apply for recognition. You will apply with central government. Yes. So basically it is SEBI. Central government has given its power to SEBI today. If at all SEBI is satisfied, of course, you will give all the documents. You will give all the governing rules, regulations, how to admit a member, suspend a member. For all that you will give rules. If everything is given, if CG is satisfied, CG will publish in the official gazette that from today we are going to have a new stock exchange. The stock exchange will become a recognized stock exchange. And remember, sir, CG has a right to give. It also has a right to withdraw. If at all at any given point of time, if you have not complied with the rules and regulations, I have a right to withdraw the license I have given it to you. Such withdrawal shall not affect any contracts which the company has entered. So if I am withdrawing the license today, for the 2 years company's shares are traded, all that will not become void. That will be valid only. Futuristic, I can withdraw. Past, I cannot do anything. Next ones are powers of central government. Again, okay, they may ask, but okay. What is the power of central government? To call periodical returns and make inquiries. SEBI may call for information in relation to affairs of stock exchange. I can ask you to file. NSE, BSE, you guys file me some information. It may order stock exchange to maintain books for 5 years. I can tell you to maintain that book, accounts, records, deeds, vouchers. I can ask you to maintain for 5 years. The stock exchange shall file annual report to central government. Annual report, just like a normal company files annual returns, right? They will file annual reports. To make rules or direct rules, CG may direct stock exchange to make or amend rules in 2 months from the date of its order. You have your own rules. If I want, I can tell you to change those rules. If I tell you people, then they are telling you within 2 months from the order, you need to make the changes. If stock exchanges fails to do so, CG on its own will make the rules. To supersede the governing body, what is my supersede? If I feel that the people who are in charge of the stock exchanges, they are not doing the right job, I can supersede. Supersede means I'll pull all of them down. I'll replace them with a new set of body. What will be their rights? Whatever are the rights of the existing people, that will be enjoyed by the new people. Agreed? Next one, suspend the business of stock exchange. If CEG has a power to suspend the business of stock exchange when during emergency, the maximum time is 7 days, which may be extended if need be. Now, for example, imagine this war thing. If it gets serious, the market is having a severe impact. If need be, we can terminate possible. To issue directions, to issue directions to issue directions in the interest of investors to prevent the affairs of stock exchange or any person being detrimental to secure proper management, I can issue orders and you have to follow. To grant immunity, what do you mean by immunity? In one place, I give you a difference between immunity, settlement, compounding. There we had seen immunity is the power of central government. You remember? So see, upon full disclosure of violation before initiation of prosecution, meaning sir, nothing should have started. You only go and accept your mistake. Immunity is nothing but they might agree to whatever you have done and accordingly they may reduce your penalty. That is possible. CG may on recommendation by SEBI impose immunity from prosecution or penalty. CG may also withdraw such immunity if such person does not satisfy the conditions. I have given it. If I feel you have not worth it, I can take it back also. I have a power to delegate. Central government has a power to delegate its powers that is given in this particular act. In 1956, they said we have a power to delegate. It has been delegated also in 1992 to SEBI. It can also be delegated to RBI if need be. Today it is not, but if they want, they can delegate. Hello. Next one, power of SEBI to make or amend bylaws of stock exchanges, to make regulations. Example, SEBI LODR. Every chapter is an example only. To adjudicate, appoint adjudicating officer. SEBI may enhance the penalty if deems fit. We are seeing this also. There will be three officers. One is called as investigating officer. One is called as adjudicating officer. The third one is called as recovery officer. What is the role of investigating officer? He comes and investigates the affairs of the company. I can interview, I can investigate the employees, managing directors. It will be their duty to cooperate. And I can interrogate them. I can make them write everything into a statement. I can make them sign and I can present it in the court as an evidence against them. And can a person take records of the company? Yes, possible, up to a period of 6 months. After that, he needs to return it, but if he wants, he can ask it back again. But remember, maximum time given is 6 months, but you need to extend it. But if at all a person feels, an investigating officer feels that a company is going to destroy the documents, they are going to mutilate, they are going to tear. In such cases, you can go to a judicial magistrate, you can apply for a seizure order. If a judicial magistrate gives you a seizure order, the records can be seized by this particular investigating officer and he can keep those books in his custody until this particular investigation gets over. Now, what is this role? This role is a role of investigating officer. Now, investigation is done. I will say this particular managing director has done a non-compliance. Now comes people the role of court. We call that person as an adjudicating officer. SEBI appoints an adjudicating officer. After being satisfied, the adjudicating officer passes an order of yes, the person has done non-compliance or not. If yes, penalty, and as the case may be. If a person is not happy with the order passed by adjudicating authority or SEBI, you have a right to go for an appeal. If at all you want to go for an appeal on the order passed by adjudicating authority or SEBI, you can go for an appeal with SAT. Correct? Yes, sir. Sir, now adjudicating authority says you need to pay a penalty of 2 crore rupees. Now, how do I get this 2 crore? First, you only pay. Very good. Easily, the matter comes to an end. What if you do not pay? Now, the third officer will come. The third officer, we call him as a recovery officer. The recovery officer will come and take the money from your immovable properties, movable properties, your bank accounts, and if that is also not satisfied, I can take over the what is that control over your management. I can even arrest you. That will be the role of recovery officer. Hello, Pakka. Which one? Continuation of proceedings. If at all there is what is that penalty or what is that recovery amount? Have I given it here? ಹೋಯ್ತಾ ಅದಲ್ಲ
In case of death or
correct. So basically it's nothing but if a person dies, people, what is going to happen? Whatever are the orders, whatever is the prosecution that is going to proceed in the name of legal representatives. But remember, a legal representative is never liable for more than the assets inherited. So if at all I am getting a value of 5 crore from the parent, the liability will also be restricted to 5 crore only. But if the case has started, if the person dies, it will continue in the name of the legal heir. Correct? So that is what we had seen. Okay. Powers of stock exchange to make rules restricting voting rights. If at all a stock exchange wants, they can pass these rules. They can restrict 1% is equal to 1 vote. Restrict right of members to appoint proxy. I can say in my for this particular resolution, you guys cannot have proxies. I can restrict that right. Restrict voting right of members to only certain matters in meeting. Not everything we will consider your opinion. Only certain things you guys can vote. I can restrict you guys. Next one, open. Where did it go? Dear Guru, ಎಲ್ಲ ಪ್ಲೇನ್ ಆಗೋಯ್ತು. Magic, very deadly magic it is. Why, what happened? Okay. Okay. One important part in this particular thing, a power of stock exchange restricting voting rights only on to certain matters. To make bylaws, opening and closing hours, I can do that in my rules. That is stock exchange 9:15 to 3:30. I can do it. Fixing or altering the date of days of settlement. We started with, I told you there's an amendment there also. We used to fall T plus 2, T plus 1. Now it is T plus 0 for 25 scripts, beta version. Listing of securities, we can make rules for that. Recovery of fees, fines and all, we can make a rules for that. Fixing the brokerage, what can be charged maximum and all, a stock exchange can make rules for that. Next one, people, public issue and listing of securities. A company will file an application to the recognized stock exchange. The stock exchange either can approve or disapprove. If they disapprove, people, within 15 days, I can go for an appeal either to central government or SAT. Within 60 days of order, if at all there is a justification, I can give you a one-time extension of 60 days. And if that is also not okay, if SAT order also are not satisfied, you can go to Supreme Court. Yes, sir. Next one, sir. Minimum offer and allotment to public. Important. Rule 19 of Securities Contract Regulation rules. Now, according to this, what they are telling you people, whenever a company is going for an IPO, what is a minimum percentage of shares you need to allot to the public category? They are telling you, if at all the post issue capital, I told you that time only, my existing capital plus the new capital, that is whatever I want to issue now, is called as people post issue. They're telling me in the post issue capital, whatever my existing plus the new one, proposed one, if at all my post issue capital is less than or equal to 1600 crores, then they're telling me I have to allot to the public at least 25% of each kind of security. If I have different types of securities that is traded, everything I need to make sure 25% is given to public. Sir, if my post issue capital is more than 1600, so 1601 up to 4000, they are telling me I have to give at least 400 crore worth to the public. This is an exam based question. I had given it to you. 400 crore worth you need to give it, people, and make sure you need to increase this 400 crore to 25% in the 3 years of listing. So if it is 4000 crore up to 1 lakh crore, then they are telling you at least 10% of the issue you have to give it to the public, provided increase it to 25% in the matter of 3 years. If it is above 1 lakh crore, people, they are telling you 5000 crores in value should be given, and at least 5% of each such class of security should be given to the public. 5000 and 5% in such a way that you need to increase it to 10% in 2 years and 25% in 5 years if the allotment size is more than 1 lakh crore. Important from exam point of view. And remember, sir, what is that? Rule 2 and 3 shall increase its minimum valuation. We saw this. We saw this in public exam. We saw this. Basically, the 2 years, 3 years, 5 years is what is the note. Yes, remember that. Next one is called continuous listing or minimum public shareholding. See, the first condition they are telling you is what is the minimum shares I need to allot to the public at the time of IPO. They're telling 400 or 10% all of that. Sir, going forward, can I reduce? No, not possible. That is only called as, people, minimum public shareholding, that you need to maintain it on an ongoing basis, continuous basis. It is not one day. So people, that is nothing but 25% only. So see, if it's a normal listed company, other than public sector undertakings, you have to maintain it at 25%. If it falls below 25%, you will have 12 months time to increase it. Best example I had given it to you here was your Patanjali. Correct, huh? In delisting chapter, you had seen one reference given to this. Sir, when will a company be mandatorily delisted? Grounds for delisting. If at all the minimum public shareholding goes below 25% and 12, it is beyond 12 months, people, it will go for a mandatory delisting. Next one, people, listed PSU. Earlier it was 10% public sector undertakings. Now it has been made 25% for them also. For transition, people, they had given them 3 years, which is done. We need not remember that now. But for a public sector undertaking, people, if it is going below 25%, the company shall increase it in 24 months for PSU. Next one, sir, for a listed company which is undergoing insolvency bankruptcy code, for them, people, at any given point of time, it shall not fall below 5. 5 at least you need to maintain. In 12 months, you need to increase it to 10%. In 3 years, you need to increase it to 25% for the companies which is undergoing insolvency and bankruptcy. Clear? Hello? Clear? I think that is there in chapter 3. That's all right? Hello? Okay, 1 second.
Maybe someone.
All your friends and all went to home, Ada?
Actually, what happened is, I don't know why, but there is no proper response in WhatsApp. Sir. Yesterday I asked in Vendesh also, tomorrow marathon live is there. They said
No,
they are not sure about it. Like that, they said, until 9:50, I also don't know today you are coming. So only came late.
When I confirmed and came, sir, after them only I came.
Like that, some people think.
Hey, when I only came and said you don't check with anything, da. When I say I'll take, definitely.
Sir, we have been
Huh?
Yeah, I asked for you, sir. They said just now has left.
intermediaries.
But the minister of labor to already PDF upload has been happened in that. Already the thing okay.
ಅದೇ
Same the amended book ಅಲ್ಲ. ನಾನು ಟಿಕೆಟ್ ರೇಸ್ ಮಾಡಿದ್ದೆ ಸರ್ ಅವ್ರು ಹೇಳ್ಬಿಟ್ಟು ಆಲ್ರೆಡಿ ಆ್ಯಪಲ್ಲಿ ಅಮೆಂಡೆಡ್ ಬುಕ್ಗೆ ಅಪ್ಲೋಡ್ ಆಗಿದೆ ಅಂತ ನಾನು ಓಕೆ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಚೆಕ್ ಮಾಡಿದೆ ಅದು ಅಮೆಂಡೆಡ್ ಬುಕ್ ಅಲ್ಲ
ಈ ಬಾಂಬೆ ಸ್ಟಾಕ್ ಎಕ್ಸ್ಚೇಂಜ್ ಅವೆಲ್ಲ ಚೆಕ್ ಮಾಡಿದ್ರ ಇಲ್ವಾ ಅದರಲ್ಲಿ?
ಸರ್ ನಾವು ಅವತ್ತು ನೀವು ಕೇಳಿದ್ದಕ್ಕೆ ಬೇಕು ಪೂರ್ತಿ ಬೇಕಿಲ್ಲ ಚಾರ್ಟ್ಸ್
ಅದೊಂದು ಚೆಕ್ ಮಾಡ್ತೀನಿ, ಬಟ್ ಅದನ್ನು ಇಟ್ಸ್ ಅ ಕನ್ಸರ್ನ್ ಓನ್ಲಿ. ವಿ ನೀಡ್ ಟು ಚೆಕ್ ಒನ್ಸ್ ಅಗೇನ್. ಐ ವಿಲ್ ಚೆಕ್ ವಾಟ್ ದೇ ಹ್ಯಾವ್ ಅಪ್ಲೋಡೆಡ್.
ಅಮೆಂಡೆಡ್ ಇರೋದಿಲ್ಲ.
Yes, 100%. Okay. Okay. Yes, people, let's start with the next one. SEBI, sir, Securities and Exchange Board of India. Again, I can classify this into three parts, which speaks about SEBI, its powers, its compositions. I would say okay. Next is SAT. Important parts here will be, instead of focusing on composition and all of that, concentrate more on power of SEBI and power of SAT. They all are what is the power of SEBI and SAT? The power of SEBI and SAT is similar to civil court only, right? So they have a right to summon, they have a right to decide ex parte, they have a right to what is that? Documents, investigate, and all that they have right. They can review its own decisions, set aside ex parte. So all these are the powers. So remember that becomes more important. And the next part in SEBI part, I would say that is important is scores. Scores is important. Again, a little amendment has happened here for people who are not, we are referring to the old one. Remember, there has been a change, a little change here. Again, not part of supplement. So there has been a change in this also. They have updated in the material only. So scores also has been changed. I'll be doing that also here. And the last part is informal guidance. Give more preference to those two. Okay, so scope and objects are to protect the interest of investors, to promote development of securities market, to regulate the securities market and matters connected thereto. Composition of SEBI, there will be one chairman, two members from Ministry of Central Government dealing with Finance and Administration of Companies Act, one member of RBI, 5 members appointed by Central Government, in which 3 shall be full-time members. Functions of SEBI, measures taken by SEBI to achieve the objective. That is, this is my objective. What are the measures I take? What are the measures I have taken? To regulate the business and securities market, registering the intermediaries. Now we see chapter 6. There are so many intermediaries and I am trying to register them. Prohibiting fraud and unfair trade practices. Chapter. Insider trading. Chapter. Promote investor education and training of intermediaries. Regulate substantial acquisition. SAST. Chapter. Power of SEBI, same as civil court. Summon evidence, ex parte, review its decision and all that. Discovery of documents. SEBI measures on completion or pending of investigation. After completion or even during the pending of investigation also, SEBI can take these measures. Suspend trading of any security. I can say don't trade. Suspend office bearers of stock exchange possible. Restrain process from accessing securities market. I can say don't come. Attach bank accounts or property for intermediaries or any person involved in violation for not exceeding 90 days. You will not be able to sell, buy, you cannot even borrow 1 rupee. Direct intermediary, any person not to alienate an asset under investigation, meaning you pass an order, tell them that they cannot sell that asset, that will be freezed. Note, power of SEBI shall not apply to IFSC. Such power shall be exercised by IFSCA. Again, chapter only, if you remember. All these powers are not exercised by IFSCA on their own. They are not able to see here now. Investigation by SEBI. We have done this entire thing. So again, I will not do. Investigating authority, adjudicating authority, and recovery officer. prohibition of manipulation and deceptive devices, employee manipulation, employing any scheme. We'll basically see it in unfair trade practices only. Again, we'll cut copy paste. SAT people composition. One composition people, they will have one presiding officer, presiding officer. It is presiding officer, and there will be two or more members, that is judicial and technical member. And appeal on order of where and all I can go for a appeal to SAT, important. You can go on appeal passed by SEBI, adjudicating authority, and even IRDA and even PFRDA. Appellate body for all of them is SAT only. Within how many days I can go? Within 45 days. If need be, extension can be given. SAT will try to dispose of. Look at the word try. I'm not saying it is mandate. You will try to dispose of. If not, give me justification why you were not able to do it. If you are not happy with that, also within 60 days you can go to Supreme Court. Yes, sir. But remember, central government, if at all number of cases are going up, central government has a right to set up some special courts for the purpose of speedy disposal of offences. If I just believe on one particular thing, it will take some 1 month, 2 months, 3 months, 6 months, 8 months. So I can set up some special courts on a need to have basis. If I think there should be one, I can have a special court in that particular jurisdiction. Sir, if at all special court have passed any order, people, the appeal from special court will go to High Court. Clear? Hello? Okay.
Presiding officer's decision is final.
Yes. Contravenes of continuance of proceedings. Continuance of proceedings. This is what you are saying. Legal representatives. In case of penalty imposed on a deceased person, that is a person passed away, before death, legal representative shall be liable, should pay. After death, legal representative shall not be liable. Basically, disgorgement, refund, or recovery. In case, if it is, if suit not get initiated, it is if case is initiated. If case is not yet initiated, if case is initiated, it shall continue in the legal representative's name. It shall be initiated against the legal representative's name. Always remember, always it is inherited. Whatever is the value of the asset, it will be equivalent to that particular value. Okay, scores, sir. The salient features of scores, people. It is an online movement of 24/7. Complaints and remedies can be made anytime from anywhere. An email is generated. You will get a unique complaint registration number for acknowledgement. Complaints are then forwarded to company intermediary, as the case may be, who needs to upload a action taken report. Investor can view the status of the report. All the complaints are saved in central database. You can use it for your MIS purpose. Complaints not dealt under scores can be important. Complaints against the unlisted or a delisted company or a company under dissemination board. Complaints on company which are under insolvency bankruptcy code. Company whose name is stuck off or vanishing company. Vanishing company is basically nothing but, people, the company whose promoters or the company is not found. You are not present in the address you have registered. Next one, company under liquidation or a liquidated company. You cannot file a complaint on such companies. Complaints on cases pending in a court or subject matter of quasi-judicial body. Already a case is going on in some other court. You cannot come again to that to the scores. Complaints falling under some other regulatory bodies like IRDA, PFRDA, IRDA, Competition Commission of India. If it is theirs, you cannot take up it in scores. Complaints in the nature of market intelligence. Some investigations should take place, that cannot come under scores. Sir, how to lodge a complaint, people, using scores? You can file a complaint on company, intermediary, and market infrastructure institutions like stock exchange, depository. You can file a case on all of them. The procedure, if you remember, we had written an in-depth procedure. So that only I've made it here. So for people who are following it, people, remember there has been a little change here. So scores, they've tried to divide the duties into 3 parts. The first responsibility is on the company. Now what is a scores mechanism, people? Scores mechanism works like this. A company, if at all, imagine, if I have any issue, imagine I have not received my refund order. I have not received my dividend on time. Now what will I do? I will write an application to the company asking them to look into it. If the company does not resolve it, SEBI has set up a website where I can go and lodge my complaint. Now that is only called as scores mechanism. SEBI's complaint redressal system. Now in this people, the first obligation will be always on directly. Yes, the first obligation people will be always on the company. If company does not reply people, there is something called as designated bodies that will come into picture. Meaning, now for example, let us imagine a broker. Imagine a depository participant. They are all reporting to depository. So if depository participant did not solve your issue, the next step you will go to depository. So if a broker did not solve your issue, you will go to the stock exchange. So they are called as designated bodies. You can imagine like a leader for them. Now the second step, they will make sure that your complaint is redressed. Sir, even if they are also not able to redress my complaint, the third person that comes into picture is called as people SEBI. Even if there also I feel my complaint is not redressed, then people, you're free to walk out, you're free to file a complaint, you're free to take up a judicial review on the company. That is one thing. Second thing, people, there will be something called as penalty. What is a penalty, people? Because you have delayed so much, people, there will be a complaint, that is the penalty that will be charged on you for not replying 1,000 rupees per day per complaint for not resolving the issue. Sir, even for this also, if I do not reply, sir, then people, the promoter shareholdings will be freezed. Correct? Yes, sir. That is what, if you remember, that's a complete thing that we had seen. So I'll take you through that, the step by step only. Complaint submission on initial handling. So investor lodges a complaint on scores. You are coming to the score first time. Complaint is automatically forwarded to the concerned entity and it is also to the designated body. For example, if it's a broker, Upstocks, the complaint gets forwarded to the stock Upstocks also, broker also to the stock exchange. That you have received a complaint on this particular Upstocks. Now Upstock has to people resolve my complaint within 21 calendar days. Now, after they resolve it, they need to upload something called as ATR. ATR is called as Action Taken Report on the Scores website. Who will do? Upstocks will do. That I have resolved this complaint. Now, ATR is automatically sent to the complainant. Complainant is a person, investor, who has a complaint. For him, the report will be forwarded. Now, designated body's responsibility, you monitor whether all of this is being timely handled. Within 21 days, was it resolved? Correct? Sir, now sir, the complainant has three options, people. If at all I'm satisfied with the action taken report, the complaint will come to an end. SEBI will dispose the complaint. Second one, people, if I'm not satisfied, I'll have a button there. The button is called as review. I can press on it. There will be an immediate mail that will be triggered that the complainant is not happy with your solution. Now, people, it becomes a responsibility of the designated body. Now, for example, broker did not solve my issue. Stock exchange will have to solve my issue. Now, what will stock exchange do? Stock exchange will understand the issue from both the ends. And accordingly, stock exchange will make sure an action taken report is uploaded. Now, the responsibility will be on the stock exchange. We call the stock exchange as a designated body here. Is this clear, all of you? Yes, and that is what is given here. If entity fails to submit within ATR in 21 days, the review is automatically triggered. The designated body's responsibility, you need to take the cognizance, meaning responsibility for the first review. It's the first time you are reviewing. Ask entity for revised ATR, ask Upstocks to give its feedback, ensure revised ATR is submitted on score within the next 10 calendar days. Correct? Now, sir, three things can happen. Stock exchange has replied, I'm happy, then the complaint will be disposed. Sir, stock exchange also did not reply. Automatic second review button will get triggered. Sir, stock exchange replied, I'm not happy. I can manually click on second review button. So the second review button, people, now who will take the complaint into responsibility? SEBI will come into picture. SEBI will take the cognizance of the complaint. Hello? Clear? Sir, that's what is given here. SEBI's responsibility, take cognizance of the complaint, engage with stakeholders, final disposal of complaint on scores. Entity and designate bodies responsibility, submit revised ADR to SEBI within timeline. Complaint is resolved or closed when SEBI explicitly disposes or closes it on the scores platform. Action against listed company for failure to redress complaints. Designated stock exchange shall levy 1,000 rupees per day per complaint for violation of regulation. What is that? If company fails to comply with that also, issues notice to promoters to ensure compliance within 10 days. That also they do not do. The designated stock exchange directs depositories to freeze the entire shareholding of promoters. Correct? And stock exchange may initiate additional actions as deemed appropriate. Clear? Hello? So see general provisions, initial redressal attempt, the investor must first approach the company directly. If they do not resolve, then come to scores. Next one, registration on scores. You use your PAN, some details will be taken, your ID, password will be generated, you'll get a unique registration number. File a complaint. Remember, you have something called as people limitation act. You need to go to scores within 1 year of the action. If you do not go within 1 year, people, it becomes a time barred complaint. Now SEBI cannot help you with regards to your complaints. Correct? Okay. Next one, people, the role of SEBI in absence of designated body. SEBI will handle the first review. If at all I do not have a leader, SEBI will only become my first review option. Complaints responsibility to review. If not satisfied at any review stage, the complainant must provide specific reason for dissatisfaction with the ATR review. Why you need to give that? Nature of scores. Scores is a facilitative platform meant for helping investors get their grievances. Okay. If the issue involves legal adjudication or if the complainant is unsatisfied even after SEBI's review, they may approach the online dispute resolution mechanism or legal forums or civil courts as the case may be at any given point of time. If you're not happy, you're free to go and represent in courts. You can take up your cases there. Absolutely fine. Clear? Hello? Pakana. So this has been one amendment. Remember online. The last part of this 4th chapter, sir, is SEBI informal guidance scheme. Now, what is that, people? Now, remember, whenever I'm trying to read any law, I did not understand how to interpret any particular provision. Now, what I can do, I can write a letter to SEBI asking me to help to understand what or how to read this particular topic. And the guidance that SEBI is giving is called as, people, SEBI informal guidance scheme. Under this, people, I can request SEBI to help me understand a particular provision. SEBI may reply to you provided you have disclosed complete facts. You should not give any ifs and buts, proper rule number, everything if you disclose and your scenario. SEBI may help you by sending you something called as SEBI interpretative letter. Is clear? SEBI interpretative letter is nothing but, people, it's a letter that is given explaining the provision that you guys did not understand. Sir, now sir, you're telling me that you have to disclose everything. What if I disclose everything but I did not do that provision properly? You can request something with SEBI. Please don't take any action against me if I have not done the provision properly. SEBI may send you something called as no action letter, meaning we will not take any action based upon the information you have filed. We will not tell it to the other department of SEBI. Investigating department, we will not tell. But if they get to know, it is not our responsibility. Correct? And the last one, people, is called confidentiality request. Sir, I am disclosing all of this. No, sir. It is not there in public domain. Please do not tell the public. Now remember, people, SEBI may give you your letter a confidentiality treatment up to a period of 90 days. If at all SEBI denies it, you have a right to take back. You can withdraw your application. That option also is available to you. Clear? Person who can request for informal guidance: intermediaries, listed companies, companies in the process of getting listed, mutual funds, asset management company, acquirer or prospecting acquirer, nothing but SAST. We had seen the case of Adani also, interpreted letter. We had seen the example as well, if you guys remember. Correct? Go for a break and come. Yes, people back. Okay, let's go to the next chapter, chapter 5. Online back, all of you. Back, all of you. Okay, so the next part, people, is chapter 5, depository, laws governing to depositories and depository participants. Nothing much here. There is actually nothing here. Whatever the few things are there, we'll see that only. DRF, RRF, and only that parts. Okay, but we'll see. Functions of depository. What are the functions of repository? Account opening. That's nothing but demat account. Dematerialization, converting of physical shares into electronic form. Remat, electronic form into physical form. Settlement, that is nothing but clearing mechanism. IPO or corporate benefits, that is bonus issue, rights issue, everything will be in this only. Next one is creation of encumbrances. It will allow you to pledge it, collateral, all of that is now allowed, it is possible. Eligibility conditions for depository services, that is how to take up depository services. There is some eligibility requirements. One second. Eligibility condition, it has to be a company as per Companies Act. Net worth of minimum 100 crores to start a depository. The same thing will come to you in intermediaries as well. Registered with SEBI as a depository. Certificate of commencement is issued by SEBI. You need to be a depository to start depository business. You need to apply for certificate of registration from SEBI. It has to frame bylaws with approval of SEBI. It has minimum one depository participant working as an agent. It has to comply with Depositories Act and regulations and all the part. In India currently we have two depositories, one is NSDL, one is CDSL. What is a share fungibility concept? What do you mean by fungibility? Fungibility means what, people? So whenever I'm, imagine if I'm dematerializing a particular share, I will have a distinctive number, unique numbers. When I'm rematerializing the shares, I will not get the same shares I surrendered. I'll get a different share certificate numbers or a distinctive number. I'm not going to get the same share certificates. That concept is called as share fungibility. That is, it loses its identity. Next one is people, powers of SEBI to call for information, depository participants, beneficial owner, issue, to give direction in certain cases after inquiry and deemed fit, power to make regulations. Okay, only, not that big thing. Next one is compromise. I told you there are three things, try to remember. Grant of immunity is always given by central government after recommendation of SEBI. This is always done before initiation of prosecution. Wherever the words settlement of administrative and civil offences is used, it is a power that is there with SEBI. SEBI can settle after you going and admitting your mistake. SEBI has a power to settle the administrative and civil proceedings, whatever the mistakes you guys have done. The next one is compounding or composition. It's a power of SAT. Civil offences alone can be compounded. That is, wherever it's penalty or imprisonment can be compounded. Wherever it is imprisonment or penalty and imprisonment, you cannot compound it. Compound means nothing but compromise. Agreed? Okay, in terms of audit, sir, there are three types of audit. The first audit is called as reconciliation audit. What do you mean by reconciliation audit? It is applicable for a listed company. Now, every quarter, what happens? The company's capitals keep changing. It can go for a rights issue, it can go for a buyback, it can go for a bonus issue. The capital is increasing or decreasing. Now, we need to make sure that that particular data is recorded in every particular intermediary. In a company's list, it says 10 crore shares are there. In the stock exchange, we don't know how much is there. In depositories, books, we don't know how much is there. So we make sure that people in all these places, the entire record of capital is same. That is, it will not be more or less in each of the cases. That's why we call this as a reconciliation. We make sure everything is same. Correct? Okay. So it is applicable for every listed company. All the audits will be done by either a PCA, PCS or a PCMA. Okay. And to whom do we submit this to? You submit this to the stock exchanges. It is taken, people, on a quarterly basis. What does this audit cover? Reconciliation of issued capital of the company. That is a reconciliation. And along with that, capital with the depository. How much is the capital there? Next one, capital with the stock exchanges. And any changes in the share capital in the quarter. So we'll consider all of this. And in all the records, it should be speaking the same number. Okay, confirm that if any dematerialization request is received during the quarter, we have addressed it within 21 days. Update status of register of members and as the case may be. Next one, sir, is called as an internal audit. What do you mean by internal audit? Internal audit is applicable for all the depository participants of NSDL as well as CDSL. It is done by PCA, PCS, PCMA to the respective depository. Whom will be submitted to? NSDL depository participants will submit it to NSDL, CDSL to CDSL. NSDL we will do it once in 6 months. I'm telling time interval. CDSL at such intervals as may be specified, which is not there in our syllabus. What do we check, sir? Existence and scope of efficiency of internal control system. Whether the internal control systems are working accurately, compliance with all the applicable laws, whether the company has been complying with all the laws that is applicable to them. Example, Depositories Act, SEBI Act, regulations, as the case may be. The last one, concurrent audit. Earlier we had all of this, now we don't have. But just for our information, I had told you also, concurrent audit is applicable to depository participants of NSDL, which is not there for us, so don't bother about it. So it covers account opening, delivery instruction slip. So what are we doing? This is called as what, people? The last one is called as concurrent audit. Concurrent audit means what, people? Simultaneous. So account opening, if someone is opening the account, have you taken all the required information, KYC details, all of that, you check once. So delivery instruction slip, I told you the example also of DIS. It's nothing but, people, like a physical delivery, like a checkbook. So if someone has applied for it, check whether have they applied it for, they have only applied, or it's a fake request. Check all of that. Next one, execution of DIS. One is issuance of the book. Now imagine you got a checkbook. Next one, you have signed the check. Both will be checked. Next one, power of attorney modification. I have authorized Vishnu to do deal on behalf of me. Have I modified it? Is it me only who has signed or someone else who has signed? I need to be sure on all of this. Next one, account closure request initiated. Has any person wanted to close the account? If it's initiated, have you taken care of all the steps? Modification in the name of the client. Why? What? Check that. That's all. Next one is investor grievances addressed or not. KYC rectifications, if any. Client data, freezing of accounts. What is freezing of accounts? If at all you have not responded, promoter freezing or any authority has told that you have to freeze this, as the case may be. Pledge and hypothecation request, online account closure by the client. So what I'm saying is these things are being audited. We will check thoroughly and we will say that whether it is being properly done or not. Correct? Huh? Yes, sir. And
if any SEBI investigation going on as no, SEBI has the power to freeze our demat.
Possible. If it is required, it will definitely do.
But they have to get direction from court or something.
No. SEBI has a power because it is also having a quasi-judicial powers, right? So it can. Okay. And we have seen two procedures, that is the DRF and RRF. Dematerialization request form. Can you give me a charger? For the tab. This is for that external one. Yes. What is that? Dematerialization request form, DRF. What does DRF happen, people? It is an option of converting the physical shares into electronic form. So how do? We file a DRF form with the depository participant. We go and we give all the shares, physical shares, to the depository participant. Depository participant will forward our DRF form and the physical share certificate to the depository. Depository will forward it to the company. The company will take it. It will, because you had it in physical form, they will erase it. They will strike away your name. they will confirm it to the depository, have deleted that person's data in my record. Now you can credit the shares in his name electronically. The shares will be credited electronically in their particular name. Yes, sir. How do I put it? There, it's accessible. One second.
I think it will come till here. No. If we can get a extension or something. I think the printing department, just check it. No. This tab is running out of battery.
Yes, sir. That is your DRF, and RRF is opposite. How does RRF work, people? You're having an electronic share. It will now be converted to a physical share. You file a form called RRF. Your shares in your account will be blocked. The depository participant will forward the request to the depository. Depository will forward it to the company. The company will take the request. The company will now delete those shares from the electronic books. They will print a new certificate. The new certificates will be shipped to this particular person. So you will get a physical share certificate, and your electronic shares, whatever will be blocked, will be deleted. It will be debited from your account. So remember, after I told you rule 9, 9A, 9B, now going forward you cannot trade in a physical security. So if you want to sell, you don't have a choice. You have to convert your shares back to electronic form only. You don't have a choice. Agreed? Yes? Okay, done. That's all. I hope nothing else was there in that chapter 5. Okay, next one is people. Chapter 6. What is chapter 6, sir? Secondary market intermediaries. Now, what is the secondary market intermediaries, sir? Securities market intermediaries, we have a big list. So first we saw that how do we register it? How do we register a securities market intermediary? An intermediary will file an application form. That application form will be in Form A. It will be filed with SEBI. Except if you are a stockbroker, if you are a clearing member, or if you are a depository participant, you will not directly file it with SEBI. You will file it with your concerned regulator. Who is that? If at all you are a stockbroker, you will first file it with stock exchange. Agreed? And if at all you are a clearing member, you will first file it with clearing corporation. If at all you are a depository participant, you will file your application first to depository. Thank you. So they will take it. If they find it fit, they will forward it to SEBI, as the case may be. So the form will be filed, people examine and forward it within 30 days. They will forward the request to SEBI within 30 days. It may ask for additional information also, if any required. If at all it feels satisfied, they will register this particular application that you have filed. Now, sir, SEBI may either approve or reject. The grounds considered for SEBI to approve or reject, people, the first one, whether the applicant was refused certificate in the past. Have you been? We need to know why. Eligibility criteria as prescribed. So we have seen eligibility criteria which they have to satisfy. Minimum net worth, all that we have seen now, which we remember. It is in the interest of investors and interest of development of securities market. If needed, I'll give. If not, no. Any pending litigation on applicant, director, partner, trustee, if there is, then we will not give you this particular license. Next one, rejection. When Form A is not complete, you will not be given. It does not provide additional information when asked by SEBI. Submitted incorrect or misleading information. Note, cannot apply again for next 1 year if that is the case. Not satisfied eligibility criteria. Not a fit and proper person, no requisite qualification or experience in the principal officer. So we see, right, sponsor should be in the in the asset management for so many years. In some places we had seen. So they're telling if you have not satisfied that, then you cannot go for this particular procedure. They'll not give you the license. Next one, people, in 60 days of application, the SEBI has to reply. If not, people, it will be considered as deemed approval. Grant of certificate which has permanent validity subject to compliances. You need not have to renew it again and again. Once approved will be permanent without, of course, you need to satisfy whatever the compliances are, that you will satisfy. That is more than sufficient. Yes. Online, you guys are able to see your data? Online? Okay. We will see the intermediaries only. What are the intermediaries we have? Okay. Okay, let's start with merchant banker only. The first person, people always remember, you just have to think of whatever are the other chapters in all the places this person is appointed. Let it be buyback, SAST, delisting, IPO, ICDR regulations, acquisitions, SAST. So all the places without a merchant banker, you have not gone ahead at all. So it's the first person you are going to appoint. He is going to deal with all these activities. So do not just try to try to buy hard from only this part. Try to see the relevance in the other chapters also, so that it will be easy for you to remember here. Yes. Okay. Merchant banker means a person engaged in the business of issue management, either by making arrangements regarding selling, buying, or subscribing to securities, or acting as a manager, consultant, or advisor, or rendering corporate advisory services. That is what they do, right? They act as a consultants, advisors in issue management. Roles and responsibilities: they manage public issue, easy to remember. Underwriters, in some cases, lead manager, SME and all, they need to subscribe at least 15%. Managing, advising on international offerings of GDR, ADR, further public offer also. Whenever you are issuing from outside also, we are going to do it. Private placement, ECM, further issue, wherever they will come. Corporate advisory services related to SAST, takeover or acquisition, stock broking, advisory services for projects, syndication of rupee term loan. I told you, if at all anyone wants a huge loan, they are going to become the syndicators, meaning they will try to give you a combined loan. They will go and take it from 4 to 5 banks, they will pitch it, and they will become the mediators for you. So that's one thing they do. International financial service advisories, basically nothing but your IFSC. They will only come now. Okay. General obligations are: every merchant banker shall abide by code of conduct. No merchant banker shall carry on any business other than that in securities market. Every merchant banker shall furnish to SEBI half-yearly unaudited financial results. The merchant banker shall preserve the books of accounts and other records and documents for a minimum period of 5 years. I think this we had seen. General obligations applicable for all the intermediaries, if you remember. So our first what is that? Our first thing is to remember is whatever are the repetitive ones. If at all we can focus on the repetitive ones, that is more than sufficient. Towards the end, I think I have given it to you. Every merchant banker acting as an underwriter shall enter into an agreement with each body corporate on whose behalf it is acting as an underwriter. First, to follow with your code of conduct. Next one, 5 years, maintain books of accounts, enter into written agreements. These are all repetitive ones. Remember that, easy to remember. And of course, appoint a compliance officer who shall be responsible for monitoring compliances. I told you there is this have been, I had shared you this, no? This only you're saying I did not share. Oh, this only I did not share. Okay. So there has been one amendment. What does that amendment see here? Regulation 20 relating to the responsibility of the lead manager is substituted. What is that? no lead manager shall agree to, this is an amendment, to manage or be associated with any issue unless its responsibilities relating to the issue, particularly those of disclosures, allotment, refund, are clearly defined and allocated and determined, and a statement specifying such responsibilities is disclosed in the draft offer document and offer document. What is that they're telling you? Imagine if a company is going for an IPO. They're telling you cannot appoint a merchant banker as a lead manager until you clearly define their roles, their responsibilities, and all of this should be defined in the offer document itself. Unless and until you have that, you cannot appoint a lead manager. They have added this text. So going forward in your offer document, the responsibilities of the lead manager will also be there. Simple. Provided that where there is more than one lead merchant banker to the issue, the responsibilities of each of the lead merchant bankers shall be clearly demarcated. Sir, we have appointed 3 merchant bankers. What is whose role? Make sure you clearly identify and you have to distinguish. Demarcated means you have to specifically tell this is what is his role, this is what is his role. If tomorrow something goes wrong, it should be easy for you to make sure it is his responsibility, it is his responsibility. That you need to take care. The amendments are made in Regulation 21A. It seems again one more amendment. Merchant banker not to act for its associate. Right? We had seen this also. What is that, people? A merchant banker being a promoter or an associate, either the issuer of the securities or a person making an offer to sell or purchase securities in terms of any of these regulations made by the board, shall not lead, manage any issue or be associated with any activity undertaken made by the board by such issuer or person, provided a merchant banker who is an associate may be appointed if it is involved only in the marketing of the issue or the offer. What is it they're telling you? Whenever you're appointing a merchant banker, see, merchant banker is a main person. He will tell you whether you can go for an IPO or not. They're telling you, imagine if Reliance is going for an IPO. The merchant banker should not be an associate of Reliance company only, should not be connected. Why? If you're connected, then you will definitely not do an unbiased job. You will be biased. So they're telling you going forward, the merchant banker should not be an associate of the issuer company. Okay. Sir, what if they are associated to us? Can we not appoint? You can appoint people provided their scope should be restricted only and only to marketing your IPO, nothing else. They cannot do any other job. Only for marketing, yes, you can do, and for nothing else. Is this clear? Yes? Okay. Next one, sir. Regulation 22B has been added. A merchant banker, if called upon pursuant to an agreement for underwriting to subscribe to securities of body corporate, shall subscribe to the said securities prior to the finalization of the basis of allotment. What is that they're telling you? If at all you have taken up underwriting, that means what? Minimum subscription is 90. If at all we got application for 84. Now you need to buy 6%. They're telling you the 6% you need to buy it before deciding the basis of allotment. Meaning still we have not allotted to the outsiders. Before that is allotted itself, you need to acquire this 6%. Clear? The next one, sir. The existing regulation 27 is substituted with the following. A merchant banker shall submit to the board complete particulars of transactions for acquisition of securities of a body corporate whose issue is managed by the merchant banker within 15 days from the date of entering into such a transaction, provided that complete particulars of a transaction for acquisition of securities pursuant to underwriting or market making obligation with SEBI ICDR shall be submitted to the board on a quarterly basis. Meaning what, sir? Every 15 days once, people, from the day you enter into a transaction, they're telling you, you need to submit a report to the board. Board is who, people? SEBI. On what is the status of the transaction? You have been appointed for some purpose. Which one? Let us imagine IPO. What is the status of it? You need to report on it. That is what they are given. Merchant banker shall submit to the board complete particulars of transaction for acquisition of securities of a body corporate whose issue is managed by the merchant banker within 15 days from the date of entering into a transaction, provided that complete particulars of transaction for acquisition of securities for underwriting or market making shall be submitted to the board on a quarterly basis. Once you are appointed, within 15 days of appointment, you will submit. And after that, people, every quarterly basis, you are going to update it. What is happening? I told you, right? NSC has filed a draft of a document. Now it's been already 1 year. It is going to take easily another 1.5 years. I'm saying, but the process has started. Now, who is reporting? Merchant banker will be reporting. Sir, this is what has happened. This is what is the scenario. So you will be reporting it until you go for the complete transaction is completed. Then okay. The next one is people, registrar and share transfer agents. What will be the role of the registrar and share transfer agents, sir?
It's like collection of the application, and we have to like we have to allot and refund and in case of transfer agents, we have to maintain security holders shares if they want to transform into physical shares and within 1 lakh security holders.
Oh, that is if you want to do it in-house or outsource. Okay. What is the role of registrar and share transfer agents, people? Registrar to an issue is nothing but, people, what does the registrar to an issue do? Now, for example, you guys are applying for IPO. Who is collecting the data? The applications is being collected by someone. Who is fixing or finalizing the final allotment? So everything will be done by registrar and share transfer agents. They are basically one person only, but two different roles. When I say registrar, means that person has a role of allotment, finalizing the allotment, giving the refund letters, regret letters, and collecting the applications. Whatever is the, they have to coordinate with various boards, tell them whether the company, that particular stock is undersubscribed, oversubscribed. All this will be the role of registrar to an issue. Share transfer agent, people, will be the role of securities transferring between people. Now remember, share transfer agent, you can do it in-house or you can outsource. But up to 1 lakh security holders, you can do it in-house only. We don't have a problem. After 1 lakh security holders, you have to either outsource it to someone else, or you can only do the security share transfer agent job within the company, provided you need to apply to SEBI for being registered as a category 2 share transfer agent. If you are registering, then you can do it. If not, you have to outsource it. Clear? Okay, registrar to an issue, collecting applications, proper record, assisting body corporate, determining the basis of allotment, dispatch letter, refund, correct? Share transfer agent to any person who on behalf of body corporate maintains the records of holders of securities, correct? They will maintain everything. All the matters connected with transfer and redemption of securities, the department or division by whatever name called of body corporate, at any time the total number of holders of securities exceed 1 lakh. So if it is within in-house, you can maintain it as a department. But if it is beyond 1 lakh people, then you need to make sure you need to outsource or you need to apply for a license with the SEBI. Role and responsibilities, as I told you, one is during, one is post, one is pre. Pre is making all the arrangements, coming up with proper offer letters, intimating to the bankers to an issue, and during this, collecting the applications, coordinating with various intermediaries, and reporting the data on a daily basis. What is happening? Undersubscribed, oversubscribed. Post issue is nothing but uploading allotment, refund, letter of allotment, regret, and all of that. Correct? Attending investor queries, as the case may be. Net worth, people, to start as share register and share transfer agent depends upon the category. If it is category 1, it is 50 lakh. If it is category 2, you need to have 25 lakh. General obligations, people, same thing. Maintain books. Whenever SEBI asks, give documents. Every bank or shall enter into an agreement. Bank or shall inform SEBI forthwith disciplinary action taken by Reserve Bank. Because you are a bank, end of the day, if Reserve Bank has taken any action against you, you need to intimate it to SEBI. Every banker to an issue shall abide by the code of conduct, compliance officer. Let us do one thing. I'll directly. General obligation we have written, no? So I've just listed down some common responsibilities. Try to remember this. See, of course, if there is some other point specific, see, these are all saviors. Meaning, I cannot say this is 100%. See, in some other point, something will not.
Advisor is
Investment advisor, it's different. We will buy hard this and go. So that time it will not work. But on an overall phase of it, instead of leaving and going, there are so many intermediaries. You will not read. Instead of that, this approach will be better. Yes, sir. So every intermediary shall abide by code of conduct. That is one repeated thing. Every intermediary shall keep and maintain books of accounts, records, and documents. For how long? For 5 years. Every intermediary shall appoint a compliance officer. Again, a common point. Every intermediary shall enter into an agreement. You cannot have it oral. Where any information is called for by the SEBI for intermediary for the purpose of this regulation, including any report, the intermediary shall furnish it to SEBI. If they ask, you have to give. Every intermediary shall comply with such guidelines, directives, circulars, and instructions as may be specified by SEBI from time to time. Correct? Yes, sir. Again, this was an amendment. They've added something in register and share transfer agent, which we had seen in class also. So we had a list of activities that the registrar and share transfer agents can do. End of the day, they are bankers only, no? For that list, they have added, 3 more. What is that? The first one. They can also provide escrow account, which we have seen in many chapters, SDST, buyback and all. That also comes under them only. They can give you escrow account facilities. Next one, opening of separate bank account. Whenever you come up with IPO, until the entire IPO is completed, you cannot use that money. So open a separate bank account, keep that money there only until the entire purpose is done. You cannot use that money. The last one is such other activities as specified by the SEBI. Correct? Next one, debenture trustee people, responsibilities. Satisfy itself that prospectus or letter of offer does not contain any matter which is inconsistent with terms. Satisfy itself that the conditions the trustee are not prejudicial. Call for periodical status and performance report from the company within 7 days of relevant board meeting or within 45 days from respective quarter, whichever is earlier. Communicate promptly to the debenture holders. If defaults, if any principal is not paid, interest is not paid, call them and clearly tell them. Ensure that company does not commit any breach of the terms of issue of debentures or covenants of the trust deed and take such reasonable steps as may be necessary. Breach of terms means what? Imagine if security is there. It's a secured debenture. The security is going down. Meaning we have created security for, say for example, 2 crore. That eventually the company has sold it off. If it is going down, you need to take a proper action. What will you do? You will go to NCLT. You will report it. You will conduct a debenture holders meeting. You will intimate them that the security is no longer sufficient to repay all your debentures. That's your role. Again, debentures role only, Yes. Inform the debenture holders immediately of any breach of the terms of issue. Ensure that the assets of the company issuing debentures and of the guarantors, if any, are sufficient to discharge the interest and principal at all times. Meaning, if I have created a security for 1 crore, the loan and that is principal and the interest part, we should be able to cover it from that. So always the security should cover both principal as well as interest. That is my duty. As a debenture trustee, I have to make sure that is taken care. Call for reports on utilization of funds raised by issue of debentures. You have raised 5 crore. What are you doing with that? Call for reports on that. Take steps to convene meeting of holder of debentures as and when they require or if there is a need. Conduct debenture holders meeting. Ensure that debentures have been converted or redeemed as per the accordance with the agreement 10 years. Either repay or convert it. perform such acts as are necessary for the protection of the interest of debenture holders and do all other acts that are necessary to resolve the grievances of debenture holders, take possession of trust property, to take appropriate measures protecting the interest, whatever is required. You can also write appointment of nominee directors. That is also valid point only. Yes. Net worth, sir, to become a debenture trustee, at least rupees 10 crore. Agreed on? Stock brokers and sub brokers. Who are stock brokers people? End of the day, the people who make the buyers and sellers meet over a stock exchange is called as stock broker. Sub broker means a person who is working under a stock broker for a particular commission is called a sub broker. They generally work as an agent. General obligation will almost be that only. There is nothing much in general obligation that we can do. Correct? That is your stock broker and sub broker. Next one is people, portfolio manager. What do you mean by portfolio manager? Portfolio manager means people, a person who manages your assets. You give him some 10 crore rupees. He will manage it for you. Sir, what is the difference between portfolio manager and fund manager? Fund manager acts together for a lot of people. Portfolio manager will take your asset. He will plan everything according to you. That person is called as a portfolio manager. Portfolio manager can be of two types. One is called as discretionary, non-discretionary. Discretionary portfolio manager, I just tell them I need 1 crore rupees. How, where to invest, that no, I don't know. You invest where you want, but I want return as 1 crore. Now, the portfolio manager will decide where to invest, how much to invest, risk, everything will be decided by them. That is called as what people discretionary. Non-discretionary means people, I will only tell where to invest, how to invest. You will invest according to that. And they are called as what people? Portfolio managers. General obligations, the same thing. The portfolio manager shall not accept from the client funds or securities worth less than 50 lakh rupees. The minimum we are going to take it is 50 lakh rupees. The portfolio manager shall act in a fiduciary capacity. You have to segregate the client's funds from every client's. So you have to maintain different accounts. The portfolio manager shall keep the funds of all the clients in a separate account. The portfolio manager shall not derive any direct or indirect benefits from the client's funds. Shall not borrow money on behalf of the client. The portfolio manager shall not lend securities held on behalf of the clients to a third person. Basically, don't borrow loan, don't give it as a pledge, as the case may be. The portfolio manager shall ensure proper and timely handling of complaints, grievance redressal. Every portfolio manager will keep and maintain the books of accounts 5 years. Same thing, compliance officer. Correct? The next one is people, custodian of securities. What is a custodian people? The person who will safely keep your securities. It can be gold, gold related instruments, silver, silver related instruments, shares, securities, as the case may be. General obligations, same thing. I'm again not going in general obligation. Net worth people is minimum rupees 50 crore. So remember, depository is 100 crore, custodian is 50 crore. Investment advisors. What is the difference between portfolio manager and investment advisor?
Portfolio manager, they invest on behalf of.
They invest on behalf of you. Investment advisor will give you the investment tips. He will advise you, but for payment only. They are called as what people? Investment advisor. So these people are the ones who guide you on your financial dealings. They guide you. It's called as what people? They guide you. They're called investment advisors, of course, for consideration, not free. Correct? Okay. Net worth people to start, non-individuals shall have a net worth of not less than rupees 50 lakh. Who are individuals will have not less than 5 lakh. Research analysts. Research analyst means a person who is primarily responsible for preparation or publication of the content of the research report. What is research analyst people? Nothing but what is the difference between investment advisor and research analyst? Investment advisor will guide you, will tell you which share to buy, which share to sell for money. It's called as investment advisor. What does a research analyst do? Research analyst will research into a particular stock. Imagine if IPO is coming. He will tell you whether you need to buy that IPO stock or not. But it is not for money. It will be a general publication. If you are interested, you can take it. If not, no. But it is not for money. They are called as what people? Research analysts. Correct? Net worth people, body corporate or LLP, not less than 25 lakh rupees. If it is a partnership or individual people, not less than 1 lakh net tangible assets. What is a credit rating agency people? Credit rating is nothing but that company which assesses the responsibility, the risk of the repayment viability of the company. Whether if a company borrows money, will they be able to repay that money back or not? Someone will assess everything. The person who assesses is called as credit rating agencies. The examples of credit rating agencies, CRISIL, Moody's, and all these people. Correct? Huh? So to start a net worth of, to start a credit rating agency, you need a minimum net worth of 25 crore. Depositories, of course, we have done 100 crore. Depository participant, of course, we have done. In case of NBFC, net worth of not less than 50 lakhs to become a depository participant, to become a registrar to an issuer. In case of registrar to an issuer, share transfer agent who wants to also act as a depository participant, you need to have a net worth of 10 crores. Agreed? Foreign portfolio investor, of course, we have seen in detail only FPIA, a law. Correct or no? Okay, next one is called as qualified stockbroker. What is a qualified stockbroker? He is a stockbroker only. He is a broker only. No difference and all. Only because of his dealings, volume, number of clients. Because of all of that, the SEBI has given a separate category for the brokers and they call them as qualified stockbrokers. Now, why did we have to qualify them as a qualified stockbroker? Because if these people fail in their business, there is going to be a very high negative impact on the stock market. People will start judging you. Imagine now a broker like Zerodha fails. Your trust itself will go off on the stock market. So, whatever are the restrictions that is available for others, I cannot say same restrictions will be available for him also. For him, even more restrictions should be there. And that's the whole purpose of starting a concept called as qualified stockbroker. That means based upon your volume, number of clients you deal, all of this, I categorize you as a qualified stockbroker. Compared to a normal broker, for you, there will be more stringent requirements. That's what they have given here. See, what is that? SEBI may designate a stockbroker as a qualified stockbroker having regard to its size and scale of operations, likely impact on investors and security market, as well as governance and service standards on the basis of following parameters and the appropriate weightages thereon, we categorize them into qualified stockbrokers. What is that? Total number of clients you have. The available total assets of the client, the trading volumes they do. From their account, what is the total buy and sell is happening. Next one is end of the trade margins. How much margins, loans you are giving. Compliance score. Compliance score means with regards to the law, where do you stand? Abiding with the law, where do you stand? Next one is people, a grievance redressal score. Out of how many complaints received, how many are you addressing? Based on that, you will get a score. Bad score, I need to look into you. Next one is proprietary trading volumes to stockbroker. The stockbroker designated as qualified stockbroker shall be required to meet enhanced obligation and discharge requirements to ensure appropriate governance, risk management policy, scalable infrastructure, and appropriate technical capacity, framework for orderly winding down if something goes wrong, robust cyber security. Robust cyber security is nothing but now I'm telling you so many accounts are there with you. What if someone hacks into your system? Next one is investor services, including online complaint redressal mechanism and all this part. Yes, that is one thing you need to remember. Correct? That is what we have seen here. In which one?
Or it's in 12, or it's qualified, but there is 7 working days.
No, that will be in FPI only. For grant of certificate as a foreign portfolio investor, Now, how do I become an FPI? To become a foreign portfolio investor, you need to make an application to designated depository participant. You need to file an application to depository participant in the form as may be specified by SEBI. Once you file it, the application now has to be made in the manner specified by SEBI. You need to file it with the designated depository participant, and SEBI will take it forward. In the Regulation 22 pertaining to general obligations and responsibilities, the following amendments have been made in their general obligations. What is that? The FPI shall, as soon as be possible but not later than 7 working days, inform the board and designated depository participant in writing if any information or particulars previously submitted to the board or DDP are found to be false or misleading. Meaning what? Now we have taken FPI license up. That time we would have given some information about us. If at all in that information, if we get to know if there is any false information we have filed or misleading information we have filed, within 7 days, we need to say, sir, whatever information we have given is false or misleading. We have to intimate. Not only that, next thing is also same thing only. Whenever we have given you the information, that day the owner was say Standard Chartered. Now it has been, ownership has been changed from Standard Chartered to City. There is a change of ownership. Again, within 7 days, you need to intimate that there is a change of ownership. Next thing also the same thing. Imagine outside, now you are from US market, you are FPI. Someone imposes a penalty on you outside India. You need to intimate it in India within 7 days of someone imposing that penalty or litigation on you in this particular aspect. Simple. That's the amendment. Then that is your chapter 6. Hello? Internal audit. Internal audit of portfolio managers. Practicing company secretary is authorized for conducting the internal audit of portfolio managers. So who does it, sir? Practicing company secretary. One second. Practicing company secretary is authorized for conducting the internal audit of portfolio managers. The report is to be submitted twice a year as on 31st March and 30th of September. So internal audit of portfolio managers. They can ask you this question. Hello? The pen is not working. Yes. So practicing company secretary is authorized for conducting internal audit of portfolio managers. The report is to be submitted twice in a year, as on 31st March and as on 30th September. The scope of internal audit comprises the checking of compliance of SEBI portfolio managers. Basically, whatever is the regulations applicable to the portfolio managers, a company secretary will be appointed. He will check whether have you followed with all those things or not. And it has been done twice in a year. Important, remember. Internal audit of stockbrokers, trading members and clearing members. A practicing company secretary is authorized to carry out internal audit of stockbrokers. Same thing on a half yearly basis. Technically, if you see, it's same only. That is twice in a year, this is half yearly. Same thing only. The scope, people, existence, scope and efficiency of internal control system, whether it is up to the mark or not. What is internal control systems?
Compliance and
Internal control systems is nothing but whether do you have systems to make sure if there is any frauds. Do you have a system to reduce those frauds? It can be even CC camera. CC camera is internal control system only. It can be maker and checker. Someone prepares a list, someone checks it. That is internal control system. Next one is Securities Contract Regulation Act. Whether are you complying with that? Next one is circulars issued by SEBI, agreements, KYCs, and all these parts. Writing. Oh, till now I didn't write. Yes. Correct. So all of this we do it at an internal audit of stockbrokers and as the case may be. Next one, internal audit for credit rating agency, again half yearly only. So if you see, first one is twice in a year, 30th, 31st March and 30th September. Next one is also twice a year only, your stockbrokers. Next one is also half yearly only. Technically twice in a year only. Report to be submitted within 2 months of the half year. What is the half year? 30th September or 30th March, 31st of March. 2 months is 30th of May and 30th of November. It shall cover all aspects of CRA operations and procedures, including investor grievances, compliance with requirements, rules, regulations made thereunder, and guidelines issued by SEBI from time to time. Compliance audit of an investment advisor. Yearly audit, this is the only thing that comes under as yearly audit, which is for investment advisor in order to check the whether requirements of regulation 19 of SEBI investments are compliant with respect to, and not that important, it's okay. Because whenever they're giving you a regulation number, very less chance of being asked because there is nothing for you to describe it. They would have directly given you a regulation number. Next one, annual audit of research analysts or research entity. Again, it's an yearly audit, it seems. Next one, internal audit of registrar and share transfer agents. All RTAs are required to carry out internal audit on an annual basis by independent qualified company secretary who don't have any conflict of interest. That means I should not be working there already or something like that. The audit shall cover all aspects of RTA operations, including investor grievance redressal, compliance with requirements, rules and regulations, as the case may be. Always remember, wherever a practicing company secretary comes, the role will be to make sure you check whatever are the applicable rules, laws, guidelines, circulars, whether they are following or not is your responsibility. You check that and only you report. That will be your audit. Clear? Yes, sir. It is short. Done? Hello? Okay. Then now, the next one is called people IFSCA. Again, there are some amendments here important from your exam point of view. You can expect a question in IFSCA, as I told you. Now, International Financial Service Center Authority. Now, what is IFSCA, people? International Financial Service Authority, as I told you, in India to take care of international financial transactions with regards to probably insurance, stock exchange, banking, all these segments, we were relying more upon foreign countries, like for example, Middle East, Singapore. We used to take their services. For example, I want to do a ADR, GDR. I want to do FCCB, FCEB. Now, being in India, I don't have a market to raise this money. I have to go to Singapore. They will have international stock exchanges. Using their services, we used to raise money. Now, what is the disadvantage to the country? First thing, the entire money we are giving it to an outsider, which we could only do it. First one. Second one, unnecessary importing of services. You need to pay commission. Third one, it's so huge. Why can't we do it and we can only export our services to outsiders? So with that thought, the first ever International Financial Service Center took birth in India in the form of Gift City around 2015. So Gift City is the first ever International Financial Service Center that has been established in India only and only to take care of international financial service transactions. So what happens here? Now imagine if there's an Indian company. The Indian company, it had to raise some foreign dollars. We used to go and list ourselves on foreign stock exchanges. Now, being in India, you can register, you can list yourself on a stock exchange which is there on IFSC. Now, we have NSE. We have a stock exchange of National Stock Exchange in IFSC. specifically only for this. You go and list there. You can raise money in dollars. You can list your FCCBs. We saw masala bonds. You can list so many bonds. You can raise money instead of going abroad. You can do it everything within India. So India started reducing the relevance, reducing our dependency on outside market. Forget from importing of these services, we became an exporter of these services. Now, as I told you, we had seen also that day, Amazon, Alphabet, all these companies are listed on the stock exchange, that is in IFSC. Now, there is a specific banking sector. Even you, even being a company secretary, chartered accountants or cost accountants, you guys can set up your services, your firms also in IFSC because you come under ancillary services, meaning a supporting environment. So even we have a scope, we can also go and set up. India is measuring all these particular transactions in trillions of dollars. 1 trillion is around 1 lakh crores. So India is measuring the transactions in IFSC in trillions of dollars. So it's a huge economy I'm speaking about. Understood? So this is what is called as IFSC. Initially, when IFSC was formed, initially 2015, there was no rules and regulations that was properly framed as such. So RBI used to take care of banking regulations in IFSC. SEBI used to take care of brokers who stock exchanges in IFSC. IRDA used to take care of insurance, as the case may be. In 2019, they formed a specific regulation for IFSC only. Whoever is taking care of Indian banking system cannot take care of IFSC also. So they said we want a specific regulator for IFSC, and that's how we got a concept called as International Financial Service Center Authority. So today remember, whatever is the scope, power, whatever is there with RBI, the same is given with IFSCA. SEBI same to IFSCA. IRDA same to IFSCA. So today RBI, SEBI and IRDA do not have any power in this particular gift city. Any actions, anything to be taken care, the onus, the responsibility, the duty is on IFSCA, International Financial Service Authority. Clear? Hello? Pakka? I hope it is understood. So, keeping that in mind, let us see what is there in this particular thing. So, sir, IFSCA, necessity people, as I told you, outshore the offshore IFSC, onshore the offshore IFSC, meaning till today it was somewhere outside. We are bringing it to India only. Now everything is in India only. India can no longer afford to play a passive role. India's gift IFSC, whatever we saw, it acts the catalyst to achieving a $5 trillion economy. Service offered banking, asset management, insurance, capital market. To retain the bright young talent, I told you also, there are 2 foreign universities that has got approval. So today, if you want to study in a foreign college, that is available in Gift City only in the form of foreign university. So again, all of that is an advantage. Fiscal benefits means people nothing but financial benefits of the entities as well as investors. What are the tax benefits we get? What are the other benefits we get? Important from exam point of view. The first one, people, is income tax. Whoever are the units means people, companies that are set up in IFSA, they enjoy 100% tax exemption. What? For 10 years out of 15 years. So they will choose 10 years. It is your choice. You can choose which 10 years you want tax benefit. It can be first 10 years, in between 10 years, towards the end. It is your choice. Okay. Next one, minimum alternate tax. Generally, I told you also, for a normal companies, it can be around 12%, 15%, as the case may be. For the companies established in IFSC, the minimum alternate tax will be taxed at 9%. Dividend paid to shareholders of company in IFSC shall be taxed in the hands of shareholders. This is no longer an advantage or a difference. Earlier, yes, there used to be taxation. Companies were paying DDT, something called dividend distribution tax. Today, irrespective of where you are, the tax is always in the hands of the shareholders. Company will not pay tax on dividends. Yes. Next one, investors in IFSC. For people who are investing in IFSC, what are the benefits they have? money lent to IFSC units, no tax. So basically, whatever the loans you have given, on that, whatever the return you get, for that there is no tax. Next one, long-term bonds, rupee denominated bonds on IFSA, taxable at the rate of 4%. So earlier, outside it will be more, here it is a slab that is called 4%. Transfer of specified securities listed on IFSA by a non-resident not treated as a transfer and hence no tax. For example, whenever I transfer people, I will have something called as LTCG, STCG. Whenever I'm selling my securities, they're telling that and all will not come here. So you can enjoy the capital gains in this particular thing, IFSC. GST benefits, units in IFSC, no GST on services received by units in IFSC. If at all you are giving services to a company which is set up in IFSC, no GST. Direct, now for example, you take yours only. If you are paying education here, how much is the GST? 18%. Then, so for example, if you are paying 50,000, I'm saying around 10,000 rupees the direct tax, which is not coming to me or you. Of course, indirectly it will come to you, but yes. Yes or no? So I'm saying if you are taking a foreign university, it's not taxable. So no GST. You see how much money you save on it. Yes or no? That's the advantage. Next one, provided to IFSC or SEC units offshore clients. Meaning, sir, one IFSC giving services to another IFSC. Again, no GST. One IFSC giving services to another company in SEZ. We have seen in class also. SEZ is always considered as a foreign territory. So obviously, again, no GST is what they are telling. But there is a GST on services which is provided to DTA. DTA is India, domestic tariff area. If a service is given by IFSC to a person in India, on that there will be taxation you need to pay. They will not pay. Okay. Next one, investors in IFSC, no GST on transaction in IFSC stock exchange. Correct? Next one, other taxes, units in IFSC, state subsidies, lease rental, provident funds, contribution, electricity charges, all these are benefits only, no? They can waive you off from paying electricity, 5 years waiver they can give you. Investors in IFSA, securities transaction tax, commodity transaction tax, stamp duty. I showed you one, if you remember, if you buy a share in our Indian stock exchange, this is how your stamp duties and all will look like. See, 1 rupee, 0.18, brokerage 0.01, GST, see, 0.03, see, STT 4.89, STT R&D 0.11. They're telling you none of this will apply to this. Correct? On IFSC stock exchange. Agreed? All of you? Okay. Next one, people. International Financial Service Center Authority. It was established in 2019. Agreed? Functions of IFSCA, what do? They develop and regulate financial products, financial services, financial institutions. Agreed? What are the financial products and all?
Products, depository, security.
Securities. What is financial products? One definition was there, if you remember. Yo, what happened? Foreign currency contracts, credit arrangements, insurance products, FDs, all of this only, no? These are financial products, securities, contract of insurance, deposits, credit arrangements, foreign currency contracts. What is foreign currency contracts? Sir, I'll give you 1 lakh rupees. Can you give me dollars? Foreign currency contracts. Commodity, we saw now future currency derivatives. Next one, any product or instrument. Some new things have been added. What is that? Bullion, aircraft leasing, ship vessel leasing. What is financial services? Buying, selling, or subscribing to a financial product or agreeing to do so. Acceptance. Safeguarding and administering assets consisting of financial products. What is this? It's called custodial services. Effect of contract of insurance. That's one thing. What? Insurance contracts. Offering, managing, or agreeing to manage assets consisting of financial products. What is this? Agreeing to manage assets. AMC, Asset Management Company. Exercising any right associated with the financial product or financial services. Establishing or operating an investment scheme. It can be mutual funds or it can be any other scheme. REITs, as the case may be. The next one, maintaining or transferring records of ownership of a financial product. Share transfer agent. Underwriting the issuance or subscription of a financial product. Underwriters. All financial services only, no? Providing information about a person's financial standing. Credit rating agency. Financial service only, no? Next one, selling, providing, or issuing stored value or payment instruments, providing payment services. What is this? Fintech companies. UPI. What is that? GPay. Financial service only, no? Fintech. Making arrangements for carrying on any of the services from 1 to 10. Nothing but people, we call them as ancillary. We call, no. You know, what do you mean by ancillary services? Ancillary services means people, you guys will come. Legal, compliance, secretarial. They can ask you this. Next one, ancillary. Audit, accounting, bookkeeping and taxation services. Professional and management consultancy services. Administration, asset management support and trusteeship services. What is trusteeship? Debenture trustee. Yes or no? Next, voice broking services to entities in IFSC or from outside India relating to their business of broking. Nothing but broking services. We saw that also, no? Broking. Upstocks also is present there. Zerola is also present there. Ship broking for permanent activities. Ship. Any other services as approved by IFSC from time to time. Correct? Hello? Okay. Okay, what others are the functions of IFSC? Build a supporting ecosystem in IFSC for you to take. We saw that infrastructure and all, right? Section 12 enables authority to handle diverse regulatory landscape. It also includes, we saw bullion exchange, foreign universities, aircraft, finance companies, fintech entities. These services are either not regulated in domestic sector or not regulated as financial services, but still it is coming under IFSC. So next one, sir, IFSC has been vested with powers of 4 sectoral regulators: RBI, SEBI, PFRDA and IRDA. Power of attorney. All powers exercisable by appropriate regulators specified in first schedule of IFSCA Act under respective acts shall be exercised by IFSCA as long as it relates to financial products, financial services, financial institutions. We saw that first schedule also. In the first schedule, whatever are the powers given to this particular entities. Correct? Now see, here RBI, they are taking care of all these acts. Same power what RBI exercises in all these 6 acts, IFSCA will exercise in Gift City. Same thing, SEBI will exercise whatever here, will IFSCA will exercise in IFSC. IRDA, PFRDA. Understood? Got a fair idea? Hello? Hello? Next one, sir. Listing and trading of securities in IFSC. We have different listings and trading that can happen in IFSC. The first one is IPO of specified securities by unlisted issuer. So who and all can go and list their securities on IFSC stock exchange. They're telling IPO of specified securities by an unlisted issuer. The first time you are going and listing, that is also possible. IPO of specified securities by listed issuer, meaning I am listed here. I want to go and list there also. Listing of specified securities by a startup or SME, you are also allowed. IPO of specified securities by SPAC, Special Purpose Acquisition Company. Regarding this, we have an amendment. I'll tell you from where amendments will start. Issue and listing of depository receipts, issue and listing of debt securities by an entity, listing of ESG equity debt securities. This one I think we had removed. We have written, no?
No, sir.
We have not written, right? And this particular part was removed. And I think we have written commercial papers and certificate of deposits also. Which one? We did not write this one. Specified securities by startup or SME. For now, you just leave it. It's okay. That is also removed. These things were not there. Yes, sir. Next one, sir. That is what it has been changed. Following entities. Following entities are eligible for listing securities on IFSC stock exchange. Who are they? Company incorporated in IFSC. Company incorporated in India. Company incorporated in foreign jurisdiction. So, Indian companies can come and list. Companies incorporated in IFSC can come and list. Companies incorporated in foreign territories can come and list. Sir, for debt securities, the following entities are also eligible. Supranational or multinational or a statutory institution, that is nothing but people. Your World Bank and as the case may be, municipality or a similar body, BBMP, BDA, BMC, entities which offer sovereign debt securities, nothing but government bonds. They can also come and list. I'll tell you from where the amendment starts. From here it is an amendment. You can expect a question. Correct? Huh? So listing of specified securities. If you want to list a specified security on a IFSC stock exchange, then you need to satisfy all these conditions it seems. Now what is that? First one, issuer has people operating revenue on a consolidated basis. What do you mean by that? Add your subsidiary, add your associate. After doing everything, you need to have a revenue of a minimum of $20 million in the previous financial year, or average over last 3 financial year. I'm okay even if you maintain it as an average, or you just maintain $20 million in the previous financial year. I'm okay, you can come and issue your securities on IFSC stock exchange. Pre-tax profit on a consolidated basis of minimum 1 million in previous financial year, or again same thing, average of last 3 financial year, you have to maintain a pre-tax profit. Again consolidated basis is what they are telling you. You have to maintain it $1 million. Next one, people, post issue market capitalization of minimum $25 million. Market capitalization means what, people? The total number of securities in the company multiplied by market price. They're telling you after issue should be at least $25 million. 1 million is 10 lakh. 25 million. That is 2.5 crore. 2.5 crore dollar is what they're telling. That's how you need to calculate. This is the next one. Or qualifies any other eligibility criteria specified by IFSCA. If not any of the above, you have to satisfy if there is any other criteria. For now, there is nothing else. Next one, sir. Filing of offer document by issuer. If at all it is in India, you will file your offer document with the SEBI. Here they are telling you, you will file it with IFSCA. So, with IFSCA, you have to file your offer document for observations. However, remember, if your issue size is $50 million or less, then you are exempted. You need not have to give any offer document to IFSCA. Next one, people, offer timing. The offer should be made open within 12 months from the date you receive observation. Within that time, you have to go for an IPO. Minimum subscription as disclosed in offer document. It is left to you. There is nothing that is prescribed here. Next one, offer period. Minimum it will be 1 day. Maximum it will be 10 working days. So your offer period should be at least open for 1 day. Maximum should be 10 days. Remember, it is almost the same. Maximum is the same wherever you go. But in a normal Indian stock exchange, minimum is around 3 days. Maximum is around 10 days. It is, I'm telling you, Indian stock exchanges. Next one, minimum public offer. Indian company. Then minimum public shareholding shall be as per securities contract regulation rules. What is this? This is nothing but people rule 19. You will follow that only. What 25 percentage? When Indian company is raising money, imagine Amazon is coming and listing in IFSA. Then this rule will apply. Company incorporated outside India, if they are coming and issuing securities in India, then people minimum offer to public 10% of post issue capital, and you need to maintain it on a continuous basis 10 percentage only. For an Indian company, 25 percentage as it is. Next one, people, lockup of security is nothing but people, in our Indian context, it is nothing but lock-in of securities. That is, if at all there is pre-issue shareholding of promoters, shall be logged in for a period of 180 days from the date of allotment. On a normal day, in our normal stock exchange, 18 months. If it is promoters, other than promoters, 6 months. That is your amendment, people. This is important. Remember and go from exam point of view. You can expect a question. Yes, completely amended. Next one, listing of SPAC. Now, what is this SPAC, people? SPAC is nothing but, as we saw here, it's a special purpose acquisition company. Now, what do you mean by SPAC? SPAC does not have any objective of its own. They do not have any objective. Then what do? They just acquire another company which is functioning, which is operating, which they think is perfect. So they will sit on the top, and in the bottom they will acquire some 50-60 companies. Now for that they need money, right, to acquire. That is the money they are raising from the IPO. Such type of companies we call it as SPAC. Now sir, again some parts of this has been amended. What does that see? Eligibility. The target business combination has not been identified prior to IPO, meaning before going for IPO only, you should have not identified which companies you are going to acquire, because it depends on how much money you raise, and then you need to do your research. Next one, it has provision for redemption and liquidation as per these regulations, meaning a person who has invested, if he doesn't like, you have to give him a redemption. He has to have a way to go out also. That should be there. Next one, sponsor has a good track record in such transactions or business combinations, meaning mergers and amalgamations, meaning you know which company to acquire. Fund management or investment banking, which shall be disclosed in your offer document. It shall be disclosed in your offer document. Offer size, sir, minimum will be $50 million. Sponsor shall hold minimum 15%, maximum 20% in the post-issue capital. That is what you need to minimum hold. What if it's an ICDR? How much is minimum promoter contribution in ICDR?
20.
Public is 25. How much is public? Promoter. Oh, ಏನನ್ನ ತಿರುಗಿಸ್ಬಿಡ್ತಾನೆ 20 ನಾ? What if there's a shortfall?
10% should be compensated by the commercial banks or.
Very good. So minimum promoter contribution in ICDR is 20%. If there is a shortfall, up to 10% can be compensated by other institutions, public financial institutions, as the case may be. Very good. Sir, minimum application size, sir, here is $1 lakh. Allotment shall be on a proportionate or discretionary basis, but you need to disclose it in the offer document. Specific obligation, people, maintenance of escrow account, you have to open an escrow account. Right of dissenting shareholders, meaning if at all they don't like it, they should be given an exit opportunity. Invest in eligible investments, you cannot invest in some other thing and all. Acquisition timeline of 3 years, meaning we have given you money to acquire some company. Within how many days you need to acquire? They're telling you have to acquire everything within 3 years. Last one, sir, liquidation provisions. If at all something doesn't work, how are you going to wind up the company? That is called as liquidation provisions. Clear? Remember it? Next one is, people, public offer of depository receipts. Again a newly added one, amended one. Remember, important from exam point of view. They online now. Eligibility, issuer incorporated outside India. Who can come and raise a public offer of depository receipts? Who can do? They're telling you should be incorporated outside India. authorized to issue depository receipts as per the law of home jurisdiction. Now imagine Amazon is coming and issuing IDRs in India. They're telling US laws has to allow, or wherever you're coming from, your law has to allow for you to come and raise DRs. We are allowing you. You should also allow. Underlying securities shall be in demat form. What is underlying securities? Same thing I told you, right? They will come and give it to the custodian, equity shares. That equity share should be in demat form. It has to be fully paid up, free from encumbrances. They should have not taken any loan on such equity shares, which is gone and given to the custodian. The custodian will give a call to the depository. The depository is issuing. That's how the deposit receipts will come, no? Hello? Offer size, minimum $7 lakh. Minimum subscription is $7 lakh only. Sir, same, both are not same. They're telling offer size minimum should be 7 lakh. Maximum can be 20 lakh, 30 lakh also. So these are not always same. Next one, pricing. The pricing of DR can be determined by consulting lead manager through, it can be fixed, it can be book building also. Fixed is I know what price I need to charge you. Book building is I try to do the bidding process. Next one, allotment refund payment to be completed within 5 working days from the closure of offer. Done. Okay. Next one, people, listing of debt securities, again a changed one only. It may issue debt securities who any person on International Financial Service Center may also issue debt securities, it seems, on standalone basis or a series of issuances. Meaning I can issue it once and leave it. I can issue it every 3 months, 5 months also and leave it. It is left to me. Next one, private placement. Minimum subscription amount to be disclosed in offer document. Public issue shall comply with appointment of the trustee, creation of debenture, redemption, reserve, etc. You have to comply with all of this. That's all, nothing else is there. Next one, sir, secondary listing of specified securities. Secondary listing without public offer. An issuer having its specified securities listed in a jurisdiction outside IFSC. What do you mean by that, sir? I am Infosys whose securities are already listed on NSE. I want to come and list my securities on IFSC also. Now, can I do? I will only come here. Okay. May list those securities on a recognized stock exchange in IFSC without making a public offer. Understand the difference. In the first scenario, what we saw, you are going to issue new securities on IFSC. If I am speaking about secondary listing, what do you mean by secondary listing? I am already listed in Indian stock, any stock exchange outside IFSC. It can be foreign or India. Now I have 1 lakh securities. The same 1 lakh securities is this listed in NSE. I will list the same 1 lakh securities also on IFSC. I am not creating new securities. Such type of listing is called as secondary listing. Same securities getting listed on the IFSC stock exchange also. Okay, subject to the following conditions. You need to file listing application with the stock exchange, comply with the listing requirements of such exchange. So you have to comply with listing agreements basically of IFSC stock exchange, and you can go for secondary listing. Listing with public offer, without public offer. What do you mean without? I'm not doing an IPO. I'm not raising money. Here you can raise money. Issuer having its securities listed in a jurisdiction outside IFSC may list on exchange through public offer. The provision relating to what have they given with regards to application, offer documents, filing, minimum public, that entire thing will be same as ICDR. That's what we had seen. No, whatever the other merchant banker appointment, underwriters, the entire scenario will be cut, copy, paste. If you are going for a public offer on IFSC stock exchange, whatever is available, whatever was applicable in the ICDR, you have appointed merchant bankers, you would have gone with offer documents, you would have done underwriters, all of that will cut, copy, paste, apply to this also. Clear? Hello? Pakana? Okay, the last one, sir, listing of commercial papers on or certificate of deposits or other financial products. Sir, commercial paper, sir, issuer shall ensure that the commercial paper listed on IFSC is in demat form and it is held with recognized depository in IFSC That is NSDL, CDSL, if they have a branch there, should be with them only, or any international central securities deposit. Maturity of these people should be minimum 7 days, maximum 1 year of certificate of, commercial papers. Other conditions, it shall be issued at a discount up to face value. The commercial paper with call and put option is not permitted. It cannot be underwritten or co-accepted. Co-accepted means nothing but guarantee. If I don't pay, imagine if a bank is coming, they are telling if I don't pay, this company will come and pay. Such kinds of adjustments are not allowed. Listing, issuer shall file listing application along with offer document or information memorandum. Fees to be filed, $1,000 to the stock exchange, which will be given to the IFSCA. Remember the condition of 1 and 4, that is demat as well as fourth one, listing, will be applicable, cut copy paste to certificate of deposits as well. Agreed? Hello? Pakana? We'll take a quick 10 minutes break and come, huh? I told you, right? We have to delete it. That day only I told you, no, you have to delete that. Now, yes, people, in your book, I think if you are using your old book, SEBI IFSC guidelines will be there. See, I have deleted in the updated material. So, you'll be having SEBI IFSC guidelines 2015. That is no longer there, that you can delete it. Yes?
So this upgraded material will be sending in.
I think it is uploaded. I think there was some confusion, it seems. I'll just check once. I'll send it to you. That's not a big deal. It's not there, huh?
It's like old, this book is there. This PDF is over there.
Again, they've uploaded that one only.
Yeah.
I'll check once. Okay, let's go for a quick 15 minutes break and come.
Okay, sir.
Yes, people. Next one, let us take up ICDR. Important from exam point of view. Concentrate. So, chapter 8, sir, issue of capital and disclosure requirements. Applicability of SEBI ICDR regulations. First of all, it is applicable to what and all? Applies to IPOs done by unlisted public companies, IPO of IDR, IPO by SME. Applicable for everyone. It is applicable for FPO also by a listed company, bonus issue, rights issue, provided the value is 50 crore or more. Rights issue of IDR also it is applicable. Preferential issue by listed issuer. Qualified institutional placement, that is private placement done by QIB. And listing on IGP platforms. I'm saying for all of this particular thing is applicable. Correct? Okay. Now, IPO, ineligible entities to make IPO, regulation 5. Some people cannot go for an IPO, it seems. And who are they, sir? Issuer, promoter group or selling shareholder is debarred from accessing capital market. You cannot go for an IPO. Promoter, director of the issuer is promoter or director of the company which is debarred from accessing capital market. What do you mean by that? A common director, common promoter. As I told you, example of Kingfisher. Imagine XYZ Limited. In that, Vijay Mallya, let us imagine, is a director. Now, Kingfisher has been debarred from accessing capital market, or Vijay Mallya has been debarred. The same person is my promoter, the same person is my director. Even my company cannot go for an IPO. Issuer or promoter or director is a willful defaulter or a fraudulent borrower. People who have not repaid money, example will come here also. Vijay Mallya, promoter or director is a fugitive offender. And the next one is that whenever there is outstanding securities, even they can also not go for what? They cannot go for issue of IPOs, not possible. 6.2, if there are any outstanding convertible securities having an option to receive equity shares. What do you mean by that? Imagine I have issued convertible debentures. They are yet to be converted to equity. It is still outstanding. Until they are converted, I cannot go for an IPO. However, this rule has an exception. What is that? 5(1) and 2 shall not apply to outstanding options granted to employees as part of their ESOP. Fully paid up outstanding convertible securities required to be converted on or before date of filing of red herring prospectus or prospectus. What do you mean by that? Before I file, if at all conversion has happened, now imagine I take up the decision of going IPO, we still have convertible debentures. But by the time I issue my red herring prospectus, I have converted everything. Then it's okay, you can go for an IPO. Next one, 5(1)(ab) does not apply if such debarment period is over. That is, we have said that if this person is suspended or debarred, if that that period of debarment is over, 2 years you could not go. 2 years is done. Then you can go. You are free to go for an IPO. 5(1)(a) to D applies to FPO as well. It shall apply to IPO and SPO of SME as well. Same things will apply to IPO of what is that? IPO and FPO of SME as well. Correct? Yes, sir. Next one, sir. Eligibility requirements for an IPO. Regulation 6, important. What does it say? For a person to go for an IPO, what are the things I need to satisfy? I can say there is one big route, one small route. 6(1)(6)(2). 6(1) says I need to have a net tangible assets of minimum 3 crores in each of 3 preceding full years. And remember, this is a very, very tricky part. They're telling you minimum 3 crores in each of 3 preceding full years. 3 crores in the entire 12 months. I need to have 3 crores in the last 3 years every day. I should have 3 crores. That's the meaning of full year. And in that also not more than 50% is held in monetary assets. So, meaning cash equivalents, you should not hold more than 50%. So, what if I hold more than 50%? Then you should have made firm arrangements, people, for utilization of that money. Why are you holding? You need to have a justification. Okay. Next one, this condition will not apply. This shall not apply if IPO is entirely through OFS. Meaning, I'm taking my promoter shareholding or existing shareholders, that time giving it to public. This condition will not apply. Next one, average operating profits, minimum 15 crores in 3 preceding years with the operating profit in each of the year. Look at the words used. Average should be 15. Every year should be positive. Preceding years with operating profit in each of the year. Even if it's 1 rupee, it's okay, but every year it should be a profit. Remember, if they ask you a practical based question, remember and go. Yes. Net worth people, minimum rupees 1 crore in each of 3 preceding full years. Name change in last 1 year, same thing we saw. 50%, same like Arivu Education and Finance, 50% should be from the new activity. Correct? On restated and consolidated basis. Restated means people without any errors. Consolidated, take your subsidiaries, associate companies also into account and you need to calculate. Sir, if 6(1) I am not able to satisfy, you can go under 6(2). We call it as an alternate route. And what is an alternate route? If I am not able to satisfy my tangible assets or my revenue, then they are telling you easiest one, then issue your securities through book building process and make sure out of the total issue people, minimum 75% of the net offer is given to qualified institutional buyers. This is the cross reference we saw in the first chapter. And refund money if it fails to do so. If I don't give it, I need to refund the entire money. Regulation 6(1)(d) and 6(2) shall apply to FPO as well. Meaning a company wants to go to an FPO, this name change condition will apply. ABC will not apply, D will apply, or this will apply. Understood? Yes, sir. Okay. Eligibility in case of, what if it's a partnership conversion or LLP and all, people can, same thing. Now, if at all I am saying 3 years and all, I have converted from partnership to company, then I have to audit my accounts. So, as per accounting standards, so present the balance sheets also in the format specified in Companies Act. If you're satisfying that people, then we don't have any problem. You can still come and you can list your securities. You can go for an IPO. Simple, lah. Hello? Spinning off, same thing. What do you mean by spinning off? Spinning off means what?
Business has been like separate, it has been split, and that one of that part of like it is want to list in the security.
Perfect. So as I told you, Tatas. In Tata Motors, there were what is that? Heavy vehicles. One is consumer segment. Heavy vehicles is this truck, transporting vehicles. So they want to take away that division. Now imagine they want to list that also tomorrow. Now how do I take the profits? How much did this department earn? So you should have prepared accounts in such a way that I clearly know how much that this department performed. So you can do it. Spinning away is nothing but people. Excuse me. I'm done, I think. Okay. So spinning away of a division is nothing but where if there is an existing company, in that one department is being separated and that you want to come and get listed. Is that possible? The answer is yes. For that you need to take record. They are telling you whatever is a separated division, maintain accounts for that, prepare balance sheets for that. If you're able to clearly identify numbers, then even you can list that separated department as well. That's the meaning of spinning. Clear up? Okay. Additional case in OFS. What do you make OFS people? Offer for sale. Offer for sale means what, people? Whenever because of any reasons, an existing shareholder's shares are taken, and if that is given to the public as a part of public offer, we call that type of issue as OFS, offer for sale. Offer for sale, remember, generally it will be to meet minimum public shareholding requirements. When promoter shareholding increases, public shareholding decreases. To meet 25%, we take some shares from promoters, we decrease them, we increase this. That is why we use OFS. Additional conditions when you're going for OFS, I'm telling you, shares must be fully paid, to be held by seller for a minimum 1 year prior to the filing of draft offer document. Meaning, imagine if a promoter shares are taken, if whose shares I can take, they are telling you, you should hold the shares at least for 1 year. Only that shares can be taken. Next one, holding period of convertible securities, depository receipts plus resultant equity together shall be considered for a calculation of 1 year. So meaning if at all I had convertible debentures. After 6 months, it got converted to equity. They're telling you, you can count the 6 months. It was in the form of convertible debentures. That is also counted. It got converted to equity. Now it's been 6 months. You can add 6 plus 6. It's absolutely fine. Non-applicability of OFS. Non-applicability of OFS. OFS of government or statutory company or any SPV set up and controlled by one or more of them, which is engaged in infrastructure sector. Equity being offered for sale were acquired as scheme approved by High Court Tribunals 232, nothing but mergers and amalgamations. If equity shares of OFS were issued under bonus on securities held for a period of minimum 1 year prior to filing of draft offer document, and it should be issued out of the free reserve securities premium account, not out of the revaluation reserve or unrealized profits. Meaning what, sir? Whatever the OFS provisions we have said, that provisions will not apply if at all you are doing it in this way. What if it's a government company? Next one is if at all you are following court approvals, mergers and amalgamations, nothing but court approval, 230 to 234, mergers and amalgamations. Or sir, if equity shares of OFS were issued under the bonus on securities held for a period of minimum 1 year. What do you mean by that? Now imagine they are telling that I have to hold securities at least for a period of 1 year. Now imagine I have been holding it for 1 year. On that I have issued bonus shares. So even this also I can sell it in OFS, it is allowed. Provided I got bonus shares, right? I got it on my existing holding, right? That existing holding, I should have been holding it at least for a period of 1 year. If that is the case, I can sell my bonus issue component as well. That is possible. Clear? Okay. Next one, sir. Regulation 8A. When IPO is through Regulation 6.2, they're telling shareholders offering shares to public by OFS and pre-issue shareholding. What is that, sir? More than 20% of pre-issue shareholding of issuer on fully diluted basis, the maximum OFS allowed. What is that, sir? Let us imagine if a company is going for OFS. There are some three promoters who are holding shares in a company. Now let us imagine this company is called XYZ Limited. Now OFS means what? Existing shareholders will give their shares to the company will sell it to the public. Correct? Huh? This is what is called as OFS. Huh? They're telling you how much can each of this person sell. Can one person only sell off everything? Or there is a limit is what they're telling you. How much? See here. Maximum OFS allowed. If shareholders offering shares to public by OFS and pre-issue shareholding more than 20% of the pre-issue shareholding of issuer on fully diluted basis. Meaning, sir, now imagine the total shares of the company is 100% pre-issue shareholding. Sir, in this, I am only holding 25%. Who one person is holding 25%. How much can this one person sell in OFS? They are telling you not more than 50% of their, meaning individuals, pre-issue shareholding. Meaning people, how much is my pre-issue shareholding? 25%. The maximum I can sell is people 50% of my shareholding. That is 12.5%. Understood? Huh? Next one. If at all I am holding less than 20% of pre-issue shareholding of issuer on fully diluted basis. What do you mean by fully diluted basis? If at all I have any convertible debentures and all. Now imagine if I have 1000 debentures which will convert into 100 equity shares in the future. I need to add that 100 equity also while calculating my holding. So if at all I am holding less than 20%, then what is the maximum I can sell in OFS? 1% cannot sell more than 10% of pre-issue shareholding of the issuer, that is company is holding on a fully diluted basis. What do you mean by that? People, in the first one, I could sell not more than 50% of my holding. Now let us imagine in this 100%, there is one person who is holding 15%. That is less than 20. They're telling how much can this person maximum sell in OFS. They're telling he cannot sell more than 10% of company's pre-issue shareholding. What do you mean by that? Now in this 100%, let us imagine it comes to 1 lakh shares. The maximum I can sell is out of the total shares of the company, I cannot sell more than 10,000 shares. How much do I have? I have 15,000 shares. I'm not calculating the 10,000 on my holding. I'm calculating the 10% on company's holding. The first one you calculated on your holding. I hope you got the difference. Clear? That is this particular thing. Next ones are promoter contribution. There is something called as minimum promoter contribution. What is minimum promoter contribution? In a company, people always remember the public always wants trust. We are investing money into your company. That means you should also invest money in your company. If you are only not investing, why should we invest? So with that agenda, they have come up with something called as minimum promoter contribution. You also invest some money. And how much is that? They're telling you, in the public issue, 20% of post-issue capital. Post-issue I've told 100 times. So post-issue, I should have 20%. Sir, what if it is less than 20? I don't have so much. I'm able to hold probably 15%. Then who will hold their 5%? The shortfall can be compensated by alternate investment funds, foreign venture capital funds, commercial banks, public financial institutions, insurance companies, provided maximum they can hold is 10%. So in our case, we are holding 15, they can contribute 5%, absolutely fine. Sir, what if mine is 5, theirs is 15? That is not allowed, people. You cannot go through this particular condition. Clear? In case of FPO, 20% of the proposed issue or post issue, no 10% rule shall not apply. What is that? In case if a company is going for FPO, same rule. 20% of the proposed issue or post issue. you need to hold in a promoter contribution. So if it is a composite issue, what do you mean by composite issue? Whenever a company wants to raise money, if it is coming up with a joint, combined offer, what is a combined offer? Public offer plus rights issue. Then we call such particular issue as a composite issue. In that they're telling you 20% of the proposed issue or post-issue capital, the minimum promoter contribution shall not apply to the rights issue component. So here also 20% will come. So if a company wants to raise, let us imagine it's 1000 crore. In this 1000 crore, public issue is 800 crore. Rights issue is 200 crore. They're telling people the 20% will apply only to this 800 crore. For 200 crore, the 20% criteria won't apply. Is clear? Yes, sir. Okay, done. Next one, exemptions from MPC. I don't think we have written this, right? We have written? Okay. Issuer does not have identifiable promoter. If you do not have, generally we see this also, right? Vanishing companies. We do not know who our promoter is. From where will I satisfy 20% criteria? Not applicable. Next one is if a company is coming up with an FPO. Equity shares of issuers are frequently traded for a minimum of 3 years. And issuer has resolved minimum 95% of investor complaints. And issuer has complied with SEBI LODR regulations for minimum 3 years. If you satisfy all of this properly, then in your FPO, minimum promoter contribution is not required. You are exempted from 20%. Next one, lock-in of promoter contribution. I am telling 20%. How long will you maintain that? Is it forever? Is it for some days? They are telling the minimum promoter contribution shall be locked in for a period of 18 months from the date of allotment. Note, this applies to shares held by foreign venture capitals. We saw no deficit. If at all I am holding less than 20, we saw no scheduled commercial banks and all came. For them also it will apply. If you are holding on behalf of the promoters. Note 2, the locked in shares cannot be traded. Note 3, it can be transferred to another promoter because we call it as what? Promoter's contribution. Amongst them you can trade, we don't have a problem. Note 4, in case of SR equity shares, the shares shall be locked in until conversion similar to ordinary equity shares or 18 months, whichever is later. Meaning what, sir? SR equity shares, I told you, it cannot enjoy the superior. What is SR equity share? SR equity share means people a superior voting rights equity shares. Generally, you will have one share which is equivalent to 5 votes. Few companies will issue that. Who will have it? Promoters will have it. So they're telling you, in the case of SR equity shares, lock-in period will be 18 months or until this SR equity share gets converted to a normal equity share, meaning one share is equal to one note. Whenever that gets converted, whichever is later, until that day, your lock-in will be there. You cannot sell it, you cannot pledge it, you cannot do anything. Clear? Next one, promoter holding in excess of MPC, meaning now, sir, minimum promoter contribution is 20% on the date of IPO. What if I have held 25%? They're telling you 20% shall be locked in for a period of 18 months. The rest of the 5% shall be locked in for a period of 6 months. Understood? Sir, the lock-in shall be 3 years and 1 year in the case of minimum promoter contribution. In case the issue proceeds is proposed to be utilized for capital expenditure, meaning this will be considered as 3 years. This will be considered as 1 year. If whatever is the money you are raising, you are using that money for capital expenses, meaning buying plant and machineries, buying land and building. In such case, people, what we are telling is they'll be using it for the capital expenditure. It will be locked in for a period of 3 years and 1 year, as the case may be. Clear? Okay, done. Next one, lock-in of securities held by person other than promoters. So I don't know if you guys know it or not. There is something called as grey market. You guys know grey market? So there are some entities. For example, NSE. It's going for an IPO, no? It's going for IPO, no? You can invest in NSE securities now. Grey market is not an IPO. So it's a public company. There are apps. It's now being traded at 1,610 rupees. The day it goes for listing, it will be a rocket only, NSE. Now, if I buy today, what is the problem? I cannot sell it when a company goes for IPO. Now, because I entered NSE before it went to IPO, I cannot sell the shares up to 6 months because I will come here. Lock-in of securities other than promoters. So on the date of IPO, other than promoters, whoever are existing, I am who? I am nothing. Even I am investing 10,000 rupees, my shares will be locked in for a period of 6 months. That's the reason people will not go for grey market. But is it so with everyone? No. If you have liquid money, usable money, if you're okay to lock in that money for 2 years, it's the easiest way to get an IPO. You will pakka get. Yeah, 2 years will not shake at all. It will be there only. Getting it? Okay. So it will be locked in for 6 months from the date of allotment. However, this condition shall not apply to ESOPs, ESPS, venture capital funds, provided it shall be locked in for at least 6 months from the date of purchase. Meaning what, sir? Now imagine they're telling, for us it is 6 months from the date of allotment, meaning from the day you go for an IPO. That is what you have written here, no? From the date of allotment. Sir, here purchase means what? I purchased recently. You went IPO in June, but you purchased in the month of March. 6 months will start from March. For us it will be from June. That's the difference. Clear? Yes, sir? Okay. Next one, sir, prospectus. There are two types of prospectus. One is called as offer document. Next one is called as red herring prospectus. Whenever a company is coming up with an IPO, there are two types of companies. One company is pretty sure on what their IPO price should be. I know for a fact I have to raise 1,000 rupees from this particular company. One share, if I place 1,000 rupees, I will pakka win all the, it will be oversubscribed. I am very confident. In such case, what I will do, I will go with a fixed price issue. Or if I think, no, I am not sure. If I place 1,000, what if people feel it's overly priced and people will not buy at all? Then what I will do, I'll go with something called as people book building issue. Book building issue means nothing but people, it's like a bidding. Now, what do you mean by that? I give two price bands, like a range. I will say 900 to 1,020 rupees. I'll say 950 rupees to 1,020 rupees. If you guys want, you start doing bidding. Wherever I get my minimum subscription, at that price I will go and list it. So if I get it at 950, I will list it at 950. If I get it at 1,020, I will list it at 1,020. So wherever I get the maximum bids, I will take that number and I will list it. So sir, there are two types. One is called fixed price issue. One is called as book building issue. Fixed price issue, if you are doing the document you use to go for an IPO, if it is a fixed price issue, the document is called as offer document. Sir, if I am doing book building issue, the offer document you use is called as red herring prospectus. What is the difference between these two documents? Nothing, both are same only. Only difference is that in red herring prospectus, everything else will be there, but few details will be left blank. Like the number of securities that you want to raise, the price of the security, the total amount you want to raise, those things will be left blank. Rest on all cut, copy, paste, nothing, no difference at all. So a document which will have all the details about the company except number of securities, the price of securities, or the amount raised through IPO. If these details are not included, we call such type of offer as red herring prospectus. That document is called as red herring prospectus. Clear? Pakkana? Remember, you can never issue the prospectus directly to the public. It should always be first issued to your stock exchanges, ROC, SEBI. There is a procedure. They will first check if everything is fine. Then they will give you a go ahead signal. You guys can go ahead. So, sir, the first document you issue is always called as draft offer document or draft red herring prospectus. Now, SEBI will give you its observations. You will correct everything. You will finally issue something called as offer document or red herring prospectus. Correct. As long as now NSE is in draft stage, it will be there only until observations. They will give some corrections. That process is lengthy.
But why we need money, sir? Like, they are handling the accounts. What is the business other than this, like stock exchange?
NSE, they also have, right? Now they can also grow market infrastructure, development. Now they wanted to set up IFSC. Now they need money, growth of infrastructure. So they will also need money. In fact, NSE is a very, very profitable venture. Very, very profitable venture.
It's only 2 years.
Compared to what do you say? BSE, NSE is somewhere else in terms of profitability. Way too profitable. Is this clear? All of you retiring prospectus, any doubt? Done?
I feel sometimes it's cheap also, sir, like comparing to BSE.
Some price will be different. 0.2 paise, 0.1 paise. The difference will be there. So the next one is called as people fast track FPO. What do you mean fast track? So generally, sir, whenever we want to go for an FPO, IPO or FPO, we generally say what? You need to give your offer document to SEBI. SEBI will give you observations, some corrections. You need to correct and then go for an IPO or FPO. All of this will take time. Sir, I want to save time. Can I do it? Yes. The only thing is people, it's called as a fast track FPO. FPO, IPO illa. FPO. Fast track, you can do it, provided you satisfy all these criteria. Now, what is that, sir? The first one, people, you should be listed for a minimum period of 3 years. Next one, promoter holding is completely dematerialized. Average market capitalization of 1000 crores in the case of public issue. Meaning, number of shares into market price should be coming to at least 1000 crores. Less than that, not possible. You should be in compliance with the listing agreement. Listing agreement is nothing but an agreement you enter with the stock exchange for listing your securities on that stock exchange. Plus, you have to comply with LODR. All of this at least for a minimum period of 3 years. You should have at least answered or redressed, resolved 95% of the investor grievances. No pending show cause notice on the company. Equity shares have been not suspended during the last 3 years. So basically, if you see what, it's a clean company, that's all. Issuer, promoter, they have asked this also FPO a lot of times. Remember, it's an important one. Issuer or promoter or director has settled any violation of security laws through settlement mechanism during the 3 years, then disclosure of compliance of settlement order in the offer document. What is that, sir? You have gone for compounding. You have settled something. You have compromised. If you have compromised, you have to disclose that compromise in the offer document. And what is the compliance? You said you have not done. Now have you done? You file that compliance. Next one, no conflict of interest between lead manager and issuer. We should be in a good note, good terms. And audit qualification, issuer shall provide restated financial statements adjusting for impact of audit qualification. For audit qualification, impact cannot be ascertained. The same shall be disclosed in the offer document. What is this? Audit qualifications means, people, your auditor has pointed out at some mistakes in your financials. Now, if something has been pointed out, you need to correct them and you need to prepare financials. That's why we call them as restated financials. Sir, what if we are not able to correct it? We do not know where it has gone wrong. Then people, you need to give the reasons. Disclose it in the offer document. Next one, annualize the trading turnover of equity shares in preceding 6 months as minimum 2% of weighted average number of equity shares listed during the 6 months. If public shareholding is less than 15% of issue capital, then 2% shall be free float. What is that, sir? Annualize the trading turnover. Trading turnover means what? The buy and sell of this stock on a stock exchange should be in the last 6 months minimum 2% of weighted average number of equity shares listed during the 6 months. Meaning, sir, you see in the last 6 months, what is the equity shares that is listed of a company on a stock exchange? Let us imagine a company has listed 100 crores. Of that, they are telling you minimum 2% should be traded in the last 6 months. How much is 2%? 2 crore. 2 crore shares should be at least purchased and sold. The trade should have happened in the last 6 months. If you actually, we need not go in so much in detail and all. If you look at it, they have said Average number of equity shares listed during the month. What is it? Minimum number of, see, weighted average number of equity shares listed during the 6 months. Why is it the word weighted is used? The reason is the company's shares might not be the same throughout the 6 months, right? Probably in the January, the company has gone for an FPO. In the month of say March, the company has gone for a buyback, and probably company has issued bonus. Shares are getting fluctuated. No, 2% on what will you calculate? That's why they have said weighted average. It's a formula, not there for us. It's okay. Next one, annualized delivery based trading turnover in preceding 6 months immediately preceding the month of reference date has been at least 10% of annualized trading turnover of equity shares during 6 months. What is it, sir? Now futures, so options, so all of that is there. Intraday, you guys do so much. They're telling out of all of that people in the last 6 months, at least now imagine if 10 crore shares are purchased and sold, traded over a stock exchange. 10% of it at least should be delivery based. Meaning people should have purchased and they should have hold. It's not like options or futures or intraday. So at least 10% of what has been purchased should be delivery based. Clear? Next one, people, preferential issue. Meaning issue of securities to select group of person on private placement basis and does not include ESOP, ESPS, sweat equity, deposit receipts. This is not considered as what is preferential placement, people generally. Preferential issue is nothing but whenever an offer is given to a selected group of people. Yes. Ineligible person to invest in preferential issue who cannot participate in preferential issue. Important, they can ask you a question. A person who has transferred or sold equity shares during the 90 trading days preceding the relevant date. You just sold my company share. I will not again give you preferential. Next one, promoter who had subscribed to warrants but failed to exercise will be ineligible for 1 year from the date of cancellation or expiry of tenure of the warrant. Equity warrants, 18 months time, you said no to that, you will say no to this also. 1 year cool off period. Issuer company shall not do preferential issue if there are any outstanding dues to SEBI, stock exchange, depository. You have to pay fees, no? That if you have not paid, you cannot go for preferential issue. Exception to this, sir, if it is due to some pending appeal, meaning dispute is going on, that's why it's pending, then it's okay. Next one, sir, promoter or director is a fugitive economic offender. You cannot go for a preferential issue. Conditions, in principle approval from stock exchange you need to take. The preferential issue shall be fully paid, special resolution, dematerialized. You have to comply with listing agreement, obtain PAN of the allottee. Simple? Hello? Next one is called as qualified institutional placement. What is called as QIP, people? Whenever you do a private placement to a qualified institutional buyers. Now imagine I identify venture capital fund. I identify a scheduled commercial bank. Specifically to them, if I make an offer, it's called as qualified institutional placement. That's what they're telling you. Meaning it is a private placement made to QIB. Okay. How pass a special resolution? It is not required if it is OFS to meet MPS. What is MPS? Minimum public shareholding. Allotment to be completed within 365 days from the date of passing resolution. Promoter or director should not be fugitive economic offender. It shall be subsequently listed. It's not that you keep it unlisted. These securities should also be listed. No subsequent QIP until the expiry of 2 weeks. So there should be a cool off period of at least another 2 weeks. IP of IDR, issue a company listed in its home country for a minimum period of 3 years. They can ask you a question. Next one. So what is that telling you? A company who wants to issue IDR, we have already seen this also. Yes or no? They are telling you that's what. If at all a company wants to issue IDR, you need to be listed in your country at least for a period of 3 years. Issuer not prohibited to issue securities by any regulatory body. Meaning here also in your country also. Imagine your bank, your SEBI has said no, you cannot do it. Track record of compliance in that home country. You should have satisfied everything there. Promoter or director should not be a fugitive economic offender. Next ones are conditions. The issue size shall be minimum 50 crore rupees. Offer size. At any given point of time, there shall be only one denomination of IDR. You cannot have 10 rupees paid up, 15 rupees paid up. Only one should be there. Underlying equity shares in listed home country, whatever IDR, you go and give to the custodian, right? If you remember, same thing you saw in depository receipts also. Same thing we saw it, right? Yes or no? If you remember, same scenarios we saw there also. So in the home jurisdiction, unencumbered, underlying equity shares is listed in a home country, IDR shall rank pari passu with equity shares after conversion. General conditions same as IPO. Next one, sir, IPO of SME. What are they telling? Eligibility criteria. Post issue capital people should be less than or equal to rupees 10 crore. If it is less than or equal to 10 crore, you can list to only on SME board. You cannot go on main board. Post issue capital can be more than 10 crore but less than 25 crore. Then you have an option to either be on SME or main board. If IPO is to be 100% underwritten, this is what I tell you. In that 15% it should be underwritten by lead manager. That is nothing but merchant banker. Next one, minimum application size and trading lot is 1 lakh rupees. So if you want to buy SME, I told you, it's always 1 lakh that you need to invest. Next one, they have an option to migrate to main board. Sir, I am now listed on SME. I want to go to main board. That is, I am listed on NSE emerge. I want to get into NSE main board. Can I do it? They are telling you. After pass a special resolution, post issue capital should be less than 25 crore. Votes cast in favor to be twice of against in non-promoter category. I told you this also. What do you mean by that? Now we need to pass a special resolution. Special resolution means what? 75% of the people said yes. 25% of the people said no. Now how many people said no? Sir, 5% of the people are public. Sir, another 20% of the people are promoters. Sir, in 75% who said yes? In this, sir, 20% of the people are public. Sir, and the rest of the 55% of the people are promoters. Now, what is the criteria? Did I pass special resolution? The answer is yes. 75% approval I got. In that also they are telling you people the number of non-promoter shareholding who said no versus the number of people who said yes in the non-promoter category. They are telling you this has to be at least 2 times. Correct? Huh? Next one, IPO of IGP, which we have seen also. In SEBI chapter only we saw not all of this. Yes or no? So listing of IGP, listing is allowed with or without IPO. In case of IPO, minimum offer size is 10 crore. If minimum application size is rupees 2 lakh, the number of allottees in IPO shall be minimum 50. The trading lot shall be minimum 2 lakh. Correct? Hello? Any main point or major point I have not discussed in ICDR? What is bonus issue? What is bonus issue? Additional shares on your existing shareholding. What are the sources of bonus issue? Securities premium, free reserves, capital redemption reserve, CRR account. So you can use all of this to make a bonus issue. It should be authorized by articles of association. Remember one thing, if you have SR equity share, the bonus share given on SR equity share will also be SR equity share only. Just remember that one point, correct? No. And if you have partly paid, first you have to make fully paid. Without that you cannot give bonus shares. Next one, the promoters and directors should not be fugitive economic offenders. You should have got approval from the recognized stock exchanges. Correct? It has not defaulted in payment of interest and principal. And not defaulted in payment of statutory dues of the employees, provident fund, pension fund. Correct? Hello? Articles of association, as the case may be. An issuer shall make a bonus of equity share only if it has made a reservation of equity share of the same class in favor of holders of outstanding compulsorily convertible debentures, if any, in the proportion of convertible part thereof. What do you mean by that? Imagine I've issued compulsorily convertible debentures. That means I have 1000 debentures. It will get converted to 100 equity. It will convert, I know. So whenever I have issued bonus share on a normal equities, I am holding compulsory convertible, which will also get converted to equity. They're telling you have to keep aside that much of proportion to the compulsory convertible part also. Imagine if you have come up with a 10:1 proportion. For every 10 shares, you are giving a bonus share of 1 share. Now I have 1000 convertible debentures, which will get converted to 100 equity. 10:1 is a ratio. I have to keep aside at least 10 equity shares for this person. Post conversion, this person will have to get this 10 equity shares as well. Not today, post conversion. Until then, you have to keep aside. That's the meaning they're telling you. Correct? Made only out of free reserves, securities premium, capital redemption reserve. Bonus share shall not be issued in the lieu of dividend. Correct? If you have declared dividends, you have to pay dividends only. You cannot give it in the place of that. SR equity shares, remember, I told you, even SR equity shares, whatever you issue, that will also be SR equity only. The bonus will also be SR equity. Whenever these shares get converted to normal equity share, the bonus share will also get converted to normal equity share along with the SR equity share. Once you have announced, you cannot withdraw, of course. Correct? Completion of bonus, the issuer announcing a bonus issue after approval by its board and not requiring shareholders approval for capitalization of profits or reserves making the bonus shall implement the bonus within 15 days from the date of approval of the issue by its board of directors. So within 15 days of board meeting, you need to implement your bonus issue. Where the issuer is required to seek shareholders approval, it shall be implemented within 2 months from the date of the meeting. So if you are doing a bonus issue by passing board resolution, then they are telling you you need to do it with 15 days. If it is special resolution, that is shareholders approval, you need to do it within 2 months. Correct? Hello? What is return of offer document? This is amendment. So in certain cases, people, now whenever you guys file offer document with SEBI, SEBI in some cases used to send back the offer document for corrections. So now we as a company, we never used to know when will SEBI send back the offer document for corrections. What are the grounds SEBI will consider? So SEBI, to make it clear what did SEBI say, SEBI has clearly listed down the points. I will be considering these points. If your offer document does not satisfy these, then I will give you back your offer document. So what are the points considered by SEBI to return the offer document are these. The draft offer document must be drafted in a simple language and it should be in a visual representation of data, meaning risk is there. It should clearly say it's risk, not risk, that all should clearly tell. Next one, the information in the draft offer document is present in a clear, concise and intelligible manner. Meaning offer document, if a company has done everything in a very, vague, not so clear, I will return back the offer document. The draft offer document avoids complex presentations. Meaning don't do pie chart, the candle chart of stock exchange and all, that are all not required. Simple is okay. It should not be ambiguous. It should not have any repetition of disclosure. Same thing again and again and again. Complex, not required. Understood? Yes. The risk factors are appropriately worded. Meaning you need to clearly say that we are in this industry. There can be this risk. It has to be unambiguous, meaning not confusing. It should be simple and clear. If these are not met, people, we will send you back your offer document. Now, whenever it is sent back, can I resubmit, sir? Yes, you can make the corrections and you can resubmit. Sir, for resubmission, will they charge again some filing fees? The answer is no. Once they will charge, not again and again. So, that is one thing. There shall be no refund. If I do not resubmit, sir, will they give me back my initial filing fees? The answer is no. The issuer within 2 days of resubmission shall make a public announcement that people had filed, it was sent back, now I've again refiled it. I will give a public announcement as well as I will also intimate it to my sectoral regulator. Meaning if insurance company is coming up with an IPO, I will intimate it to IRDA as well. Clear all? Yes sir? Hello? I think I've touched most of the topics there. Okay, let us finish off this chapter 9 and probably we can end up for today. Yes? Okay, share-based employee benefits and sweat equity. Majorly people in this chapter, there are basically 5 schemes that we need to know. Correct? Basically, I can classify this particular topic into 2 parts. One is share-based employee benefits and sweat equity. First is most of the thing will be to do with ESOPs, schemes. Next one is sweat equity. This will be always, remember, for consideration. This can be even without consideration. Here discount is not possible. Here discount is possible. That is the basic differences. Correct? So according to this definition, what do you mean by an employee? Who is an employee? In ESOP, employee means people working in India or outside India. That day I had asked you one question also. Here remember, they can put one landmine only. Director, whether whole-time director or not. So a part-time director is also eligible to get ESOPs. Correct? However, can independent director get? No. These are all landmines. Correct. Sir, an employee as per A or B of subsidiary or holding or associate company in or outside India. I can give it to my company's employee, my subsidiary company's employee, my holding company's employee, my associate company's employees. Next one, who is not an employee? Promoter or person belonging to the promoter group. Imagine if you are a director or employee. If you are part of promoter group, you cannot be treated as employee. Neeta Ambani, Isha Ambani, Anant Ambani, Akash Ambani, they are directors only, but you belong to the promoter group. We cannot be considered as an employee. Director holding more than 10%, look at the words, more than 10% of equity shares of a company alone or with relative. That means what? Combined. So remember, here we are saying director is possible. What if the director holds 12% of shares? Then you cannot be considered as an employee. Note, employee includes even a contractual employee, provided designated as an employee by their employer and exclusively works for company or group company. That's okay. Sir, there are 5 types of schemes. It is called as share-based employee benefit schemes. The first one is called as People Part A. Employee stock option scheme. The first one is called ESOS. What do you mean by ESOS, people? It's nothing but we identify few employees who has really worked hard, who has been with us, or we want to retain them, we don't want to leave them. So what they will do, they will identify few employees. They will say, we are giving you a letter, congratulations, you are eligible to participate in equity shares of the company. Today we'll give you a letter. Sir, when can I buy? Letter you are giving today. When can I buy? You can exercise the letter only after at least 1 year. So from the day I give you the letter to the day you get the shares, you say yes or no to the share, there has to be some waiting period. That waiting period we call it as vesting period. So the day we identify the employee and the day you have an option to buy the share. Here we identify. Identifying is also always called as grant of option. Identifying is called as grant of option. Buying is called as exercise of option. Meaning if I am interested, I will say yes. If I am not interested, I will say no. So the time period between these two should be minimum period 1 year. That is only called as vesting period. Correct? Sir, after I get the shares, can I have a lock-in? Possible? Yes. Company's discretion. Clear? Now this is called as what people? Employee stock option scheme. There shall be an option given to an employee to subscribe the shares of the company with predetermined price and value. This is only called as grant of option. Company shall have freedom to determine the exercise price in accordance with the accounting policies. Vesting period will be minimum 1 year. Company may specify lock-in period pursuant to exercise of option. May, discretion. Part B, Employee Share Purchase Scheme, ESPS. Now, what is the difference between ESOS and ESPS? Most of the people get it wrong here. Now, what is ESPS? ESPS means, people, nothing but, imagine if a company is going for an IPO. Out of 100 shares, they reserve some percentage of shares only to the employees. If they reserve such shares to the employees as a part of public offer, we call such schemes as employee share purchase scheme. Again, it is a discretion of the company. It comes as a part of IPO.
While we'll buying IPO, that
Correct. Employee category will be there. So for us, it will be showing as a retail individual. If you are an existing shareholder, you will be shown as an existing shareholder category. If you are an employee, you will have an employee category. Now, whenever you are applying in these categories, the chances of you getting IPO is more. Yes, sir. It may be offered to employees as part of public issue. Company determines the price subject to regulations. Lock-in period minimum 1 year from the date of allotment. If price of IPO is same for employees, then there shall be no lock-in. Generally, it will be given on discount. Part C, stock appreciation rights. What do you mean by stock appreciation right, people? SAR, SARS we call. Whenever, what do we do? Now imagine we identify some 10 employees, and what do? We create a pool of shares. Now imagine for this 10 employees, we say you guys are entitled to 2 crore worth shares. We first today only, we keep aside 2 crore worth shares. So you have a right to participate in the employee benefit schemes. Now we have kept aside 2 crore worth shares in your name. Now what happens? We will say you guys have to wait for 2 years or 3 years. I'm just giving you an example. Now let us imagine after 2 years, 3 years, we have kept aside 2 crore worth shares. Correct? Huh? Now people, after 2 years, 3 years, if the company's performance is good, this 2 crores would have grown and it would have become 6 crores. If the company's performance is bad, it might have come down to 1 crore. Agreed? Huh? Let us take a positive. If at all it has grown to 6 crore, we invested 2 crore, it became 6 crore. The difference is 4 crore. Huh? This 4 crore benefit will be distributed to these 10 employees in the form of either cash or shares. It is a discretion. If it is given in the form of cash, it is called as cash settled SAR. If it is given in the form of shares, it is called as shares settled SARs or equity settled SAR. Yes, sir. Sir, what if we decided to give shares? One employee is getting an entitlement of 21.8 shares. 21 will be equity, 0.8 will be settled in the form of cash. You can never give fractions. Clear? Why will a company go for this type of scheme? The reason is, it is directly based upon not only one individual's growth. You will get benefited if company is also benefited. Now imagine ESOP, I gave you shares, but company is not doing good. It's a loss for the company. So what do? They will give something called as SAR. If a company is not performing good, you will not get any benefit. Now this type of thing is called as what, people? SAR. Is clear? Pakana? Okay. The next one is called as, people, General Employee Benefit Scheme. This is nothing but to take care of the healthcare, scholarship, death, accidents. Instead of directly giving money, we create a pool in the name of the employee. You can withdraw whenever you want. Whenever you want to withdraw, we liquidate the shares and we give you the money. So the funds created in the name of that is called as General Employee Benefit Scheme, also called as GEBS. Correct? The last one is called Retirement Benefit Scheme. Instead of giving you direct pension today, we create that pension fund in the form of shares. We will let it grow. Once you retire, we will sell the shares. Whatever is the benefit will be given to you. Is called as Retirement Benefit Scheme. Clear? All of you? Okay. Now scheme implementation. How do I implement the scheme? You can implement it through direct route. it involves grant to vest to exercise, everything will be done by the company only. That is called direct route. And remember, if you are doing through direct route, you should only do fresh issue only. You cannot do secondary acquisition. Secondary acquisition, if you are doing it, it has to be mandatorily through trust route. Now, what do you mean by trust route? Now, the monitoring of this entire ESOP can be done by two ways. One is called people. You can monitor everything in-house. You will only do it. You will form one committee called as compensation committee. Now, they will manage everything. This entire ESOP and all, they will manage. The next one is called as people, your trust route. What do you mean by trust route? The company will create one trust. The company will give some money to the trust. It will give either money or it will give shares. The trust will forward now company will identify some employees for grant of option. They will identify. Now after 1 year, the employee is going to exercise this particular shares. He will give some money to the trust. The trust will take that money will be paid back to the company if we have taken money. Correct? Huh? So when you are doing it instead of directly, if you are doing it through the form of trust, it is called as trust route. Sir, now if you give shares, the trust will give shares. Why did the company give money? The second type of acquisition is called as secondary acquisition. The company is giving loan to the trust. Now what will the trust do? The trust will take that money, the trust will buy the shares from the stock exchange just like you and me. When will a company go for this route? When the company does not have a requirement for additional capital. If I do not want, why should I, for the sake of it, why should I raise? So in such case, what will happen, people? For the stock exchanges, we will go and buy the shares. The trust will hold the shares in its name. They will allot it to the public, to the employees. The money they will receive, we have taken money from the company. That money will be repaid back to the company. This is called as what, people? Trust route. It's clear? Secondary acquisition cannot be done directly. It can be only done through trust route. See, fresh issue and or secondary acquisition, purchase from stock market. In trust route, compensation committee shall delegate its duties to the trust. Non-transferability, any options are granted to an employee is non-transferable. You cannot take pledge on the date of death. Immediately it will vest. Resignation or termination. Every grant of option will come to an end. Agreed? And as long as it is a grant of option, you do not have a right to, you will not have a right to dividend, you will not get right to vote and nothing. If it is not exercised yet. Okay. Implementation of scheme through trust route. Formation of trust is done only after shareholders approval. So shareholders approval is required. If the scheme involves secondary, then trust route is mandatory. Trustee who cannot become a trustee. A director, KMP, promoter or relatives of director, KMP, promoter of my company, my holding company, my subsidiary company cannot become a trustee. Or the beneficial holder of 10% or more of the paid up share capital, meaning the shareholder who is holding more than 10% cannot become a trustee. Who can be a trustee? It can be an individual or a OPC. If individual or OPC is a trustee, then minimum 2 trustees has to be there. If it's any other body corporate, minimum 1 trustee is sufficient. Shareholding of trust is considered as non-promoter, non-public shareholding. It is important, non-promoter, non-public shareholding. No voting rights, so there will be nothing. Next one, sir. Trustee shall not have any right to vote. It shall not deal in derivative based transactions, meaning futures or options or nothing. You should directly straight away buy delivery based. Maximum limit under secondary acquisition at any given point of time. How much I can buy from the stock market? If it is ESOS, ESPS, SAR, 5% each. This I can buy 5, this I can buy 5, this I can buy 5, provided GEBS and RBS is 2%. So everything put together, 15 plus 4, 19, Allah. The telling aggregate of all the schemes cannot be more than 5%. That's the maximum I can buy from the open market. All percentages are paid up equity capital as on preceding financial year. Maximum limit on secondary acquisition in a financial year is 2%. Sir, here we are seeing 5%. This is any given point of time. This is in a year I can maximum buyback is 2% of paid up equity capital. I hope it is clear. But ಒಂದೇ ಒಬ್ಬನೇ ಅಲ್ವಾ ಇರೋದು. There will be no other administrator. So ಅದಕ್ಕೆ you are treated as an individual. Yes, sir. Okay, next one. The trust shall hold shares acquired through secondary acquisition for a minimum period of 6 months. It's not like I buy like this, I come and give it off you. At least 6 months minimum holding period should be there. The company can carry on all the schemes under single trust, provided you maintain separate books of accounts for every scheme. The trust shall not sell shares in the secondary market except in the following. Meaning, I've purchased. How long can I hold? Can I sell it also? Do I have a choice? Do you have a choice in these cases? When the scheme is only being wind up, there are some shares still left with you. You can sell. For repaying of loan, not yet allotted. So I've taken loan from the company. There are no employees also. Sell and repay the loan. Participating in buyback, delisting, open offer. Correct? Huh? Next one. Upon board's approval, SEBI. In case of emergency for implementing GEBS and RBS, someone has asked for money. General employee benefits, retirement benefits, they have asked. You sell and you give them money. Excise of SAR, correct? Meaning cash. They are asking for cash, they are not asking for equity. Then sell and give them cash. To fund the employees, the amount necessary to meet tax obligation, fund excise option and other related expenses. Meaning they are giving them the shares, they do not have money to buy it. So you give them as a loan. For that also you can liquidate it, take that money, you give it to the employees. That's fine. The last part is people sweat equity. What is the sweat equity? It's a share allotted to the employees for recognizing their work, to retain, and as a reward for know-how, IPR or value addition. Whom can we give it to? Director, whether whole time or not, employee in India or outside, at a discount or consideration other than cash. This is what I told you. Sweat equity can be given on discount. What do you mean by consideration other than cash? I might have given you value. I might have given you copyright. An employee has given you copyright. In return, you are giving me share. Maximum limits in one financial year, 15% of paid up equity capital. Anytime 25% of paid up equity capital. Exception people, 50% of paid up capital on companies listed on IGP.
So is that 15% or more than less than what?
Which one? Up to 15%.
The value of the framework becomes.
Here. Correct. Rupees 5 crore. Issue value of 5 crore, whichever is higher. Valuation of IPR, value addition, know-how. Carried on by a merchant banker because he has given copyright. I don't know what is the value. It is carried on by merchant banker. He may consult an expert. How do I know copyrights? I can take the industry specialist help, and I need to get a certificate from a CA that valuation is as per accounting standards. Accounting treatment in books of accounts for shares issued for non-cash consideration. This is very important. If at all what you are getting from an employee, what are you getting? What did the employee give it to you? If the employee has given you some asset, imagine he has given you some land, or if he has given you some copyright. Land is a depreciable asset. Copyright is an amortizable asset. I mean, land alla, building is a depreciable asset. Copyright is an amortizable asset. Now, how do I treat it? Accounting treatment. Land or copyright, carry it to your balance sheet, which takes form of depreciable or amortizable asset. It shall be carried to the balance sheet as per the accounting standards. Sir, he has not given us anything. He has just worked hard for us. I do not get any asset from him. Then treat it as an expense. That's all. Does not take form of depreciable or amortizable asset. It shall be treated as an expense as per accounting standards. Correct? How do I do it, sir? Special resolution if you have to give it to employee or director. Ordinary resolution if you want to give it to promoter or promoter group. Provided the promoter or promoter group, when we are giving it to them, they shall not participate in such meeting. They shall not vote for their own resolution. The resolution should be valid for 12 months. Within that, you need to make the allotment. That's all. Huh? Chalo. Then let's end it up for today. Tomorrow we have the rest of the chapters. Let us finish it off. We have 9 chapters, no? We can easily finish. No tension. Chalo, let us meet tomorrow. Let us try to take up more additional things also wherever possible. If we can save some time, whatever more we can take it, let us take it also inside the class. Clear? Chalo. I hope you guys were able to understand something. After going home, don't relax. Anyways, we have done so much. Go home and immediately revise off so that it will be done. Here only it will be done. Instead of again going home, again forgetting everything, don't do all that natka and all. Just leave it off. Correct? So that you will save some time. Chalo. Let's catch up tomorrow. See you all. Bye-bye.
Yes, people. So today we are going to start with chapter 10, that is issue and listing of non-convertible securities. Okay. So in this, okay, perfect. Okay, issue and listing of non-convertible securities. So in this, what we are going to see, whenever a company is coming up with any security which is not being converted to equity. So it can be a redeemable one or it can be a non-convertible one. Technically, we have to redeem it. Now, such particular instruments will come under this particular chapter, and that is issue and listing of non-convertible securities. So before we had some regulations, today it has been replaced by SEBI issue and listing of non-convertible securities regulations 2021. That's our recent one. That is what we are having now. Okay. It covers issuance and or listing of following securities. So what and all is covered here? First one, all your debt securities. That will come here. Non-convertible, redeemable preference shares. See, this is what I tell you. It is non-convertible. So there should not be any equity component attached. That will come here. The next one is people, perpetual debt instruments. Remember, perpetual debt instruments, there is a lot of regulations for that. As per company law, as per our normal regulations, we cannot come up with perpetual regulations, perpetual debt instruments. But if you want to do it, we'll be seeing it in one place where it will be done based on RBI approval. But just like that, generally, we cannot directly go and issue perpetual debt instruments. It is not allowed. Next one is perpetual non-cumulative preference shares. Now, what is this? It's nothing but it does not get added up. Correct? Next one is people, commercial papers. Commercial paper is also one of the debt instruments only. Yesterday also we saw. Okay. Applicability of this chapter, issuance and listing of debt securities, and so first it will be applicable to 2 instruments majorly. This is what it will be again and again and again repeating these 2 words. So whenever they are asking anything from this chapter, register these 2 instruments very strongly. Now what is it, sir? Okay, now 1 second. Okay, 1 second. Okay, now what is that? Issuance and listing of debt securities and non-convertible redeemable preference shares by issuer by public issuance. So what we are saying is issuance and listing of debt securities and non-convertible redeemable preference shares by issuer by public issue. So these 2 instruments we are going for a public issue. So in such case, people, this particular chapter will apply. They're telling it's not ICDR. This is what it is going to apply. Next one, issuance and listing of non-convertible securities by an issuer issued on a private placement basis which are proposed to be listed. See, first one is public issue. The next one is called private placement. Again, the same instrument only. Then why is this chapter coming, sir, for private placement? This chapter is coming because in private placement also, what they're telling here is, you're not just going to do a private placement, you're also going to list that particular securities. So wherever the listing part is coming, then also this particular chapter will apply. One is public issue. Next one is you're going to do a private placement, but you're going to list those securities. This particular chapter will apply. Okay. Next ones are
listing of commercial paper issued by issuer as per RBI guidelines. Listing of commercial papers also, as we saw, commercial paper is also a debt instrument. Even for that particular chapter also, this particular thing will apply. Yes. Okay, next one. Eligible issuers can be an exam point of view, important point from exam point of view. So remember, who and all are eligible to come under this particular chapter, who can issue the securities, who can go for public offer, who can issue this non-convertible redeemable preference shares or debentures, who can do it. They're telling you the first one, issuer here means people, company. The company shall not make a public issue of non-convertible securities if on the date of filing of draft or offer document the issuer is in default of payment of interest or principal amount in respect of non-convertible securities, if any, for a period of more than 6 months. What do you mean by that, sir? Sir, prior we have already issued some debt instruments. On that we have not paid principal or we have made a default in repaying interest. If such thing has happened, imagine a company has issued some debt instruments. On that we have not redeemed it on time or we have not paid the interest on time, then they are telling you I'll be disqualified, provided for a period of more than 6 months. So you have a time period. Imagine I had to pay the interest in the month of Jan. Now it is just March. So this disqualification will not come. 6 months should have happened. So it should be by end of June. Clear? Next one, issuer shall be ineligible to issue non-convertible securities if as on the date of draft offer document or offer document. So ineligible, you will be ineligible if these things happen. Again important. What is it? Company, its promoters, the promoter group or the directors are debarred from accessing the securities market or dealing in securities by SEBI. So SEBI has passed an order that you are not supposed to access the securities market, then you cannot come, then it will be ineligible, you cannot go for a public issue. Next one, promoter or director of the company. Promoter or director of the company is a promoter or director of another company which is debarred. From yesterday we are seeing this, it's nothing but common director, common promoter. Vijay Mallya's case, whatever we saw, is debarred from accessing securities market or dealing in securities by SEBI. So if that is the case, common promoters also, it will affect us. Next one, company or promoter or director is a willful defaulter, had money but did not pay. Promoter or whole-time director of the company is promoter or whole-time director of another company which is a willful defaulter. Same thing. Kingfisher did not repay the money. The Kingfisher promoters or the Kingfisher whole-time directors are also my company's promoters or my company whole-time director. Because Kingfisher is now disqualified, that disqualification will affect me also. Same like common promoters. Again the same thing. Next one, promoter or director is a fugitive economic offender. What is fugitive economic offender? A person who has basically a person who has escaped. Correct? Correct? The person who has basically escaped. Okay. So promoter or director is a fugitive economic offender. Always remember, fugitive means a person who is not stayed back. He has ran away. Economic means people money related. Offender means people I have not whatever is the payments I had to make, I have not made it. It's an offense end of the day. That's why we call it as a fugitive economic offender. Next one, people, any fine or penalty levied by SEBI or stock exchanges is pending to be paid by the issuer at the time of filing offer document. Imagine some section, you have done a violation. As per that violation, you were supposed to pay some 1 lakh penalty. You have not paid that 1 lakh penalty. They're telling you that your company is disqualified from going for a public offer. Okay. Note, 1 and 2 conditions shall not apply if the period of debarment is over. 1 and 2, we have said that if at all there is a debarment on director, promoter, you cannot go for a public issue. Now imagine you were debarred for 2 years. That 2 years is over, you can go for a public issue. Next one, 2 and 4 conditions shall not apply in case of person who was appointed as director only by virtue of nomination by a debenture trustee in other company. I always tell you this. Remember, whenever you have appointed a person called as nominee director. Now here they are telling you, right, if a director is disqualified, if you have the same director in your company also, because of common director provision, they are telling you that your company is also disqualified from going for a public issue. Now what they are telling you, the 2 and 4 condition shall not apply in case of person who was appointed as a director. So we are seeing director here. We are seeing director here. Now, how was this director appointed? The director was not appointed by the company. Then who appointed? The debenture trustee appointed. When will a debenture trustee appoint? Remember, in a company, let us imagine there is a company called as XYZ Limited. This particular company has raised debentures. They have issued debentures, they have raised money. Now, whenever a company issues debentures, you will automatically appoint a debenture trustee. That's mandatory. Now what they're telling you, when will a debenture trustee, what will he think? Let us imagine once or twice the company has made a default in repaying the interest on time. Now what will the debenture trustee think? It is debenture trustee's responsibility so that every person gets the money on time. It's the responsibility of debenture trustee. Now what will a debenture trustee do? The debenture trustee will try to appoint someone in the board so that we will get to know the operations, what is happening on a day-to-day basis. We will understand everything. So what will a debenture trustee do? The debenture trustee will call one person. The debenture trustee will appoint one director on the board of the company. Now the company did not appoint him. We appointed him based upon the right we have. Now if such person is there, they're telling you this disqualifications will not affect because he's not reporting to the company. He's reporting to the creditors. So that such directors, if you guys have seen from your company law, we call such directors as people what? Nominee directors. Clear up? That's what they're telling you. Next one, 3 and 4 conditions shall not apply in case of private placement of non-convertible securities. 3 and 4, issuer promoter, willful defaulter, and 4, again willful defaulter. These 2 conditions will not apply if at all the issue is not public, it is a private placement. Yes, sir. Okay, sir. Next one, I think the rest of it we had seen here. Correct, that simple one-liner provisions is what we had seen, if I'm not wrong. Eligible issuers, okay. So here this one-liner provisions all we had seen here, correct? Okay. Sir, in principle approval, the issuer shall make an application to one or more stock exchanges and obtain an in principle approval for listing of its non-convertible securities. However, where the application is made to more than one stock exchange, the issuer shall choose one amongst them as a designated stock exchange. What is that? Remember, whenever you go for a public issue, this is one common step. What is a common step, people? You have to make at least an application to one stock exchange. Then how will you call yourself as a listed company? You should at least list your securities on one stock exchange. That is only we call it as in principle approval. In principle approval means nothing but listing your securities on a recognized stock exchange. At least one you have to file an application. Sir, what if I want to list myself on NSE as well as BSE? They're telling you, you have to make sure at least nominate one amongst 2 stock exchanges as your designated stock exchange. What do you mean by designated stock exchange, people? With regards to tomorrow's compliances, you have to give so many disclosures. So one concerned body should be there. We will not ask both the stock exchanges. We will ask one stock exchange. You only report which stock exchange we have to communicate to, which will be if imagine SEBI has any regulation, SEBI wants to ask some information. You are listed on NSE and BSE. Which one you want me to go and approach, ask information about you? That will be called as what, people? Designated stock exchange. You only nominate, but at least one you have to take in principle approval. Done. Next one, people, of course, going forward, every security has to be in demat form. Simple, done. I told you, whenever you guys are issuing debt securities, appointment of one person becomes mandatory, and that one person only is called as debenture trustee. So the issuer shall appoint a debenture trustee in case of issue of debt securities. Next one, registrar to an issue. What is this, people? The issuer shall appoint a registrar to an issue registered with SEBI, which has established connectivity with all the depositories. What do you mean by that? We have seen in yesterday's chapter also, registrar and share transfer agents. What will be their role? Their role will be to finalize the allotment. If 1 lakh people have applied, imagine if allotment will be given to 10,000 people. Who will finalize that? It will be finalized by the registrar to an issue. A collection of applications money, allotment letters being sent, refund letters being sent, rejection letters being sent. All of this will be the role of registrar to an issue. Now, not only that, imagine if at all redemption has to be done. So, registrar and share transfer agents' role will be that. Now, debenture has to be repaid after 8 years. Whom will we, imagine if it's a physical script, it used to be more relevant back then. If it's a physical script, who will take the security back and repay the money? It used to be the role of registrar and share transfer agents. Getting the point? That's what they've given you. However, if the issuer itself is a registrar to the issue, it shall not appoint itself as a registrar to the issue. What do you mean by that? ICICI Bank is going for an IPO of debt securities. Now, it is a registrar to an issue by its own. It will be a registrar to so many people. Can I be my own registrar? They're telling you, no, not possible. You need to appoint someone else. Provided further that the lead manager shall not act as a registrar to the issue in which it is also handling the post-issue responsibilities. What do you mean with that? You cannot appoint the merchant banker as a registrar to the issue if they are handling the post-issue responsibilities. Nothing but if you have appointed the merchant banker to take care of after the public offer is done, whatever your role will be. If you have appointed merchant banker for that, the same person cannot be a registrar to the issue. Next one, credit rating. We have seen this credit rating concept so many times. What is credit rating? It's nothing but a company will assess the financial viability. Now there will be so many companies. One company is called as ICRA, CRISIL. Now these are all companies. What will they do? They will assess a company. They will look into a company. If the company is doing good or not. Now if they are taking say 1000 crore as loan, can they repay it or not? Can they repay the interest or not? All of this will be weighed and they will give you one rating. It is just like your movie ratings. If you get 4 star out of 5, that's a good movie. If it's a 3.5, not bad. 3, okay. 2, die. If you go, you will die. So same thing here also. They will give you a rating. A plus, triple A. There will be various. It's every company follows their own convention. Yes, so credit rating becomes mandatory. That's what they're telling you. And not only that. Now imagine, sir, few companies are there. They will go and get their credit rating from 3 to 4 companies. They will disclose in the offer document whichever is the best one. Now, don't you think the other 3 are also most competent people only? They are also working under SEBI's license only. So, when they have given you a bad review, for that there would be a reason. Now, what they're telling you, if at all you are getting a credit rating from more than one company, it is your job to, it is your duty to disclose all the credit ratings you have obtained. That's what they have said here. Issuer shall obtain credit rating from at least one credit rating agency, at least one, which shall be disclosed in offer document. However, where the credit ratings are obtained from more than one credit rating, then all the ratings including the unaccepted rating shall be disclosed in the offer document. Clear, Ram? Yes, sir? Okay. Next one, sir. Creation of recovery expense fund. I told you what is recovery expense fund. Here we have nothing in our book. It is just given as the company shall create a recovery expense fund with the stock exchange by depositing such amount in such form as may be specified. What, how, nothing is given. But just for our information also we have seen recovery expense fund means nothing but people, a fund created. Now imagine if at all a debenture is not repaid on time. Then we are going to fight a legal case. Now who will pay for all the legal cases and all? So today only we will tell the company, now whenever you are issuing a debt, do one thing, you are listed on NSE, right? With NSE only, you have to deposit some amount. Now you will treat this amount as people recovery expense fund. So imagine if I am listed with NSE, this company will go and deposit some money. That money we will call it as people recovery expense fund. Now why will we use this money? If at all tomorrow we have to fight any legal case against the company, and imagine if a company loses, We need the other party. See, if you had paid the money on time, why would we had gone to the court and all? That's an extra expense for me. That money will be taken by the deposit the company has made with the stock exchange. That fund is called as recovery expense fund. Got it? Huh? Not important for us. You need not worry. Next ones are electronic issuance. People, now everything will be online. Huh? That is nothing but your demat form only. Sir, next one, sir, regulatory fees, nothing but whatever the listing fees you guys are going to, whenever you're going for a public issue or you're going to list your private placement securities, whatever is the fees you guys are paying will be called as regulatory fees. Next one, right to recall or redeem prior to maturity. What does this see here? Right to recall or redeem prior to maturity. What do you mean by that? We have said that the debentures will be valid for 10 years. Now we want to repay in the 6th year only. Is it possible? For that we have something called as regulation 15. Now what does regulation 15 say? Hello? It says right to recall or redeem prior to maturity. A company making issuance of non-convertible securities shall prior to the maturity. Meaning what? It's a non-convertible. Of course, that is why this chapter is applicable. Sir, if the maturity date is 10 years, I'm calling the securities back within 10 years. It can be in the 5th year, it can be in the 6th year, as the case may be. Okay. They're telling you a issuer, meaning company, making issuance of non-convertible securities shall prior to the maturity, he has a right to recall, that is called as call option, or has a right to redeem such right, all the investors or retail investors, it's called as put option. Basically what people, before the date of maturity itself, I can ask you guys to, it's similar to buyback but not buyback. Correct? Huh? Yes, sir. So, sir, you have a right to recall. I will say, come, repay. You take, give me back your securities. I will repay you the money. You go it. You mean you take it and you can leave it. Sir, that right we can redeem it from all the investors or only from retail investors, as the case may be. All means people, I will give it on a proportionate basis. Imagine QIBs might have also invested. Institutions might have invested. HNIs might have invested. Even retail people might have invested. I will give an option for everyone to come and give it to me. Or I can give an option only to the retail sector also. Both is possible. Okay. Now how, sir? It shall be exercised in accordance with the terms of issue, and detailed disclosure should be made in offer document, including period of exercise, that is maximum 3 working days, and redemption amount including premium or discount. What is that, sir? An offer period of maximum 3 days will be kept. All of this will be disclosed in the offer document. And what is the redemption amount? Meaning, am I paying at par, discount, premium, consideration? I need to pay it back, right? What is and all, you'll be disclosing it in the offer document. This right can be exercised with all the non-convertible securities or part of it. If I have issued 1 lakh, I can exercise it on 50,000 also. I can exercise it on the 1 lakh also. In case of partial, it shall be done on a proportionate basis. What do you know that? Now imagine I do not want to recall or redeem the entire debentures. I want to redeem only 10,000 debentures. Can I redeem it only from 1 person or 2 person? They're telling you you have to do it on a proportionate basis. Proportionate means people. Now for example, your total is 1 lakh securities. You want to redeem is 10,000. So you will come up with a proportion, meaning ratio 10:1. So if you have 10, you have a right to redeem 1 share. Like that also you can do. That's what they're telling you. Okay, note, it cannot be done before expiry of 1 year from the date of issue. That is what, sir? At least there has to be a period cool off that today only we have issued. Within 1 year only you cannot call it back. Buyback is not possible. Procedure, people, the company will issue a notice to the non-convertible securities holder, to the debenture trustee, to the stock exchange, and we are also going to advertise in English as well as regional newspaper about the proposed redemption or recalling option. So we are going to give it to all of these people when, sir? 21 days before the date of expiry. So at least 21 days prior we are going to give you the notice. Now, sir, post completion, after everything is done, sir, we will submit a report to the stock exchange. How many securities we totally redeemed? Inform debenture trustee, this many is redeemed, and inform depository for extinguishment. Meaning, in the depository model, we have listed totally 1 lakh securities. Today we have redeemed 10,000 out of it. So now going forward 90,000 will continue. We will intimate it to the depository. This clear? Hello? Okay. Next one, sir. What else? DRR, CRR. What is that, sir? Same people, they're telling you DRR. End of the day, debt note, If it's a debt, what will you do? The debenture end of the day. If you remember in your Companies Act, sir, if it is a debenture people, there is something called as debenture redemption reserve. There is something called as a DRR. The same things will apply here also. That is what telling you. I will not again prescribe whatever is prescribed in Companies Act will as it is apply. So let's not bother because that is what they have said. Next one is called as people ISIN. ಏನು sir ಇದು ISIS? International Securities Identification Number. It's nothing but whichever securities are listed on a stock exchange today, they all carry one unique number. It's an internationally accepted number, and that is only called as what people ISIN. It's a number allotted for each security that is listed on a stock exchange. So telling you, if at all you are listing your non-convertible securities, that will also be having one ISIN number. That is International Securities Identification Number. Who will specify it? SEBI only will specify it. Next one, sir, it's called as trust deed. What is trust deed, people? Of course, you guys are appointing someone called as debenture trustee. You're appointing, Noda. Sir, whenever we are appointing a debenture trustee, who will appoint debenture trustee? Company will appoint a debenture trustee. Why? To take care of the interest of the various debenture holders. See, if you are an equity shareholder, you can directly question the company because you have a right to attend the meetings. But the debenture holders does not have that. So to represent their rights, we have someone called as debenture trustee. Who will pay the remuneration of debenture trustee? Debenture holders or the company? Who will appoint? Debenture holders, who will appoint? Company will appoint. Who will pay the remuneration to the debenture trustee? Company only will pay, not debenture holders. Remember, sir, it's always the responsibility of the company to pay because it is your responsibility. It is your duty because I do not know what happens in your company. So you have to pay. Who will be debenture trustees? Generally banks. They are all registered as debenture trustees with SEBI. So you will be registered as a debenture trustee. They will be appointed as a person here. Now, sir, what is the role of debenture trustee? How do you know? We have to know what he can do, what he should do, his rights, obligations, responsibilities, all of that. Where is it written? It is all written in one document. The document is called as debenture trust deed. Now, Likit will say, sir, I will take my own conditions and I will put it in debenture trust deed. Is it okay, na? I will put my own conditions. Is that okay? So people, every company will take those conditions which is more favorable to them. So Companies Act said nothing doing the macha. I will tell you what is the minimum conditions that should be there in your debenture trust deed. Those conditions should be there. What are the minimum conditions? Sir, to avoid all the confusion, I will tell you one format. You take that format. That is what is the trust deed. Over and above, if you want to insert, I don't have a problem. But whatever is there in the format, that conditions should be there. Sir, what is that format called? That format is called SH12. If you guys are from company law background, you guys would have remembered something called as SH12. Correct? Hello? SH12 is nothing but format. It's a format. Yes, sir? Okay. Now, sir, what if a company does not enter into debenture trust deed? You have to. What if you do not enter? If you do not enter, people, then remember a company will be liable to pay an interest at the rate of 2% per annum. Whom will we pay? You will pay it to the debenture holders only. Sir, is it if I pay this, I need not pay them interest? It is over and above their interest. They will get 2% if you fail to enter into a debenture trust deed. Clear? Okay. Such trust deed shall consist two parts. The trust deed will be classified into two parts. Part A, Part B. Part A contains statutory or standard information. Meaning, standard is what? That is, as per Companies Act, there will be so many rules. When should you conduct a meeting? What is your role? What is my responsibility? That is standard. So next one is Part B containing details specific to the particular debt issue, meaning whatever is our issue, how much is the rate of interest, what are the total debenture holders, what will be the interest to be paid, what is the redemption time, all that with regards to the particular issue. So always remember, part A will be same for every company. Part B will keep changing because it depends upon the each issue. The trust deed shall not contain any clause which has the effect of. According to me, important question. Remember, what is that, sir? They're telling you people in the trust deed, you cannot have these clauses. What are the clauses, sir? The first one, limiting or extinguishing the obligations and liabilities of the debenture trustee or the company in relation to any rights or interests of the holders of the debt securities. What do you mean by that, sir? For example, people, imagine in the trust deed, it is clearly written, tomorrow if your money is not paid, or imagine you guys have issued something called as secured debentures. What do you mean by secured debentures? I'm telling you there is a collateral. I'm telling you secured, but if I go and see there is no security at all. You have not created, you have not kept aside anything. Now it was my responsibility as a debenture trustee to check all of this. Now in the debenture trust deed, I have entered one point. What? Due to my negligence, if I miss to see or monitor any of the non-compliances done by the company, you cannot hold me liable. I've written this in the trust deed and everyone signed it also. Tomorrow you tell me, can I hold the debenture trustee liable for its negligence or not? I have to hold it or not? No? Exactly what I'm saying. Any such points in the debenture trust deed will be considered as void. You cannot have. Sir, what if we had? Even if you had, we will consider it as void, meaning invalid. You cannot have such. Because don't you think it's logic? Just because you are given option to add whatever conditions you want, you will add whatever you want, which is unfair also. Same thing they're telling you. Limiting or restricting or waiving the provisions of the act, meaning I'll clearly write in the trust deed, Companies Act will not apply to me. No, it will still apply. Even if it is there in the trust deed, it will apply. Important from exam point of view, remember and go. Yes, sir. Next one, indemnifying the debenture trustee or the issuer for loss or damage caused by their act of negligence or commission or omission. What is that? Forget about in the first 2 points, at least they're telling you, you cannot hold me liable. In the third point, they're telling you, if I suffer any loss, imagine some court issue happens. I will have to fight my case. For that money, you guys have to pay me. I've written that in the trust deed. Indemnifying means what? If I suffer any loss, monetary loss, that money you should give me. If we are having any such condition, they're telling you such condition will be considered as void. Kira? Hello? The trust deed shall contain the issuer's bank details, company's details, from which it proposes to pay the interest and redemption amount of the debt securities, and the issuer shall pre-authorize the debenture trustee at the time of executing the trustee to allow the debenture trustee to seek information about the interest payment and redemption payment from such bank. What is it, sir? Sir, the company has opened one bank account to keep this debenture amount and all. From that only we are repaying. From that bank account only we will be paying interest. The company people should go and authorize. Meaning, let us imagine the company has opened a bank account in ICICI. That's where we are keeping this debenture amount. That is where we are paying the interest from. Now, what they're telling you people is, you go to the bank account. You have to take debenture trustee with you. You have to clearly tell, hey bank, tomorrow if I come also, you have to show all the details. Tomorrow if this person, see this person, who is this person, debenture trustee. If this person is also coming, you have to give all the details. So you have to pre-authorize the debenture trustee to have access to all this information from which bank the money is paid. Understood? So next one, listing agreement, nothing but it is entered with a stock exchange where your securities are going to be listed. Continuous listing conditions, nothing but you need to comply with those conditions. Now you are going to be listed for 10 years. So for this 10 years, whatever the conditions are, whatever SEBI says, people, you need to follow those conditions. Clear? Okay, next one, trading of non-convertible securities. Meaning what, sir? Can we sell and buy the non-convertible securities? Answer is yes. Similar to your equity shares only. The moment it is listed, then what is the use of getting listed? I can sell, I can buy. Then how will the settlement and all happens? Same like equity only. There is something called clearing corporations. They will settle it. Same way. However, your equities are getting settled, same way it will get settled also. See, the trades in non-convertible securities listed on stock exchange shall be cleared and settled through clearing corporation of stock exchange subject to conditions specified by SEBI. Correct? In case of trades of non-convertible securities which have been traded over the counter, such a trade shall be reported on any one of the reporting platform of a recognized stock exchange having nationwide trading terminal. The SEBI may specify conditions for reporting of trades recognized stock exchange as may be prescribed. What is that, sir? What do you mean by traded over the counter? Meaning, people, there can be two types of sale. One is called, if you guys remember, there is something called as block deal sale. What is block deal? See, if it's a normal sale, I will meet the buyer or a seller on the stock exchange only. I don't know who is buying my share. Randomly, I am selling it. So it is done through clearing corporation. What do you mean by traded over the counter? It's nothing but you guys are dealing on the securities as per an agreement. Privately, outside you guys are entering into an agreement. I have around 1 lakh securities. Do you want to buy? The other person says yes. Remember, all these trades take place on a block window. That is only called as block deal mechanism. We have a trading window, no? What are the timings?
Morning 15 minutes gap ಇರುತ್ತೆ. Afternoon 2:30 to
8:45 to
2:1 to 2:15.
2:05 to 2:20.
2:05 to 2:20.
Yes, sir. That's what they're telling you. Distribution of dividends in case of default, where the issuer has defaulted in payment of interest or redemption of debt securities, then any distribution of dividends shall require prior approval of debenture trustee. If a company has not paid principal and interest only, and there you want to distribute dividends, you cannot do it without asking debenture trustee's approval. Of course, he is not going to give you. Okay, next one, obligations of the issuer, meaning when all this is happening, issuer here is company. What will be your roles and responsibilities? What will it be, people? First one, whatever that offer details you are giving, give it true, fair. It should not be vague. It should not be any hidden or false information. Imagine if at all you are issuing a secured debenture, make sure the entire property is secured, 100% secured, which always covers your principal as well as interest at the all given point of time. Appoint debenture trustees wherever required. Now, because you are a listed company, always make sure you are also registered on Scores platform. So, if anyone has a problem, they will reach out to you on Scores mechanism. So, same things will come. Correct? Hello? The issuer shall treat all applicants to an issue in a fair and equitable manner. There is no differentiation. The issuer shall not employ any device, scheme or artifice to defraud in connection with the issue or subscription. What do you mean by that? Do not come up with any fake offers, fraudulent offers. For example, Sahara's case will come here only, right? A person has done a fraud offer. Next one, Scores authentication. So make sure you are present on Scores platform. Next one, in case of public issue, we know we are going to appoint someone. Who is that? Lead managers. Yes, documents will be all prepared by them, submitted by them. Next one, whenever you are issuing secured debt instruments, then 100% it has to be secured. Make sure that doesn't go below that. Always remember, whenever you are issuing secured debt instruments, the security should always cover your interest component also, principal component also. Correct? Next one, what is this? Regulation 23 pertaining to obligation of the issuer has been inserted, which provides that issuer shall fix a record date. People, this is an amendment. What does it say? Pertaining to obligations of issuer, a new regulation has been inserted, it seems. What does it say? The issuer, that is a company, shall fix a record date. What do you mean by record date? It is there in your chapter 2. Record date means, people, the day that will decide which security holder is entitled to payment of interest, payment of any other money, any rights, which security holder is entitled to. To understand that, we will fix one date. On that day, whoever is our security holders, they will enjoy all the rights. And we call such date as record date. If you remember chapter 2, how many days we can close the books? So we saw record date. To find out the record date, we will close all the books and we will start taking the details of all the security holders. In a year, you can maximum close all your books for 45 days. At once, you cannot close it for more than 30 days. And remember, before you close, you need to give 7 days notice, prior notice. Correct? Yes? Okay. For the purpose of payment of interest, dividend and payment of redemption. See, for the purpose of payment of dividends, preference shares is there, no, non-convertible. You will pay dividend for them. Interest is for non-convertible security, basically debentures. Next one is repayment amounts. So for this, we need to know who is entitled. So that is what they are telling you. For example, we saw, right, what is that? Right to redeem or recall before maturity. Who will get the right? How will I know? So for that only they are telling you, decide one date. And regarding that date, they are telling you an amendment. Amount for such other purpose as specified by SEBI. Such record date shall be fixed at 15 days prior to the due date of payment. Meaning what, sir? Imagine people, if at all Jan 15th is my payment date. I'm going to pay the interest on Jan 15th. I'm going to repay the money on Jan 15th. Your record date should be fixed at least 15 days prior to the payment date. I'm just taking an example as Jan 1st. Just taking an example because they have not mentioned it as a working day, nothing. Always it is a good practice. Exclude 15th and exclude 1st. In between, make sure there is 15 days. Of course, it is not given like that. Always a good practice. Clear? Interest of dividend, repayment of principal or any other corporate actions. 15 days prior should be your redemption, your record date. That's your amendment, people. Okay, next one, people. Online now. Obligation of debenture trustee. The debenture trustee shall be vested with the requisite powers for protecting the interest of holders of debt securities, including a right to appoint a nominee director on the board. Understood? What is nominee director? We explained today earlier. Any financial institution. So here also they are creditors only, no? Yes or no? Okay. The debenture trustee shall supervise the implementation, creation of security. If at all your property is going down, it is your responsibility. Creation of recovery expense fund. With whom will you maintain this recovery expense fund? With stock exchange and DRR. Debt only, no? As per Companies Act, we saw this, no? The debenture trustee shall monitor the security cover in relation to the security, as the SEBI, meaning at all the point of time, is my total debt is covered. Have you created a security for it? Remember, important from exam point of view. They can ask this. Clear? All of you? Possible. Better to stick because at times what happens is they expect that also. If this is what is written and if you are writing more also, that will also be problem. Correct? No? Okay, public issue and listing of debt securities and non-convertible redeemable preference shares. How do we do it? Okay, the simple ones. Condition for public issue, the first step will always be one thing, same thing what? You are going to appoint a merchant banker. We also call him as a lead manager. Whenever there is more than one lead manager, always make sure the rights, obligations, responsibilities is clearly demarcated. Yesterday also we saw. It should be distinguished. Okay. Where there is only one lead manager, that person should not be an associate of the issuer. Correct? Sir, what if he is an associate? Lead manager should not be an associate of the company. What if this person is an associate? Remember, in such case, you need to have more than one lead manager. And what will be this lead manager's role? This lead manager, who is an associate of the company, cannot do any other activity other than marketing the issue. Only that you can do because you are related to the company. Correct? Next one, sir. Shall not be an associate. Correct? At least one lead manager should not be related to the company. Next one, sir. The issuer shall not make a public issue for providing loan or acquisition of shares of any who is part of the promoter group or group companies. However, where the issuer is a NBFC, housing finance company or public financial institution, the aforesaid restriction shall not apply and appropriate disclosure shall be made. Now, what is it, sir? a company is raising loan. Now, when I asked why are you raising loan, people, they are taking loan because people, they want to give it to some other company in their group companies, in their promoter groups. Meaning what, sir? Let us imagine there is the group company. Say for example, in case of Reliance, there is Reliance Geo, there is Reliance Trends, Agio. There are so many things. One company is taking debentures. It is borrowing loan. Why? To give it to the other company. They're telling you you cannot do such activity. If you are taking money, you cannot use that money to provide loan to any other company belonging to the same promoter group. That is not allowed. However, this restriction shall not apply if you are a NBFC company, if you are a housing finance company, or if you are a public financial institution. Clear? Meaning they can take it, they can further give it. It is allowed. Huh. Next one, issuance of green debt securities. An issuer desirous of issuing and listing of green debt securities shall comply with the conditions as may be specified by SEBI. First of all, what do you mean by green debt securities? It is nothing but debt security only, people. Meaning there will be loan, there will be interest. That is common. There is nothing else will be the difference between normal debt and this. Just that for what can you use this money for? It will be for people green related projects. What is green? Sustainable, solar, or your what is it? Anything with regards to the green projects. That is what they say. Energy efficiency. For example, solar panels. You create a sustainable product. For towards that, if you are raising money, you can issue something called as green debt securities. Correct? Renewable energies, as the case may be.
Sir, ಇದು social sustainability criteria ಇದೆಯಲ್ಲ, same include ಆಗ್ತಾ like improving flora or fauna or
That is one point. Apart from that, social stock exchange is more into eradication of hunger, poverty, malnutrition, employment generation. Now that is not considered as green. Here it will be use of solar, windmills, sustainable energy, EV vehicles. That will be in this green. Your IPL, for every dot ball, one tree will be planted. ಅದೇನೋ ಇದೆಯಲ್ಲ. Same thing. Okay. In this also there are three types of bonds. Can you see this? Something called as blue bond, yellow bond, transition bond. Is it? Yes, this has been added. Yes, they are these things have been added. What is this blue bond, yellow bond, transition bond? Blue bond means people something which is related to water. Water recycling, imagine ocean. Nowadays that is becoming a big thing, no? Converting ocean water into drinkable water. Of course, the cost is not working out. If not, that is a big project people are doing. Water recycling. Now that projects. Now they want money, no? They can raise it by issuing something called blue bond. Yellow bond means everything with regards to solar. Solar is always called as yellow bond. What do you mean by transition bond? Transition bond means people nothing but till today I am doing something else. But today I want to become. For example, till today I was using electricity for all my company's generation of working. Everything I'm using electricity. Now I want to use renewable. Imagine I want to use solar. Till today I was not using. Going forward, I want to do. Now that is when transition bond will come. Transition bond is for a company who is already existing but not following green projects. Now they want to do it. They will raise money by issuing transition bond. Understood? Huh? Again, that is a recent one added. Remember. Next one, sir. AC is okay, na? Okay. Next one, sir. Filing of draft offer document. Here there was an amendment, if you remember, for your 25 attempt. Issuer shall not make a public issue of debt securities and non-convertible preference shares unless a draft offer document has been filed with all stock exchanges. So before issuing draft offer document, you have to first file people an application to draft offer document. First you have to give it to stock exchanges before giving it to the public. The draft offer documents filed with stock exchanges shall be made public by posting the same on the website. Now imagine if you have filed it with NSE, let us imagine a company called as Reliance. Reliance has filed a draft offer document with NSE. NSE will further post it on its websites for the public comments. Public can respond. If they think some points are not right, Public will respond for it. So within how many days, sir? For public comments, sir, for a period of 5 days. In your books, if you guys are referring to the old book, it will be 7 working days. Now that has been made 5 working days. This is an amendment. From the date of filing the draft of a document with stock exchanges. So from the day I file, it will be open for 5 working days for the public to give their comments on it. Okay, next one, sir. What is that? However, issuers whose specified securities are listed on recognized stock exchange having nationwide trading terminal shall post the draft of a document filed with stock exchange for 1 day immediately after the date of filing the draft of a document with stock exchange. With stock exchange for 1 day immediately after the date. What is this, sir? Issuer whose specified securities are listed on a recognized stock exchange, whose specified securities are listed on a recognized stock exchange having nationwide trading terminal shall post the draft of a document filed with the stock exchange for 1 day immediately after the date of filing the draft of a document with stock exchange. What is that, sir? A company which is going to come for listing will keep it open for 5 days. If a company which is already listed its specified securities with the stock exchange having nationwide trading terminal, I'm already listed. I'm coming up with new securities. Such companies will not keep it open for 5 days. They will keep it open for 1 day. The draft offer document shall also be displayed on the website of the company as well as merchant banker. So on which all websites? So on stock exchange website, or merchant banker website, or company's website. The lead manager shall ensure that the draft offer document clearly specifies the name and contact details of who? You only. Compliance officer who shall be a company secretary of the issuer. Why? For grievance redressal. If you guys have any problem, whom will you reach out? That's why your contact details will be mentioned in the draft offer document. The lead manager shall ensure that all comments received in the draft offer documents are suitably addressed. And finally, you will file the offer document with ROC. But before you file it, you need to address all the comments you have received. The lead manager shall, prior to the filing of offer document with ROC, it will give it to SEBI a due diligence certificate in the format as specified in the regulation. Due diligence certificate means I will check if there is any other problem that I will address, and finally we will file a draft offer document with ROC. Then more advertisement. Okay, this is an amendment. Correct? This part is an amendment. Now what is that? See here. Disclosures in offer document. What and all we need to disclose? The offer document shall contain all material, true, fair and adequate disclosures, okay, which are necessary for the subscribers of the debt securities and non-convertible redeemable preference shares to take an informed investment decision, and shall not omit or include any material fact which make the statements in light of the circumstances in which they are made misleading or untrue. I should not include anything like that, okay. Mode of disclosure. The document shall be displayed on the website of the stock exchange, company as well as the merchant banker, which shall be available for download in PDF or any other format as may be specified by SEBI. Okay, we'll be displaying it on all the websites. The company shall file the offer document with stock exchange simultaneously while filing thereof with the ROC for dissemination on their respective websites prior to the opening of the issue. So company will give the offer document with ROC. Simultaneously, I have to give the offer document with my stock exchange as well, which will be posted on the public for their information. Now this is important. This is where the amendment has happened. Advertisement for public issue. The company shall make an advertisement through electronic mode such as online newspaper or website of the company or the stock exchange, or in an English and regional language newspapers where the register of the company is situated on or before the issue opening date, and such advertisement shall amongst other things contain the disclosures as may be specified in schedule 5. Meaning what, people? They're telling you I have to advertise about the public issue, that I'm coming for this particular public offer. Where and all I will advertise? They're telling you can advertise it in online newspapers. Possible, huh? That is, your InShot will come, or some other Hindu Times will come, your Times of India, everything is online, that is also coming. You can advertise there, or you can advertise on the stock exchange, or you can advertise in the newspapers. So it is left to you. Sir, now what is the amendment, sir? provided that issuers opting to advertise a public issue through electronic modes shall publish a notice in English and regional newspaper. Meaning, if you are doing it in electronic mode, you have to do it even through physical mode also. In a physical newspaper also you have to do, with wide circulation at the place where the register of the company is situated, exhibiting a QR code and link to the complete advertisement. This is a new amendment. That is what I told you. What is that? Going forward, you need not have to disclose everything in the physical paper. You just give a QR code or a link for the people to redirect from where they can get the complete information. You need not give everything in the newspaper. Why, people? There is nothing but to save cost, or else it is an expensive affair. Correct? No. If I have to advertise everything in a public about in a public newspaper, people, about the entire public offer, the cost will come to at least around say today's date some 4 to 5 lakhs. I'm saying easily if it's a one newspaper. And that too, if you want to do it in color row, very big size, if font has to be visible and all, means that's all, you're gone. Correct? That's why they have it. So today you can just give a QR code or a link, more than sufficient. If you're doing it in electronic form, then you have to give it in physical form. In physical form, they're telling you, you can just give a QR code, that is sufficient. But if you're doing it in electronic form, physical form is mandatory. Sir, prohibition on payment of incentives, people, this and all is not possible. Incentives means what? Commissions and all, not possible. Abridged prospectus, what do you mean abridged prospectus, people? Summary form. Who will read 400 pages of prospectus, people? Offer document, you have to give something called as a summary form. The summary form of prospectus is called as, people, abridged prospectus. Next one, people, is called price discovery and book building. What is price discovery and book building? So simple, people, same thing. If you want, you can issue your securities at a fixed price. If you know, then that will be called as fixed price issue. Sir, I don't know at what price I need to sell my securities at. Then you can go for a book building issue. Anything is possible. Book building, red herring prospectus, price band. Correct? Okay, next one. Minimum subscription for a public issue shall not be less than 75% of the base issue size. As may be specified by SEBI. In the event of non-receipt of minimum subscription, whatever is the money, people, you need to unblock it not later than 8 working days. Minimum subscription in the case of ICDR you would have seen as 90%. Here they are telling you 75% or any other percentage as specified by SEBI. Today what we follow is 75% only. Next one, allotment and securities should be made within such timeline as may be specified. You need to unblock the money within such time. If you fail to unblock the money, you need to pay interest at the rate of 15% per annum. Underwriting, people, it is optional, it is your choice. What is underwriting? If at all that minimum subscription is not received, someone else is going to come and take the securities on your behalf. Period of subscription, again amendment is here. A public issue of debt securities or non-convertible securities shall be kept open. Nothing but, people, offer period. Earlier, people, it was minimum 3 days, maximum was 10 working days. Today the minimum 3 has been made 2 working days. That's the amendment. So the offer period is minimum 2 days, people, maximum is, people, 10 working days. So remember, this is the amendment. Clear? Okay. What is this? Now, for example, I have kept it 2 working days and 10 is the maximum time. Now, imagine I have chosen my offer period as 3 working days. I have said it in my offer document that the offer document is 3 days. Can I revise this to 5 days or can I revise this to 6 days? Is it possible?
Maximum 10 days of
Initially I said 3 days. I have given in my offer document also 3 days. Can I revise it to 6 days? It's possible.
maximum 10 days
But first you have said 3 days, no then? Is revision possible? Yes, people, possible. When is it possible? In 2 scenarios it is possible. The first scenario is if at all you are revising your price band. Imagine if you have done book building issue. You have given your price band as 72 to 76. No one came and purchased. Now you are revising it to 70 to 75. So that if it is 70, people may come and purchase. You have revised the price band then they're telling you can increase your offer period provided it shall not go beyond 10 days. Second place where it will again come, where you can revise is force majeure. What is force majeure? Force majeure is nothing but people, if at all some unexpected event happens, like act of God. Imagine some natural calamities. Now, for example, this war, the war scenarios. So, because of that, the entire functioning did not happen. People did not care. In such case, you are free to revise it. That is possible, provided in both the scenarios, overall time period cannot go beyond 10 days. Remember that. Obligations of lead manager, same thing. You should not defraud. Correct? Security cover. Ensure that what is that? Shall ensure payment of additional interest by the issuer in case of non-allotment of debt securities and non-convertible redeeming preferences. Meaning, sir, if I do not make the payments on time, or if I do not make the allotment, or if I do not unblock the money on time, I will give a additional rate of interest. Next one, again, this is an amendment. Due diligence by debenture trustee. The debenture trustee, at the time of filing a draft of a document with stock exchanges, prior to the opening of a public issue, furnish to SEBI and stock exchange a due diligence certificate. What is a due diligence certificate, people? A certificate which is basically, which conducts the complete research about the company, and it will say whether there is any defects in the company or not. So you will give something called as a due diligence certificate. Who is giving it? Debenture trustee is giving it. They're telling you the debenture trustee, at the time of filing the draft of a document with stock exchange and prior to the opening of the public issue of debt securities, you have to give it to the board, SEBI, and to the stock exchange a due diligence certificate, it seems. Who? Debenture trustee will give. Sir, now what is the format of debenture trustee? If it is a secured debt security, secured debentures, the format will be Part A of Schedule 4 of these regulations. If it is unsecured, means people, it will be Part A of Schedule 4A. That's the format. Alala, illu baruttala. Yes, sir. Sir, the debenture trustee, same thing. In the case of secured debt securities, in the format as specified by Part B, here Part B. Correct? Remember this. Yes, sir. So here, what is this? What is this? What is up? What is down? This is a draft of a document which you are filing with the stock exchange prior to the opening of the public offer. What about this? The debenture trust at the time of filing of the listing application to the board and to the stock exchange. That's the difference. Understanding? The format will be Part B. Now, this is the amendment. Should we remember? Because it's an amendment, no and go. What is the format in which a due diligence certificate will be given? This is the format. If it is a draft of a document that is filed or listing application that is filed, draft of a document, due diligence certificate. Secured will be Part A, Schedule 4. Unsecured will be Part A, 4A. If it is a listing application, means people, secured is Part B, 4. Part B, 4A. Remember that, that is an amendment. Okay, next one, sir. Private placement, there is nothing here, everything will be as may be specified only. There is nothing that has been prescribed. Exam point of view, I would say okay, okay. So if the last day, then you can take it as a consideration, it's okay. But don't skip as such, always remember, read and go. General condition and what is that? Issuance and listing of, see, perpetual debt I told you. Perpetual means people forever, without a maturity. It has to be done, people, as per RBI guidelines. That is important. That's the only word also. Nothing else is important. Clear? Okay. Issuance and listing of non-convertible securities issued on a private placement basis. What is this, sir? People, nothing but issuance and listing of non-convertible securities issued on a private placement basis. Meaning, I'm doing a private placement, but I'm going to list those securities. This is similar to people, if you guys have seen in your company law something called as shelf prospectus. You had, correct? Same thing, people. That is only we call here as filing of general information document. Here general information document is nothing but shelf prospectus. Key information document is nothing but information memorandum. If you guys remember, for non-company law students, what is that? Imagine if at all I want to raise money, I have to give an offer document every time I want to raise money. Yeah. Now you see how much of money is involved. I need to pay so many people, like lead managers. There are so many people. So to avoid that, what they're telling you, you can give one time offer document, only one time. Now once you give this offer document, that will be valid for a period of 1 year. So the first time you're giving that offer document, no, that first offer document is called as general information document. Correct? Sir, and after that, now you are saying that this offer document will be valid for a period of 1 year. In this 1 year, you can do any number of issues as you want. You do 2, you do 4, you need 5, you do, it is your choice. But every time you are going to do an offer, you need to tell, is there any changes that has taken place in the company compared to your first offer to today? Because you have given the offer document long back. Has there been any changes? If there is changes, that changes alone, you have to intimate in one document. That document is called as key information document. Understood, all of you? Same thing you guys would have seen in company law, a shelf prospectus and information, key information memorandum, information memorandum. Correct? From here, correct, no? Listing of commercial paper, amendments only. Again, all these are amendments only. Correct? Issuers desirous of listing commercial papers shall comply with SEBI rules. Nothing is given. The designated stock exchange collect regulatory fees. How much? As may be specified by SEBI. The issuer shall apply for score authentication. So commercial papers and all, nothing is given literally. So you can leave it from exam point of view. The last one, sir, again amendment. Correct? Listing of subsequent issuance of non-convertible debt securities. Now what is that, sir? Now whenever we have issued non-convertible securities, should we mandatorily list them or is it an option to list them? So they're telling you people there is one date. After that date, it is mandatory for you to list all the public offers you are going to make. You need to mandatorily list them. Before that, it was optional. That is what they have given you one timeline. What is a timeline? See here. A listed entity whose non-convertible debt securities are listed. So if a listed entity whose non-convertible securities are listed, now they shall list all the non-convertible securities proposed to be issued on or after Jan 1st, 2024 on a recognized stock exchange. What do you mean by that, people? Imagine in the past I have issued non-convertible securities. Now are those securities listed on a stock exchange? If they are already listed, now going forward, if I am coming up with any new issue, that should be mandatorily listed. From when? On or after Jan 1st, 2024. Before that, optional. After that, mandatory. This is applicable for which company? The companies which has already listed its non-convertible securities on stock exchange. Okay, next one. A listed entity whose subsequent issues of unlisted non-convertible debt securities made on or before December 31st, then people, it is may list such securities on stock exchange. What do you mean by that? If at all it is issued before, on or before December 31st, 2023, it is optional. You do not have an obligation to list them. It is on or after January 1st, mandatory. Before, optional to list those securities on stock exchange. Next one. A listed entity that proposed to list the non-convertible debt securities on the stock exchange on or after Jan 1st, 2024 shall list all outstanding unlisted non-convertible debt securities previously issued on or after Jan 1st, 2024 on stock exchange within 3 months from the date of listing of the non-convertible debt securities proposed to be listed. What do you mean by that, sir? Imagine people on Jan 2nd have done a private placement of non-convertible securities. If it's a public offer, I have to mandatorily list. What if it's a private placement? I had a choice, so I did not list them. Now let us imagine, sir, in the month of April, I'm issuing. Let us imagine, sir, on 1st April 2024, I'm coming up with a further. I'm again issuing non-convertible securities. This time I'm doing a public issue. The moment it is a public issue, I have to mandatorily list. Agreed. Now what they're telling you, if at all after 1st Jan 2024, if you are coming across any listing on for which the listing becomes mandatory, public issue listing is mandatory, yeah, then they're telling whatever are the other issues this company has done on or after 1st Jan 2024, which is not listed, that should also be listed. So whatever you have done private placement on Jan 2nd 2024, even this also should be mandatory listed going forward. Got it, huh? Hello? Okay. However, this will not apply to some things. It seems a listed entity shall not be required to list the following securities. Which securities? Bonds issued under Section 54 EC of Income Tax Act. What is this Section 54 of Income Tax Act? Nothing but your exemptions from capital gains. If at all I have sold a land, if that land should not be taxed, I can invest that money in some securities. So if at all a company has issued those bonds, then that bonds need not be listed. Second one, non-convertible debt securities issued pursuant to an agreement entered into between listed entity of such securities and multilateral institutions. Nothing but people, if I have issued any securities to World Bank, International Monetary Funds, such securities, I need not have to list them, it seems. Next one, non-convertible debt securities issued pursuant to an order of any court or tribunal or financial sector regulator. Why did I issue these securities? After an approval from a court or a tribunal or SEBI or IRDA or TRI approval. After that only I issued these securities. Then they are telling you I need not have to list those securities. Clear? The securities issued by the listed entity under the clause 2 and 3. What is the clause 2 and 3? The clause 2 and 3 is, one is World Bank, next one is court approval. Provided it shall be always locked in and held till maturity by the investors, and it shall be unencumbered. Meaning we have given it to the World Bank. World Bank only should hold it. They should not further transfer it to anyone, and on those securities they should not even take any loan also. It should always stay unencumbered. Okay, a listed entity proposing to issue securities under sub-regulation 4 shall disclose to the stock exchange on which it is non-convertible securities are listed. Meaning, if at all a company is issuing these securities, I need not list them, but at least I need to give an intimation to the stock exchange that my company issued these securities. Remember that, important. Okay, sir. The last one, sir. Voluntary delisting of non-convertible securities. What is the process, sir? So, if at all a company wants to delist its non-convertible debt or non-convertible preference share from all or any of the stock exchange, then these regulations will apply. How, sir? The first one, people, you need to take in principle approval. From whom should we take in principle approval? You will take it from the stock exchange. Sir, where is that? Application. How, sir? You need to file an application to the relevant stock exchange. Within how many days should I file an application, sir? You will file it within 15 working days. So the 15 working days is from when? From the day you decided. That is from the day you guys have passed the resolution. Sir, which resolution, sir? Imagine if you have passed a board resolution from the date of board resolution. Sir, imagine if I am an insurance company. If I have to delist my securities, I need to ask my regulator also. Who is your regulator? IRDA. So they're telling you from the day you passed the board resolution for delisting, or from the day IRDA gave you an approval, 15 days will be counted from the day whichever is later. So if IRDA gave you the approval later, then it will be counted from that day. Within 15 days, you have to apply to the stock exchange for in principle approval for delisting. The stock exchange has 15 working days to decide it. You have given an application, they have to decide it within 15 working days whether to accept or not. Notice of delisting. The notice of delisting, people. Remember, we have to give this notice of delisting. We are going to delist, no? We have to intimate this to 3 people. Important. Who are those 3 people? The first people, it is to stock exchange. Sir, I want to delist. Can I get your approval? That only will call it as in principle approval. The next one, people, you will give it an option to the holders only. Correct or no? The non-convertible security holders. Now I need to take their approval also. The third one, people, of course we have someone called as debenture trustee. Remember, people, in this 3 people, even if one person does not give you an approval, then your delisting cannot happen. So you need to take the approval from the stock exchange also. You need to take the approval from the holders also. You need to take the approval from debenture trustee also. If you take all the 3 approvals, only then your delisting will be successful. If not, your delisting will not be successful. Correct? In case of failure, people, you need to intimate to the stock exchange within 1 working day from the date of failure. Meaning, who did not give? Imagine debenture holders did not give. My delisting comes to an end. I need to inform to the stock exchange. I cannot go ahead. My delisting is unsuccessful. Next one, sir. Final application to the stock exchange within 5 working days from the date of obtaining the requisite approval from the holders of non-convertible securities. The listed entity shall make a final application. Sir, we got all the approvals. Within 5 working days, I will make a final application to the stock exchange. Everything is completed.
ಈ 5 ವರ್ಕಿಂಗ್ ಡೇಸ್ 15 ಡೇಸ್ ಕೊಡುತ್ತಾ
ಯಾವ್ದ್ರಲ್ಲಿ
15 ಡೇಸ್ ಹೌದು 15 ಡೇಸ್ ಅಲ್ಲಿ
ಇಲ್ಲ ಅದು ಬೇರೆ. ಅದು ಫಸ್ಟ್ ಯು ಆರ್ ಆಸ್ಕಿಂಗ್ ಫಾರ್ ಅನ್ ಅಪ್ರೂವಲ್. ಅವ್ರ ಅಪ್ರೂವಲ್ ಕೊಟ್ರು, ಇನ್ನು ಬೇರೆ ಅಪ್ರೂವಲ್ ಸಿಕ್ಕಿಲ್ಲ. ಸೊ ಯು ಆರ್ ಫಸ್ಟ್ ಟೇಕಿಂಗ್ ಆಲ್ ದ ಅಪ್ರೂವಲ್ಸ್. ಒನ್ಸ್ ಯು ಗೆಟ್ ಆಲ್ ದ ಅಪ್ರೂವಲ್ಸ್, ಯು ಆರ್ ಮೇಕಿಂಗ್ ಅನ್ ಫೈನಲ್ ಅಪ್ಲಿಕೇಶನ್. Sorry, the procedure is done. Now you can go ahead and delist. So that within 5 working days from the approval, we will file it to the stock exchange. Stock exchange has 15 days time. They will do that and they will delist your securities from the stock exchange. Correct? Role of company secretary in this chapter, there is nothing in fact. There is a vital link between the company, directors, shareholders, government and other authorities, it seems. That's all. Correct? Hello? That is your chapter 10. I believe we have seen this in detail only. We have covered every point only. Okay, it's important. Okay. Now there will be. YouTube will always be delay. Yeah. YouTube will always be delayed. So for example, now it is done. I said done, no, now it is done. Okay. Chapter 11 will start. Important. Yes, so sir, chapter 11 people, LODR, we'll just try to cover in detail only. Okay. Chapter 11 people, LODR. Okay, now first of all, what is LODR, sir? First try to understand. SEBI LODR, listing obligation disclosure requirements. What does a need, people? For a listed company, they used to get listed with various stock exchanges like NSE, BSE, regional stock exchanges. Each of the stock exchange used to have their own conditions, terms and conditions. So SEBI felt a need that every stock exchange is having their own terms and conditions. We have to uniform it. So to standardize all those conditions, SEBI came up with its own standard format of all the conditions a listed company has to follow, and that is how there is a need, and they formed something called as SEBI LODR regulations 2015. What is listing obligation disclosure requirements? The moment a company gets listed, on that company there are a lot of obligations with regards to the disclosures. That is what you guys would have seen in your book also. One-time disclosure, quarterly disclosure, half-yearly, annually, event-based. So many disclosures, no? Prior intimations to be given. So many things we have seen. So, sir, all of that will become applicable on the company the moment you are a listed company. And second purpose of LODR was, people, Companies Act used to tell something, listing agreements used to tell something. So to keep it uniform also, there was a one more need and requirement, and that is why we passed LODR regulations. Clear? But today, remember, our intention was to keep Companies Act and LODR as uniform, but that purpose is gone today. Companies Act says something, LODR says something else, but they will not say opposite, but LODR says something more stringent. If Companies Act is telling minimum directors is 3, the LODR is telling minimum directors are 6. It will not say minimum directors as 2. So it is strict, but it is not taking away the purpose. Clear? Okay, that is what is this two objectives. Okay. The first ones are in listing obligation. Let us see something called as Regulation 17, composition of board of directors. So in a listed company, people, how will the board of directors will be? Always remember, in a listed company, there is a person called as chairperson. Now, in a company, there are three types of directors, people. The first type of director is called as executive director. Next type of director is called as non-executive director. The third type of director is called as independent director. Executive director means a person who is involved in day-to-day decisions of the company. Non-executive director, he is not involved in day-to-day decisions. He comes once in a month, or he might come whenever there's a board meeting, wherever major decisions are involved, not everyday decisions. Such director we call them as non-executive director. Generally, they are nothing but part-time directors. The third one is called as people independent directors. Now, what do you mean by independent directors? Those people who are nowhere connected with the company. Why do we emphasize on a person called as independent director? Because we want the decisions taken in the company to be unbiased. Now these two people are getting so much from the company. They have their shares here. Their family members are here. So whatever decisions they take, it will always be, I'm not saying always, it may be biased. So that's why we felt a need to a person called as independent director, specifically after scam called Satyam scam. Before Companies Act 2013, we did not have a concept called as independent director. After Satyam scam only, there was a need. So in 2013, we first introduced a concept called as independent director.
So ಇವಾಗ executive non-executive family member ಆಗ್ತಾರೆ.
Ah,
So independent ಆತರ
ಆಗಲ್ಲ. Independent director cannot be appointed if at all your KMPs are your relatives. All that is not possible. So some shares also you cannot hold an exorbitant number also. All that is not possible.
In that Security concept also, independent directors can get, but if they get, they will be disqualified.
Correct. Yes. Correct. Huh? Okay. Now, sir. So after knowing this, sir. So remember, they are telling you what is the composition of the board. Now, sir, in a company, there is something called as chairperson of the board. Now, my question is, who is your chairperson? Is the chairperson of your company, is he a full-time director or a part-time director? If the chairperson is a full-time director, then they are telling you half of the board shall be independent director. So, sir, remember, if chairperson of the board is executive director, then half of the board shall be independent director. What do you mean by that? Imagine, people, there are 4 directors. In that, if the chairperson is your executive director, then 2 members has to be independent directors, mandatory. Sir, if at all the chairperson of the board is non-executive director, then people, 1/3 of the board can be independent. Now, say for example, in the 4, what is 1/3? 1.33. You will round it off to 2 only. But where will the difference come? Imagine if there is 6, 1/3 will become 2. Half will become 3. Clear? Huh? Correct? Huh? Sir, what if, sir, this person is a non-executive director? Our chairperson is non-executive only. But the chairperson is related to the promoters group. For example, take the example of Reliance only. Until 2023, Neeta Ambani was a non-executive director of Reliance. Now, if Neeta Ambani is chairperson of Reliance, there is no much difference, no? We know Mukesh Ambani will be involved. Now, to avoid that only, what did they tell? If at all the chairperson is non-executive, but if they are related to the promoter group, then half of the board shall be independent. That is what is given here. Any doubts there? This part is clear, huh? Okay, next one, sir. The what is that? What is the total number of directors a company should have? They're telling you people the top 2000 listed companies going forward shall have minimum 6 directors on their board. And not only that, at least one independent women director should be present on the board. Correct? Meaning the director should be women and she should also be a independent director. She should nowhere be related to the company. If I'm not wrong, on the board of Reliance, the independent director is Arundhati Bhattacharya, the women independent director. Correct? Maximum number of directorships. So people, if you're a listed company, if you're a top 2000 listed companies, you should have minimum 6 directors. Now what is the next one? Maximum number of directorships. How many companies can one person be a director of? One person, Mukesh Ambani. In how many companies he can be a director? They're telling you the maximum companies you can be a director of, if at all it is a listed company, is it is 7 directors.
So one is a director in one company. So he should be a director in other 6 companies, right?
Maximum he can be a director in other 6 companies.
So including this one, it is total.
Yes. Now here he is a director. Apart from this company, he can be a director of maximum other 6 listed companies. Okay.
Unlisted means 10.
Public company means 10. If it is private companies, meaning total overall is 20. One person maximum. How many companies I can be a independent director? Again, it is 7 only. However, remember people, if at all a person is a managing director or whole-time director in any company, then he can be an independent director in not more than 3 companies. For example, if you look at Mukesh Ambani, he's a managing director of Reliance. So the maximum number of companies he can be an independent director of is another 3 companies apart from Reliance. Okay. Meetings and quorum. Minimum 4 meetings in a year should be conducted if it's a company. Maximum gap between 2 meetings shall not exceed 120 days. Quorum people, generally for all the companies it is 1/3 or 2, whichever is higher. But if you're a top 2000 listed company, it is 1/3 or 3, whichever is higher. And not only that, at least one independent director should be present. What do you mean by that? Let us imagine in my company there are 3 directors. 1/3 or 3, whichever is higher. So what do you mean by that? Sir, all the 3 directors should be present and in this at least one person should be an independent director as well. Next one, sir. Committee is important from exam point of view. One director can be a member of how many committees? One person can be a member of maximum 10 committees. Sir, one person can be a chairman of how many committees? One person can be a chairman of maximum 5 committees. Always remember, member or a chairman. Chairman includes membership only. It's not like I can be a chairman of 5 and member of 10. If I'm saying I'm a chairman of 5 companies, that is like that is included in your membership also. Chairman is also a member of committee. Correct? Sir, when I'm counting this memberships and chairmanship, which all committees I have to take into account? Telling people you need to take into account only these committees. For determining the limits of chairmanship and membership, only count audit committee and stakeholder relationship committee alone shall be considered. Meaning what? If I am a member of nomination remuneration committee, don't count here. If I'm a member of CSR committee, don't count here. If a member of audit committee and SRC, that is where the limit comes. Clear? Sir, only public companies are included, sir. Private or foreign companies, section companies are all excluded from this particular limit. Okay, next one, sir. Non-executive director. Now imagine if you want to appoint someone as a non-executive director, the maximum age of such person shall not be more than 75. If you still want to appoint a person who is more than 75-year-old, you can still do it, people, by passing special resolution. Correct? Appointment of person as board of directors or manager requires shareholders approval within next general meeting or 3 months from the date of appointment, whichever is later. What is it, sir? Imagine people, if we have appointed any board of directors, generally directors can also appoint board of directors. whenever such appointment has happened within the next 3 months, or whenever there is your general meeting, that is wherever you are calling the shareholders for a meeting, whichever is earlier. So imagine if we have appointed one director in the month of Jan. Sir, when is the next annual general meeting is happening? Let us not add AGM. Imagine next EGM is happening in the month of Feb. When did you appoint in the month of Jan? They're telling you 3 months from appointment, or whenever your next general meeting is happening. When is your next general meeting happening? Feb. So 3 months is, say for example, February, March, April. So it will be Feb or April, whichever is earlier. So within Feb, I need to take the approval of shareholders also for appointment of such board or director. Understood? Hello? Pakana? Okay. Common obligations apply to all the listed companies, meaning these obligations are applicable to all the listed companies, it seems. Now, what are the common obligations, sir? The common obligations are, first one, you need to appoint someone as a compliance officer. What will be the role of the compliance officer? Ensure compliance with all the applicable laws, whether the company is complying with everything or not. Of course, coordinate with everyone. And next one, people, grievance redressal. These are the roles of company secretary, and you will be appointed as a compliance officer. Next one, share transfer agent. This can be outsourced or maintained. We saw this also, 1 lakh. You have to register yourself as category 2. Cooperation with intermediaries registered with SEBI. Nothing but people, you need to coordinate with regards to credit ratings, register to an issue, all that is mandatory. Next one, policy for preservation of documents. According to the law, you need to preserve documents, people. The preservation of documents will come under 2 categories. Some documents you need to preserve it for a period of 8 years. Some documents you need to preserve it for permanently, life of the company. So how are you going to preserve it? For that, make some policies. That is what is called policy for preservation of documents. Next one, filing of documents, reporting with stock exchanges, and whenever there is a need, do that. And next one, people, remember vacancy of the board. We wrote that also. Whenever there is a vacancy of the board, always remember vacancy of the board. It's an amendment only. Or vacancy of compliance officer, or vacancy of KMP. Rule is same only. What? You need to fill the vacancy within 3 months from the date of vacancy. If you have appointed anyone in the temporary position also, the temporary position also will be as per the rule only. Meaning, imagine if a compliance officer role is vacant, you cannot appoint someone for time being. The person appointed for time being also should be a company secretary only. And you need to follow all the appointment related procedures. If at all, even if it's a temporary appointment. Next one, grievance redressal and registered with scores. Fees and charges to be paid to the stock exchange. Scheme of arrangement, mergers and amendment to be present to the court or tribunal in addition to the SEBI's compliance. What they are telling you, all of this is obligations which is applicable to all the listed companies, irrespective of your capital, everything, it is applicable to all the companies. Next one, sir, we saw committees. The committees can be of 4 types. One is your audit committee, nomination remuneration committee, stakeholder relationship committee, risk management committee. Risk management committee is applicable for whom? For whom and all it applies? Top 1000 listed companies. How do you decide who is the top 1000? Based on market capitalization. Now, sir, composition of audit committee. So, in a company, what is audit committee? What is the audit committee's role? Audit committee's role is people to decide everything depending upon the company's, who should be auditor, discussing the performance of the auditor, discussing the financial statements, related party transaction. One approval they will give. What is that approval called? Omnibus approval. What will be the value of omnibus approval? Okay. Remember, there is no limit as such. But for getting omnibus approval, people, what is omnibus approval? So people, omnibus approval is nothing but whenever you are going to deal a transaction with a related party transactions. If you are going to enter into a contract with a related party, such contracts you need to take an approval of audit committee as well. Now what do you mean by related party transaction?
Sir, like now India has put agreement with France for Rafale. For every flight they won't sign, sir. For 26 flights they.
Okay, that's omnibus. What is related party transaction?
One director is the
KFP
promoter
or-
of KFP in other company. So
And for firm also, I towards 2% of the director. The director.
So whenever you are going to do any contract with a related party, for example, people, imagine if there is a director. My company, there is a director. The director is, say for example, Mukesh Ambani. If Mukesh Ambani's company, Reliance, is going to do any contract with Neeta Ambani, we think we might be favorable in this contract. So we call such contracts as a related party transaction. The contract before we enter into with Neeta Ambani, audit committee should approve that contract. Without audit committee approving, you cannot enter into a contract. Sir, if it is recurring in nature, every time I can go and take an approval. To avoid that, what we will do, if it's a repetitive in nature, not once and twice. If it's happening one time in a year or 2 times in a year, you will go and take the approval every time with audit committee. Sir, what if it is repeating? Meaning it is happening every month. In such case, what we will do, we will go and take an approval called as omnibus approval. For giving omnibus approval, remember, you need to always give certain disclosures. Raw material, how much you want, what is the value, what you want, everything. Sir, every time we have to give all these details. If you have, you give it, it is good. If you don't have it, can I still get omnibus approval? You can still get it, provided the value of the omnibus approval without details will not exceed 1 crore rupees per transaction. An omnibus approval will always be reviewed. Within quarterly basis, you will be reviewing it. Correct? Yes, sir. Okay. Audit committee composition, people. What is the composition of audit committee? Minimum there should be 3 directors. In that 3 directors, 2/3 shall be independent directors. If a company has issued SR equity shares, then all the members of the audit committee shall be independent directors. And remember, all the members should be financially literate, and at least one person should be expert in accounts, FM, basically a financial expert. Correct? Remember, you might get confused. It's not chairman who should be a financially expert. Anyone can be a financial person that is expert. Correct? What do you mean by financially literate? A person who is able to read and understand the balance sheets, financial statements, we call that person as financially literate. Chairperson of audit committee shall be an independent director. He shall be present in the AGM also to answer the queries of the shareholders. The meetings, minimum 4 in a year, just like board meetings, maximum gap between 2 meetings shall not be more than 120 days. Quorum of audit committee, 2 or 1/3, whichever is higher, at least 2 independent directors should be there. Remember, it is not 2 plus 2. Whoever 2 members are there, they can only be independent directors. That will be valid quorum. Next one, sir, nomination remuneration committee. What is the role of nomination remuneration committee? The role is people to determine the remuneration of directors, to evaluate the performance, to appoint a director. So that will be the role of NRC. Regulation 19 of SEBI LODR. What is the composition, sir? There will be minimum 3 directors. All the directors should be non-executive directors, and minimum 2/3 of the directors should be independent directors. Sir, if a company has issued SR equity shares, 2/3 shall be independent directors. Sir, chairman of the nomination remuneration committee shall be an independent director. However, remember, whoever is the chairperson of the company cannot be a chairperson of the nomination remuneration committee. However, the chairperson of the company can be a member of nomination remuneration committee, that is allowed. Next one, people, there should be at least minimum one board meeting, that is one nomination remuneration committee meeting held in a year, and the quorum will be same, two or one third, whichever is higher, provided there should be at least one independent director that is present in the meeting. Next one, sir, is called Stakeholder Relationship Committee. Minimum shall be 3 directors and minimum one independent director should be there. If at all SR equity shares are issued, two-thirds shall be independent directors. Sir, that person shall be, chairperson shall be a non-executive director. He shall be present in the AGM to answer all the queries. Sir, minimum one meeting of SRC should be conducted in a year. As the name indicates, people, what is SRC? Stakeholder Relationship Committee. Stakeholders means what? All your debenture holders, security holders, preference bonds, for all of them, if they have any concerns, this committee will take care. The last one, people, risk management committee applicable to top 1000 listed companies of stock exchange based upon market capitalization. So minimum 3 directors should be there in RMC, and minimum shall be one independent directors, and majority people shall be board of directors. Correct? It is not minimum 3 directors, minimum 3 members. Minimum 3 members and majority shall be board of directors. If at all a company has issued SR equity shares, then two-thirds shall be independent directors. Correct? Sir, minimum 2 in a year shall be your, what is that?
Meeting.
Chairperson people shall be a member of the board, right?
Shall be
Shall be board of director basically. Who is the chairperson? Chairperson should be a member of the board. So, and meeting people minimum 2 in a year. Maximum gap between 2 meetings shall not be more than this 180 is a amendment. That has become now 210 days. Remember, that's an amendment. So what is a quorum, sir? 2 members or one third of the total number of members, whichever is higher. In that, at least one person should be a member of the board. That is a board of directors. Correct? Hello? Okay. Just give me 1 second.
Better than me.
Nice.
Better than
It's solar.
No, with the emerging UV rays too much.
She's hot, right?
So it's nice to say Nalla. For not say what we say.
நல்லா இல்ல இருக்கு இல்ல
Nalla meaning it's okay or it's fine. It's good or it's fine or something like that.
நல்லா இல்ல means it's bad.
Nalla illa. Nalla illa, nella illa what?
ನೀವು ಚೆನ್ನಾಗಿದೆ ಚೆನ್ನಾಗಿಲ್ಲ
ಚೆನ್ನಾಗಿದೆ, ಚೆನ್ನಾಗಿಲ್ಲ.
ಯಾವ್ದು ಎಡಿಟ್ ಮಾಡಿ ಕಳಿಸಿ ಎಡಿಟ್ ಮಾಡಿ ಅಪ್ಲೋಡ್ ಮಾಡಿ ಪಾಸ್ ಮಾಡಿ ಅಪ್ಲೋಡ್ ಮಾಡಿ ಎಡಿಟ್ ಮಾಡ್ತಾರೆ ನಮ್ಮ ಮಾತ್ರದಲ್ಲೇ ಕೆಲಸ
Who will hear when revision going up? They will skip one. Now also if you don't know, they will not.
You not here.
It's not able to see.
Dark, I
See
love
here.
dark.
Compared to
It's not like that. It's just
Yeah.
peaceful. It's
Obviously.
sleepy. Chilly after what a Sunday with that crazy. Hey, mobile. So, let's go.
Still not.
Oh,
ಅದಂತ ನಂದೇ ಪ್ಲಾನ್ ಮಾಡಿ ನನ್ನ ಫೀಲ್ ಮಾಡಿ
eco-friendly bottle. Eco-friendly water bottle.
echo.
Okay, bro.
Echo is if you
Eco-friendly.
give sound, no,
Eco-friendly.
that's
Eco-friendly water. That's last.
it's an environment.
ಹಾ make sure you say
Bro,
eco eco
it's a healthy for.
you can say but green will not
Yes, sir. Okay. Related party transaction, material related party. We'll do this or we'll do that and come. One time disclosure, sir. Disclosure, sir. Okay. Applicability of LODR. Hey, LODR is applicable to whom and all? To whom is it applicable? So it is applicable to, shall apply to a listed company who has listed any of the following securities on the recognized stock exchange. It need not be always equity. If you have listed any of this, it is applicable to you itself. What is that? One people IDR, securitized debt instruments, ARCSR, security receipts, same, one and the same. These are almost same. Non-convertible securities, meaning what? Previous chapter, for that also it is applicable itself. Specified securities listed on main board or SME or IGP, ಯಾವುದೇ platform applicable itself. See, this is important. They can pick a question someday, somewhere, where if they make an indirect based question, remember, units issued by mutual funds. You have seen, no, close-ended schemes will be mandatorily listed. It will be applicable itself. Any other securities as may be specified by SEBI. Correct? Now, people, even in this also, if you say, what is the minimum number of directors a listed company should have? Minimum number of directors a listed company should have. Minimum number. A listed company should have. Minimum. ಎಲ್ಲ ಹೇಳ್ಬಿಡ್ರು minimum number of directors a listed company should have. People, end of the day, a company which is listed is end of the day a public company only. They need to have minimum 3 directors. Correct? However, today only we saw, what is that? If you are top 2000 listed companies, see, in total there are around 4,900. Imagine people, there are around 5,000 listed companies. But for the top 2000 listed companies, you should have minimum 6 directors. Correct? Now I am telling, even the company which is listed, imagine you are not coming in top 2000, you are coming in top 4000. But for you, LODR provision is not applicable. Correct? No. So remember, they brought in one more type of applicability. First, it was based upon securities that are listed. The second one, people, based upon applicability, that is based upon market capitalization. What do you mean by that? They introduced something called as There is something called top 1000 listed companies for whom independent women director is applicable, not for all the listed companies. Top 2000 companies, minimum directors shall be 6. Top 1000 companies, risk management committee is applicable. Top 100 companies, AGM should be conducted within 5 months of closure of financial year. So all of this is not based upon security that is being listed. It is based upon market capitalization. That is where second applicability came. This is an amendment. Correct? Huh? Now what does it say? People, top 2000 listed companies, should we check it every day? Huh? Of course, every day it is changing. So they're telling you, you need not check it every day, it seems. The stock exchanges will publish the list of top 1000 to 2000 to 3000 to as the case may be every 31st of December based upon that particular year. If it is 2024, it will be published on 31st December 2024. Next to 31st December 2025. Once your name comes there, imagine the name is published. Earlier my name was in 3000. Now this year it came under 1800th name is mine. So you are coming in a top 2000. So again today my name came. Tomorrow I have to comply. They will give you some time. What is the time? You need to comply. Once your name comes under top 1000, 2000 as the case may be, you need to comply with the provisions within 1st April or start of the next financial year. Technically both are same only, no sir. No, remember, if you remember Companies Act people, a company is free to choose its own financial year. They can follow any other financial year apart from 1st April to 31st March. So few companies are following calendar year itself as a financial year. So for them the financial year, when will it start? It will start on 1st January. Correct? So that's why they had to bring in a provision. They said the 1st April, or if you're following a different financial year, then that beginning of that whichever is later. Correct? Hello? Sir, okay. This year my name came. Next year my name did not come. Should I not comply? Once your name comes, people, you need to comply it for the next 3 years. Again imagine 3 years my name did not come. Even on the 3rd year also when they come up with a list, in that year also my name is not there, people. Then from the next year I need not have to comply with these regulations.
That's company's discretion.
Meaning?
Their decision.
Meaning voluntarily if you want to comply, you comply. We don't have a problem. But I'm telling you, mandatory obligations will not apply on you. Now imagine if you are not coming in a top 1000 companies, appointment of independent women director becomes an optional thing. If you want, you have it, but it is an option. So once applicable for 3 years. And after it also my name did not come. Then people, I need not have to comply with these provisions. Understood? Amendment, remember and go. Any doubt? Pakka? Continuation and cessation. See here. Once a company becomes applicable, it must continue and company unless it falls below the threshold for 3 consecutive years. Correct? Hello? Okay, done. Common obligations we saw, no? Composition we saw. Chairman we saw. Board committees we saw. A related party we should see, no? Or we'll see of related party only. Yeah. We'll finish off that related party, material related party, material subsidiary. Okay. What is a related party transaction, people? A company, if at all they are doing any transaction with these people, we are considering them as a related party transaction. That means you might be favorable, biased. To avoid that, what we are doing, we are trying to have some stringent norms. Provisions are there. So first let us try to understand what you mean by a related party. They're telling you people, if a company is doing a transaction with its directors, with its KMPs or their relatives, by default we are related parties, we will be biased. Next one, if we are doing any contract with a partnership firm. Now, let us imagine Reliance is doing a contract with the XYZ and Co. partnership firm. So, when will this XYZ and Co. become my related party? They're telling you the Reliance's manager or the director or the relative. Let us imagine the director is Mukesh Ambani. Mukesh Ambani is also a partner on this XYZ and Co. Whoever is a partner there is a director here also. So can I say the same common person? Then they're telling you these two entities becomes a related party. That means going forward, whatever transactions you guys have to do, you have to take board approval, you have to take audit committee approval, all those approvals will come. If you are not related party, all that will not apply. That's a difference. Third one, private company, where director or manager or their relative is a member or director. What do you mean by that, sir? Reliance wants to enter into a contract with XYZ Private Limited. They're telling in my Reliance, whoever is my manager or director is a member or director of XYZ Private Limited. Meaning the same person, Mukesh Ambani, is a shareholder there or a director there. That private company becomes my related party. Next one, people, public company, same thing. Mukesh Ambani is a director and both to be satisfied. In private company, director or shareholder. In the case of public company, Mukesh Ambani should be a director and hold shares along with the relatives more than 2% of the paid up share capital. More than 2%. If director and the shareholder holding more than 2%, that is after adding all the relatives shareholding. If you are coming under that, then the public company becomes a related party to the Reliance company. Next one, any body corporate. Imagine a foreign company whose directors or managing directors or manager are acting as per Mukesh Ambani's approval. Meaning what, people? Let us imagine Facebook is a foreign company. Now Facebook director Mark Zuckerberg, whatever decisions he needs to take, he is listening to our board of directors, who Mukesh Ambani. We are calling then Mark Zuckerberg, that is Facebook, as a related party to Reliance. Next one, sir, any person on whose advice director or manager are accustomed to act. Meaning what, sir? Now Reliance managing director, who Mukesh Ambani. If Mukesh Ambani is listening to someone else, in Facebook we saw opposite. We are controlling them. In this case, someone is controlling us. We are considered as a related party. Next one, people, a body corporate, basically a holding company, associate company, subsidiary of a company where it is also a subsidiary company, investment company, venture company, all these are considered as related party transactions. Correct? Yes, sir. Okay. Next one, sir, there is something called as material related party transaction. What do you mean by material related party transaction? Sir, we are entering into a contract with a private company. Reliance is entering into a contract with a private company. Now, in that private company, the director is Mukesh Ambani. Same, we have a common director. So, the private company became a related party for us. Now, we are doing a contract with the private company. What is the value of this particular contract? They're telling you the transaction, what we are entering individually, or if we are doing more than one in a financial year, if at all it is exceeding rupees 1000 crore rupees or 10% of annual consolidated turnover of listed entity as per the previous financial year statements, whichever is lower. What do you mean by that, people? You take 1000 rupees or you take the annual consolidated turnover of the company. Take 10% of it. What do you mean by consolidated turnover? Add your subsidiary companies, add your associate companies also. Take the entire company's turnover. Now imagine all the company's turnover put together. It is coming to somewhere around say 6000 crores. Everything put together into 10%. How much is it? 600 crore. First limit is 1000 crore. Second limit is 600 crore. Whichever is lower. Now, sir, what they're telling you, if at all the transaction that we want to enter into, Reliance wants to enter into with that private company, if at all it is exceeding this particular 600 crore, we will call such transaction as Material related party transaction. Clear? Okay, next one, sir. Payment made to a related party for brand usage or royalty during a financial year, whether individually or aggregate, exceeds 5% of annual consolidated turnover. In class, we saw the example of Nestle. Nestle, that is parent company, has set up an entity in India. Now, of course, in India, the chocolate is sold with the brand called as Nestle only. For that, the Indian entity pays some royalty for the outside entity. That is a parent company. We pay for using the word Nestle. So we were paying 4.75 percentage. Now they wanted to revise it to some 5.4 percentage or something, which the shareholder said no for it. If you remember, we had seen it in the class. So same thing they're telling you. If at all a company wants to pay a royalty for its using of the what is that brand. So whatever royalty you are paying, if it is exceeding 5%, then we call it as a material related party transaction. Correct?
First point, can you explain like some example
Which one?
that
Exceeds 10,000.
Transactions individually or aggregate during a financial year exceeds 1000 crore or 10% of annual consolidated turnover. 1000 crore, imagine they have set you a limit. So 1000 crore, or you take your entire turnover of the company. How much is your turnover of the company? You take, no, for example, if you take Reliance company, you take Reliance company's subsidiaries, you take Reliance company's associates, you take all the turnovers, you add, you will get a consolidated turnover. Let us imagine our consolidated turnover is 6000 crore. In that 10% is what they are telling you, that is 600 crore. Compare it with 1000 crore. So 1000 crore or 600 crore, whichever is lower, 600 crore. So the transaction what we are entering into with a related party, if it is now exceeding 600 crore, we will call that as a material related party transaction. Clear? Next ones are material subsidiary. People, we will have so many subsidiary companies. Reliance has close to 200 subsidiary companies. Shall we treat all the subsidiary companies in the same way? That telling you should not treat all the subsidiary companies in the same way. Why, sir? Some subsidiary companies are way too huge, it seems. So such companies we will call them as material subsidiary companies. Regulation 24. For a company to become a material subsidiary, what are the conditions that it has to satisfy? They're telling you a company will become a material subsidiary if it satisfies this condition. What is that? The subsidiary where income or net worth exceeds 20% of consolidated income or net worth of the listed company. What do you mean by that? We had seen example also. Tata Motors, correct? Has so many subsidiary companies. So subsidiary 1, 2, 3, 4. We have so many subsidiary companies. Prepare one consolidated report for all the companies put together. Listed companies, subsidiary companies, associates, put everything together. And finally we'll get one number. So say for example we got 10,000 crore. And what is this 10,000 crore? Let us imagine this is our net income. The total income this all companies made is 10,000 crore. In that there is one subsidiary called as Jaguar. This Jaguar company alone is generating around 4,500 crore out of all the companies. So out of the total income of all the companies put together, one company itself is contributing around 45%. In this example, we call such a subsidiary company as a material subsidiary company. When will we call it so, people? Whenever its income or net worth exceeds 20% of consolidated income or net worth. So what if it's a material subsidiary company? You need to satisfy some extra conditions. What are the extra conditions? Exam point of view important. Minimum one independent director who is present in Tata Motors shall be a director of such unlisted material subsidiary. Whichever is that unlisted material subsidiary. Now Jaguar in our case, sir, the Tata Motors independent directors, one person will become a whole-time director of Jaguar. Next one, sir, audit committee of listed company shall review. Audit committee of listed company shall review financial statements, particularly investments made by the unlisted subsidiary. we will check your financial statements. They're telling you what? They're telling you Tata Motors will check the financial statements of Jaguar. Board minutes of the meeting of unlisted subsidiary shall be placed at the board meeting of listed company. Whatever you guys are discussing in the board meeting, that minutes of the meeting will be presented in the in the Tata Motors board meeting. Next one, management of unlisted subsidiary shall periodically bring to the notice of the board of the listed company all the significant transactions and arrangements entered by unlisted subsidiary. Now, what is that people are telling you? The management of unlisted subsidiary company, whatever significant transactions they are doing, they will be entering into so many contracts, right? Something very important, that particular contract will be shown to the listed company as well. Important from exam point of view. A single transaction that exceeds 10% of total revenue, expense, total assets, liabilities of unlisted for previous financial year. What do you mean by significant transaction and arrangement? What do you mean by significant transaction? Significant transaction means a transaction that exceeds 10% of total revenue, total expense, asset, liability. Meaning what? You are buying one land, and how much is that? You take all the total assets. So in that, the value of this land is coming for more than 10%. Then we will consider the transaction as significant transaction. If it is significant transaction, what you will do? You will have to take the approval of the listed company, Tata Motors. Clear? Hello? Okay. Let's go back to that. Okay. So next ones are compliances under SEBI regulations. So you can classify it into one-time, quarterly, half-yearly, yearly compliances. What is one-time compliances, people? One-time compliances. A listed entity shall mandatorily appoint a company secretary as its compliance officer. One-time compliances. Next one, sir. The listed entity shall appoint a share transfer agent, or if you want, you can manage it in-house also. Provided if the number of security holders are exceeding 1 lakh, you have to take the category 2 license. The third one has been deleted now. Correct? Okay. So we have given a hint to remember that also. Try to remember that. Quarterly compliances, a statement giving the number of investor complaints. What is this, people? In a year, you will, in a quarter, you will receive investor complaints. In that, how many new have been received? How many have you disposed? How many you have carried forward to the next quarter? You have to give a disclosure of all of that within 21 days from the end of the quarter. A quarterly compliance report on corporate governance. Whether is your board composition accurate? Whether your committee's composition is accurate? All of that, give a compliance report within 21 days from the end of the quarter. A statement showing holding of securities and shareholding pattern. What is that, sir? Promoter shareholding is how much? Individual shareholding is how much? Institutional investors, FPI, government shareholding. You give a in-depth thing within 21 days from end of the each quarter. Next one, the listed entity shall submit to the stock exchange a statement of deviation or variation. What do you mean by that? We have raised money from, say for example, Zomato has raised money from stock exchange for food delivery business. Now, are you using that money for food delivery only? If you are using that money for some other purpose, you need to come and give disclosure here. That is the meaning of statement of deviation. Correct? Next one, where the listed entity has appointed a monitoring agency. What is monitoring agency? Whenever it is a credit rating agency which is appointed as a monitoring agency. What is the role of monitoring agency? Whenever you are raising money in an IPO, until the total money is spent, someone will keep looking whether the company is spending the money properly or not. And that is the role of monitoring agency. Within 45 days from the end of the quarter, next one it shall submit quarterly and year to date financial results. Remember, financial results is something which keeps on repeating because you need to deposit it within every quarter, every half year, also yearly. So it will come almost every place. So that's what they have given. You have to submit a report of financial statements. Next one, financial results along with modified opinion or reservation, if any, expressed by the auditor. What is that? You have given your financial statements, whether the auditor has given any observations, and for that have you revised your financial statements. If you have revised it, then within 48 hours of such a board meeting where you guys took the decision, you have to intimate that our financial statements have changed. Next one, sir, half yearly compliances, people. Whatever is a related party transactions, disclose it. Correct? The listed entity shall also submit as part of its standalone or consolidated financial results for the half year a statement of assets and liabilities and a statement of cash flows by way of a note, meaning nothing but your books of accounts only, right? Cash flow statements and all of that part. That is half yearly. Next one, people, yearly compliances. What is yearly compliances, sir? Hey, RCB na magane. Alle bandu noditine. Okay. Yearly compliance, people. The listed entity shall submit a compliance certificate to the exchange duly signed by the both compliance officer and the authorized representative of share transfer agent. What is that, sir? Compliance certificate for people, your share transfer agent. What is that? In a year, how many what is that? How many requests you got for share transfer? How many requests you got for redemption? Have you taken care of all of that? You will get one certificate. That is called compliance certificate. Within 30 days from the end of the financial year. Next one, the listed entity shall pay all such fees. Yearly you need to pay, no? For depository, for the stock exchange, you need to pay within 30 days from the end of the year. Next one, secretarial auditor. Correct? Huh? Yes or no? There are two things, people. Secretarial audit report, secretarial compliance report. What is the difference between these two? What is secretarial audit? What is secretarial compliance report? Secretarial audit report means accounts. Secretarial audit cannot be accounts. That is being done by statutory auditor. Secretarial audit report is nothing but a CS coming and checking whether a company has followed all the laws or not. What is secretarial compliance report? A CS coming and checking whether a company has followed all the SEBI laws or not. For example, for a banking company, Banking Regulation Act will apply. Information Technology Act will apply. Consumer Protection Act will apply. So many laws will apply. You will go and check whether a company has followed all those acts. Now, ICICI Bank is a listed company. For them, SEBI regulations will apply. Now, all of that will come here. Correct? Yes, sir. Okay. The listed entity shall submit annual audited, of course, same thing, financial results are. Hello. Annual report, the listed entity shall submit to the stock exchange and publish on its website. What? A copy of annual report not later than day of commencement of dispatch to the shareholders. In the event of any changes in the annual report, you need to disclose that within 48 hours after the AGM. Annual report is nothing but something which is prepared every year of a non-financial aspects also will be there. First one, you have to disclose it to the stock exchange whenever you're giving it to the shareholders. Simultaneously, you have to disclose to the stock exchange also. But in that document, if there is any change, within 48 hours of the AGM, you need to disclose it to the stock exchange that the annual report, we have made some changes. Next one, people, the listed entity shall ensure that the share transfer agent or in-house share transfer facility produce a certificate from PCS certifying that all certificates have been issued within 30 days of lodgement for transfer, subdivision, consolidation, renewal. Same thing, in a year, if you got any request for transfer, consolidations, renewals, or anything within 30 days from the end of financial year, you will give a certificate. PCS will say, sir, all these certificates were taken care. Last one, sir. Event-based compliance. What is event-based compliance? Whenever an event happens, you need to disclose, irrespective of the time. So, the listed entity shall intimate the appointment of share transfer agent to the stock exchange. Whenever you are appointing new person, you need to intimate within 7 days. The listed entity shall submit to the stock exchange the statement of securities and shareholding pattern separately. Correct? Hello? prior to the listing of securities, meaning before IPO, what was my shareholding pattern? 1 day prior to the date of listing of securities. The listed entity shall submit to the stock exchange a statement showing holder of securities and shareholding pattern for each class in case of capital restructuring. What does this people capital restructuring means? Whenever there is imagine you guys would have studied, right, internal reconstruction, external reconstruction, capital reduction. Whenever there is any change of capital taking place or compromise or arrangements, any such things happen, you need to disclose it, is what they're telling you. When within 10 days of any change in capital structure exceeding 2% of total paid up share capital. What do you mean by this? Imagine it's a loss making company. I have totally 10% of shares in that company. They have lost. They want to revise the capital. Internal reconstruction. They are reducing my share capital by 2%. If it is exceeding that number, then I need to intimate it. That's what they're telling you. The listed entity shall disclose to the stock exchange the deemed material events, that is the receipt of request for reclassification by the listed entity for the promoter seeking reclassification. What does this promoter seeking reclassification means? What does this mean? Promoter seeking reclassification means, people, till today I am considered as a promoter shareholding. Can you please consider that as a non-promoter shareholding? I want you to reclassify my category. If such request is coming, then within 24 hours from the occurrence of the event, whenever you are asking for it within 24 hours, I need to disclose it to the stock exchange. Amendment, right? The listed entity shall file draft scheme of arrangement to the stock exchange. What is scheme of arrangement? Nothing but compromises, if at all there is any. The listed entity shall effect issuance of certificate of receipts or advices as applicable of subdivision, split to consolidation, exchange, endorsement and all of new certificates or receipts or advices in case of loss or old, decrypt or own out certificates or what is people, nothing but duplicate share certificates. If at all issued within 30 days, you guys have to inform. Loss of share certificate and issue of duplicate share certificate within 2 days of getting information. Same thing, but the scenarios are different, that's all. Registering the transfer of securities. Whenever there is a transfer of securities within 15 days from the date of such request, you need to transfer. Transmission. What is transfer? Transfer is voluntary. Transmission is an operation of law. Death, insolvency, as a case may be. The listed entity shall intimate the record date of closure of transfer of books. Whenever you guys are closing the books to determine dividends, bonus, buyback, further issue, dividends, FPOs, within 7 days, in case of rights issue, at least 3 working days. In case of any other thing other than rights issue, at least 7 working days in advance, you need to intimate it to the stock exchange. We are going to discuss about this particular aspect. Correct? The listed entity shall maintain a functional website also within 2 working days from the date of change in content, if any. Correct? Hello? In this also, where is... Okay. Yes, sir. Regulations applicable to top 500,000, 2,000 listed companies. This 500 has now been deleted. They have just kept for top 1,000, 2,000 listed companies. What and all is applicable? Top 1,000 listed companies. They need to mandatorily appoint one independent women director. The board of directors with effect from 2019 shall have not less than 6 directors. Now it has been made from 2020. Top 2,000 listed entities shall have 6 directors on their board. The top 1,000 listed companies shall have something called as D&O insurance mandatorily taken for its independent directors. What do you mean by D&O insurance?
Penalty.
Yes, sir. Director and officers insurance is nothing but if at all tomorrow, imagine just like your bike insurance, you meet with an accident, someone will come and give you the money. Here there are so many penalties. Then who will give you money if there is a penalty? That is what is the whole purpose of D&O insurance. They are telling you if you want to appoint someone as an independent director, you need to mandatorily take a D&O insurance going forward for an independent director effective from January 1st, 2022. If there is any penalties that he needs to pay, that money will be paid by the insurance company. That's the meaning of it. Next one, risk management committee. Top 1,000 only, no. Next one is dividend distribution policy. Nothing but when can I expect a payment of dividend? See, me, I have invested money in a listed company. I don't know when the company is going to declare dividend. Every month I keep waiting for it. Instead, SEBI said, do one thing. You give a clear policy called as a dividend distribution policy, based on which the shareholder can anticipate when there will be declaration of dividends. I will only know if this happens, there will be declaration of dividend. I will only know. Instead of me waiting or raising concerns, I will be clearly convinced that okay, if all of this happens, then I can get a dividend this year. So that is only called as a dividend distribution policy. Who should do it? It is applicable for top 1000 listed companies. And next one, sir, in the case of quorum people, top 2000 listed companies, it is 1/3 or 3, whichever is higher. At least one independent director should be present. Correct? Role of CS compliance certificate, same thing, that's nothing new. Non-convertible securities, we didn't know. 1 second. Okay. Compliances for non-convertible securities, same thing only, no? We saw non-convertible securities, if they are listed, what is the compliance requirement for them? I'm just looking for, we're not added it. Prior intimations. No, what is there in the book is that 2 days, 5 days. Page number? This one, you know. We have removed that 5 days or 2 days. So no, I'm saying this is important. Remember this and go. There's an amendment here. Prior intimations. Correct? In your book, there will be 2 days, 5 days, and all. We would have struck off that 11 days and all of that. Correct? So now everything has been made uniform. Now what is that, people? Prior intimations. People, what they're telling you, in a company, if at all a company is going to discuss any of these matters in the board meeting of a company, you need to intimate to the stock exchanges at least 2 working days in advance that, sir, we are going to conduct a board meeting. Now imagine, people, if Friday is our board meeting, if Friday is our board meeting, 2 days in advance, I need to intimate it to the stock exchange that, sir, in Friday's board meeting, we are going to discuss about all these things. Why? Just and just to avoid insider trading. Correct? Earlier, people, you had 2 days, 5 days, 11 days and all. Now that has been made uniform. Now only 2 working days is available. Now see, the listed entity is required to give prior intimation of at least 2 working days in advance, excluding the date of intimation. That means what? 2 days, don't count Friday. So it will be Thursday, Wednesday. So you have to give intimation on Tuesday to the stock exchange. So clear days. This is to ensure a complete transparency and to maintain volatility of the market price. About what, sir? Whichever board meeting in which you guys are going to discuss about financial results. Next one, proposal for buyback. Proposal for voluntary delisting. Next one, fundraising. There is nothing but, people, FPO, further public offer. You do ADR, GDR, qualified institutional placement, you do whatever you want. FPO. That is, if at all you are going to take a decision of conducting a further public offer, in that meeting, if you are going to take the decision 2 days in advance, you need to intimate. Next one, if at all you are recommending or declaring dividends, you need to intimate. If you are going to declare bonus shares, you need to intimate. So if I am altering any of my securities, I need to intimate. So alteration of interest of debenture holders or anything connected to that, I need to intimate. The intimation required above shall mention the date of such meeting of the board of directors. I have to clearly tell in which meeting I am going to discuss all of this. Very important, remember, from exam point of view. Clear? All of you? Okay. Every listed company shall disclose to the stock exchange outcome of the meetings of the board. People, here you are intimating that board meeting is going to happen. Here meeting has happened. Now you said you are going to discuss. Now imagine you said you are going to declare bonus, you are going to declare dividends. But did you declare or not? We know? We don't know that aspect. So that is why after the meeting is completed, within 30 minutes of conclusion, you need to intimate what is the outcome of the meeting. That is what I am saying. See, within 30 minutes, people, you need to clearly say whether dividends was disclosed, was it declared, bonuses recommended or declared. So have you done it? If declared, you have to intimate. Next one, any cancellation of dividend. If at all you have declared, have you cancelled? Intimate. Buyback. Have you taken a decision of buyback? Intimate. Fundraising, FPO. Intimate. Bonus. Intimate. Sir, we had forfeited the shares in the past. We are reissuing the forfeited shares. Intimate. Sir, alteration of capital clause. Nothing but section 61. We had seen increasing of authorized capital, or we had seen subdivision, share split. Intimate. Wherever financial results are disclosed, intimate. Voluntary delisting. Technically, I think I had given you an exam. In your book, I have made you guys write that these are all common. Everything is common. So remember the common points and go. Correct? Around 7 to 8 points are common only. That is, whatever is the answer for this, the answer will be the same for this also. Correct? No? Dividend or bonus or buyback or delisting, that will be same only. Correct? That was more important. That's why I thought we'll do that. One way, 5 months. Okay, we have to do non-convertible securities, huh? Okay, we'll do that and we can. Okay, see, compliances under SEBI LODR for non-convertible securities. Sir, you need to intimate to a stock exchange, it seems. When people say anything, the listed entity shall give prior intimation to the stock exchange about the board meeting in which any of the following proposals are considered. Same, huh? Hello? Whatever up you saw, fundraising or financial results, correct? At least 2 working days in advance, same thing we saw. Intimation to the stock exchange. What? The listed entity shall also disclose to the stock exchange in case of any AGM or EGM that is proposed to be held for obtaining shareholders for the proposals in relation to financial results, fundraising. Here people, you are disclosing about board meeting. Financial results should also be approved in AGM, no? About that, where will you intimate? That is what you are telling. Not later than date of commencement of dispatch of notices. 21 days. Whenever you are giving the notice to the shareholders, that is when you need to intimate to the stock exchange also. One is for board meeting, one is for AGM. Same thing only. Next one, people. Quarterly financial results. The listed entity shall prepare and submit unaudited or audited quarterly and year to date within 45 days. Same quarterly compliances. Financial results, it's going to be the same. Copy of financial results to debenture trustee. Whenever you have appointed a debenture trustee, you need to give a copy of the financial results to the debenture trustee as well. When will you give? Whenever you are giving it to a stock exchange, same day you are going to give it to the debenture trustee as well. Correct? Annual financial results, you need to give it within 60 days from the end of financial year. Okay. Disclosure of security cover. What is security cover? Charge. If you have taken secured debentures, regarding the security, whatever you have covered it, is it fine? Have you covered it properly? Under more? You have to give that. Credit rating, people, obtained by listed entity with respect to the non-convertible securities shall be reviewed by the credit rating agency registered with SEBI at least once a year. What do you mean by that? I have issued convertible securities. Now that convertible securities, that is for maturity period of 8 years. When I have issued it, I have taken credit rating. Now that is sufficient. That telling no, the credit rating should be reviewed at least once in a year. As long as you have that debentures, imagine 8 years. For every year, you need to review your credit rating, whatever has been taken. The certificate, the listed entity shall submit a certificate to the stock exchange regarding the status of payment in case of non-convertible securities. Nothing but people, redemption. How much is outstanding, how much is repaid. Within 1 working day of interest or dividend or principal becoming due. So once it becomes due, within 1 working day, I need to give the intimation on it. Correct? Liability of listed entity for contravention. If at all there is any contravention, people, the stock exchange can take following actions. First one, you can impose fine. I can suspend your trading of security. Freezing of promoter shareholding. I told you, Baba Ramdev's shareholding was freezed because minimum public shareholding was not met. Any other action has to be specified by SEBI. Role of company secretary. What is the role of company secretary? Same thing, your role will be as a compliance officer, and you will also be giving a secretarial audit and secretarial compliance report. Easy one, and you will be giving compliance certificate that whatever the share transfer agents, whatever the share transfer request we got, we have we redeemed, we repaid, we transferred within the time. CS in practice, that's what. This is where you see secretarial audit report and compliance report. Correct? Correct? This I told you what is rumor verification, all right? This is the 3 months thing I told you. KMP, director, and compliance officer. Within 3 months, you need to intimate. I mean, you need to appoint interim position until the.
You don't know, sir, about that letter drafting of CS for increasing paper presentation. That we have to intimate to company, right? If the question is asked about some shareholder asking
No,
details,
the question is about
suggesting income, we have to intimate to company, not to the shareholder.
No. They would have given in the details only. A director from XYZ company is asking for so and so details. So you will be writing to the managing director of XYZ Limited, like that only you will write. So you'll be the details will be given to you in the question only.
If the question asks about shareholders, we don't.
Don't assume that letter format. Yes, sir. I think more of it we have covered it. Yes. Yes, ST will take time. We'll go for a break and come. Done. The next chapter, people. SAST. Substantial acquisition of shares or acquisition of shares and takeover. First, try to understand what is the intention of this chapter so that we will understand why do we have this, so that you will have a fair idea on what this particular chapter is all about. So this chapter was introduced, people, with intention that whenever let us imagine in a company there will be 2 types of shareholders. One is promoter shareholders and next one is non-promoter shareholders. At times what will happen, there will be some other company, say for example company X, and imagine this is company Y. If it is company X, now company X will make one offer to the promoters of company X. I would want to acquire your company. Do you want to sell your stake and you want to transfer your shares, and you transfer your company to me and you go away. Now let us imagine these promoters will agree to it. They will say yes, we will agree to the sale. Now imagine these promoters had some 20% of shares in this company. They will say yes, we will sell the shares to you, we are okay with it. Now they will sell the shares to company X and they will wash their hands, they will go away from company Y. The problem is this: believing in these promoters, we stayed back in this company, thinking that these are the best promoters, these are the people who can really transform this company, that we thought there will be some change and all that is going to happen. So we stayed back for these particular promoters. The promoters washed their hands and they got away. Now we also want to get away. Now will we be able to go away from this company? The answer is yes. Who will stop you? You can go away. But the technical problem is that, remember, when a promoter is exiting from the company, there is always two problems you will see. Problem number one, because the promoter itself is walking away, no one will be interested to buy the shares of this company immediately for at least that 1 month, 2 month, 3 months period. No one will be showing interest to buy the shares of the company. Now what happens? You want to sell, but no one is there to buy. So you won't be able to sell. Point number one. Point number two, let us assume that people are able to sell it. They are buyers. So I am able to sell it. Let us assume. The problem is people, the promoter sold the shares when the company was in high. He sold it for 500 rupees. By the time you sell your shares, people, you will not get 500. You might get 400, you might get 380, you might get 420, as the case may be. Now, what was the intention of this particular chapter? The intention of this particular chapter, people, is nothing but, can we protect the interest of this non-promoter shareholding? Can I say public? Yes, probably. Can we protect the interest of them? Now, whenever a huge acquisition is going to happen in a company, can we give a similar offer to the non-promoter shareholders as well? Like we got it for the promoters, can we give it to the non-promoters as well? That is the whole intention with what this particular chapter was started, and that is what is called SAST. So today what will happen, whenever an outsider, if he is acquiring any shares in a company, we will see if you hit particular number, that means people, you need to give an additional offer to acquire the non-promoter shareholder as well. End of the day, we don't want you to acquire 5%, 2% and all. You do one thing, you acquire so much that you will be able to control the company going forward. Understood? So that is the whole purpose of this particular chapter. So that is only you will see it as trigger limits, or also called as open offer limits, as the case may be. Agreed. Now, sir, whenever okay, we'll see. So, sir, that is the applicability, whatever I told you. Open offer. Now, what is this open offer, sir? Try to understand. Mandatory open offer, regulation 3. A mandatory open offer can be given of two types. When, sir? The first one, an acquirer plus person acting in concert. What do you mean by that? Whether I am alone or me with the connected people, like me with my relatives. We are called as person acting in concert, meaning all of us are acting together, pack. Intends to acquire, which along with their existing shareholding entitle them to 25% or more of voting rights. What do you mean by that, sir? There is a person who is a shareholder in a company. Let us imagine company X. If this person is holding 22% of shares in the company, let us imagine he is already holding. Additionally, he is acquiring another 3%. Or a person who is not at all a shareholder in a company directly is acquiring 25% in a company. Everything at once today only. In both the cases, people, for this to happen, you need to give something called as open offer. Open offer is nothing but you need to give an option to all the public saying that I have purchased 25% of shares in your company. If you guys are interested, I will buy your shares also. So how many shares should I buy? Minimum, I need to buy people minimum 26% of shares from the public. This 26% is called as what, people? This 26% is called as open offer. Is it clear? Yes, sir. That is what is given here. See, an acquirer plus person acting in concert intend to acquire, which along with their existing shareholding entitles them to exercise 25% or more of voting rights. Correct? Or voting rights or capital or shares. If you are holding that, people, then it can be acquired only after making a public announcement to acquire minimum 26% of shares of the target company from the shareholders through an open offer. So I'll come and tell to the public, I want to buy yours. If you're interested, please sell it to me and go. So the first one will come when you touch 25%, either at one shot, or you already have some 10 or 15% and later you acquire some more percentage which will make you touch 25%. Next one, sir. Person already holding 25% or more in target company intends to acquire more than 5%. What do you mean by that? Let us imagine I'm already holding 25%. Plus, I want to acquire more than 5%. That is 6%. Then they're telling you for me to do this also, again, for acquiring the 6%, I have to give something called as an open offer. It is mandatory. Is clear? Huh? So open offer becomes mandatory. So when will an open offer come? Open offer will come in two scenarios. One is when I touch 25%. Next one when I'm already holding 25% and I want to acquire more than 5. Up to 5 should I give a sir? Up to 5 should I give an open offer? The answer is no. Up to 5 comes as a creeping acquisition. Meaning if you want to acquire additional 5%, it does not come under open offer. We call it as a creeping acquisition. Clear? Hello? Okay. Next one, sir. Voluntary open offer. So, open offer can be of two types. One is called as voluntary, one is called as mandatory. Now, regulation 3, whatever we saw, is a mandatory open offer. You don't have a choice. You have to give. Next one is called as voluntary open offer. Now, what do you mean by voluntary open offer? Voluntary means people, no one is telling you to give, but you are giving it out of your own choice. Now, to give a voluntary open offer, what are the conditions I need to satisfy? They are telling, first one, you should already be holding 25% of shares in the company. So, what if I am holding 10%? Can I give a voluntary open offer? Not possible. It is an offer made to acquire minimum 10% of shares of target company, not exceeding maximum permissible limits. What is that, sir? If it is a mandatory open offer, you need to acquire minimum 26%. Voluntary open offer, you need to acquire minimum 10%. Subject to, you cannot any day go beyond maximum permissible limit. What do you mean maximum permissible limit? You can acquire up to 75%, you cannot go beyond that. The reason is the rest of the 25% should always be with the public shareholders. Next one, prohibition on acquisition of shares during offer period otherwise than under open offer. So when the open offer is going on, people, you have given a voluntary open offer. You cannot buy the shares in any other way, meaning you cannot go and buy the shares from open market. All that is not possible. When you have given a voluntary open offer, you have to buy it only through a voluntary open offer and no other way. Next one, restriction to acquisition of shares of target company for 6 months after completion of open offer. So once you buy it, people, again for the next 6 months you cannot give another open offer. Exception, another voluntary offer or a competing offer can be made. Another thing I think was bonus. So, sir, 1 second. Okay. Restriction to acquisition of shares of target company for 6 months after completion of open offer. So if I have given an open offer, voluntary open offer, I cannot acquire the shares of the company again for the next 6 months. However, this has 3 exceptions. You can still acquire it since when I can give another voluntary offer and acquire. I can give something called as competing offer. What do you mean by competing offer? When there is already an offer made by someone else, I would want to meet with it. I would want to match the requirement. I will give it another offer as a competing offer to an already existing offer given by someone else. It's called as a competing offer. Third one, on my already existing shares, company has declared bonus and that I'm getting. It is absolutely an exception. You can take it. The person should not be a willful defaulter. An acquirer or person acting in concert acquired shares of target company in preceding 52 weeks without triggering obligation of public announcement, they are ineligible for making a voluntary open offer. What do you mean by that? In the last 52 weeks, you should have acquired shares of the company which will make you to give a mandatory open offer. If you have done such acquisition, only then within 52 weeks you will be able to give a voluntary open offer. In the last 52 weeks, if I have not made any acquisition, that means I have not made any mandatory open offer, then I cannot even do voluntary open offer. Then, sir, Disqualification, remember this? A willful defaulter cannot buy any shares except by making a competing offer. So if you are a willful defaulter, I cannot give a voluntary offer. However, I can give a competing offer. Fugitive economic offender cannot acquire shares including by way of competing offer. So if you are a fugitive economic offender, you cannot give voluntary also, competing also. But if you are just a willful defaulter, you cannot give voluntary, you can give competing offer. Correct? We have seen some examples and all. But I hope you guys, it's clear. Correct? Okay. Next one, people, is indirect acquisition. What do you mean indirect acquisition? Imagine there is a company. The company is called as Flipkart. Flipkart has a subsidiary called as Myntra. Now, whenever I am acquiring shares of Flipkart, I am getting the Myntra company also, which is a subsidiary of Flipkart. Now, this is called as what people indirect acquisitions. But at times, we call this as a deemed direct acquisition means. That means what? I am going to buy Flipkart. I am going to get the shares of Myntra also. It is called as an indirect acquisition. But at times we will call it as a deemed direct acquisition. When is that, people? When the subsidiary company is a really huge company. And how will we know that this company is a huge company? For that, we need to read this. What? If at all there is an indirect acquisition, when proportionate NAV, sales turnover, market capitalization of target company as a percentage of consolidated net asset value or sales turnover or enterprise value exceeds 80%. What do you mean by that? Let us take an example of sales turnover only. Now let us imagine, sir, there is a Flipkart, there is Myntra. Sir, if you look at the combined turnover of these two, let us imagine Flipkart is making say 1000 crore. Let us imagine Myntra is making around 8000 crores. Making it or let us imagine to make it, let us make it is 10,000 crores. What Myntra is doing. So sir, if someone is acquiring Flipkart, people, they are going to get an access to Myntra also. If you look at it amongst these two, 80% of their total net worth is contributed by the subsidiary company only. And you acquired Flipkart, because of which you got Myntra also. Now people, this cannot be called as an indirect acquisition. We will term it as deemed direct acquisition. Clear this one? Understood explanation? Okay. Next ones are something called as disclosures. What do you mean by disclosures? Whenever something happens, people, you are going to intimate about this particular thing to the target company, target companies in which you guys are acquiring the shares, and to the stock exchanges. What will I disclose? First one is called as event-based disclosure. When will this come into picture? Imagine a person who is an acquirer, a person who is buying, along with the person acting in concert together, relatives and all, take it together, acquires shares or voting rights which taken together with existing holding aggregates to 5% or more shares of the target company. Then what do you mean by that, sir? Along with my existing holding, meaning what? I was already holding 2%. If I am acquiring 3% or I did not hold anything, but I am acquiring 5%. They are telling me in case of such things, I need to give a disclosure within 2 working days from the allotment or acquisition, and you need to disclose their aggregate holding and voting rights in the target company to the stock exchange plus to the company within 2 working days. So what do you mean by that? Imagine if the company is listed on NSE, and which company I am speaking about? Let us imagine I am speaking about company called Reliance. So I need to intimate to the Reliance also whose company shares are being acquired. I need to intimate it to the NSE also within 2 working days. If it is innovators growth platform, instead of 5%, you need to read it as 10%. Next one, sir, acquirer plus person acting in concert already holding 5 or more. That is, they already have 5%. And they are either buying or selling. Buy also this rule is applicable, sell also this rule is applicable. 2% of total shareholding or voting rights in a target company. In such case, people, again within 2 working days, I need to give a disclosure to the stock exchange as well as to the company. Yes, sir? Okay. If it is IGP, you need to read it as 10% and plus or minus 5%. Disclosures of encumbrances. What do you mean by encumbrance, people? Whenever there is any pledge whenever there is any loan taken based upon this security as a collateral. What do you mean by that? Let us imagine I have invested some money in Reliance. Now I get shares. On that shares, I'm going and pledging it somewhere and I'm taking loan over it. Now that is only called as what? Creation of encumbrances. Now regarding that, there is a disclosure you need to do. What is that? A promoter or a person acting in concert of a target company, he needs to give a disclosure. When people disclosure on details of shares encumbered by him or person acting in concert, or details of invocation or release of such encumbrances. What do you know, people? One, you'll give it at the time of creation. Next one, people, at the time of invocation. Invocation means what, people? If at all I do not repay the loan, what will happen? The creditor will take away the possession of my particular property, that is my asset, my shares. That process is called as invocation of pledge. And next one is called as, people, what is that? Release. Release, when does release happen, people? I've created a pledge, I repaid the loan, my particular property will be released. That is called as release. In all these three cases, what are three cases? One is creation, one is creation of pledge, creation of pledge. Next one is invocation, that is failure to pay, the person takes away the property. The third one is called as release, meaning I've made the payment, the property is released. In all these three cases, people, you need to intimate it to the stock exchange as well as to the target company within 7 working days of creation, invocation or release of this particular pledge. The stock exchange and the audit committee of the target company, within 7 working days from closure of financial year, they shall also declare on an annual basis that the promoter and PAC has not made any encumbrances other than those disclosed. What is this? Nothing but, people, it's a kind of declaration. Whatever we have disclosed, apart from that, there is no other transactions that we have entered. Whatever we have entered, we have disclosed. You will give a declaration. Then, okay. There is a main thing that is called exemptions. Let us see of exemptions. Okay, there is something called as automatic exemptions. Now, what is this automatic exemption, sir? Whenever a company or any person is acquiring shares of another company, if at all you are acquiring 25% or more, or if you are acquiring, if you are already having 25%, if you are acquiring more than 5%, you need to give something called as a mandatory open offer. However, these rules will not apply, it seems, whenever it is coming under this particular list. The one is that, sir, the first one, people, acquisition pursuant to interstate transfer of shares amongst qualifying person. Interstate transfer means, people, in between us if we are trading it. Now, what do you mean by that, sir? It is, if it is immediate relatives. What do you mean by that? Imagine if a father is selling his shares to his son. So amongst them only they are selling and buying. Because of that, the other person got 26% or 30%. They're telling you, you need not have to give any open offer. Next one, person named as promoters in the shareholding pattern for not less than 3 years. What do you mean by that, sir? People generally, whenever there are promoters, imagine there are 5 promoters in my company. That 5 people are only changing the shares amongst them. We are not selling it to an outsider, but amongst us we are selling the shares. We call that is also exempted. Whenever one promoter buys the shares from another promoter, you need not have to give any open offer. Third one, a company, its subsidiary, its holding company, other subsidiaries of such holding company holding not less than 50% of equity shares of such company, other companies in which such person holds not less than 50% of equity shares, and their subsidiary subject to control over such qualifying person being exclusively held by the same person. Technically, what is happening, people, if I have to tell it to you in a very simple way, I'll tell you. Imagine there is a person called as company X. Here he has one let us imagine there is one person called X. Under him there is something called company A. There is something called as company B. Correct? So if there is any share transfer that has taken place, provided the ultimate beneficial ownership does not change, whether you are holding, whether I am holding, ultimate beneficial ownership is with me only. They're telling you this transfer does not require any open offer. Make sense, huh? Next one, person acting in concert for not less than 3 years. What is this people? We called as PAC, no. Now, company, holding company, subsidiary company is a PAC. Directors, all together, all the directors of a company is a PAC. A person with relatives is called as a PAC. All of these people are dealing or transferring shares amongst themselves. We call it as a PAC. Correct? Next one, shareholders of a target company who have been person acting in concert for a period of not less than 3 years and are disclosed as such pursuant to filing of regulations. And any company in which the entire equity share capital is owned by such shareholders in the same proportion without any differential entitlement. Basically, people again, same thing only amongst person acting in concert. Who has been the person acting in concert at least for a period of 3 years in the company. What do you mean by that? We should be acting together and we are called as PAC for at least a period of 3 years. Amongst us, if we are changing anything, it does not require any approvals. Next one, sir, acquisition in the ordinary course of business. If at all any person is acquiring the shares people as a part of their ordinary course of business, they need not have to give any open offer itself. When is that? First one, underwriter. Yes or no? Whenever a company goes for an IPO, if minimum subscription is not met, underwriter will buy their shares. Because of the purchase, if at all the shares they hold becomes 25% or more, technically they have to give an open offer. They're telling you no, not required, this condition will not apply to them. Next one, stockbroker. Broker, that is his job to buy and sell on behalf of his client. Again, they're telling you not required. Next one, people, merchant bankers as a process of market making. Market making is nothing but a place where whenever after IPO, generally what happens, at times, once the company goes for an IPO, because of many reasons, a company will start seeing a fall at times. So what do? We appoint a few people and we will stop this from happening. We will make sure it is somewhere maintained. And who does this? We call such people as market makers. They will artificially induce demand or whatever they will do. But end of the day, your share price will not fall. So how do they manage it? Whenever it is falling, they will acquire it. They will pump in more money so that it will go up. Whenever it falls, they acquire more. That is why we are calling it as they are acquiring, no. But should I give an open offer? Not required. Next one, merchant banker acting as a stabilizing agent. This is not there for us, don't forget. I mean, not really important for us. By registered market maker of a stock exchange. Market maker, same thing. Next one, scheduled commercial bank acting as an escrow agent. What is an escrow agent? So whenever you guys would have seen in SAST, buyback and all. Whenever you are doing a particular purpose, what is a guarantee that you are going to have money in your account? So you are going to open one account, you are going to deposit all the money in that. Until the whole purpose is done, you are not going to withdraw that money. Such type of account where they want to allow you to withdraw the money until the purpose is served, such type of accounts are called as escrow account. So they are taking from you, right? You'll be seeing it in next chapter also. Escrow account can be created. With what and all? You can create it out of money. You can create it out of the bank guarantee. You can give it government securities, even frequently traded shares. Correct? Next one, invocation of pledge. Agreed? I've taken loan from a bank by giving the shares as a pledge. I did not repay. The bank became the owner of it. Should they give an open offer? Reveling not required. Next one, acquisition pursuant to a scheme. If a person is purchasing shares because of any scheme, I need not have to give any open offer. First one is Sikka, which is no longer there. Second one, people, arrangements as per section 230 to 234, mergers, amalgamations. How did it happen? Based upon court or tribunal's approval. I need not have to give any open offer. Third one, not directly involving the target company as a transferor company. Or arrangements not directly involving the target company as a transferor company or as a transferee company, or reconstruction not involving the target company's undertaking, including amalgamation, merger, demalgamation, pursuant to an order of the court, tribunal, any law, regulation, subject to component of cash. What are those people? Nothing but Vodafone plus Idea came together. They became Vodafone Idea. Now they are transferring the shares to Vodafone to Idea. They are transferring, right? Now, of course, Idea is acquiring shares in Vodafone Idea. Vodafone is acquiring shares in Vodafone Idea. Now, should they give open offer? That is not required, provided these two conditions are satisfied. What is that? The component of cash paying should be less than 25% of the total consideration. Imagine the total purchase consideration of Vodafone Idea Madhyar is coming to 10,000 crore. So the cash component that you have settled should be less than 22,500 crore. If cash is more than 25%, then people, you have to give a mandatory open offer. Second one, people, after implementation of the scheme, the person directly or indirectly holding at least 33% of voting rights in the combined entity are the same as the person who held the entire voting rights before implementation of the scheme. Meaning, people, in Vodafone Idea, now we call this as a combined entity. They're telling you at least 33% of the voting rights in the combined entity should still be held by those people who held the complete shareholding in the old entity. Now imagine in Vodafone some 10 shareholders were there. In Idea some 10 shareholders were there. Both of them should be holding at least 33% in Vodafone Idea combined entity. If that is not their people, then again you need to give a mandatory open offer. Clear? Yes, sir. Next one, sir. Acquisition pursuant to a resolution plan, nothing but people. IBC, Insolvency Bankruptcy Code. Next one is SARFAESI, banking. Nothing but securitized debt instrument. Acquisition pursuant to SEBI delisting. Correct? Whenever you are going to delist, what are the minimum shares you need to acquire? Delisting. You need to acquire so much that after the offer, the promoter shareholding should be 90%. That much shares you need to acquire. Should I give an open offer? Not required. Acquisition by way of transmission, succession, inheritance. Correct? When a person dies, the next person becomes a shareholder by transmission. Should he give an open offer? Not required. Next one, acquisition of voting rights or preferential shares or carrying voting rights as per section 47. What was this? We had seen people in preference shares also. Preference shares generally, do they have voting rights? Whenever their interest is affected, winding up capital reduction, they have voting rights. In any other case, they have voting rights?
Sir, if dividend is not paid for 2 years, so they have voting rights for now.
When dividend is not paid for 2 years, they will have a right to vote on all the things. So can I say you are getting voting rights? When you are getting voting rights, according to this chapter, whenever you are acquiring 25% of voting rights, you have to give an open offer, no? They're telling you, if it is because of that scenario, section 47, failure of payment of preference dividend, on that if you are getting your voting rights, you need not have to give an open offer, exempted. Clear? Next one, sir. Acquisition of shares by lenders. Lenders means what, people? Creditors. If at all you did not pay the loan, I took your shares. Not required. Increase in voting rights pursuant to forfeiture, superior voting rights, buyback. All three will come under the same thing. Forfeiture, superior voting rights and buyback. Correct? One I'll explain, others will automatically you will understand. I'll explain forfeiture. In the class I had explained you superior and buyback. Now forfeiture, what happens, people? There are 4 shareholders in total. Correct? Each of them are holding 25% each. Each of them are holding 25% each. Sir, in this, whenever a company asked for call money, all of them paid except the last person. He did not pay. The company gave a last warning, he did not pay. And finally, the company decided to forfeit his shares. Did they reissue? No. They just forfeited the shares. Now, what happens with forfeiture? This particular share capital will get deleted. Correct? Agreed? Now, people, the person who was holding 25%, he did not acquire any other percentage. Now, because this 25% was deleted, now whatever these people were holding, they will become 3 shareholders instead of 4. So their shareholding will become 33.33. The voting rights went up, right? So should I give an open offer? They're telling you not required. Understood? Pakana? Okay, that is what is same with buyback, same with forfeiture, and same with superior voting rights. Correct? Yes, sir. The following acquisitions shall be exempt from the obligation to make open offer. What is it, sir? Acquisition of share by any shareholder of a target company up to his entitlement pursuant to a rights issue. So they are telling you open offer is not required. When rights issue, all of them got a rights issue. For my capacity, I had some 20 percentage. For that also, I got a rights issue. Everyone got, even I also got. Again, open offer not required. Acquisition of shares in a target company from state level financial institutions, if they are acquiring, not required. Acquisition of shares in a target company from venture capital funds or alternate investment funds, this particular open offer is not required. B and C exemptions require prior disclosures, intimation to stock exchange. What is that, sir? Whatever we saw here, the B and C, we are saying open offer is not required, but disclosures are required, that is not exempted. Clear? Hello? That is your chapter. Okay, this procedure is there. Huh? We'll do a procedure. Huh? What is the procedure of doing acquisition, people? Of course, everything you need to first appoint a merchant banker before you give a public announcement. You have to appoint a merchant banker. After that, give a public announcement of an open offer to all the stock exchanges on which the shares of the target company are listed. We are going to give an open offer. You have to open an escrow account 2 working days prior to the date of detailed public statement. What is the difference between public announcement and detailed public statement? Public announcement is basically you come and tell that because of this my limits have triggered, I have to give a mandatory open offer. Detailed public statement says when is the offer letter, when will the offer period start, when will it end, what is the consideration, everything will be given in detailed public statement. Correct? So before that they are telling you, you have to open an escrow account. Detailed public statement within 5 working days from the date of public announcement you have to give. Filing of draft letter of offer with SEBI and send a copy to the target company and stock exchanges within 5 working days from detailed public statement. You need to give something called as draft letter of offer, open offer only, no? So you have to give it to SEBI and you have to send a copy to the target company as well as to the stock exchange. Okay. Give letter of offer to all the shareholders within 7 working days of receipt of comments from SEBI. Upward revision of offer price, if any, prior to the commencement of last 1 working day before the commencement of tendering period. What do you mean by that? For example, people, we had thought our consideration should be 300 rupees. Can I increase it to 320? The answer is yes. You can revise your payment itself. When people up to 1 day prior to the issue opening, up to that day you can revise your price. Next one, recommendation of committee of independent directors to be published at least 2 working days before the commencement of tendering period. What does the independent directors think about this? Their opinions you have to publish it. Tendering period commencement shall not start later than 12 working days and it shall be open for a minimum period of 10 working days. Tendering period to be closed after 10 working days. So offer period is basically 10 working days maximum. Payment of consideration to be made within 10 working days from the date of last tendering period. Post offer advertisement within 5 working days from the closure of offer period. So you have to give all of this. This is a timeline. Remember and go. Important from exam point of view. Clear? Entity acquisition case law. Correct? Yes, sir. Okay, done. Okay, next one we'll do PITA, prohibition of insider trading. Okay, done now. So let's start with next one, chapter 13, that is prohibition of insider trading. Of course, a simple prohibition, a simple chapter which says that you should not do insider trading. Remember, insider trading doesn't just mean people, your what is that? A person who, what is insider trading? First of all, there is something called as information which is not available to anyone else. That is the general public. Only you are aware of. Who are you? You are basically a person who is connected to the company. and that information which is not available to anyone, it is available only to you, we call such information as UPSI. UPSI means what, people? Unpublished, price sensitive information. Why do we call it as unpublished? It is not yet available to the public. They do not know about the transaction that you are going to do. Price sensitive, why do we call it as price sensitive? Because if at all the news is out to the public, there is going to be definitely an impact on the price on this particular stock exchange and information. So if at all there is some information which is having a very, it is going to have a huge impact on the price of the stock in the stock exchange, and that people are not aware of, only you are aware of, and such information, if you are communicating to anyone, that is also insider trading only. If you are doing the trade based upon the information you are aware of, that is also insider trading only. Sir, I am not doing it for myself, I am doing it for someone else, that is also insider trading only. All of this will be insider trading only. What is the penalty for insider trading? Minimum will be, minimum is 10 lakh, maximum is 25 crore, or 3 times the profit made, whichever is higher. Remember, out of all the penalties that you have, insider trading will be important penalty. Okay, that is what it is. So UPSI means what, people? Unpublished price sensitive information. Any information relating to a company or its securities which is not generally available to the public. Upon being generally available, it is likely to affect the price of the securities. Examples: dividends. Examples: mergers. Example: change in directors, change in KMP, financial results, change in capital structure, FPOs and all. All this will be considered as what, people? UPSI. Okay, now sir, communication or procurement of UPSI. Regulation 3. What does it say? If at all you are going to communicate, or if you are going to tell it to anyone, people, it is considered as insider trading. So for that you will be liable, punishable. What do they say? No person shall communicate, provide or allow access to UPSI. A director is knowing that we are going to declare a dividend. I cannot tell it to anyone else. If you tell, insider trading only. On the same way, no person shall procure. Here I am telling communicate. Here it is from telling point of view. Here it is from receiving point of view. A person should not take any information without proper reason. Why do you want? So a person who accepts both of them relating to a company or security is a company, except for, meaning if you are doing it, it's insider trading only. If it is for these, it's okay. What is that? One is legitimate purpose. What do you mean by legitimate purpose? Merchant banker. Imagine you only, compliance officer, legal compliance heads, legal heads, legal advisors, auditors. For them, you will have to communicate. It is okay. It is legitimate purpose. Next one, transaction that would attract open offer under takeover regulation. SAST we just saw. I have to communicate to so many people. I have to communicate, no? It's okay. Public announcement, they only told me. Next one, transaction does not attract open offer. What do you mean by, people? Any transaction which does not attract open offer, but I went for a voluntary offer. So in such cases, I will not give whatever the communication, whatever these things, it will not be considered as what? It will not be considered as what is that? Insider trading. I have not done any non-compliance as such. It is okay to communicate also, to receive also. Correct? Company should enter a confidentiality agreement. Now, imagine we are appointing a merchant banker. We are disclosing all the details. You disclose. We are not saying no. Here we saw no legitimate purpose. You give it to an auditor. You communicate. Only thing is enter into a confidentiality agreement. We also call it as an NDA, non-disclosure agreement. Now that person should not further communicate it to anyone. And also the company should maintain something called as SDD. What is SDD? Structure Digital Database. What is this? Nothing but, people, a diary which will have all the details about to whom did we communicate this information to, their name, their PAN, All that will be taken, we will maintain it in our diary. Imagine we communicated to merchant banker, the merchant banker's name, the merchant banker's PAN will all be mentioned in this diary that we should maintain. The diary is called as people SDD, Structured Digital Database. Now the second thing, sir, we are maintaining the information of the merchant banker. Now the merchant banker might communicate in his team. Now that's why they said then do one thing, when you are also communicating this information to few more people, because you have to, for the communication, for the purpose of carrying out the job, you have to communicate. In such case, the merchant banker will also maintain the same diary that is called SDD. If he communicates to anyone, he will also make note of their PAN, their names as the case may be. That is again called as structured digital database. Clear? Okay. Insider trading, it means a connected person or a person in possession having UPSI. It includes person who are deemed to be connected person. Who are this connected person and all? Relative, or the big definition will be there. Person deemed to be connected person. These are the people. Who are there? Immediate relatives to the person is considered as deemed to be connected person. A holding company, associate, subsidiary. By default, all of them are considered as deemed connected person. And intermediaries connected as deemed subsidiary, deemed connected person. An investment company, trustee company, asset management company. What is this? Mutual funds. Deemed connected person. An official of a stock exchange. What is this? In SAST and all you saw, no, you have to give disclosures to stock exchange. You are communicating so much to the stock exchange. In that stock exchange, someone is receiving all your information. He is also aware of the information. He is also considered as deemed connected person. A member of the board of trustees of a mutual fund or a member of the board of directors of asset management company of a mutual fund or is an employee thereof. What is this? From mutual fund point of view, your asset management company, the board of asset management company or a board of trustees, of course you have an access. If a mutual fund is investing, you know what is going to happen. You are considered as a deemed connected person. Next one, public financial institution, deemed connected person, an official or an employee of a self-regulatory organization. What is self-regulatory organization? Self-regulatory organization, Association of Mutual Funds of India, AMFI, Association of Merchant Bankers of India, AMBI. So, if you are an employee there, imagine if you are a mutual fund, you are working with AMFI also, Association of Mutual Funds of India. A person working in that AMFI has access of all this information, right? They're telling you even such self-regulatory organizations will also be considered as deemed connected person. It's nothing but like a trade union. Correct? No. Next one, banker of the company. Of course, escrow account and all will be opening, your transactions and all they'll be aware of. A concern, a firm, trust, HUF, company, association of person where a director of a company or his immediate relative or banker of the company has more than 10% of holding or interest. What do you mean by that, sir? Imagine someone in our company. We are looking everything from XYZ company's point of view. In our company, some HUF, some trust, some association of persons, some HUF, all these people are holding 10%, more than 10% of shares in our company. They are considered as deemed connected person. This is deemed connected person, na? Yes, sir. Insider means a person who is a connected person or a person who is in possession of unpublished price in the deal information. Correct? In the class, I told you an example also. A director gets to know that a company is declaring dividend. A director communicates this to his friend. The friend will become a deemed connected person. A friend will become what? A person in possession of UPSI. He will also be an insider. Now, if a friend does any trade, it is an insider trading. You have done a violation. Correct? Hello? Okay. Trading when in possession of UPSI. Can we trade when we have UPSI? We cannot trade ideally. That's what they're telling you. Insiders shall not trade when you're in possession of UPSI. However, you can still trade it with SIMs. There are some exceptions. What is that? First one, off-market interstate transfer between insiders in possession of UPSI. Now, what are the people? Imagine directors of the company. There are two directors who are both aware that there is a dividend that is going to be declared. One director sells his shares to another director. It does not come under insider trading because both of them were insiders. Both of them are aware of the same knowledge. Next one, block deal window mechanism between person in possession of same UPSI. What is block deal and all? We have seen 10 crore. Here it says a different thing. I told you. In our book it says both. So we'll follow that only. But if at all there is a block deal between two people who are aware of same UPSI, again it's okay. Transaction pursuant to statutory or regulatory obligation. What do you mean by this? Transaction pursuant to statutory or regulatory obligation. What do you mean by that? For example, delisting. A company is going for delisting. I have to promote and I have to acquire 90% of shares. A company is going for SAST, open offer. I have to acquire. Statutory obligation. Not because I want. You are telling me to acquire. Next one, trade by non-individual investors, meaning they are talking about institutional investors. Okay, individual in possession of UPSI is different. Decision making individual is different, and we are not in possession of UPSI. The appropriate arrangements were made to ensure UPSI was not communicated. What is this, sir? Let us imagine people, there is a bank. With a bank, the company has opened escrow account. Possible, huh? Now this is a different department. In a bank, there will be one more department called as investment department. When a bank has excess money, they will invest that money into various securities. They are telling, now the bank is aware of some information because the company has come and opened an escrow account with you. Without being aware of this, the same company, the same banks, another department, investment department, they purchased the shares of the same company. Imagine XYZ came and opened escrow account with the ICICI Bank. ICICI Bank investment department purchased the shares of XYZ. They're telling you, if you are an institutional investor, meaning you are not an individual, institutional, if these conditions are satisfied, then this trade will not be considered as a violation. When? Now read. Individual in possession of UPSI is different. That is, escrow account is in possession of UPSI. That department has it. The decision making individual is different and we are not in possession of UPSI. Meaning, sir, the investment department were not aware of it. Appropriate arrangements were made to ensure UPSI was not communicated. Meaning you clearly have confidentiality treatment. If you get to know, you should not tell it to someone else. If all these are satisfied, in case of institutional investors, you can still buy the shares while you have UPSI. Okay, next one, people. Trade pursuant to trading plan. Very important. We'll see. There are some amendments that has happened. Exercise of stock option. What is stock option now? 1 year back I gave you grant of option. Today you are exercising. So what? I got an option 1 year back. So it's okay. Correct? Provided insider shall report to the company within 2 working days and company shall report it to the stock exchange within 2 working days. It is exception only. But you need to report this to the company and company will report it to the stock exchange. In case of connected person, onus of proof is on connected person. In any other case, the onus of proof is on SEBI. We had seen case law also in the exam. What do you mean by that? If a case is filed, if you are a connected person, you need to prove that, sir, I did not have UPSI. In case of others, it is SEBI's responsibility. If you are a connected person, it is your responsibility to prove and come out of the case. Correct, yes. The family in the same they all stayed in the same home. So one was that family thing only, where we saw even though oral communication. As per this, it has to be a communication that has to be there. It is clearly written that regulation 3, you should not communicate. Just because you all stay in the same home, you cannot assume that there is a deemed communication. So that will not be assumed. You cannot assume it. So on those grounds, they said it is not valid.
Case you said they got
The other case was on again this only.
same, but
Connected person, it will be assumed. Supreme Court says it will assume that it is correct. Which one was that?
Cases are added, there's two cases. Okay.
Yes. Okay. Next one, people, trading plan. Now, people, what is trading plan? For the people who are watching it, it is an amendment. People, see, listen to this carefully. What do you mean by a trading plan? Trading plan is nothing but, people, to avoid confusion. Now, for example, I'm a director of a company. You're saying that whenever there is unpublished price sensitive information, I cannot buy or sell the shares of the company. Now, people, as a director, I'll always have a fear. Whenever I buy, people will think it is insider trading. It is like nepotism. You will, if even if a movie is hit, you will say because you are the star son, it is hit. You'll always have that, no? Same way, if at all a director is purchasing the shares, you will think it is because you are aware of it, you have purchased. You knew some UPSI. Now, to avoid this scenario, how do we make sure that the people who are connected with the company, they can buy the shares, they can sell the shares risk free, tension free? How can they do? We are telling, okay, do one thing. You submit something called as a trading plan. What do you mean by a trading plan? The insiders of the company, that is, say for example, our directors, they will give a clear trading plan. Let us imagine for the next 1 year. They will clearly say, say for example, after 5 months, I will be buying, say for example, 1% of shares in our company at a price of. I will be telling the price also. We'll be seeing with regards to all of that, there is an amendment. I'll clearly tell, on this day I will buy, on this day I will sell. So that even that day, if you are aware of unpublished price sensitive information, they'll be telling you, you can still go ahead with the trade because you have given something called as a trading plan, which was given prior. So it is still okay. That's the benefit of trading plan. Understood? Giving your, what do you say, investment plan to the compliance officer of the company in advance. Sir, in this year, I have a plan of buying and selling our company stock on these dates. What is the price? How many shares? Everything I will give a disclosure. That is only called as trading plan. Clear? Here there is some amendments, people. Now concentrate. What is it? An insider would submit in advance the trading plan to the compliance officer for approval and disclosures. Correct? The compliance officer will take it within 2 working days of him getting it. He needs to either approve or reject it. And the same will be, if it is approved, it will be forwarded to the stock exchange for its information. Correct? Okay. Now, sir, the trading plan will have certain rules. What is that? The trading plan not to be implemented if insider was in possession of any UPSI at the time of making the trading plan. What do you mean by that? I'm giving you a plan for my next 1 year trade. But when I was preparing this plan, I'm aware of some UPSI. When you're preparing itself, if you are aware of some UPSI, okay, I will tell you one last chance. If you are aware when you are preparing UPSI, okay, at the time of formulation of plan and it has not been made available to public as on the date of implementation of the plan. What do you mean by that? I started implementing the plan after 5 months. I made a plan in the month of Jan. I wanted to implement this particular trading plan in the month of July. They're telling you in the month of Jan, you had some UPSI which is not yet communicated to the public. You implemented the plan in the month of July. Even until July, that information is not yet communicated to the public, you cannot carry on your trade. The trading plan will be invalid. Clear? Okay, next one. The trade shall be executed only if price of the security is within the price limits set by insider. You remember, this is your amendment. Correct? And what is the price limit set by the insiders? We have it also. See, the price limit is for buying or for selling. For buying people up to 20% higher than the closing price. Closing price on the day before submission of trading plan. What do you mean by that? When did I give a trading plan? January 1st. The previous day is when? December 31st. December 31st. What is the closing price of the stock? The closing price is 600. They're telling me I've given a trading plan that in the next 5 months I'm going to buy the shares of the company. Earlier, what used to happen, people, just because I've said I will go, I'll be buying it. Now, today, when I gave the plan, it is 600. After 5 months, if the share is touched 1200, it is actually very expensive. Because I have given a trading plan, I had to execute, I did not have a choice. Now, even they understood it is not a right thing. So, what did they do? They said, okay, let us add one more condition. The person will be bound to buy, provided the price is within the limit of 20% from the previous day's closing price. That is when I gave a trading plan, previous day December 31st, it is 600. I will be bound to buy the share on the day which I have disclosed here. The share price should be anywhere between 600 to 720. If the share price goes to 750, I am not liable to execute my trading plan. So this is for buy. For sell it will be minus 20%. Meaning, if at 6 I told that I'll buy, what if the shares went to 200? It's a loss for me if I sell. So they're telling you for sell up to 20%, meaning sir, you take it minus 120. That is nothing but 480. Yeah. Huh? Okay, so up to that I will be liable. Correct? So if I want to sell up to 480, I will be liable. If the share price touches 450, I will not be liable to sell. Agreed? Trading plan according to me is very, very important. You guys can expect a question. Pakka. Yes, sir. Okay, next one, sir. The compliance officer shall approve or reject the trading plan within 2 working days of receipt of the plan, and you will intimate it to the stock exchange, as we saw. The pre-clearance and trading window norms shall not apply for trades carried as per trading plan. Meaning, if you are doing it as per trading plan, you need not take any other approvals. Trading shall not commence up to 120 days of public disclosure of trading plan. Online, so recorded people, here there is an amendment. Earlier you guys used to see 6 months, cool off period. Now that has been changed to 120 days. What is that, sir? If you give a trading plan today, when can I start trading? You cannot trade up to 120 days. After 120 days, you are free to trade. No overlap of trading plan, meaning for the same period, you cannot submit 2 trading plans. The trading plan once approved shall be irrevocable and insider has to mandatorily implement, except this is also an amendment. Earlier there was no exception. If you have given a trading plan, you had to execute it. You did not have a choice. Now they have given some logical, sensible exceptions. What is that? First one, if a person becomes permanent incapacity, what do you mean by that, people? Permanent accident or lose of your mental abilities. In such case, you cannot carry on the trade. Next one is bankruptcy, insolvent. How will you carry on the trade? The third one is operation of law. Example is that only death. How will you carry on the trade? So they had to introduce some logical exceptions. They have introduced amendment. Okay, next one. Such trading plan shall have value of trade, number of securities to be traded, nature of trade, specific date or time period. Correct? Value, I will say 1 crore or number of securities, meaning I will say 1 lakh shares. Correct? Nature, long, buy, sell. Specific date, I will buy on 5th of November. Time period not exceeding 5 consecutive trading days, meaning people on 5th of November, the shares will be 600. On 7th of November, 610, 615. When the share prices are fluctuating, why should I do everything in one day? You can take an average also. That is, you can say I will buy it in installments, provided on a continuous basis. The installments cannot be more than 5 days, 5 consecutive days. So you can buy Monday a little, Tuesday, Thursday, Wednesday, Thursday, Friday. That is fine. but it cannot be more than 5 consecutive days. Clear? Last one, sir. In case of non-implementation, whether full or partial, the trading plan as given in the 5.4 or due to inadequate liquidity of the script, the following shall be followed. What is that, sir? If you did not carry on the trade, or any other reason. So what is that I can do? Infrequently traded, no seller or buyer, or any other reason. I was not able to carry on my trade. They're telling you, you need to intimate it to the compliance officer within 2 working days. I did not execute my trade. End of tenure of trading plan plus reasons plus supporting documents. You have to clearly say, if you're telling there were no buyers, there were no sellers, you give documentary evidence. Next one, compliance officer along with his recommendation shall forward this particular thing to audit committee in their immediate meeting, which shall decide if such non-implementation was bona fide or not. Decision of audit committee will be forwarded to compliance officer on the same day, and the compliance officer will forward it to the stock exchange. If audit committee does not accept, then compliance officer shall take action as per the code of conduct. So whatever is action that is required, we will take it. Who will take it? Compliance officer will take it. Any doubts? Important from exam point of view, amendment has taken place. Clear? Now, next one, sir, penalty for insider trading, which we saw. Next one is informant incentive scheme. What is informant incentive scheme? If at all any person is aware of any information of insider trading or any such thing, you are free to disclose it to SEBI. That's all, nothing else is given here. But actually what is the thing is, SEBI can give you an incentive. That's why it's called informant incentive scheme. Right? Otherwise we do not have it. But yes, disclosure, sir. There are 2 disclosures. One is initial and one is continuous disclosure. What is initial disclosure? Every person, whenever you are appointed as a director, KMP, or whenever you become a promoter, within 7 days of such appointment, you need to clearly tell. Imagine Mukesh Ambani became a director of Reliance. Whenever you are appointed as a director, within 7 days you need to disclose in the Reliance Industries what is my shareholding. Because I have to start monitoring going forward, not your overall. In my company, what is your shareholding? So we need to disclose it to the company. Next one, sir. Every promoter or member of promoter group or director KMP shall disclose to the company within 2 trading days the number of securities traded, whether it can be buy or sell, if value exceeds rupees 10 lakh, whether in a single or series of transaction in a calendar quarter. What is that? One, whenever you are appointed, you will intimate what is my shareholding. Next one, people, whenever I am a promoter, whenever I am a director, in a year, if at all I am doing a trade, what is the value, whether purchase or sale, if it is exceeding 10 lakh rupees, then people, they are telling me, if it is exceeding 10 lakh rupees, then they are telling me I need to disclose it to the company, and the company shall disclose it to the stock exchange within 2 working days that I have traded over this particular company share. Sir, this 10 lakh, is it at once, sir? It can be once, or it can be on a series of transactions that is done within 1 calendar quarter. Clear? Yes, sir. Next one, sir. Code of fair disclosure and code of conduct. What do you mean by code of fair disclosure, people? Code of fair disclosure is nothing but whenever there is an unpublished price sensitive information inside the company, SEBI has said you have to form 2 codes. How do you behave when you guys have unpublished price sensitive information? One on code of fair disclosure. How are you going to intimate this information to everyone? And until you intimate to everyone, how do you maintain this information? That is code of fair disclosure. Next one is code of conduct. What is code of conduct? Until that information is published outside, how do we deal with that information? That is code of conduct. Correct? So, sir, SEBI has given a format for code of fair disclosure and code of conduct. You guys have to keep all of that as it is. If you want, you can add more. Sir, where is the format given? The format is given in Schedule A of this chapter and Schedule B of this chapter. Sir, in code of fair disclosure, what and all will come? Prompt public disclosure of UPSI. Don't keep it with you for long. Whenever you guys have an opportunity, disclose it off to the public. Uniform and universal dissemination, meaning do not make selective disclosures. Don't tell it to only one segment of people. Give it uniform. Give it to everyone. Give appropriate response to market rumors. People will keep on speculating. If you get to know, if you hear it, it is your duty to clarify it. Next one, designation of Chief Investor Relation Officer to deal in dissemination of UPSI. Nothing but CIRO is, what is his role? His role is to people, now I'm telling you universal dissemination. You have to maintain UPSI. Whose role will all of this be? It will be the role of CIRO. So, Chief Investor Relation Officer will take care of the unpublished price sensitive information, how to communicate, how not to communicate, how to preserve the information, whom to tell, whom not to tell. All these decisions will be taken by CIRO. Okay, next one. Ensure information shared with analysts or and recorded person is not UPSI. What is this, sir? Interviews will be happening. People will be coming and talking to your heads. Whatever you're disclosing to them, make sure it is not a UPSI. Next one, develop practice of recording of meeting to ensure official confirmations. If you are meeting anyone, have a habit of recording them so that tomorrow, if there is something going wrong, you will always have an evidence. Handle UPSI on need to know basis. If someone comes and asks you that it seems that a company has declared 5 rupees as dividend, what do you have to say? It is your duty to, before communicate, you are saying that why do you need this information? That is the meaning of need to know. Check with before you disclose any information to any person. Next one is minimum standard code of conduct. Same thing, need to know basis. Next one, Chinese wall. What is Chinese wall? Whatever is the information, do not disclose it to outsiders. Keep it very confidential. Designated person and relatives shall be governed by such code of conduct. Who will be governed? Designated persons will be governed. Correct? Huh? Hello? Next one, code shall specify that in case of violation of these regulations, it shall inform SEBI promptly. Anyone violates it, code of conduct should clearly write that it will be intimated to SEBI. Trading window shall be used to monitor the trading of designated persons, meaning we have something called as trading window. If you guys are buying or selling the shares of our company, it will be through the trading window. With that, we are going to monitor who is buying, who is selling, and everything. Trading window shall be closed when designated person has or is expected to have UPSI. So when you have UPSI, don't trade. Exception, trading plan. Designated person and immediate relative shall not trade when trading window is closed. We saw. Code shall specify a period to be not less than 6 months in which DP shall not contra trade. This contra trade today is removed in our we removed that. Contra trade provisions were there, it is no longer there. In case of such contra trade, profit shall be disgorged to SEBI. Contra trade now has been removed. What is the role of company secretary, sir? Ensure compliance under this provision. Code of fair disclosure drafted. Frame the code of conduct. Approve the trading plan. Initial disclosure, continuous disclosure. You have to receive it from the concerned people. This is not there. Maintain records as compliance officer for minimum 3 years as per the respective period. Maintain list of information termed as price sensitive information. Ensure trading window is closed during appropriate time, meaning whenever unpublished price sensitive information is there. That time trading window will be closed. No one will be allowed to trade in the company's stock. Ensure confidential information are kept secured. Maintain structured digital database which you have seen. Correct? And next one, sir. Ensure internal controls are in place and continuously reviewed. Reviewed meaning what, sir? Once in a while keep looking at it. What is happening, what is what and all. You have to keep on reviewing it. Clear? Yes, sir. Correct? This is what we saw in PIT. Hope we have seen most of it.
The case law name Balram Garu Shivani.
Correct. Family case. Balram. Correct.
what is trade and fraud vendors. That's the only thing. Investigation is done.
The previous thing only we have done it, correct. We just have to do the definition of fraud, unfair trade practice, that's all. Okay. Next chapter, people, chapter 14, prohibition of fraudulent and unfair trade practice. So in this, we need to note two definitions. One is fraud, what is unfair trade practice? Whatever is investigation, adjudication, recovery, we have already done when we did SEBI. Correct? So again, let us not do that part. So here, just focus on that one. What is a fraud? What is fraud, people? Whether or not there is any wrongful gain or avoidance of any loss, and shall also include. What is it, sir? See, fraud includes any act, expression, omission, concealment committed, whether in a deceitful manner or not, meaning you wantedly did it or not, by a person or by any other person with his connivance. What do you mean by connivance? Help, support. Or by his agent. I did it or I did it through my agent. Because in depository, if you remember, whatever a depository participant does, a depository will be liable. While dealing in the securities, in order to induce another person or his agent to deal in securities. So, to make sure other person is entering into a contract with you, you are cheating him, your whatever statements you are making, which is not true. Whether or not there is any wrongful gain, with whatever you did, you might have made profits, you might have not made profits. Or avoidance of any loss, you should have lost money, you did not lose money. Because you made this, fraud, sir, and it shall also include, all of this is considered as fraud, it seems. What? A knowing misrepresentation. Knowing misrepresentation means what? Hiding the facts. I know that it is wrong, I still tell it. Next one, suggestion as to a fact which is not true. I'm telling it is not true, I'm still suggesting it as a fact. For example, I'll tell company will become company will make 5 billion turnover by the end of next year. I know we cannot, but I'm still telling we can. A promise made without any intention of performing it. Correct? A representation made, for example, this Satyam case will come here. He said we will become Fortune 500 global companies. We promise. What promise? Fortune 500 ante. Ellu ilde hogutta. A representation made in reckless or careless manner. Correct? I'm just telling something which I do not care. Any such act or omission as any other law specifically declares to be fraudulent. Meaning, forget here. Now, Indian Contract Act, they define something fraud. If you are doing something as per that, that is also considered as fraud. Deceptive behavior by a person depriving another of informed consent or full participation. Deceptive behavior means cheating, cunning. When can this happen? Imagine asset management companies, research analysts, investment advisors, they can cheat, They can come and tell, see, for my previous client, I made 40 lakh profit. Whether it's true or not, you don't know. A false statement made without reasonable ground for believing it to be true. The act of an issuer of securities giving out misinformation that affects the market price of the securities, resulting in investors being effectively misled even though they did not rely on the statement. What is that, sir? Meaning you give a misinformation, meaning that's not a right information, because of which there has been an impact on the price of the stock exchange, on the price of the company on the stock exchange. Any information you have given, we will consider such information as fraud. So, exceptions to fraud, the following will not be considered as fraud, it seems. What? I have given some disclosures, but the disclosure will not be considered as fraud. When will that be? The economic policy of the government. I have given a disclosure, not about the company, about how the government is doing. Of course, I cannot do anything about it. The economic situation of the country, I am telling you, geopolitical, in the next 2 years, I feel that the economy will rise. I have only told last year, by next year, the stock market will be up. Who knew that one war will come? Third one, trends in securities of the market. I am telling in the next 1 year, people will start buying more. I will say it is a bullish trend. Now, if you look at it this year, it is a bearish trend. Everyone are selling and going away. Any other matter of like nature. Correct? So, that is not considered as fraud. This is important. What is it, sir? Prohibition of manipulative, fraudulent, and unfair trade practices you are not supposed to do. What is it, sir? Regulation 4 provides that no person shall indulge in a fraudulent or an unfair trade practice in securities. Further, any dealing in securities shall be deemed to be manipulative, meaning whether you did it or not, it is assumed to be manipulative or unfair. What is it, people? First one, knowingly indulging in act which creates false or misleading appearance of trading in the securities market. What is that? I told you. I will place an order. Fake demand. I will not execute it. I will simply place an order. If the market is going at 1000 rupees, I will place an order for 1300. Of course, it will not execute. Fake demand I am creating. Next one, dealing in a security not intended to effect a transfer of beneficial ownership but intended to operate only as a device to inflate. What is this? Imagine I only have two demat accounts. From my one demat account, I am selling it to another demat account. Now this I am repeatedly doing. Of course, by to get a fake speculation. They are telling you without affecting the beneficial owner. Technically, it is mine only. Third one, inducing any person to subscribe to an issue of the securities for fraudulently securing the minimum subscription. Sir, if at all IPO, if it is to be successful, 90% should be minimum subscribed. I am going and telling people, buy, I'll give you some commission. So you are not supposed to do. Fourth one, inducing any person for dealing in any securities for artificially inflating, depressing, maintaining or causing fluctuation of prices, it means including by way of paying or agreeing to pay offer. What is this? Inducing any person for dealing in any securities for artificially inflating. What is artificially inflating? I told you also, we'll see one more thing also. Where is it? See, this one. Circular transaction in respect of securities entered between persons including intermediaries. What is a circular transaction? And what is this? Both, if you look at it, it's nothing but in the stock market scenario, we can call that as people pump and dump. What is a pump and dump? Meaning artificially we are creating demand. Some 15 people will come. I will sell it to you. You sell it to him. You sell it to him. That's why we call it a circular transaction. So what are we doing? Technically, no one is buying and selling it. So we buy it at 20 rupees. Within us only we are inflating the shares. We take it to 150, 200. We will dump it off. Harshad Mehta scams. So this is only called as pump and dump. Correct? Next one, any act or omission amounting to manipulation of the price of a security, including influencing or manipulating the reference price or benchmark price of any securities. Meaning what, people? If you are attempting to manipulate the price of the securities, however it is, if you are manipulating it, again considered as fraud. Knowingly publishing or causing to publish or reporting or causing to report a person dealing in securities, including financial results, financial statements, mergers, regulatory approvals, which is not true. We are simply telling we are entering into a merger with that company. Of course, the share price will manipulate. We'll say that financials this year we are coming up with 25% more profits. Do you have intention? The answer is no. Again, considered as unfair trade practice. Entering into a transaction in securities without intention of performing it or without intention of change in ownership of such security. Meaning what, people? That's what I say. Beneficial owners. Say for example, I give money to Vishnu. I give shares to Likith. I will tell Vishnu, you sell it to Likith. Likith, you sell it to Vishnu. End of the day, you both are doing it. Ultimately reporting to me only. Whatever you both own belongs to me only. So beneficial ownership is not changing. Common people will think so much of volumes are being traded. Selling, dealing or pledging of stolen, counterfeit or fraudulent. Correct? What is that? Fake. What is that? Forgery. You are creating a fake instrument. Today's date it cannot be valid because demat accounts, so it is not that important. Next one, disseminating information or advice through any media, whether physical or digital, which the disseminator knows to be false or misleading. Correct? Pakistan media is telling no. All Pakistan ministers and all are doing no. So they are telling 100 things. So you know it is false. They are telling no, in Pakistan there is no terrorism. Correct. Where is terrorism in Pakistan?
For example, Adani has a meeting. They can do whatever, like for example, they will say tomorrow this investment will happen.
Correct.
They will establish, they will put a big news in that prime time. Then for apologies, they will ask if the representative.
Correct.
In normal time.
Ah.
That can happen.
Yes. But in reality, they should not happen. Na? But yes, that is what they're telling.
It's punishable.
Yes. That is what it will come here.
No, they are asking apology also.
No, but the manipulation happened of no. If you look at it, what is fraud? That is what we first started with the definition also, no? Any act, expression, omission, whether deceitful or not, meaning you wantedly did or you unwantedly did it. Whether you made profit or you avoided loss. End of the day, you did it is unfair trade practice only. Correct?
They will make the investigation. If they will prove guilty, they will.
Correct, yes. If that is how the news channels are always like that only, no? If you look at, one is that, if you look at now politicians also, all the politicians have their own news channels. Why? So that's why, no? About them, business should keep on happening, no? Somewhere. Okay. Next one, fraudulent inducement of any person by a market participant to deal in securities with the objective of enhancing his brokerage. Simply coming and telling you, sir, sell more shares, sir. Sir, buy more shares, sir. Why? Because I get commission. An intermediary predating or otherwise falsifying records, including contract notes, client's instruction, balance of securities of the client account statements. What is that, sir? Whenever I'm giving so for example, imagine I have a broker. The broker is reporting to me. So in this case, what is happening, people? The broker is falsifying my records, meaning he might have sold it for 200 rupees. He is editing it to 190 rupees. Now imagine he purchased some shares for me. Now that shares became too much of profitable. He will say, no, I did not purchase for you. It was purchased for my account. Earlier people used to do. That's why now there is a clear-cut rule that you cannot have a same account for every client. For a client, it is a different account. You have to do it through that account only. To avoid that only. Yes, sir. Any order in securities placed by a person while directly or indirectly in possession of information that is not publicly available. What is this? Publicly available. Nothing but UPSI. Insider trading they are telling you. Knowingly planting false or misleading news which may induce sale or purchase of securities. Correct? What is that? In messages and all people will do. Mis-selling of securities or services relating to securities market directly or indirectly by false or misleading statement or concealing, omitting material facts, knowingly concealing the associated risk or not taking any reasonable care to ensure suitability of the securities or services to the buyer. Next one, illegal mobilization of funds by sponsoring or causing to be sponsored or carrying on your cost to be carried on any collective investment schemes. Correct? Illegal mobilization. Our class only is the best example. So, illegal mobilization means I did not have any choice, but we did that scheme in the class, which you all wanted to become crorepathies. Correct? No? Yes or no? That is your unfair trade practice. And here, of course, same thing, people, investigating authorities, recovery officer, adjudicating authority, what is that? Custody, 6 months. If I want to seize, I have to go to judicial magistrate. That and all same thing will come. Yes or no? Duty to cooperate. I can make you, I can investigate you. I can write down everything into one written document. I can make you sign. That can be submitted against you as an evidence. Same thing will come. Yes, sir. Matthew did. He collected, and what did he do? He went away with that one, yeah. Scam only.
Vishnu paid with that coins. He gave 5 rupees coins.
Huh. Unaccounted money also. Correct, huh? The next one is delisting, huh? Okay, let's do one thing. Let's go for a break and come. Okay, delisting of equity shares. For those people who are watching it directly, I would suggest I'll be taking this up. But delisting of equity shares, I've also uploaded the complete chapter on YouTube only. Try to watch it. Recently uploaded ArivuPro Company Secretary channel. I'm telling you, it is worth. Please watch the regular session. You guys have time. I feel from exam point of view, a lot of amendments have happened there. Uh, you'll be able to cover a lot of information in detail. So, because the marathon is always about, I can tell you a concept, I can explain you a concept, but more and more examples by giving all those things will happen more in a detailed class. So that also I'm telling you, I've uploaded it on YouTube only. Watch it. Yeah, you have time, spend that time and watch it on YouTube. It will be helpful. Yes, all of you. Okay. Now people, the next one people is delisting of equity shares. So in delisting of equity shares, we have two types of delisting. What do you mean by delisting? Whenever a company wants to come out of the stock exchange permanently. A delisting can happen in two ways. One is voluntary delisting, one is compulsory delisting. Compulsory delisting is nothing but it happens as a punitive action. What is punitive? It's nothing but like a penalty for doing some non-compliances. A stock exchange will take a call that going forward you should not be present on my stock exchange. That is called as compulsory delisting. Next one is called as voluntary delisting. Voluntary delisting can be of three types. So imagine if there is a company which is listed on NSE and BSE. It can delist from NSE and it can continue on BSE. It can delist on NSE as well as BSE. And next one is by a small company. What a small company we will see. Remember, our biggest concern in this chapter will always be a company delisting itself from all the stock exchanges. So going forward, you do not have a place to go and sell your shares. So that will be our biggest role. That is where the maximum amendments have happened. So keeping that in mind, let's start. Sir, non-applicability of this chapter, delisting will not apply to companies listed without making a public issue on IGP platform. So if you have not done a public offer, imagine you have done a private placement. You have gone and listed yourself on IGP, for them this chapter will not apply. If the delisting happens pursuant to a resolution plan as per IBC. What is IBC? Insolvency and Bankruptcy Code. Resolution plan is nothing but a company is almost about to die. As a part of saving the company, someone says a company has to delist so that a company can survive. The best example I can give you is Ruchi Soya. Ruchi Soya is nothing, Ruchi Sunflower Oil. That was a company which was once a very good company, saw huge losses, went into bankruptcy, delisted themselves. Patanjali came and acquired, again got listed. So that is the best example of this resolution plan. So because of that, if you are coming out, then also this particular chapter will not apply. If such plan provides for delisting and provides exit opportunity to public shareholders. So buy them and you send them out. Circumstances where delisting is not permissible. When can we not go for delisting? A company which has done a buyback of equity shares, just now you have purchased, you need to wait for 6 months. A company pursuant to a preferential allotment, just now you have done a preferential allotment. What do you mean by that? Private placement you have done. You have shown them moon, you have shown them sun, you showed them that you will be listed going forward. And now if you are doing a delisting, you cannot do. Unless 3 years has elapsed since listing of equity shares, so minimum cool off period. Today if you list, The delisting cannot happen within 3 years. It's a cool off. Minimum 3 years you have to be listed. Before that you cannot. Next one, instruments which are convertible into same class of equity shares that are sought to be delisted. What are these people? Nothing but we have issued convertible debentures. Now why will I purchase convertible debentures? With a hope that tomorrow this will be converted into equity. That's why I purchased it. Now after purchasing that you are going to delist, that means then why did I buy the debentures so far? Why did I have to buy it? And second thing, people, because it is still a debenture, I do not even have a right to vote. So because of those grounds, you cannot delist a security if it is still outstanding. So after conversion, you take a call. That's fine. No acquirer shall propose delisting who has sold equity shares of the company during 6 months prior to the initial public announcement. This case will come in the case of SAST. Imagine a person is coming and acquiring your company. He is telling I will acquire completely. You all leave the company and go. Now, can I make such offer? The answer is yes, provided you cannot make the offer when, if at all in the last 6 months, if you have sold the shares of my company. Now, you cannot come and make a delisting offer. Yes, sir. Then if you had sold in the last 6 months, why are you buying it again now? So, in these cases, you cannot make a delisting offer, not possible. Agreed? Yes, sir. Okay. Now, sir, delisting from the first scenario, let us look at the easiest scenario. A company is listed on NSE as well as BSE. A company decides to continue on NSE, it wants to come out of BSE. You are anyways present on one stock exchange. For me, no tension, kaiku tension. So the procedure will be as easy as possible. So what is the procedure, sir? First to conduct a board meeting, pass the necessary resolution. After that, so first board meeting, board of directors will approve for your delisting, then call your shareholders will agree for delisting and file an application with the concerned stock exchange for delisting. I want to come out of BSE. I'll file an application with BSE. The stock exchange shall pass the delisting order within 30 working days. So BSE has passed an order, you can delist. The public notice in newspaper, Hindi, English and regional language. Content of public notice, stock exchange from which the company is being delisted. I have to clearly tell I am being delisted from BSE. List of stock exchange where company will continue to be listed. I will say I am still continue to be listed on NSE. And what are the reasons for delisting? Operational convenience, heavy filing fees, etc. Disclosure in first annual report. After delisting, whenever a company issues its first annual report, in that people you need to clearly disclose that I have been delisted from BSE because of so and so reason, and as the case may be. Post delisting about such fact of delisting. So after delisting, in your first annual report, you have to give the facts of delisting. Okay. Next one, people, procedure for voluntarily delisting from all the stock exchanges. Sir, I was listed on NSE as well as BSE. I am coming out of both. Then what is the procedure? The procedure is, people. The first one, I will appoint a merchant banker who will act as a manager to the offer, and he should not be an associate. That's a common point. Okay. Now I'll give an initial public announcement. I'm coming up with a delisting. Always remember, what is delisting? There are people who are invested your shares thinking you will be present on a stock exchange. Now you are going and taking back your shares from stock exchange. Now going forward, where will they sell their shares? So it's a concerning point for them. That's why remember, when you go for an IPO, for your IPO to be successful, a minimum percentage of your company shares has to be subscribed by the public. Only then we call your IPO is successful. And we call it as 90%. Same cut copy paste will be reversed in the delisting. That is, if you want to go for delisting, after this delisting is done, the promoter shareholding should be 90%. So that much you need to acquire. So what if it's 88? That's all, your delisting comes to an end. You need to acquire 50 more percentage. Now imagine if promoter has already 70%. The promoter will have to acquire another 20%. Sir, only 20, yeah. If at all public are selling everything, you have to buy everything. Minimum you need to buy is 90%. Yes, I'm saying No, I'm not telling 90 is what you need to buy. I'm saying if they are selling more, you need to buy that also. Agreeing? Okay. That's what we'll be seeing in detail. Okay. Initial public announcement. I'll clearly tell people that we are going to delist. Reasons for delisting. It shall be given by the acquirer when they decide to voluntarily delist. Acquirer here is our company or promoters or SAST, the person coming and acquiring us. It is made to all the stock exchanges where the shares are listed. Now what will stock exchange do? Stock exchange will publish it in on its website for the public information.
You will acquire for book value price.
No, that only we'll see. No, indicative price, discovered price. Next one, appoint a CS for conducting due diligence on buying or selling of equity by acquirer or related entities, including top 25 shareholders in the last 2 years, and details of off-market transaction by these people in the last 2 years. Meaning what? Because they are coming up with a delisting, the company secretary will look into the transactions done by all our directors, all our top 25 shareholders, what has been their trading pattern in the last 2 years. Because what if you already knew, what if you have sold everything in the last 2 years only, you would have got better prices. So to, if at all everything is fair or not, we are going to do a due diligence report, and the company secretary will submit the due diligence report accordingly. So accordingly, CS shall submit the due diligence certificate to the board of directors. Within 21 days of initial public announcement, you need to conduct a board meeting and pass the board resolution in this regard. Correct? Okay. Now, sir, within 45 days from the date of board meeting, conduct a general meeting. So, board resolution is done. Now, I need to conduct a general meeting. Pass special resolution by postal ballot. Again, amendment here, which is not this amendment, previous attempts amendment it is. But again, a recent one only. What is that? You need to pass a special resolution. Yesterday I showed you one scenario. That is 75% yes we need to get. 25% we might have got no. And in this 25%, let us imagine public saying no is 5%. Correct? Sir, in 75%, public saying yes should be at least 3 times. So at least I am saying 15% of the people should say yes. I have taken 20. So special resolution should be passed, and special resolution should be passed in such a way that the public saying no, public saying yes. The public saying yes should be at least 2 times of the public saying no. That's what is this note. Votes cast by public shareholder in favor shall be 2 times of against. Correct? Next one, within 15 working days from the passing of special resolution, or imagine if there is any regulatory approvals required. Imagine if I am an insurance company. This 15 days will be from the date of special resolution or IRDA approval, whichever is later. Whichever is later. Correct? Okay. Next one, sir. Apply for in principle approval from stock exchange. Stock exchange will decide it within 15 working days. Within 7 working days from passing of special resolution, you will open something called as an escrow account. Now, what do you mean by an escrow account? What is a guarantee? You are telling that you will purchase the shares and all. What is a guarantee that you will have money? So, you have to show your intent. Go to a scheduled commercial bank, open a bank account, deposit the money sufficient to acquire this 90%, whatever is required. Deposit so much of money in the bank account, so that until this purpose is served, that money will not be withdrawn by you. So we also know for a fact you will be able to complete this delisting. Okay. Now how much money I should be able to put it? Now sir, now there can be 2 types of delisting. One people is a fixed price, one is called as book building price. If it is a fixed no, people always remember, whenever a company is going for delisting, I can now I have to delist. I have to acquire the shares of the public, and I have to acquire them. I have to pay the price, and I have to delist. Now, at what price should I acquire? It depends upon people. 2 methodologies. You can choose the price in 2 ways. The first way is called as fixed price method. You know that this is the price I need to pay. If this is the price, then I know for a fact it will be successful. Sir, no, I'm not sure. Now, in such case, what we'll do? We do something called as book building process. Now, because it is done reverse way, we will always choose what is convenient to the public, to the company. We call this generally as reverse book building. Same like IPO. You will give a price band, lower and upper if you want. Correct? Huh? Yes, sir. I'll explain of completely reverse book building here only. Yeah. Anyways, we are discussing. Okay. So one is fixed price. I will tell that I will purchase the shares at 280 rupees. The next one is people. I will give something called as book building. Book building is what people. I'm telling you. I will give you a floor price. What do you mean by floor price? I will say the least price I will give is 260. I will not go below that. I have an option to give an upper band. In IPO, you do not have an option. You have to give. In a reverse book building process, you may give an upper band. The upper band is always called as what people? Upper band is called as indicative price. We call the upper band as indicative price. Meaning I'm telling you, I'm prepared up to this price. So sir, the 260 is called as floor price. If at all I'm saying this as 300, I will call it as indicative price. Understood? Huh? Now what will happen? People will start bidding. People will start bidding. Now people can select 280. People can even select 320. That's the beauty. It can be beyond your indicative price as well. Now, wherever we get the maximum, we have done that problem in the class, if you remember, 90 percentage. Wherever we meet the 90 percentage, imagine the maximum bid we got it is for 320. We call this price as a discovered price. So, three prices came. One is called as floor price. Indicative price is a price which a company may indicate as a higher margin. The third price is the price that we discovered through book building by the process of bidding. The price that you discovered is called as discovered price. Now, sir, my indicative price is 300. The discovered price is how much? 320. Now, people, if at all my discovered price is more than my indicative price, if I want, I can give one more thing that is only called as competing offer or a competing bid. Sir, I was prepared for 300. You guys have bid at 320. That's beyond my margin. I cannot spend 320. Last one thing I'll give you, that is only called as competing bid or a competing price or a competing offer. I will give it at 310. If you guys want, you take it up. If not, leave it. If they leave it, the entire delisting will come to an end. If they accept it, the delisting will go through.
Be below the indicator.
The competing offer cannot be below the indicative price. Yes, of course. Because if that is the case, they would have accepted. Correct? Huh? Hello? Pakana? Now, sir, here also, I'll tell you where the amendment has taken place also. How do we calculate the floor price? This is where the amendment has taken place. Now, for that, they have come up with a formula. If you guys remember. Hello? First is that 5. So people, this is the amendment, people. This complete part is the amendment. Correct? Huh? Now, how do we calculate? It's okay, I'm doing it off here only. People, floor price. How do I calculate the floor price? The first one, people. The floor price of the equity share proposed to be delisted through reverse book building process or through fixed price, as the case may be, shall not be less than the highest of the following. So, you need to calculate this, people. There are 5. You take which is highest. You will get every slab, you will get one price. Whichever is the highest. The floor price cannot be less than that. It should be at least that much. Correct? Huh? Okay, now see. What is that? First one, volume weighted average price paid or payable for acquisition by the acquirer along with person acting in concert during the 52 weeks immediately preceding the reference date. Volume weighted average price paid or payable for acquisition by the acquirer along with person acting in concert during the 52 weeks immediately preceding the reference date. What do you mean by that? Now imagine, people, I am a promoter. when a company is going for delisting, promoter only has to acquire that 90% share. That's why in this chapter, wherever we are referring as acquirer can be two people. Either it can be promoter or it can be an external person who is coming and acquiring the company. It can be these two people. Now they are telling what is the price that we have to give to the public. What is the minimum price? They are telling in the last 52 weeks, our promoters, if they have purchased the shares of our company, have they purchased in the last 52 weeks? If they have purchased, you take that data, whatever is the price they have purchased in the 52 weeks, that volume weighted average. What is volume weighted average? In the last 52 weeks, you are taking data. That means they would have done a trade of 20-25 trades. Now, how will you do? Whatever is the number of shares multiplied by price, you will get a cumulative number. Now, imagine if they have purchased 1000 shares multiplied by 100. The cumulative number will be 1 lakh. Same, another time they have purchased 200 shares at the price of 120. You will get one number. You will get one number. Like this you will do. Ultimately you will add this, the total cumulative quantity, how much you have done. You will get this number. This will be how much? Say for example some 1 crore. The 1 crore you will divide it by total number of securities. You will get total number of securities. Correct? Now for example this 1 crore divided by total number. Imagine 1000 plus 200 plus 500 plus 1000 plus 500. Everything put together. Let us imagine it is coming to 10,000 securities have purchased and sold. Now 1 crore divided by 10,000. How much will it come to? 1 lakh divided by 10 is 10. 100. 100 only, no? 100 only.
100, sir.
Correct? Now people, my volume weighted average price. I have purchased so many shares in 52 weeks. I'm taking an average. Average is 100. So my first count will become 100. Got it? Hello? That is how you need to take. Now second one say, highest price paid or payable for any acquisition again by the acquirer along with person acting in concert during the 26 weeks. You read for 52. Now do another calculation for 26 weeks. But what is the difference? This is volume weighted average price. This is highest price paid. What do you mean by this? Imagine if you had given any price to any of the promoter to acquire NDTV, we had seen it here only. Correct? This is an amendment, no? It's not there. You guys, I've forwarded this material. You got the 6th chapter also? 6th chapter. Okay, I'll tell you. Yesterday I said it in the class only. Okay. Got this one? So, in 26 weeks, I would have purchased the shares from any of the promoters. Imagine acquirers. If at all, out of all the transactions, what is the highest paid transaction? Imagine one will be 120, one will be 150, one will be 180, one will be 90, one will be 60. In this, what is the highest? Take that number. Getting the point? That I will get the second one. Third one, adjusted book value. Considering consolidated financials as determined by independent registered valuer, provided that adjusted book value shall not be applicable in case of delisting of public sector undertakings. So if it is a non-public sector undertaking, this particular thing will come. Now sir, what do you mean by adjusted book value? Book value is nothing but people simple. Today, if a company goes for liquidation, what is the price you are going to get? You will not get market price. So basically assets minus liability divided by number of share, you will get book value. On a normal day I am telling. But it is not so easy. They have come up with their own calculation. This is an amendment. Now what is amendment, people? See, how do I calculate the adjusted book value? The adjusted book value of the company shall be calculated as below. How? The formula is A plus B plus C plus D minus L. Minus AL though. You have to take it like this. A plus B plus C plus D minus L. Nothing but A plus B plus C plus D are assets, L is liabilities, that's all. Yes, huh? Now see, A shall be the book value of all the assets you have other than jewelry, artistic work, shares and securities and other immovable properties. Why? They are all coming in BCD. Artistic work with jewelry, immovable and all will come in BCD. So you take all the assets people, what is that? Shall be the book value of all the assets you have except jewelry, artistic work, shares and securities and immovable properties. Apart from this, whatever you have, you take the book value. Book value means what is written in the book. Sir, what about jewelry and all? Jewelry will come here. B shall be the price which jewelry and artistic work would fetch if sold in the open market on the basis of valuation. That is nothing but market price. Don't you think jewelry, when you purchase it, can be 5,000? Highly liquid asset, keeps on fluctuating. I cannot take book value. That's why they're telling you, if you sell today, how much it will fetch, take that value. Correct? Same thing. What is artistic work? It can be antique piece. It can be a good painting. Vintage crafts. Correct? What is C? What else we have not taken in A? Next is shares and securities. It will come in C. Now shares and securities can be two types of shares. One is infrequently traded, one is frequently traded. If it's a frequently traded, a company share will have a proper graph, high, low, less, everything will be there. It's a good. You can determine the price easily. Infrequently traded means people, there will be one straight line. I cannot determine the price. So in such case, I am telling you, if it is a fair market value of infrequently traded securities, considered by registered valuer. We will go to a registered valuer. We will ask him, sir, we have invested in this company shares. That shares are infrequently traded. Can you please let us know what is the value of these investments we have made? If at all it is a frequently traded share on any recognized stock exchange, the fair market value of such shares and securities shall be the transaction value as recorded in stock exchange on the valuation day. Meaning what? When you are doing valuation, that day what is the market price, take that price. If it's a frequently traded share. Getting the point? Okay. D. What else is left? What is left is immovable property. Immovable property will come in D. That is what they are telling you. D shall be the value adopted or assessed or accessible by any authority, government for the purpose of payment of stamp duty in respect of immovable property. What is that? Whenever I need to register my property, there are two values. One is market value, one is government value. If at all government value is not there, no, our Indians will register the properties for 200, 500 rupees also to save stamp duty. So I have to say at least one number you guys have to register. That number that is fixed by the government is called government value. Guideline values. So in Kormangla, guideline value can be 15,000 rupees per square feet. Market price is 28-30,000 rupees per square feet. Now people will sell it at 30,000 only, but in the records that they will always register at a guideline value. On that, whatever is the number coming in that will be my market value. Take that number. Increase. Correct? So next one. Now deducted by liabilities. L shall be the book value of liabilities shown in the balance sheet, but not including the following amounts. So liabilities you have to take it away. Of course, in that paid up capital is, I cannot consider it as a liability end of the day. Correct or no? Sir, paid up capital in respect of equity shares. Amount set apart for payment of dividends. Amount set apart for payment of dividends. Why are we not considering dividends? Remember, until dividends are declared, it is not a debt for us. So reserve of dividend is never a debt for us. Only it will become a debt after you declare. On preferential and equity where such dividends have not been declared yet. Reserves and surplus by whatever name called, even if the resulting figure is negative, you cannot take reserves and surplus. Any amount representing provision made for meeting liabilities other than ascertained liabilities. What is that? Provisions. Contingent liabilities. You do not know whether it is going to happen or not. You cannot deduct them. Next one, any amount representing contingent liabilities other than arrears of dividend payable in respect of cumulative preference shares. Same thing are contingent liabilities. What do you mean by contingent? Something which may or may not happen. So something which has not yet happened, we cannot account it for. So this is only called as floor price. Now I got, sorry, we did not do everything, right? We did adjusted book value. We got adjusted book value now. You do A plus B plus C plus D, A minus L. You will get one number. Now that number becomes my book value. Okay, next one. The volume weighted average market price for a period of 60 trading days immediately preceding the reference date on the stock exchange where maximum trading volume of equity share is recorded provided such shares are frequently traded. Now what is that? In the first and second one, we took the volume weighted average price of the acquirer acquiring the shares. Here we are taking the what is that volume weighted average price of the company in general, not acquirer buying. The company's whole data we are taking. Provided if it is a frequently traded share, we will take a record for 60 trading days. Sir, what if I am a infrequently traded? If you are an infrequently traded share, then the price determined by a independent registered valuer. When sir, if the shares are not frequently traded. Sir, I will get the data, 5 datas. In this, whichever is highest. Now imagine I'll take 280, 100, 150, 300, I'll get entire data. Whichever is higher, imagine 300 I get. So the floor price cannot be less than 300. That will be my base price. Got it, huh? Hello? Pakkana? Yes or no? Now in this, now see, this fixed delisting price is also one amendment. What is a fixed delisting price? Sir, I'm going with fixed price method or I'm going with reverse book building. Earlier, how much you need to give as a fixed price? There was no calculation. Now they are saying people, the fixed price method, how much should be the minimum price in the fixed price? How much should it be? For that they are telling you, in case the acquirer has proposed delisting through fixed price process, the acquirer shall provide a fixed delisting price which shall be at least 15% more than the floor price calculated as per 19A. Understood? So you got that, we got 300. It should be at least more than 15% of your floor price. So whatever this is, it will come one number. You take that, it should be at least that. So if I take 15% is what? 45. So 345 rupees should be the minimum price you need to offer in the fixed price. Understood all of you? Again, this is an amendment. Here, and one more amendment. What is that? The acquirer shall be eligible to undertake delisting through fixed price only if the shares are frequently traded. Infrequently traded shares you can never come under fixed price method. You have to go under book building process. Hello? Pakkana? Yes or no? The indicative price, whatever I told you. Correct? If at all the price, discovered price, if it is between floor price and indicative price, the person has to go ahead with the delisting. You cannot come back. But if the discovered price is more than indicative price, so in our case, floor price is coming to 240. Indicative price is 300. If discovered price is 320, if I want, I can put an end to the delisting or I can give a competing offer. It is my choice. But if the price, discovered price is 280, I don't have a choice. I have to go ahead with the delisting. Understood? All of you? Now this was the main amendment. Clear? Hello? Done. Now come back. Okay. Now detailed public statement. We came here. So you will give detailed public announcement. It is given within 1 working day from in principle approval. So stock exchanges, let us imagine, has given in principle approval. Okay, I'll give it detailed public statement in English, Hindi and regional language. What will this contain? It will contain floor price, indicative price is optional. See, correct? Details of opening and closing offer, names of stock exchanges from where the delisting is taking place. Correct? Next one, sir. The note of price. Now, whatever we discussed. Agreed? Hello? The next one. The letter of offer shall be dispatched to the shareholders in 2 working days from detailed public statement So we will give them letter of offer. Now bidding period, offer period will start. What will be the bidding period? Offer shall be open within 7 working days of detailed public statement. So I gave detailed public statement, within that 7 working days, offer period should start. Offer shall be remained open for a minimum period of, for 5 working days. It should be open for 5 working days. Next one, whatever is the outcome, people, I need to announce it within 2 hours of closure of bidding. So imagine if 5 days is done. Within 2 hours of the closure, I need to announce it to the to the stock exchanges. What is the outcome? So reverse book building we did, the discovered price was 280. I need to intimate it within 2 hours of closure of the bidding. Correct? Hello? Okay. And next, the fixed price and quantity. So minimum number of equity shares to be acquired post offer promoter shareholding along with the pack should reach 90% of the total issued shares of that class. Agreed? If not, delisting is considered as unsuccessful. In total issued shares, the following shares shall be excluded. So in that, you are telling if the total shares the company is 100, after offer promoter shareholding should become 90%. So in the total 100, the following shares will be excluded, it seems. What is that? First one, shares held by custodians. Depository receipts and all you would have issued. Whatever is given to the custodians as a collateral, you cannot count that. Shares held by employee benefit trust. Correct? Yesterday only we saw it will be counted as non-promoter, non-public shareholding. Shares held by inactive shareholders. What is inactive shareholders? Inactive shareholders means nothing but people. Shares held by vanishing companies, meaning their registered office is unknown, their directors are unknown, their promoters are unknown. Such companies are called as vanishing companies. Struck off companies. If at all a company who is holding our shares, that company itself is struck off. Shares transferred to IEPF. Now it will be considered as inactive. So don't count in that total number. All these exclude. After that, if you get number, in that 90% should be subscribed by the promoters. Public announcement after closure of offer should be given. You need to pay purchase consideration. Here again we had seen one amendment is there. Payment of purchase consideration. What is that? If at all the discovered price, what is discovered price? Whatever is the price you guys arrived at, the discovered price, if it is less than or equal to, imagine if it is between floor price to indicative price, if the discovered price is between this number, it is between 240 to 300, let us imagine 280, it is between this number, no, then the payment will be made as per secondary market settlement mechanism. What do you mean settlement mechanism? Nothing but order matching mechanism. It will happen over stock exchange only. Buy and sell, however it happens, like that only it will happen. But if discovered price is higher than indicative price, our indicative price is 300, their discovered price came to 320, then they are telling you, if you have accepted it, then you need to make the payment within 5 working days. 5 working days of public announcement. Correct? Yes, and rest and all is same. Remaining shareholders have right to tender their share with a promoter up to 1 year. What is that? Only 90% we are emphasizing now. Rest of the 10% can still sell it to you within 1 year. Final application is made to the stock exchange for delisting. If not accepted, acquirer shall bear all the expenses and you cannot go for further delisting for the next 6 months. Basically, cool off period. Agreed? Any doubts? Agreed? That's the main part. The rest of it is okay only. Okay, now what is that, sir? Next one, delisting of equity shares of a small company. Now what is considered a small company? A company whose paid up capital is not exceeding 10 crore and net worth not exceeding 25 crore as on the last date of the financial year is considered as a small company. Number of equity shares traded on each recognized stock exchange during the 12 calendar months preceding the board meeting is less than 10% of total number of shares of such class of the company. Basically, in the last 12 months, imagine the total shares of my company is 1 crore. In the last 12 months, less than 10% of shares of my company is traded. We call this as nothing but infrequently traded. Correct? That means only 10 lakh shares are traded, which is very, very less. And next one, a company should have not been suspended by any of the recognized stock exchange in the preceding 1 year. If you satisfy these people, we call you as a small company. Then for you, the procedures are little liberal. And how is that? See, procedure. You need to appoint a merchant banker and decide the exit price, not to be less than the floor price. Correct? As determined under Regulation 8 of SEBI SAST. So you are referring to SAST. Acquirer sends individual notice to the public shareholders seeking consent for delisting. We are asking them, are you okay? Public shareholders, irrespective of number, holding 90% or more of public shareholding shall consent to sell or continue to hold the shares, irrespective of delisting. Meaning what, sir? Even if one person holding 90%, if he says yes, then I'm sufficient, I can go ahead. Or you give an approval, even after delisting, I don't mind to continue to be in your company. This option is not there for a normal company. You have to acquire. If they wish to continue, you cannot go for delisting. Next one, acquirer to complete the approval within 75 working days of first public announcement. Make payment between 15 working days from expiry of 75 working days. So this is done within 15 days. Make the payment. Failure to pay, payment penalty of 10% per annum. Stock exchange shall debit the shares upon satisfying the compliance with the regulation. So the shares will be automatically debited, will be credited for the promoters. Next one is a delisting of equity shares of company listed on IGP, Innovators Growth Platform. How? Approved by board of directors. Simple. You need to pass a resolution through postal ballot provided votes by majority public shareholders are in favor of such exit. That's all. See, this is special resolution. Votes by majority public shareholders are in favor of such exit. Meaning what? If there are 40 public shareholders, 21 of them should say yes, 19 can say no. In the first one, what was it? It should be at least 2 times. That's the difference. Delisting price is based on floor price as per SAST. People remember earlier also, in the first scenario, we used to refer the pricing for SAST only. We did no floor price. In that place, we used to refer SAST regulations. Now that is the amendment. It has been changed there. Plus delisting premium justified by the acquirer. If you want to pay more, tell us what is the premium. Post offer shareholding of acquirer plus pack. 75% of total issued shares and at least 50% of offer shares of public as on the date of board meeting are tendered and accepted. What is that, sir? When will it be considered as complete? The post offer shareholding of the acquirer should be 75%. And that too how? At least 50% of the public shareholding should be acquired. If public shareholding is 20%, in that at least 10% should be acquired. That's the meaning. Correct? Huh? This is IGP platform. Any doubts? Hello. The last one is people compulsory delisting. How does it make people? A recognized stock exchange as a penalizing measure, meaning you have not complied with any of the listing agreement conditions. Then what will I do? I'll pass an order. Remember, a stock exchange cannot directly pass an order. You will generally constitute a panel. Who will sit in the panel? 2 directors of recognized stock exchange. One of this will be a public representative. One representative of investor association. One representative of MCA or ROC. And an executive director or a secretary of a recognized stock exchange. They all will come together. You will form a panel. And that panel, if at all they are deemed fit, they will pass a delisting order to the listed company. Grounds for delisting here, for compulsory delisting, for what and all you can go for a compulsory delisting. Company has incurred loss for 3 consecutive years and has a negative net worth. It is all may. I'm not saying you will go. Stock exchange may pass an order. Next one, securities suspended for more than 6 months. Securities are infrequently traded for 3 years. Company promoter director convicted for failure to comply with provisions of the act or rules or regulation and awarded fine of minimum 1 crore or imprisonment of 3 years. Address of promoter or a company or director are not known or false address given. This is only nothing but eventually becomes vanishing company. Minimum public shareholding is going less than the minimum level. That is how much? 25% you are not able to maintain. This is what we saw there also. Which one? Which one? Every company. Because it's a delisting order passed by the stock exchange. Compulsory, no? On the above grounds for delisting, it will result company promoter and director shall be jointly liable to purchase outstanding shares from the public. Correct? Huh? Appeal can be made within 15 days to SAT. Hello? Sir, procedure for delisting. First, you will constitute a panel. You will give a public notice given by stock exchange for inviting any objections. It will be given on first day. The aggrieved people has to give their representation, public. What do they think? What is their opinion? Within 15 days. That's the time you have. Appointment of independent valuer to determine fair value. What price we need to do the delisting? Sir, it will be done within X plus 30 days. So another 30 days time is there. The public notice to be given after delisting order plus intimate to the other stock exchanges. BSE will tell NSE that we have passed this order against this company. It will be done within X plus 31 days. The price to be paid by promoters to acquire the equity shares within 3 months of delisting. Remember, once you guys are delisted, within the next 10 years, you cannot go for delisting. Clear? Hello? Pakana? Okay, done. Next one, Takatak, let's do it off. Chapter 16, buyback. So, which one? Yes, this is also an amendment in delisting only. They've introduced something called as a new concept, delisting of equity shares of a listed investment holding company pursuant to a scheme of arrangement 38A. Now, what is this listed investment holding company? You can imagine like this. There is a company called as X. This company is a listed company. So, it has raised money from a lot of people. And what has it done? It's an investment company. So, what is its job? They will further invest into other companies like company A, company B, company C, company D. Now what they are trying to tell you, now let us imagine company X wants to delist. Now they have further invested into company A, company B. Now let us imagine company A is also a listed company. So company B, let us imagine, is an unlisted company. Now people have given money to this company X. Now company X is delisting. Now because it is delisting, now in this scenario, what will be the right given to the shareholders of this company X? So this is a recent amendment. Now try to keep this in mind and try to understand. Investment holding company means a company which hold investments in listed or unlisted companies or holding assets other than such investments. Meaning what? Let us imagine. They have invested in A, listed company, B, unlisted company, C, land. Real estate. Possible, huh? So let us imagine X has made these 3 investments. Important from exam point of view, I think so. Nothing contained in these regulations shall apply to delisting of equity shares of an investment holding company pursuant to scheme of arrangement by an order of the court or the tribunal. Delisting of equity shares made as a shall be undertaken in the following manner. What is it, sir? Now this delisting is happening based upon the court's order. Okay. But it should happen in this following way. What is that? The listed investment holding company shall transfer the equity shares held by it in other listed company. In our case, what is other listed company? Company A. So company X has invested some money into other listed company. They're telling you the listed investment holding company shall transfer the equity shares. Which equity shares? The shares that has held in the other listed companies to its public shareholders in the proportion of their shareholding. Meaning, if I have invested 1% in company X, sir, if company X has invested some percentage in company A, whatever is my shareholding in company X, to the same proportion, the company A's share will be directly transferred to this person, Mr. say for example, Likith. Mr. Likith will now directly become the shareholder of company A. In the same proportion of how much ever you have invested in company X, to the same proportion you will become a shareholder of in company A directly. Okay, sir, next one. The listed investment holding company shall make payment in cash. What is that? Now, because company B is unlisted. Now, if I give you the shares, now I can give the shares to Likith directly. Where will Likith go and sell these shares? Now, what will company X do here? Instead of giving shares of company B's shares will be sold. It will be liquidated. Equivalent amount of cash will be settled to Likith instead of giving shares. Correct? Huh? Same thing applies to real estate also. Okay, next one. Public shareholding or registered holding shall be extinguished upon transfer of the underlying shares mentioned and the payment in cash under the scheme. And this is only, where is that? And other assets, correct? Huh? So one is unlisted and land. I will not give that directly to him. I will liquidate and I'll give it to him. Okay. And after that, sir, public shareholding of the listed investment holding company shall be extinguished. We will give all of this and we will tear away the shares that you have invested in the holding company upon transfer of underlying shares mentioned or upon the payment of the cash. The listed investment holding company shall apply to the stock exchange for delisting. Everything is done, we will apply for delisting. Correct? Huh? That's the main one, no? Keep that one thing in mind. Okay, next one, people, is buyback. Huh? Let us do a buyback, a simple one. Okay, buyback, people. Conditions for buyback. Same thing, whatever you guys would have seen in company law. If a company wants to go for a buyback, what are the sources? Free reserves, securities premium account, and proceeds of fresh issue. Okay, proceeds of fresh issue. Next one, post buyback, your debt equity ratio should not be more than 2:1. All securities shall be fully paid up. What does debt equity ratio means? Your debt should not be more than 2 times of your equity. If equity is 1 lakh, your debt can be 2 lakh, not more than that. No further buyback shall be made within next 1 year cool off period. If you do a buyback today, no buyback in next 1 year. Company shall not issue same kind of securities within the next 6 months. If I buy back equity today, in the next 6 months I cannot issue equity again. There should be at least cool off of 6 months. Sir, what is the maximum buyback I can do? If you pass a board resolution, the maximum buyback you can do is 10% of paid up equity share capital plus free reserves. If at all I am doing a special resolution, if I am buying back equity, the maximum equity I can buy back is 25% of paid up equity share capital. This is for equity shares number. Next one, value of buyback or any other security. 25% of paid up share capital plus free reserves. Correct? We have done problem also here. No? Okay. Extent of buyback as per SEBI. Board resolution, same as per Companies Act. Extent of buyback as per SEBI. Special resolution, 25% of paid up share capital plus free reserves of the company on same thing. Nothing will change, but this part will change. So as per Companies Act, it is direct 25%. As per SEBI, we will take 25% of paid up share capital plus free reserves of the company calculated based on standalone, meaning only that company, or consolidated, whichever is lower. I told this logic to you in the class also. People will feel always standalone will be less. No, sir, because adding everything independently it will be less. Adding everything it will always be more. Remember, free reserves can also be in deficit. It will be negative. That time the number will be less when you take consolidated. If it's a loss making company, it will be negative only, no? Yes or no? That's what they are telling you. Whichever is lower. That is the maximum buyback you can do. Okay, next one. As per SEBI buyback regulations. Next one. What is this? Debt equity ratio. Secured, unsecured. Okay, what is this? Less than or equal to 2:1 on standalone or consolidated financial basis. As per Companies Act, it is 2:1. Directly of the company. As per SEBI regulations, it is less than 2:1 on standalone or consolidated. Meaning again same thing. Take the debt of all the companies. Take equity of all the companies. It should be not more than 2:1. Agreed? Next one, less than or equal to 2:1 on standalone or consolidated financial statements basis after excluding all the financial statements of subsidiary which are NBFCs and HFCs. However, all such companies that are excluded shall have a debt equity ratio not more than 6:1 calculated on standalone basis. Whatever people, in general, you cannot have debt equity ratio more than 2:1. However, if you guys have subsidiary companies which are NBFCs and HFCs, their main role only is borrowing loans, that only. They will definitely have more debt. So for them they are telling you 2:1 will not apply. For them it will be 6:1. Debt can be 6, equity can be 1. Board of Directors shall give a declaration of solvency that within next 1 year company shall not become insolvent. Sir, how do we do the buyback, people? The buyback will be done by basically through tender offer, through stock exchange, open market. That is book building. Now, sir, from existing shareholders through a tender offer on a proportionate basis. In this method, company shall reserve 15% of proposed buyback or their entitlement as per shareholding, whichever is higher, shall be reserved for a small shareholder. What is that, sir? Whenever you are coming through a tender offer, the company will reserve up to 15% of the proposed buyback for a small shareholder. Up to 15% will reserve it for a small shareholder. Sir, the other one is, people, from open market. It can be book building issue or through stock exchange. It will be book building issue or stock exchange. Remember, people, the maximum buyback under this method shall be calculated on standalone or CFS, whichever is less. Correct? Which is the method which is being discontinued now? Stock exchange is almost discontinued now. Technically, this is the last year. So, this limits will now be, it was an amendment once. These limits are also not important anymore. So, company used to do 3 types of buybacks. One is, people, through tender offer. One more is book building. One more is stock exchange. These are the 3 routes. Correct? Book building is nothing but price finding mechanism. Stock exchange is nothing but, just like you and me, company will also buy the shares directly going to the stock exchange. They realize that that's not a right way to do, because not everyone will get the same price. That's SEBI realized it. So that's why they said going forward we'll have to discontinue it, and they discontinued it as well. Provided they cannot discontinue it directly. In the phase wise they discontinued. And how did they do it? If at all you started your buyback until 31st March 2023, the maximum you can do it through stock exchange route is 15%. Till 31st March 2024, 10%. Just now it ended 31st March 2025, 5% of paid up share capital. That's the maximum you guys can do a buyback through stock exchange. Going forward, not possible. That's what we have written. From 1st April 2025, buyback from stock exchange shall be discontinued. Correct? Hello? Okay. Now what is the procedure? Tender offer is what now we are all sticking on to. What is it? We'll see. Buyback through tender offer. First you will pass a board resolution or special resolution depending upon the quantity you need to buy back. 10% or 25 as the case may be. Within 2 working days, people, you need to give a public announcement, English, Hindi, regional newspaper. It shall be simultaneously sent to SEBI as well as stock exchange, which stock exchange will immediately tell it to the public that the company wants to come up for a buyback, it seems. Public announcement shall also be disclosed on website of the company stock exchange as well as the merchant banker. Of course, merchant banker appointment will definitely simultaneously happen. This is a mandatory thing. Within 2 working days of public announcement, company shall deposit money in escrow account. Important, remember. What is the escrow account? How much will we deposit? The escrow will be, if the buyback value is up to 100 crore, we will deposit 25 percentage of the consideration. If it is beyond 100 crore, up to 100, 25 percentage. Anything above that, it is 10 percentage thereafter. So imagine if the total buyback amount is coming to 200 crore. For the first 100 crore, it is 25 percentage. That is 25 crore. For the next 100 crore, it is 10 percentage. That is 10 crore.
So
The total escrow account will be 35 crore.
will be not around 200.
No. Got it? Important. Now, sir, escrow account can be done with what and all? Should I always transfer money only? No, you can transfer many more instruments. What is that? It can be cash or directly deposit in a bank, FD. That is also possible. Bank guarantee in favor of merchant banker, meaning if he doesn't pay, I will pay. Deposit of frequently traded shares, meaning I have invested in, imagine Infosys shares, which is frequently traded. Go and deposit that entire shares also. That is also possible. Invest government securities, money market instruments, deposit. Units of mutual funds, invested in gilt funds and overnight funds. Basically, quickly redeemable, quickly liquidable. Combination of the above, anything together, possible exam question. Remember and go. Clear now? Okay. Now come up with a record date within 2 working days. What is record date? To find out the entitlement. Letter of offer to be filed with SEBI and shareholders. Within 4 working days, you will open the offer. Offer period will be open for 5 working days. Within 5 working days of the closure of offer, offer is now done. After verification of offer received, accept and you start making the payments. Within 15 days, extinguish the securities in the presence of. So now people have bought back. You have to delete that shares from your account. Today it is demat, so it is all electronic entries. Earlier it used to be physical. That's why we use the word called extinguish. Extinguish means stare, burn, anything. So extinguish the securities in presence of. Registrar to the issue should be there, or merchant banker should be there. It is him or him. And secretarial auditor, this is the amendment. Within 7 working days, certificate should be filed with SEBI. That, sir, everything is completed. That certificate shall be signed by secretarial auditor. Same thing, no. Registrar or merchant banker, no. One more person will come. And 2 directors. If a company has a managing director, MD is mandatory. Clear all of you? They are asking the procedure. Try to write it. The next one is called as people buyback through stock exchange method. In fact, I would tell you it's okay to leave this. 1st April 2025, I don't think institute will ask you a process which is already outdated when we are studying. So on the exam point of view also, it's okay to leave. If you guys are feeling it hectic, we have done till today. Whatever it is to manage, you remember and go. Clear? Huh? We don't need. It's done. 1st April 2025, it's done. In fact, if you ask me, it's a very big process. Don't look at it at all because it's done. See here. Do you think institute will ask something which is discontinued? They will see more irrelevant comments coming if they ask. So taking those grounds, I'm telling you, it's okay. Leave it. Clear? Yes. Let's directly go through buyback through book building process. Grace mark, no, because it is there in the book. That will not come as grace mark. Some conditions will change, that's all. See, you remember and go. What I'm saying is, see, there will be some students, you will be seeing that, sir, there are 4 procedures, 3 procedures. I cannot remember everything. For you, I'm saying 99% they will not ask. I'm saying 99. But people, I am not the paper setter. Because even that too I'm going and sitting in YouTube live. These people first only will keep scolding. ಯಾಕೆ ಗುರು ನಮ್ ಜೀವನ ಹಾಳು ಮಾಡ್ಕೊಳ್ಳೋದು?
The same thing happened to the JGL also.
They won't. See, logical only, Noda. If they ask, don't you think you guys only will say, sir, it is a process which has come to an end. What is the use of asking? That is also interpretation. We never know. Okay, buyback through book building process. First, you will pass a board resolution or special resolution. It should be made through electronically linked transparent facility, meaning nothing but online. What is through book building? Nothing but same thing. You do not know the price. You will find the price. You can retail investors can participate. Promoters and their associates cannot participate. Remember, promoters cannot participate in book building process. Retail investors can participate. Correct? Once a public announcement is made, a buyback cannot be withdrawn. Always remember that. Disclosure, public announcement to be made within 2 working days from the resolution. Public announcement shall be filed with SEBI. Deposit the money in escrow account and you will come up with a tender offer. It shall commence within 7 working days from public announcement. It should be open for minimum 15 days, maximum 30 days. This has been changed. There has been an amendment. Correct?
So it should be open for minimum 2 trading days.
Adepa, that's what I'm saying. There has been an amendment here. Remember and go. It shall be open for a minimum of 2 trading days. It shall be open for a minimum of 2 trading days. And I think we wrote here also. Payment should be made. Payment to be made within 5 working days. Remember, this is an amendment. Within 5 working days. Correct? Okay, done. Escrow and other similar to tender offer. All other criteria. We have written that? I don't remember. Huh?
That thing we wrote, sir.
We wrote,
Sorry.
we have written, no, done. Okay. ಯಾವುದು ಏನ್ ಬರ್ತಿದೀವಿ ಹೇಳು? The company shall disclose the price band. In case of frequently traded share, the lower end in price band shall not be less than closing price on date of notice. ಅದೇನೇನಾ?
Date of notice, volume
Volume weighted average price of 15 trading days prior to the board meeting approving buyback. If it is an infrequently traded share, lower end shall be minimum of price as determined by registered valuer. That only, no? Okay. Obligation of company and merchant banker. Give all factual information, true information, not to issue any share until expiry of buyback. Pay consideration only by cash. Barter system and all is not allowed. It shall not withdraw the offer once public announcement is made. Correct? Within 2 days of expiry of public announcement, buyback, issue public announcement. That is, after the entire procedure is completed, make sure you give a public advertisement. What is the shares bought back? What price we bought back? What is the shareholding pattern now? Everything. What is the role of merchant banker? Make sure you are able to implement. You have made firm commitments for money, escrow provisions, whatever are the disclosures given in public announcement are true and fair. Final report to be submitted to SEBI. Correct? Yes, sir. That's your buyback. The next one, people, mutual funds. Again, one of the important ones. Now, what is a mutual fund, sir? Again, a mutual fund is nothing but a pooled investment vehicle. So there will be one trust, which is always mutual fund is started by whom? A person who starts a mutual fund is called as a sponsor. Correct? Okay. So in a mutual fund, people, there are key players of mutual fund. Who are there? One is sponsor. Who is a sponsor? The person who starts a mutual fund. Generally, he is an influential investor. He brings the capital and creates mutual fund, and he sets up a AMC. He contributes at least 40% of net worth of asset management company. A mutual fund is nothing but a trust which is registered as per Indian Trust Act. it raises money from lakhs of people. That money will be given to the next company called as AMC, Asset Management Company. Who invests money in mutual fund? The person who invests money in mutual fund is called as unit holder. Unit holder is nothing but us only. In a company, we call you as a shareholder. Here, we call you as a unit holder. Next one is called as asset management company. What do you mean by an asset management company? So basically, the company which takes the decision of investment, management, what are the diversification. Basically, the portfolio manager role is done by asset management company. Next one, custodian. What does a custodian do? A mutual fund will be investing in various places. It can be gold, it can be silver, it can be any commodities, it can be shares. So the entire what is that assets will be safely kept by the custodian, and whenever there is any benefits that has been arrived on that, it will be collected by the custodian on our behalf. Next one is a transfer agent who takes care of what? Redemption, transfers, payments, issue, everything, allotment, everything will be taken care by transfer agent. Next one is depository, which we already seen. Trustees who people, nothing but debenture trustee only. A person who administers the property, who basically plays the role of directors, will be called as a trustee. Agreed? These are all the key players. Next one is called offer document. Whenever a mutual fund comes up with an IPO, we call here it as an NFO, new fund offer. You issue something called as an offer document. In an offer document, there is basically, you can divide this offer document into two parts. One is called as scheme information document. Next one is called as statement of additional information. What do you mean by scheme information document? Everything about the scheme will be given here. Meaning, what is the name of the scheme? What is the risk factors? How much is the fees and expenses? What is the redemption price? Everything. What is the expense ratio? Everything with regards to the scheme will be given in this scheme information document. It is generally updated once in a year. Whereas on the other hand, statement of additional information. You want to know who is your fund manager. You want to know who is your portfolio manager, who is your trustee, history about them, what will be the taxation aspects, STCG, LTCG, what are the rights of the unit holders. All these things will be given in additional informations. So remember, who will read this in real life? Both of it. That's why we have to always give a summary of it. The third thing that comes is called as KIM. Key information document is nothing but summary of the top both. You will give this also, you will give this also, it becomes your KIM. Correct? Huh? Next one is called as formulas that you see in this chapter. One is called as net assets of the scheme. How do we calculate? You take the market value of investments. What is market value of investment? When you started trading, when you invested, you have invested 5 lakh. Today, the capital has increased to 10 lakh. That becomes market value. Remember, very, very important from your problems point of view. You guys will see questions being asked from NAV. You will be tested for NAV. Pakka. Getting it? Buyback also, I told you. I forgot to tell in that particular place. Buyback also, you can see, you may see a practical problem. So market value of investment, meaning today how much it will give you. Not when you invested. Because they will try to misguide you here. Original value is 1 lakh, market value is 3 lakh. You will take market value only. Plus receivables, other accrued income, plus other assets, meaning whatever is income to you, meaning it can be dividends. You have invested in debentures, you are going to earn interest on it. All that is income only, no? So you will add it. Minus expenses, accrued expenses, other payables, any liabilities, deduct it. So you will get what is the value of your scheme, like a book value only. You got the total value divided by number of units, you will get net asset value. What is the redemption price? What do you mean redemption price? Whenever I am exiting from the stock exchange, what is the price I will get? That is called redemption price. How will I calculate it? NAV divided by 1 plus back end load. Back end load is nothing but the commission they charge. Next one is public offer price. Whenever I am purchasing shares from a public offer, what price I will get the shares at? NAV divided by 1 minus front end load. Again, this is a commission they charge for me purchasing the shares. Next one, holding period return. What is this? Nothing but yield. Now, I have invested say 30 rupees. After 2 years, the 30 rupees has become 50 rupees. What is my total return? How do I calculate? For that, this is a formula. Whatever is the income you have earned minus, it's simple, right? Whatever is the price difference, how much it has appreciated versus divided by original value. Correct? No? Imagine when I invested is 30, it became 50. How much has the scheme grown? 20 rupees, no? 20 divided by what is my original investment? Original investment was 30. Always when you want to get a percentage, multiply it into 100. Whatever you get is called as yield. Yield is nothing but return. And remember, whenever you get dividends and all, interest and all, that should always be added. Because it's a return only, no, for you. Hello? Okay. Next one, eligibility criteria. There is a lot of amendment here. It's the entire thing, we'll strike it off. I need to do it. I'm not at. I have one roughly written. Inge. See the graphics. That's what I'm saying. Inge graphics. We have graphics and all. Okay. Inge, we have full Bahubali technology, animation and all. Correct. Okay. So people, there is a amendment here. The amendment here is people nothing but earlier. Okay. Eligibility criteria for registration of mutual funds. Earlier we used to follow something and all. Now there is amendment. See what is it is. Eligibility criteria. Now, what is the first thing, people? What is the eligibility criteria? For registration of mutual funds and grant of certificate of registration, applicant has to fulfill the following. You need to fulfill this. What? You should be carrying on business. Sponsor should be carrying on business in the financial services for minimum period of 5 years. Sponsor should be carrying on financial services business. What is financial services? It can be asset management. It can be securities market for 5 years. You should have positive net worth in all the preceding 5 years. Positive net worth. Net worth is in simple terms assets minus liabilities. Positive liquid net worth should be more than proposed capital contribution of sponsor in AMC. What is this? The sponsor will be contributing to the capital of AMC. We saw who starts AMC? Sponsor. How much am I contributing? I am contributing 100 crore. Let us imagine. They're telling you my positive liquid net worth, meaning the money I have in a liquid way, should be more than the contribution I'm going to do in AMC. Liquid, I'm not saying even illiquid also, only liquid of sponsor AMC. And in case of change in control of existing AMC due to acquisition, meaning let us imagine who is a sponsor? ICICI. He started ICICI Prudential. Now HDFC wants to come and take it over. Is it possible? Yes, it seems. But for that, there is some condition. What is that? In case of change in control of existing AMC due to acquisition, then positive liquid net worth of sponsor is to the extent of par value or market value of the shares, whichever is higher. Meaning what? Whatever you are going to acquire, that shares will have a value. What is the value of the shares? Now imagine I'm going to acquire the value of ICICI sponsor. What is the value of ICICI's shares? Is it par or market value? Par is nothing but book value or market price. In this, whichever is higher. Imagine ICICI's market price is 300. Book value is 100. Whichever is higher, 300 into number of shares. We'll get one number, no? HDFC's positive liquid net worth should be more than that number. Next one, net profit after depreciation, interest and tax in preceding 5 years. After everything, you should be profitable for the last 5 years. average net profit after depreciation, interest and tax in preceding 5 years is minimum 10 crore. Correct? The difference between the D and D, one is net profit, next one is average. Next one, D says you should be profitable. E says how much? At least 10 crore should be there. Sir, I did not satisfy any of this condition, sir. Then there is an alternate for this also. What is the alternate route? Correct? Sir, what if I did not satisfy that A to A? There are again alternatives, sir. This condition is so big now. Now what is that? If the requirements specified under explanation are not fulfilled, the sponsor shall adequately capitalize the asset management company such that the net worth of the AMC is not less than 150 crore. Sir, sponsor is poor. Okay. At least AMC should have 150 crore of net worth and ensure that initial shareholding equivalent to capital contribution to the asset management company to the extent of not less than rupees 150 crore is locked in for a period of 5 years. Whatever I am contributing as a capital should be locked in for a period of 5 years to an extent of at least 150 crores. I should not be able to sell. HDFC should not come and acquire me. Appoint experienced personnel. What do you mean experienced personnel? Means people, top level management like CEO, COO, CRO, CCO, CIO. Now what do you mean by experienced? Meaning all these top management people, everyone's experience combined should be at least 30 years. Understood? And ensure that in case of acquisition of existing asset management company, the sponsor shall have minimum positive liquid net worth equivalent to incremental capitalization required to ensure minimum capitalization of asset management and positive of the sponsor tied up with the sponsor to the extent of aggregate par value, market value. This is nothing but whatever we saw here. This one. Par value, market value. Whenever someone is taking over, my liquid net worth should be more than this number. Ensure that in case of acquisition of stake in an existing asset management company, the shareholding equivalent to at least 150 crore shall be locked in for a period of 5 years. Same thing, if someone comes and acquires you, even their stake will also be locked in for a period of 5 years. Ensure that other conditions in this regard as may be specified is satisfied. Yes? Hello? Now what are the other conditions, sir? Innu ide. Applicant is fit and proper person. Mutual fund is in the form of trust. Sponsor should contribute at least 40% to the net worth of AMC. Note, anyone who holds 40% or more net worth of AMC shall be deemed to be a sponsor and fulfill eligibility criteria. What is that? I am someone else, but I am holding 40%. I should also satisfy the sponsor's criteria. Next one, sponsor, director or principal officer not to be guilty of fraud or convicted for moral turpitude or guilty of any economic offense, meaning repayment of interests, all that should have not happened. Appointment of trustees, AMC custodian shall be as per the regulation. This clear? Okay. This is what I told you, eligibility criteria is not there. Okay, next one, eligibility criteria of AMC for appointment. Who can be an AMC? First one, it has to have a sound track record. It should be a fit and proper person, not found guilty of moral turpitude, violation of security laws or economic offense. Correct? For director and key personnel. Director of AMC have adequate professional experience in financial field. I'm saying all these are the same thing. Nothing else is changing. Director of AMC has minimum 50% of directors who have not associated with sponsor or its subsidiaries or trustees. Basically independent we are. Chairperson of AMC is not a trustee of any other mutual fund. So whoever is a chairperson of asset management company is not a trustee of any mutual fund. AMC has net worth of minimum rupees 50 crores. Correct? Deployed in assets. Deployed in assets as specified. Assets as specified. Correct? That's what we had seen. Okay. Next ones are disqualification of appointment of trustee. Who cannot be a trustee? He is eligible only if person of ability, integrity, not found guilty of moral turpitude, not convicted of any economic offence or violation of security laws, SCRA and all that, there should be no violation. AMC, director, employee, officer of AMC, not eligible to be appointed on trustee of any mutual fund. So my AMC, my directors, my employees, my officers of AMC cannot be trustees of any mutual fund. Trustee of one mutual fund cannot be trustee of another mutual fund. However, what if it's a company? If trustee is a company, then the directors of the trustee can act as a trustee of any other trust provided there is no conflict with the mutual fund's object. So for example, ICICI Prudential's mutual fund trustee, let us imagine is a company. It is a company. ICICI itself is a company. Now ICICI Bank has directors. That directors can become the trustees of HDFC's mutual fund because it's a company. Chairperson of such board of directors shall be an independent director. So if that is the case, then you can go ahead. 2/3 of trustees shall be independent person and not associated with the sponsor. SEBI approval required for appointment of trustees in general. Yeah. Not finding any point. Just same things are there. Nothing. What is the procedure for launching the scheme? All schemes launched by AMC has to be approved by trustee and SEBI. So before I launch any scheme, I have to take SEBI approval as well as my trustees approval. Offer document should contain adequate disclosure. SID, SAI and KIM. Mutual fund intending to list the units on any stock exchange should get a in principle approval. Remember, when will this come into picture? Whenever you have a close-ended scheme, it becomes mandatory. AMC is required to refund application money within 5 days in case of oversubscription and undersubscription as the case may be. No scheme other than ELSS shall be open for more than 15 days. That's the maximum offer period. Listing of close-ended scheme is mandatory. AMC shall execute agreement with the stock exchange. What is this listing agreement? That is why we said LODR is applicable for them also. Makes sense, huh? Agreed, huh? Okay, next one. Rules on advertisement. What is the rules? No celebrity should come. There should be a standard warning of 14 words without any addition or deletion of words. And it has to be, if it is on an audio or audio visual, it has to be displayed at least for 5 seconds so that it is clear. What is a warning? Mutual fund investments are subject to market risk. Read all scheme related documents carefully.
We ask in exam any questions about the mutual funds, you can write.
You will write no. Relevant.
Definition or something like
Relevant means you can write it. So sir, rules on advertisement, people, what is advertisement? Advertisement shall always be accurate, true and fair, unambiguous, meaning no confusion, not contain any statements which are false, misleading, of course. It has to be accompanied by standard warning, 14 words, no addition or deletion, correct? Huh? This is the 14 words. If it is to be clear and precise on audio visual, then what will we say? It will be said for at least 5 seconds. No celebrity should form part of it. Not B, discredit other advertisements or make unfair comparisons. Meaning I cannot put down someone else in the market. See, HDFC is not doing good. See, ICICI is not doing good. That comparisons I should not do. Not be designed as limits to be misunderstood or disguise the significance of any statement. Meaning it should not be misleading. That's all. Correct? Huh? Next one. Restrictions on investment by mutual funds. What are the restrictions that mutual funds have? They cannot invest in some places, no? Which places they cannot invest? Scheme shall not invest more than 10% of its NAV in debt instruments by single issuer. Meaning there is, say, Infosys. Infosys has debentures. The telling scheme shall not invest more than 10% of its NAV. Have raised 1 crore rupees. 10 lakh should not be placed in one company's debt instruments, which are rated not below investment grade by credit rating agency. Meaning they should have at least minimum grading. It should not be less than that. It can be increased up to 12% after taking trustee and AMC's approval. Scheme shall not invest unlisted debt instruments. Shall not invest in unlisted debt instruments except government securities and money market instruments. Correct? Provided it may invest in unlisted non-convertible debentures up to maximum of 10% of debt portfolio of the scheme. Meaning, whatever I've kept aside, imagine my debt portfolio is 10 crore. In that 10%, that is 1 crore, I can invest in debt portfolio, that is I can invest in non-convertible debentures allowed. Or else I cannot invest in an unlisted security. That is not possible. Remember, unlisted security will always be CIS, collective investment scheme. Listed will always be mutual fund. Schemes shall not own more than 10% of companies paid up capital carrying voting rights. Meaning, Infosys 10% of equity shares is the maximum I can. I cannot go beyond this. Investment shall not be made in unlisted security of associate or group company or the sponsor company. Correct? I cannot invest in my own group companies, associate companies. Private placement of associate or group companies or the sponsor company. Listed securities of group company or sponsor in excess of 25% of net assets. Meaning what? I cannot invest if it is private placement. If it is a listed company, I can invest provided not more than 25%. Investment shall not be made in fund of funds. What is fund of funds? Another mutual fund, not possible. All securities to be purchased or transferred in the name of mutual fund only. You cannot purchase in the name of AMC. You cannot purchase in the name of trustee. That are all not possible. No mutual fund shall invest more than 10% of its NAV in equity or equity related instruments of any company. Similar only, right? Here we are giving a reference to voting rights. Here we are giving reference to debt. Technically everything is 10% only. Remember, one point you remember, you can write 3 points. One is voting rights, one is debt, one is equity. Investments in any equity or equity related instruments can be made only if it is listed or to be listed. Meaning what? Unlisted not possible, no? That's what I told, right? What can be invested unlisted? It is government or money market instruments, it's okay. Other than that, generally we have to invest only in listed instruments. Agreed? Yes, sir.
Single company 10% max.
But 10% is maximum. Pricing of mutual funds. What is the pricing of mutual funds? The main thing is the third point. While determining the price of the units, the mutual fund shall ensure that repurchase price of the open-ended scheme is not lower than 95% of the NAV. Meaning what, people? We have issued at say 100 rupees. When we are redeeming it, if today's NAV is say for example 150 rupees, the money that should get into my pocket should not be less than 95% of 150. Meaning you should not take commissions, all of that more than 5%. At least 95% should come and reach my pocket. If not, then what is the use of this mutual fund? Agreed? Okay. Anything else in mutual fund? These are main things. Okay. Done. We have types of mutual funds: open-ended, close-ended and all. Open-ended means what? It can be purchased any given point of time because it does not have an end date and a start date. So you can buy mutual funds whenever you want. You can sell it to mutual fund whenever you want. So that's why they are considered as highly liquid. And listing of such mutual funds on stock exchange is optional. With a close-ended one, it comes with a fixed duration. It is not as liquid as high net worth funds. Listing on stock exchange is mandatory. Clear? Yes. Correct. 3 years. Correct? Advantages are all manageable, right? Risk also is manageable. What is volatility risk? Whenever you're investing in mutual fund, there are some risks that is associated. What are these risks? Volatility risk. What is a volatility risk? Volatility means nothing but the movement will be crazy, extremely volatile. Today it can be 90, tomorrow 110, tomorrow it can be 80. So when the day you want your money back, what if the market is down? Volatile. That's the meaning. Movement will be very high.
Based on factors.
Now war. It is down without your prediction.
In mutual funds, there is like a low, high, like if we invest in low, we will get profit or high, like that thing is there.
If it is less risk investments, then profits or returns will be low, but your risk is very, very low. High risk, high return, 100%.
Risk also.
High risk, high return. We used to have high risk. Now we have extremely high risk. So in risk we have three now: risk, moderate risk, high risk. Next one is credit risk. Imagine you invest in debt instruments. What if they do not repay? It's a credit risk. What is a liquidity risk? For example, there is something called as ELSS scheme, which shall be locked in for a period of 3 years. Liquidity, you cannot, when you want, you cannot sell. Lock-in periods will be there. Concentrated risk, meaning what? What if everything is invested into one security?
After 3 years also, there is no guarantee profit. Yes.
If it is there, it will have. See, for profit, there is definitely no guarantee. That's why we have warning, 14 words. It is subjected to market risk. Next one is inflation risk. What is inflation risk? Outside world is growing at 10x. Your savings interest is growing at 0.5x. It's a risk only. It is not same, no? Correct, no? What else? Sufficient, no? This is manageable, huh? Okay, let's just tell it off. What are the types of mutual fund schemes? Income oriented scheme. What is income oriented scheme? I want a fixed income that has to come to me every year. I can invest in such things. We generally invest in corporate bonds, debentures, so that I can get interest on it. Such type of mutual funds is called as income oriented. Next one is called as growth oriented. What is growth oriented? I generally want my capital to grow. I have invested 1 lakh, I want it to become 1 lakh 50. So you invest in equity. Risk is a little lesser, but you will not invest in a very high risk funds. Next one is called as hybrid. I want growth also, I want fixed return also. So you invest in debt also, equity also. That's why it's always a combination. Next one is called high growth scheme. What is high growth scheme? That's whatever you just asked. High risk, high return. High risk, high return. Capital production, I am investing 1 lakh. You give me more than that, but definitely not less than 1 lakh. 1 lakh I need back. It's called capital protection. Tax saving, ELSS. You invest in this, you guys can ask as you can claim deduction when you are paying tax. Special schemes is nothing but which tries to replicate some other existing scheme. Imagine there is NSE Nifty. Your fund will also follow Nifty. It's called special scheme. A real estate fund technically does not come here after existence of REITs. Offshore funds is what? A company which is incorporated outside India. We concentrate on them. So I invest in a mutual fund in India. They give money to Amazon, Apple or Tesla.
Not only US market, Europe, Japan.
Anything possible. So we call foreign portfolio investors, right? They are coming and investing us. For them, we will become FPI. Next one, leverage funds. What is leverage? You take loan, you also raise money. You take and you invest. Hedge funds, nothing but risk mitigating. Currency derivatives and all we saw. Fund of funds, investing in other mutual fund, it is not allowed in India. New direction fund, investing in startups, new technologies, sustainability, energy, solar, etc. Exchange traded fund, nothing but a mutual fund which is traded over an exchange. I told you, Nifty, Bank Nifties, Nifty Bs, ITBs. Money market mutual fund which invests in short term and government or money market instruments. Infrastructure invests into infrastructure projects. Fair enough? Last one, collective investment scheme. What do you mean by collective investment scheme? First of all, what is the collective investment scheme? Collective investment scheme is nothing but a scheme. It's a pooled investment vehicle. But it has to be registered with SEBI. That is a problem. In India, there were so many such instruments, but which was not registered with SEBI. So we had to govern them, and that's why. Okay. So majorly we have something called as Section 11, correct? 11AA of SEBI Act defines collective investment scheme. This 11AA can be classified into three things. One is 11AA subsection 2, 11AA subsection 2A and 11AA subsection 3. 2A, nothing is there. This 2 and 3 only is important for us. Now what does 2 say? What is a CIS? Any scheme or arrangement made by any partner under which any person under which contribution made by investors are pooled and invested for the purpose of scheme or arrangement. Example, people, in our class we had seen an example called as agri bond. What is an agri bond? Agricultural bonds. So we do not have regulators for all of this. I will say you come and give money to me. Let us do lucky draw. Whenever you get any house, that house will be yours. You give me 15,000 rupees today. After 5 years, I will give you back 50,000 rupees. Why? We will go and invest in plants, agriculture, or trees, sandalwood. Now, where are all these schemes? That's why they had to come and say, if there is any scheme where they are raising money from people and it is not regulated by anyone, it will be regulated by SEBI. How it functions? Cut, copy, paste, same as mutual fund. There also it is a trust, here also it is a trust. There you have asset management company, here you have collective investment management company, CIMC. The rest all will be same only. So it is a scheme or arrangement made by any partner under which contribution made by investors are pooled and invested for the purpose of scheme or arrangement. So I pool, I invest in the scheme. Contributions are made in with a view to receive profits. It can be money or income, or it can be property, it can be land, it can be even a tree, anything. Such property or investment is managed by a person on behalf of investors, CIMC. We are not doing it. Investors do not have day-to-day control because it is managed by them. So this is 11.2. Correct? Sir, what is 11.3? 11AA3 says what is not CIS? Important from exam point of view. A cooperative or society, same thing, right? They also take money from people. It is regulated by some other regulator. So it is not considered as CIS. Deposits accepted by Nidhi Company under Companies Act. It is regulated under Companies Act. So it will not come here. Deposits accepted by NBFCs. Non-banking financial company. Clearly regulated by RBI. So it will not come here. Deposits as per section 74 of Companies Act. Companies Act again. Insurance contract. They will take premium from you. IRDAR regulates it. Chit fund. State government and register of chits. Both will regulate. Mutual funds, which we saw. Pension schemes, provident fund schemes. Correct? End of the day, note. Any pooling of funds not covered under 11AA3 or unregistered with SEBI, corpus of rupees 100 crore or more shall be deemed to be CIS, and they are called as Ponzi schemes. So if you are not coming under this 11AA3, if you are something apart from that, and if you are raising money of more than 100 crore, we call you as a Ponzi scheme and you will be regulated under CIS. Collective Investment Management Company, company registered under Companies Act. It is a company only end of the day, like a AMC. Which one? Yes. We also call it as network marketing, if I am not wrong. I join, you join. And everywhere only. Bangalore, if I am not wrong, now it is reduced.
After that, social media, like Geo, after that it reduced. Before that, they reduced.
2007 to 2015, that schemes were more. I will join, I will call you, you come to my left wing, right wing. Everything will be there. My friends also, after we finish college, all of a sudden they will call. And they will say, after 2 years and all, they will not at all be in touch. After 2 years, that means definitely not marriage. Now, after 5-6 years means marriage only. If they are calling in, marriage only, pakka. So, they will call and they will say, hi bro, how are you? We will say, okay, going on. We will say, how are you? When I ask, he will say, hey, my life is bindas. I am doing extremely good. That time only we should understand which idiot will say that my life is extremely good and all. So all these people, after 1 second, they will tell, hey, I have a car now. Hey, I'm going to Dubai. There only we should understand. Macha is trying to build a story. In another 10 minutes, the bomb will be dropped. He will say, Macha, one scheme is there, you want, and in scheme, that is how it will come. Okay, collective investment, restrictions on business activity. CMC cannot do some activities, it seems. What is that? Undertaking any activity other than managing scheme. That's why you are getting a license to do it. You cannot do anything else. I told you, right, we do not have even one example of a properly registered and running CIS. Because I told you, CIS is there not for us to entertain you do it. It is there for us to tell you not to do it. It acts as a trustee of any CIS, you should not do. Launching any scheme to invest in securities. Why? It will become a mutual fund. You cannot invest in mutual funds. Invest in any collective investment scheme floated by it. Meaning what? I will take one scheme, I will invest in other scheme. You cannot do it. Exception, you can do it at times. When? If it makes disclosure in offer document. Meaning when you guys were investing only, I told you, I have a right to invest in other schemes of mine. I have told this. And you do not charge any fees for it. Meaning entry load, exit load and all, don't do it. If yes, then you can go ahead. Simple, huh? Hello? Okay, next one, sir. Obligations of CIMC, responsible for managing funds, property or such other things of the scheme, exercise due diligence and responsible for omission of any acts done by its employees. Same thing, no agent. Anything agent does, principal will be liable. Liable to unit holders for act of omission or any commission. So anything happens, we are responsible directly. Hold board meetings minimum 2 in 3 months. Take adequate insurance on assets of the scheme because property and all is involved. Anything happens, it will be huge loss. So always it has to be insured. Remember CAS, every place you can just write off. Adequate insurance. Appoint register and share transfer agents. Correct? Redemption and all should be taken care. Give receipt for all the money received and should be reported to SEBI on monthly basis. What is the scam we had done? Sharada scam. No receipts only, no? Not enter into transaction with associate or relatives of CIS. If done, then report to SEBI and trustee forthwith. You should not be doing any transactions with them. Trustees, what is the eligibility? It should be registered as a debenture trustee, not associated with the person having control on CAMC. Who is the person having control on CAMC? Sponsor. You should not be associated with sponsor. Not guilty of any offense under security laws. Obligation, trustee should ensure CIMC has necessary office infrastructure, appointed key personnel, auditors, compliance officer, register and share transfer agents. Take adequate insurance. Manage CAS only, don't do anything else. Maintain minimum net worth on a continuous basis. It should not fall. You should be diligent, meaning careful in empaneling the marketing agents, meaning appointing the intermediaries. You should be careful. Don't appoint a random person. Operate CIS as per the trust deed and offer document. Do not divert from that. Trustee should take remedial actions forthwith and inform SEBI on action taken where conduct of business of CMC is not as per the regulation. Meaning, if at all any regulatory actions is taken on you, because imagine if you can be a bank, I have to immediately intimate SEBI that this has happened. And what is that you took as a remedial action? How did you correct it? I have to intimate SEBI immediately. Termination of trusteeship can be important. When will a trusteeship come to an end? When trustee is a company, if they are wound up, trustee will come to an end. If trustee ceases to be a trustee, meaning license, I am no longer a trustee anymore. Unit holders holding at least 3/4 in value, they pass a resolution plus SEBI approval. In interest of investors, SEBI only removes you. So moto, that is you only resign by giving 3 months notice. Remember, CAMC in such cases will appoint a new trustee within 3 months. What if I am not able to find a new trustee? If CAMC fails to appoint, then SEBI shall appoint. Trustee is discharged from future duties but remains liable for the past actions. Whenever you were a trustee, whatever has happened, you will be liable for that. Convening meeting, when will we conduct? Whenever SEBI tells you to conduct, or when a request is made by the CIMC, basically collective investment scheme holders, holding at least 1/10 in value. If they request, you will make Third one, change in fundamental attributes. What is fundamental attributes? We said it's a agro scheme. Now we are diverting into a different scheme. You're not supposed to do, but if you want to do, you have to do it. Termination of agreement by trustee with CIMC. CIMC being a company is in the process of winding up. When will that trustee deed, when will it come to an end? Meaning we have appointed CIMC. When will that come to an end? 3/4 of unit holders in value agree plus SEBI approval in the interest of unit holders, SEBI or trustee with approval of SEBI. So it can be CMC being a company is wound up, holders pass this one, and in the interest of unit holders, SEBI or trustee only will remove the CIMC. Such CIMC continues to be liable for any past or previous action. Another CIMC will be appointed within 3 months. What if we are not able to find any other CIMC? If no CIMC accepts such appointment, then trustee shall wind up the scheme. And money will be distributed to the people. Any liabilities first will be repaid. Correct? Procedure for launching the scheme. CIMC shall not launch the scheme unless it should be first approved by trustee. Credit rating is mandatory and CAS is priced by an appraising agency. What is an appraising agency? Like an valuer. And who are the random people? Allah. They are always empaneled with SEBI. They are not some random people. So they value the scheme. Correct? Launch only close-ended schemes. Duration not to be less than 3 years. Remember, we see open-ended and close-end mutual funds. Here it was always a close-ended with a duration of minimum 3 years. Closure of subscription list. Minimum subscription is to be 20 crore. Minimum number of investors should be 20. No person shall hold more than 25% of the assets of the scheme. 1% shall not hold more than 25%. Failure of any of the above, you have to refund the entire amount. Offer period, maximum you can keep it open for 15 days. If you want, you can extend it by maximum of another 15 days. How? Give a public notice before the expiry of the initial 15 days. You tell them we want to extend, you can extend. You cannot guarantee the returns. You cannot say we will give you 30% return. You can always give an indicative return. Meaning you may expect anywhere between 12 to 15. You can never guarantee it. Provided it is always assessed by appraising agency. It's not like you think, even the valuer also should think it is possible. Offer document, a copy to be filed with SEBI before you give it to the public. SEBI will give you modifications. If there is no modifications, then CIMC can go for a public issue. The time limit SEBI has to reply is 21 days. Advertisement of CAS, it should be as per the advertisement code, and what is it is not there, leave it. Offer document or advertisement should not have misleading information, of course. If there is any such information, then every person who is a director and who had issued this document shall be personally liable. Correct? Allotment and refund. In case of under subscription, you will give the number. This is the minimum, which is given in offer document itself. In case of oversubscription, you need to refund the money within 5 working days. Failure, 15% per annum. In case of allotment, units to be issued only in demat form. Now physical is not possible. Within 5 working days from the closure of the offer. So allotment should happen within 5 working days. Units should be freely transferable. They are mandatorily listed, right? So it should be freely transferable. If you want, you can exit. Unit shall be immediately listed, not later than 6 weeks from the closure. It has to be listed. Correct? And mandatory issuance of cover of assets of CS. What is this? Nothing but insurance. It is mandatory for you to take insurance. Agreed? Next one, sir, winding up of CIS. When will you wind up the CIS? On happening of any event and trustees of an opinion to wind up of the scheme. Meaning we are thinking that we can no longer continue. Imagine we thought of doing real estate. The market is down. So it is no longer beneficial. We thought of doing a plantation scheme. The plantation is going for a toss. We cannot achieve it any longer. So trustees of an opinion, we will close the scheme. You have to take SEBI approval. Correct? Next one, unit holders 3/4 in value. Of course, you need to also take SEBI approval. If they think we have to wind up, you will wind up. SEBI feels CAS is prejudicial, so SEBI only will wind up the scheme. If in the opinion of CAMC will take a call when purpose cannot be achieved, we cannot achieve the purpose anymore, then all of them should agree. Trustees have to agree, unit holders have to agree, and SEBI should also agree. All three agrees, then CIMC can wind up the scheme. When if we think purpose of the scheme can no longer be achieved.
minimum subscription.
Correct, yes. Note, before winding up the scheme, trustee has to give a newspaper advertisement. Directive cannot just wind up. Post winding up, money shall be utilized to pay winding up expenses first, and remaining shall be distributed to unit holders within 30 days. This is what I told you. Winding up, you have done. What will you do to the scheme? They are telling you, you will distribute it within 30 days after paying all your liabilities. Post winding up shall be utilized to pay winding up expenses. Okay. Any unclaimed money, what will we do? You will keep it in a separate bank account for a period of 3 years. Still unclaimed, it shall be transferred to investor protection fund specified by SEBI, which is maintained by SEBI. Later, if someone wants to come, they can come and yes. Correct. Focus on this and go. What is it? 1 lakh. In collective investment scheme, any penalty, anything with regards to collective investment scheme, you have totally 5. Penalty is common. 1 lakh, 1 lakh, 1 crore. Minimum penalty is 1 lakh. Every continuing day of default is 1 lakh. Maximum penalty is 1 crore. What is the last thing? You have started strong, finish stronger. Hope to see you as a company secretary soon. With every step, you are reaching for the moon. Now that you have done it once, do it another 2. You should revise at least 3 times as the minimum thing. Hard work and revision will surely pull you through. You are going to crack one of the toughest exams in the land with your books and pen strong in your hand. Wish you good luck for your exams ahead. Keep going even when you feel tired or misled. Your success will shine like morning light. Join 80,000 of us. Your future is bright. Yes, sir. So do good. All the very best for your exams. If time permits, I'll try to take probably some sums or practical problems.
Why lack of confusion?
I'll try to do. I'll try to take it up. ನೋಡೋಣ ಯಾವ್ದಾರು ಒಂದು ಸೆಷನ್ ಆದರೆ ಮಾಡ್ತೀನಿ ಓಕೆನಾ ಸೊ ವೇರ್ ಪಾಸಿಬಲ್ ಐ ಟ್ರೈ ಟು ಟೇಕ್ ಇಟ್ ಅಪ್ ಡನ್ ಸೊ ಡೂ ವೆರಿ ಗುಡ್ ಡು ನಾಟ್ just you have that last 20 days 20-30 days, make maximum utilization out of it. Don't leave your whatever you have started, don't leave it in between. Don't get misled at the last moment. So focus more, concentrate more, and I hope you guys will all clear. Yes sir. So thank you so much. See you all in the next module with all successful results. Yes. Chalo, thank you people. See you. Bye bye.